morning, my friend. How are you?
Good.
Back
How
in
are
the
you,
saddle
Peter?
Tuesday. Now, Forks never slept. Traded all day Monday. But
Yeah.
we're back in the studio on Tuesday. Good weekend?
Great
Long
weekend. Yeah.
Rested?
A little bit rested. Yeah.
See, that is...
I know. Should have rested more. I tried.
Yeah?
Yeah, I rested up until last night. I was watching NBA game that ends at 10, and then, being here at 6, it's hard to be fully rested with that timeline. But, yeah, we're good. Yours? Weekend?
You don't need more than 4 hours of sleep at your age.
See, that's what's actually really annoying, is I try and push the boundaries. Turns out, I think I do need, 7 hours. Otherwise, I come in here, have bags under my eyes, I get flustered.
Again, Frank got that special job where in by 11, out by 12:30.
And yeah, now I know why he does it.
Yeah, and a 6-month sabbatical. So,
yeah.
But not everybody gets that. But so it was good. The missus happy. Enough time with her.
Oh, yeah. A lot of time with her. She goes out to San Francisco this week, so we went to Trivoli Tavern on Thursday, right here on Green Street.
Yeah?
Happy hour, not happy prices.
Oh,
Man.
Trivoli?
Yeah.
Oh, okay, I know what that is. Okay, yeah.
They really get you.
I went to, what the frick is it now?
Soho House, right across the
Yes,
street.
I call it the house. Yeah, now they all call it the house, so I can't even remember the first name of it. That's right.
How was that?
It was fun. So
What did you even get to eat? What kind of food do they have there? You went
it's
at lunch.
nice. Yeah, we went out. It was just, my wife got a beautiful salad. I got like a chicken club and stuff, but it was really fun. It's a cool, number one, yes, I feel like, here, let me take my grandpa for a tour of this place, because everybody there is wrapped right around 30 to 35. But it's beautiful. It's got pool. It's got, movie theater, what would you call it? What you would expect, the pool table, the ping pong table,
nice.
the games tables.
So you're a fan of the house now.
They've got the DJ station. I wanted to know what night is seniors night for scratching. So I thought that would be fun. But yeah, it's great. And actually, my daughter lives 2 blocks away. And
Oh, nice.
I think anybody who's joined a club always runs through the paradox. This is going to be great. And
Yeah.
6 months into it, it's like, here comes the bill for whatever it is per month. And it's like, I haven't been there in 2 months.
Yeah, tough.
I think this will be good because it's close. So she works remotely.
Right.
She'll be out. She'll be in.
Oh,
It'll be
could she
good.
even work there?
She could. They've got spaces
nice.
and stuff like that. I mean,
cool.
once you get away from the public first floor.
Exactly. Yeah.
To the, you try not to make direct eye contact with those people
Straight
going
to the
in and
elevator,
out. No, it's cool. She was excited. It was fun. So
Nice.
we had a great time. Yeah, it
You were
was
able
nice.
to sit outside or no?
It's a little too chilly for that.
It was nice in the sun all weekend, but yeah, once the wind gets going.
Yeah,
too
but
cold, still too
my
cold.
wife actually spoiled me and drove both ways. She's not a huge
right.
fan of driving on the highway, and highway in Chicago is just horrible. They're
Bad.
rebuilding all the highways, so it's an hour and 20 minutes down, an hour and 20 minutes back, and I tell you, I come down early, so it takes me 18 minutes to come down in the morning, 2 hours
Pretty
to go
good.
home in the afternoon.
Horrible.
But that was really nice. Just sit like I felt like the dog looking out the window, just watching the buildings go by.
Did you take Lakeshore, take the scenic route?
No, we didn't. We stuck to the highway. But we could have done that too. It's funny. It's the exact same time.
Yeah.
I mean, everybody's done the math.
Yeah. It's pretty
But
funny.
it does move. But for
Right.
her, it's a lot of lane changing
Yeah.
and turning and stuff. So that was honestly, as you know, driving Lakeshore Drive when you get to
Yeah.
Rogers Park and stuff, it gets a little bit more combative.
And you gotta watch the potholes the whole time.
Yeah, and the bicyclists.
Yeah. Did you do any grilling yesterday? Any new barbecue?
We did do some grilling. Yes, it was nice. So it was really a relaxing, good weekend. So no complaints.
Nice. Yeah. I didn't do any traditional Memorial Day stuff, but went to the Frida Kahlo exhibit.
Oh,
at the Art
look at
Institute.
you,
That's
culture.
I try every
Yeah?
once in a while.
Very
Try
nice.
and clock in.
Now, was that a Mrs. event? It had to be a Mrs. event.
That was a Mrs. event.
Okay.
That was nice. That was fun.
Now,
All my
did
friends
you
were out of
plan
town.
it or did she plan it?
I planned it. She wanted to go to this exhibit.
Oh, very good.
She is Mexican and Frida Kahlo,
Right.
great Mexican painter. So she was excited about it. But it was cool. Yeah.
We may be seeing another
Oh, don't worry. My Saturday was full of debauchery.
Okay.
Had a birthday party. Went all out and about. Got wings in Lincoln Park. Bird's Nest. Very good. 12.
I don't know how debauchery and birthday party go together, but let's
Well,
stick with that.
the birthday party, starts at 3 p.m. So then you're already rolling.
Oh, okay.
And
So
then you just
in
bounce
other
around.
words, what is the breathalyzer measure? Parts per million of whatever it is?
Yeah.
That was already spiking by 4:30.
Exactly.
Gotcha. So it's
Yeah.
an endurance test by that
And
point.
the wings place
Hey,
had $12 pitchers.
I mean, is the concept still Red Bull and something, or have they moved down from that?
I try. I actually do like my heart, and want
Okay.
it to keep ticking for
All
a
right,
while.
so you stay away
So
from the.
I try and stay away from
Gotcha.
any Red Bull, Monster, concoctions. You should ask Bridget if you ever have her back on the show what her Monster drink of choice is.
Oh, I can only imagine what Little B. I mean, she almost knifed somebody coming out of a pizza parlor last weekend. She really has gone. She's gone full gangster on us.
Yeah, no, watch out for her. But yeah,
So we started again. We had a shortened weekend, Monday holiday here, holiday in UK too. So thin around the globe. But
yeah. What was their holiday?
it was
Same thing.
It's funny because I talk to these guys all the time, and it just says bank holiday, so I didn't even ask what it was.
No, I think they do have a couple of those run of the mill. Just call it a bank holiday.
Yeah, I'm not sure. It's interesting line, but thinner markets across the board. All the action for the most part was Sunday night. The tariff announcement that Europe was not going to be hit. Given more time, he had a good phone call with them and liked them.
That guy he's pretty good at phone calls. He has a lot of good calls.
Again,
I don't
he had
have that many good phone calls.
He had a fabulous call with Vladimir Putin, and then he shot 700 missiles at the Ukrainians. So I don't quite get how that all works, but again, let's not go too far off the rails. Interesting, though, S&Ps were up. Again, they sold off a little bit on Friday. I believe Friday was expiration, so we get some kind of a little bit of more volatility in that last hour. S&Ps were up 100 points, which is a big move in SPOOs. And they built on that going into the end of the shortened trading day. We closed at noon in Chicago time. Regular cash equity markets were not open. Treasury markets were not open. But futures were for an abbreviated session. Equities up, gold up a lot, dollar weaker across the board. U.S. Treasuries still kind of
Holding in.
5% in the 30-year. Not ripping through that 5% level yet. Yeah, there. Okay, well, there. Poker face. I reveal my bias. But it's interesting. It was also something that it's fascinating. We look at interest rates. We know they drive FX, but I was looking at, I believe it's Microsoft and Apple. Their 30-year corporate paper yields less than a 30-year U.S. Treasury right now.
Really?
Yeah. So now I don't think we've ever
That's
seen that
insane.
before.
Because 30 years is a long time for
Well,
corporate.
in 30 years, are you going to get your money back from Apple? Probably. Are you going to get your money back from Microsoft? Probably. But I would think that the U.S. government's probably a little bit better bet. But the market is, for whatever the market does, is actually pricing their yields as cheaper than Treasury.
pretty crazy.
It's an intro. What's the takeaway from that? Absolutely nothing. It's fair. The crux of the analysis I had read was that U.S. Treasuries are very cheap right now.
Right.
Yields relatively high, considering that they are the best form of guarantee. It's an interesting take.
Yeah.
But we'll see how that shakes out. But definitely play through the dollar. So we hit all these markets, and in typical fashion, once the UK came back in, and we saw that 2 a.m. shift, it took a little while, but S&Ps are now trading lower. Some of the things that rally, like euro, we had a euro that was up, is down. Sterling was up, we were back above 114.
Oh, wow.
We're back to 113.50. Sterling giving back a fair amount of ground.
Yeah, I mean, but this is still, one to watch. I mean, I think this is 3-year highs?
Yeah, anything above 135.
Yeah, dating back to really start of 2022.
Absolutely. And we talked a little bit about dollar yen up a little bit.
I I mean,
That's
up a little, but it's going.
again, right. The 142 held, and this was one where I thought maybe they would finally challenge 142, and we got down there right at the end of Sunday night and Friday afternoon, really, really thin. They put a little bit more sale into it during the very abbreviated, very thin Monday session. But at what time did that rally start to take place then, Glennie?
10 last night, 11.
Okay, yeah. So
Yeah.
right about that same time window. This is a big move, though.
Yeah.
In Delegate. Big move that takes us. Here's the context around holidays, though. Sometimes we see this happen. They take that markup of just the thinness and everything, and they take it all out. They did so in this case. So where are we back to? Basically, where we spent the bulk of Thursday.
Yeah.
And most of Friday. So is it a huge move? Does it say anything to me? No. It's just they tried as hard as they could to stress the longs in this market. They tried to stress the shorts in euro. They tried to stress the shorts in SPOOs. Whether or not it sits, we'll see.
But it is surprising because this is, I presume, on Friday here, this was the kind of EU tariff announcement. Right. We're not only back through that, but we're at, the midweek highs of last week already at 144. So through that completely in the S&P, I was checking this morning, we're about the same. Right?
What's your takeaway about that bar around tariffs?
I mean, it was interesting because that bar lets you know that there is still movement around these announcements, no matter how far out they are. I guess this one would have been, 2 weeks out?
Right.
It would have been in June. And then, throughout the whole day, respecting that kind of move, but now they're testing it a little bit more. And now a popular...
It's exact. There you go. Good for you. That's absolutely... Number one, the headline had an 80 pip move, not a 180 pip move.
Right.
And yes, the market digests it, but it's taking less than a day because I don't count yesterday. Yesterday was a trading day, so when I say I don't count it, it just wasn't full swing. They're more than willing to. So the impact of what the president could say on tariffs and actually move the markets in a lasting fashion or a face-ripping fashion is somewhat mitigated. Now, if you're wrong dollar yen, that 90 pips hurt.
Right.
But it is a little bit more manageable. It's giving you the opportunity to get some trade location if you do want to trade, and the market is challenging back at these levels. We're not at 140 after that.
And what I read this morning, the new Trump trade is called Taco. You heard of that one? Trump always chickens out.
Oh, no, I haven't
now,
heard that one.
Now, finally, people expecting, dollar to rise, dips to be bought. I mean, we've seen that pretty consistently. But yeah, you're absolutely right that market's still respecting what could come of this, but not for long. And no reason. No real delay here to expect anything else because the kind of reprieve came as quick as the announcement. So now repricing it, but dollar in a better position than it was beforehand. What would you attribute this space right here to, if not the dollar weakness off the tariff announcement? We're still going through 144.
We're really back. In my mind, we're just back to, again, the lower end of the 142 to 162 range, 142, 148, if you want to call it a little bit tighter. The interest rate story right now is relatively muted. I think today is going to be a corrective day. I think we're going to see equities give back most, if not all, of their gains they put in overnight. Gold is on the way to giving back.
Yeah.
We got back up, gold is down, I think, $70 on its way quickly back down to.
Still above, 3,300 though?
Well, that's it. And last week was an interesting week. Gold rally, silver rally, even some of the things like platinum, another precious metal. We don't trade it, but platinum traditionally over the last 30 years has hit a premium to gold of anywhere from a couple hundred to over $1,000.
Oh,
Platinum
wow.
above per ounce gold. It is right now just rallied from $960 to about $1,100 an ounce. It's a big move for platinum, $140. nowhere near historically the relation. Why? There's a whole bunch of supply effects, use effects, whatever. I don't care about that. But it is, if you want to go back to the analogy the guys sometimes use of going out and, picking up the slop, this is something that's been completely ignored. Base metals, copper close to $5 again, commodity currencies giving back some ground. But I think actually the pullback we're seeing in Kiwi, pullback we're seeing in Aussie is interesting. If you're still seeing copper near $5, if they're picking up every base metal they can, gold is, yes, $70 off, but was taking another run up. Some of these pullbacks, so you look at everything's pulling back right now. Well, what's interesting? I'm not a buyer of gold up at these levels. I look at, we know the correlation between Aussie and gold hasn't been great.
Right.
Kiwi and Aussie are highly correlated. I look at those proxies as better range proxies on a dip than something else other than that.
I'm wondering when I'm waking up here and getting into these dollar pairs for the week, looking at the week ahead, Australian dollar is the most interesting to me just because not really sure if we're going to get a unified US dollar story or if we're going to continue to see kind of this risk sentiment play through in the Australian dollar. What do we expect here? I mean, we've seen Australian dollar move much more correlated to U.S. equities in the past 2 months. This week, we have some lighter economic news. We're gearing up for PCE inflation on Friday, but we've got NVIDIA day tomorrow. Is there any, that can set the tone for U.S. equities for a day, for a week, especially near the end of a month. Nothing really else to take over. Do we think that this Australian dollar will move with the stock market at all this week, or will this be some of the bond shakeout from last week, U.S. dollar unified against all these major currencies?
It's a good question because, yes, NVIDIA will move. I mean, NVIDIA is up 2.5% on some this morning. Allegedly, they're going to produce their high, I forget if it's, I should know this, Blackwell, whatever their newest chip is, a less expensive form for the Chinese market.
Oh, nice.
I don't know how you do that, given tariffs are a zillion percent. But these are all smart guys. They're going to figure out a way to work with the administration to get their products to market. The long-lasting effects, I look at NVIDIA, I look at their IV rank right now, and I'm like, I don't want to trade earnings with IV rank of, I think it's 31%. Maybe it's a little bit more today. That's going to be a tough one. Will it have a knock-on effect? I think we'll obviously to NASDAQ, to Mag 7, sure. I don't know what the story is here for currencies right now in terms of what they're going to do with equities. I do look at market structure right now. If we trade a little bit lower on that for some reason, Aussie's still back to, again, a little bit cheaper than the highs. Kiwi's back to a little bit cheaper than the highs. A pullback in euro to 114 doesn't seem appreciable, or 113 doesn't seem that cheap to me. So in a nutshell, for me, dollars holding on to the bulk of the currencies are holding on. The dollar is not getting bought up for any long. I mean, we fell from 115 to 111. That was a great 400 pip pullback. If you're a contrarian, that is getting paid in a very handsome fashion. Now, you didn't have a lot of time to take it.
Right.
You really didn't.
No.
You had a day and a half. And again, nobody pins the low. Nobody buys the 110.63s.
Yeah.
But 111 and quarters, 111 and a half, you had 2 days to make that decision off of if you had sold it anywhere above 114. Nice scalp. We're right back up to that level again. Bitcoin's 110, 112. Gold's holding on the bulk of its gains. Stuff that's had no love is getting love, like platinum. I am less inclined to think that there is going to be a vast shakeout that And even if treasuries do cross through that 110 level, I don't think we're going to see a great shakeout to the downside in euro here. So I think what we have for us as traders, we still have volatility driven unknown unknowns. That's the tweet. They're less impactful. So I can get in and not necessarily get put to the test for everything right away.
Yeah.
And we're seeing the market challenge that. And what I mean by challenge is that they're giving back that algo-driven run and willing to eat at that a little bit. That means there's a better two-way trading environment. If you want to buy one, we'll pull back 100 points in a day here. Statistically, this is giving it to you. But I think it's going to take a lot for us to get back above the highs. And I think we've got a really defined good range here. So I think you can see that through sterling, for me, I look at sterling and yen. I have a bias to be short on rallies. Aussie and Kiwi, I have a bias to be short. I have a bias to be long on dips.
Based on market structure.
No macro structure, because macro's not telling us a story.
Right.
Because weirdly enough, you would think with equities, correlations would normalize. They're not. That's the troubling part to me. That correlation, and it takes time for correlations to normalize, but they're not. Everything hasn't snapped back. So I look at these as more independent occurrences than I would otherwise, and just want to range trade them.
But you bring up a good point in thinking about these markets that way as well, because if you're trying to trade the U.S. dollar storylines, you're kind of stuck there when you land on these markets, because you're forced to decide, get more granular.
Right.
Which currency paired would you like to trade? And there, if you're just holding on to headlines, it's much harder to delineate, where exactly to get that U.S. dollar exposure.
Right.
And you did a great job breaking down.
And I think we're running around, but this is a great time too. And go to the calendar's light, if I'm not mistaken.
We've got FOMC minutes; those are pretty backdated.
Right.
PCE on Friday. That's about it.
This is end of the month stuff, so it stinks. But Friday, true. We don't start June on Friday, do we?
No.
Okay, so this will be nice because I love trading end of the month. We seem to get good FX flows. End of the month on Friday means even more elasticity.
Yep.
So this would be setting up to see how the market trades through that. This is probably the biggest event we have.
Agreed. But we'll see. I mean, we've seen we'll get some shakeout here from the long weekend.
Yeah.
And maybe that means that we aren't as tightly wound up in anticipation of a Friday release, and hopefully we get some organic.
Yeah. And when I talk about month end, don't worry about month end right now. Friday morning, take a look, and then decide if you want to kind of play that game around rebalancing. But this is the one data event to watch. Again, the bigger macro event probably is NVIDIA earnings and whether or not we hear more on the trade front. But that all means good stuff for us, good two-way action. You've got some markets at multi-year extremes.
Yep.
You've got some within 10% of their multi-year lows, depending on the dollar pair you pick. I love those kind of choices.
Yeah, a lot to look forward to and a lot to trade this week. So stay tuned here on Tasty Live as we take it away on this Tuesday morning. Thanks for watching, guys.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both. And of course, welcome back, Mr. Tom Sosnoff, everybody. Mr. Tom Sosnoff.
Back in town, yes.
Did you save a
Back
horse?
in black is what you were trying to say.
Did you save a horse and ride a cowboy?
Not exactly.
How was Nashville?
It was wonderful. It's a good weekend.
Did you go hiking? You
Yes.
were going to do a bike. You were going to go fishing, and you were going to visit an apiary.
I did.
He sent me a picture of him fishing. I'll give him that.
I did go fishing.
Did you bait your
She
own
put
hook?
the worm on the hook for you, though, right?
No,
Be honest.
No, they have a guy there
that does it?
Yeah, but it
Oh, they have a
wasn't.
guy who does it for you?
Yeah.
You bougie SOB. Seriously, I'm glad at least you're coming clean
There's
on
a
this
worm
whole thing.
atelier.
No, they don't actually. If they don't put a real worm on there, it's like a.
It's a fake worm. It's a vegan worm.
It's a lure? You're trying to say a lure?
No, it's like a fake worm. It's like a little. I don't.
Yeah, yes,
It's
Pat,
called
it's
a
a
lure.
lure. Yeah.
Lure. But it doesn't matter. I didn't catch.
Seriously. How could she sleep with you? Honestly.
So did you put like waders on? Did you feel like a real fisherman?
No, I was on the.
No,
like
he was on a
Robert
dock.
Redford?
I was on a dock.
Oh, okay.
And I didn't catch anything. I
Were you
caught.
wearing your life vest just in case? You had your floaties on?
I didn't catch anything. I got a couple of bites, but they didn't.
A couple of nibbles, but you couldn't pull
I
through.
lost them. I lost them pulling them in.
Okay, so you went fishing. Did you go hiking?
I did go hiking.
How was the hike?
Hike was quite nice.
Okay.
But it was a little steep. It was fine.
And for those who didn't join in at the end of last week, this is on a mountain that Tom's friend casually owns, as one does. Go ahead.
And it was nice. It was beautiful.
His mountain is nice. Okay, good. I love that for him.
Yeah. So
All right, so you went fishing, you went hiking. Did you get on a EV, electric bicycle?
They were all out.
They're all out. So you just had the regular pedal kind, and you're like,
No, I didn't do that.
It's a no for me.
I couldn't. I was waiting for one to come back, and then I didn't. They were just being used by other people.
Okay.
So no. So I didn't get on the bike.
And then did you visit the bees?
You didn't pull rank Sosnoff or anything like that?
No, I tried. No. I visited the bees.
You visited the bees.
I didn't want to wear the bee outfit, like, the whole.
Sure, yeah.
Yeah, I didn't want to.
Because why be safe?
So I didn't get as close as other people would be, like, in the whole,
Right.
whatever they call those.
Sure, I'm sure there's a name for it.
There probably is.
Yeah.
But you could do that, but I decided not to.
Okay.
You
ever been stung by a bee?
Yeah, but I'm not allergic to it, but I don't like it.
Okay. Bat, have you ever been stung by a bee?
In one summer when I was courting my present wife about 20 some odd years ago, they have a pool at their place, and they had these shutters about 15 feet high that Grandpa wanted taken down. So I took them down, and each one of them had beehives underneath them, and I got stung about 30 times.
Yeah, that's bad.
Did you have to go to the hospital?
No, I didn't swell up or anything like that. We're good stock, us Batistas. You know what I mean? We're kind of the workhorse of Tasty Live.
This place has
no problem.
9 million bees.
That's great.
They have like 8, whatever they call them, apiaries.
Aviaries are for birds.
Yeah. So they have like 9 million bees. They have a beekeeper.
That's wonderful, yeah, because bees help out a lot in our ecosystem, and we're killing them off with our pesticides.
I spent the most time of anything lying in a mineral pool.
Oh, gross. Now I want to be stung by 30 bees in the eyes.
It was like 102 degrees.
Did it float?
What?
Do you float? You're dense.
Did it float?
The what?
Never mind.
Oh, anyway, I would lie in the mineral pool and just hang out, and that's pretty much it.
How was the food? You had some reservations in Nashville. What was the?
Oh, so on the way down, I made the obligatory stop at Buc-ee's.
How was Buc-ee's?
For my first voyage.
Way to bury the lead, dude. How was Buc-ee's?
So it's 6 hours away from here.
Okay. I really want to go.
So I'm talking it up the whole way down, telling Corinne this is life-changing, blah blah blah. Now,
cleanest bathroom she'll ever see.
Okay, first of all, the chances of her going inside there were 0. Literally 0.
Did you go into the bathroom?
No.
You didn't go into the bathroom.
That's
the only thing I asked you to do was go to the bathroom.
I didn't have
to pee for 7 hours, dude.
Well, we'd already stopped before.
Oh.
I didn't go in the bathroom there.
Gotcha.
There were so first Buc-ee's was big.
Yeah.
Yeah, it's big. But when I got inside, I didn't realize it was going to be a free-for-all.
It's like a Walmart, yeah.
It's worse than Walmart.
I told you they got everything from underwear to food.
No. It's not like I didn't expect everything that they had. It's that I didn't think there would be like 1,000 people in there all scrambling for brisket.
It's
you thought you'd have the
Memorial
mountain
Day
to
weekend.
yourself.
The Friday of Memorial Day weekend, you thought on this major interstate that a Buc-ee's would be empty?
No, not empty, but just not. I didn't think it would be like as.
It was Memorial Day weekend.
I thought it would be I thought it'd be something a little bit different. Anyway.
You got overstimulated, didn't you?
I bought a brisket sandwich.
Okay.
I bought a brisket. I bought a brisket sandwich, a cheesesteak burrito, some Buc-ee nuggets, whatever they call them.
Yeah.
They're not bad. They're like corn puffs dipped in sugar.
Uh-huh.
Ooh.
Yeah.
I got a Buc-ee's like doll or whatever for the grandson.
Oh, for Cohen.
And I got some other crap. Anything I could just grab. I grab and run.
Okay, rank the food.
The food, the brisket.
First of all, those beaver nuggets, what you were talking about, right?
Yeah.
They're called beaver nuggets, right?
Yeah.
Then Buc-ee's beaver nuggets. Go ahead. Show some respect.
Well, he didn't know. It was his first time.
They're good. They're just like corn puffs dipped in sugar.
Yeah. Okay,
good.
so how do you rate the food that you got?
So the food. So I really wanted the brisket,
Okay.
and I didn't eat all day. So I'm 6 hours on the road, bitching and moaning that I didn't eat anything.
Oh no.
And now, so I get to Buc-ee's because I'm waiting for this Buc-ee's brisket sandwich
Okay.
and the burrito. I'm going to try half and half.
Okay.
Half a sandwich, half a burrito.
Sure.
For the price, it was very good. Like it's only like $8,
Right.
and the burrito's like $6.
They're
like, for the
wonderful
price.
in this economy.
In this economy. The quality, fair.
Okay.
But for the price, it's probably a good deal,
Okay.
but not worth ever going again.
Really?
Oh no, not even.
Oh
close.
no.
Not even close.
Wow.
But I'm glad I went.
Okay.
I don't think I would ever go again.
All right.
It's not worth it. It's
There you,
not
there
worth
you
it.
have it. Sauce Knox
Listen. Stop.
What?
You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you
It's
gotta
not-
I like how
quickly,
you're
'cause
clutching
people are
your
getting-
pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're
It
on
is-
the road for
It is an absolute up for grabs shit show with 1,000 people running around grabbing stuff, eating
That is
stuff.
like crack for me.
There's like barbecue sauce flying all over the place.
Yes.
That place is not a beautiful mecca of anything.
Injected into my veins.
Okay,
I need you, Buc-ee's.
Yeah, there's no beautiful mecca there. Okay, don't go, don't flatter yourself. Okay, that place. I much prefer the random Starbucks on the road or whatever.
You're so bougie. I can't
Starbucks.
believe you don't have a favorite gas station. Everyone should have a favorite gas station.
A favorite gas station
Yeah, like favorite like chain or gas like thing that they like
on the
to-
road.
on the road. Yeah,
I always like stopping at Circle K because they have the best convenience store.
I'm a Casey's girl.
Casey's.
It's
Midwest.
Love's or Bucky and nothing else. Everybody
I've never
knows
been
this.
to Love's.
No,
I thought Love's.
Love's
Love's
are
or
nice.
Buc-ee's
Love's
and
are nice.
nothing else.
If I'm going east, I'm going Sheets. I love Sheets. I'm a Sheets girl over a Wawa. I'm sorry.
Sheets is good.
I've
Sheets
never
is
been
good.
to Wawa or Sheetz.
Oh, I love Sheets. You got to get the hoagie.
Yeah, but what's Love's? That's a truck stop.
The truck stop. They got showers.
They have showers.
Oh, I
She's
could've taken a
100%
shower.
correct.
Yeah. Yeah.
You should. You should.
You
Could
should.
have taken a shower.
Get yourself clean before you
Nothing
get to,
like-
to the mountain.
Nothing like a 10-minute stop and hop in the shower to Love's.
Or Buc-ee's.
Does Buc-ee's have showers?
I saw.
Oh, God, I hope
would.
not.
I don't know.
You know what, Sadnoff? You went 8 or 10 hours. If you drive across the country like the Bat has done, you would appreciate Buc-ee's and Love's and the quickie stops of the world. You would appreciate it. It's life-changing.
Well, I did about as long a drive as I'm going to do. 8 hours. 8 hours. It was 8 hours for me.
And allegedly you drove both ways?
Yeah, the whole time.
Wow.
And you didn't hit anything?
I didn't kill anybody. I didn't kill
I
anybody.
didn't say that. You didn't hit anything. You said you didn't kill anybody. You didn't hit anything?
I didn't hit anything. I didn't kill anybody.
It's pretty good.
And the food down there was great.
It's good.
Yeah, the food was really good.
Yeah.
I went to some good restaurants.
Haven't been to Nashville in a hot minute. I'm due.
I actually I went to one place in Nashville, but it was in East Nashville.
Okay.
So I didn't go downtown Nashville.
Sure.
East Nashville. It's kind of like a funky area. It's nice.
Okay.
A lot of funky bars and restaurants.
Are they funky?
But
He's trying to sound cool for the kids right now.
Yeah. Do you
Funky.
meet me jive turkeys at these funky bars?
but the food is
You
good.
do any funky line dancing, you Cole Medina?
Oh, what is going on? Bat, how about you, sweetie? How was your
Was it
Memorial
off the
Day
hook,
weekend?
Saznoff? Was it off the hook?
Bat, how was your
We
Memorial
say
Day
off the
weekend?
chain, just so you know.
Okay.
Off the chain.
All
Oh,
right.
chain? Yeah, okay, sure.
Oh, boomers,
sure,
please
off the
stop.
chain.
Bat, how was your weekend?
Who cares what I did when Sadnoff went to the Buc-ee's? How do you compete with that? You can't compete
Why
with
didn't you
that.
bring us like candy? Like, cause you
I was gonna
know.
bring back those
the beaver nuggets.
beaver nuggets.
Yeah,
I ate
But you
them.
ate them.
I ate them. And then I got the bacon. Yeah. And then what?
Yeah,
and
you
then I
told
ate
me.
it.
You said no, Vanetta. In truth, he told me I'm bringing back so much stuff. What did you bring back for the team?
I hope you're prepared for nothing. Best boss ever.
I have a wet bathing suit. Do you want it?
I don't want to be here. I don't.
Ew.
You know, I have 2 vacation days left
I have
that
a
I could have utilized this
I have
week.
part of a leftover breakfast burrito if you want it.
Ugh.
And I may be able to
Sold.
find
You have part of a burrito left over.
You gave it to the dog.
No way.
I may be able to find the back end of the Buc-ee's cheesesteak burrito.
You didn't even bring us back like a trucker hat or anything. Nothing.
Trucker hat.
Yeah, they got Bookie swag. they got shirts and sweatshirts and hats and underwear.
I sent you the one I want. I sent you the T-shirt I want. I took like a massive dump at Buc-ee's, like they have that T-shirt.
Yeah, okay,
I wanted that one.
Listen. When I got inside, my original idea was go into Buc-ee's, do all this shopping to everything. When I got in there, I realized, oh my God, this is a free for all.
Oh no, your original day was like, I want to speak to the concierge. I would like my personal Buc-ee's assistant to help you navigate. And then you got disappointed because you realized
I was getting shoved out of the way for a brisket sandwich. I had to fight for the burrito.
I love that for
work.
you. I love that.
Yeah, I had a lot of work to do.
That's good times.
Once I got in there, I was like, okay. And they have a lot of. I don't think I've ever been in a place that has more fountain drinks.
Oh yeah, you can make a dirty soda.
They have more fountain drinks than any place I've ever seen in my life.
Oh my God, just give me all the Diet Coke.
But anyway, it was. I was one and done.
Okay.
I was one and done. But do you know when we were driving home, we passed by the same Buc-ee's, and there was.
Yeah, that's how that works.
There was a line. There was a line on the highway.
Sure, to get to the exit ramp.
To get to the exit ramp from the highway.
Yeah, backed up for a couple of miles.
On the highway.
Yes, I understand what you were saying.
A couple hundred yards on the highway.
Yes.
All the way up the exit ramp.
No.
All the way around the corner. Into
Memorial Day weekend, honey. Everyone was on the road.
It's like, what is wrong with these people? But whatever.
Gotta go to Buc-ee's.
Whatever. Okay.
It is on my Buc-ee list.
Whose gas does Buc-ee's sell? Buc-ee's gas?
Yeah.
All right.
I guess so. I don't know what to do with any of this. All right.
Yeah.
That's cool.
Anyway, I don't know. But yeah, it was good. I mean, it was good. The only negative I'd say was all the ticks.
I'm sorry?
Ticks.
What? Oh, on the property.
Yeah, like when you walk through the woods, you know,
Okay.
there's ticks.
Yes. You know, you can pre-treat your clothes with permethrin, and then
Permethrin?
Yeah, permethrin.
What's that?
It's a spray. It's a pesticide in it, but it's very, very effective against ticks, and you don't have to put it on yourself. So you lay out your clothes that you're going to camp in, or your tent, or any gear. You spray it with permethrin.
I don't camp.
It is dangerous to animals, so just be careful.
Oh, okay.
But then when you put the clothes on, they're treated, and it lasts through several washes. You can get it at any outdoor store.
I did not know that.
Well, of course you didn't know that, sweetie. You're an indoor cat.
That's for sure.
But if you are going to take your family out,
what I learned is
I recommend
I'm a
it.
stay on the road cat.
Yes.
Don't.
You're not an off-road cat.
I'm not an off-road adventure.
You do not have sport mode.
He does not have sport mode.
No,
right?
I don't have sport mode. No.
Well, we are in a sporty mode today. It's a Tuesday, but it's the Mondayest feeling of all the Tuesdays. But we have a really great show for you today. At the top of the 8 o'clock hour, Kai's going to be in for a little research corner. He already came in, and he was basically like, Tom, I know you need me to come in for this. So Kai's going to be in, which is going to be great. And then we got Chris Vecchio in the house. Let me explain. Coming in 8:40. Still a little bit of life in the Knicks, eh? They just need to be down by 20, I guess, to show some.
I'm surprised they won that game, but I didn't see the end.
Look, it's at least Vecchio is off of the crisis hotline.
Yeah, I was out partying, drinking tequila and whatever they drink down there.
Okay, in Nashville?
What?
Whiskey monkey.
Yeah, I know. Like, so never mind. You're precious.
Whiskey monkey.
You're
I was drinking whiskey monkey.
Then 9 o'clock. Hey, we have a market measures. IVR versus IVP. What's the difference? What is IVP?
Percentile.
Percentile.
Implied volatility
Oh.
percentile.
Implied
We don't ever-
volatility
we don't-
percentile.
Who calls it IVP?
People that trade.
You down with IVP? Yeah, you know me. Who's down with IVP? Everybody. Okay.
We had to make a decision years ago
Yes.
whether to use IVR
Uh-huh.
or IVP.
Okay.
And we made the decision to use IVR.
Okay.
Tell you why.
All right. That's going to be at 9 a.m. And then back from his momentous and should always be celebrated graduation of his daughter, Scott Sheridan is in the house. He is back. I'm so excited that Scott's back. That segment is brutal without him. So we welcome Scott back today. And Liz and Jenny, because it is Tuesday, even though it feels like a Monday, they're live from the floor of the SIBO. So you definitely don't want to miss that when Liz and Jenny are live from the floor. It's electric. Shout out to SIBO. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's May the 27th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, any earnings for today, this evening?
Nah, I mean, Tom has a position in OKTA. I guess you could look at that if you want to. But that's really about it. You got CRM later this week, and then Nvidia is the big one.
Yes,
Nvidia on
tomorrow.
Wednesday after the close.
Salesforce just announced this morning, because I don't have a slide for it, but Salesforce is going to buy data management company Informatica for $8 billion. So Salesforce may be in play a bit earlier than when they're going to do their earnings, because they're like, hey, we have $8 billion to spend on this company that no one's ever heard of.
CRM is up $2, but the whole market's up pretty big this morning.
Yes.
What'd you say? OKTA has earnings tonight?
OKTA has earnings tonight, so I don't know if you have a strangle on in there. It's kind of a wide one with 24 days to go. You could roll it if you want to take on less delta risk.
Okay, got it.
Hey, buckle up. This ride is far from over. The Trump administration has delayed enacting tariffs on the EU, but it is no guarantee that trade tensions won't escalate, market watchers say. Basically, reason why the market is up today. So tariffs have been extended to July 9th. Let's talk, I don't know, what the market's doing this morning and that massive move overnight.
Spooze up.
Sadnuf, I told you to mark it down last time when it was going to expire. You laughed at me. Now, I'm going to remember about July 9th because it's by my birthday. What birthday date is that, Sadnuf?
July 12th.
Very good, very good, very good.
Hi.
Hey.
Massive move last night. What's volatility doing? What are treasuries? What are you doing this morning?
Volatility is getting killed.
Okay.
Treasuries are... They're up good. They were
up 20 ticks to 111.31. They traded over 112.
Yeah, they were up a little bit more. Well, they were down Sunday night, and they were up last night a little bit higher. Now they're kind of mid-range.
Okay.
We bought back some bonds.
They've had a $2,000 range, though. It's a pretty good size range.
I just bought back some. I just bought back some puts that we sold the last sell-off. Tell you what's true. I just bought back the
109 puts.
109 puts in June. We sold them at like around 58. Just bought them back at 36. It's a good trade.
Okay. Hey, it's Japan's version of the Fed Jackson Hole Symposium, but without the trail hikes or scenic views. But this year's gathering of global central bankers in Tokyo are going to focus on two uncomfortable realties: flagging economic growth and sticky inflation. I want to talk currencies this morning because things are happening in the euro. German GDP came out. They're showing growth there. South Korea, I think, is going to do something with their rates today or tomorrow. I'm sure the yen is doing stuff. What's going on around the globe?
I mean, the yen's down a little bit today, but everything else is pretty flat. They're killing.
No, the euro's down slightly, basically unchanged. I mean,
but
the yen is.
I don't know if you have a euro position on, but they crushed vol in there. overnight.
They're all down small, but they're all coming off their highs too. I mean, they're on their highs to mid range at worst over recent time.
We're going to Europe in a couple of weeks. We need the euro to drop a lot here, so Tony can buy the good steak.
Yeah.
That's
so
right.
you can
That's
also
right.
not bring us back stuff from there. Great. Hey, oil prices held steady yesterday on news that 8 OPEC plus countries who had pledged extra voluntary oil output cuts will now meet on May 31st, a day earlier than had previously been planned. What's going on in crude oil?
Nothing.
How much was the gas at Buc-ee's? Do you know?
He doesn't look at that.
I don't know. I would always look. I just
Gas on the road was the same. It was about. I did fill up a tank more than because I don't usually use gas.
Right.
So this is the first time, and I would say
you don't usually travel more than 6 miles.
Right. Most of my traveling is less than 5 miles.
Right.
So I'm all electric, but now gas. Most of the gas. So I have to use premium. Most of the gas
because it's for the Range Rover.
most of the gas is about $4.
You fall for that bullshit?
Yes. So it says,
wait a minute. Time out 1 second. You don't change the oil in your car because you say I'm going to get rid of the car anyway in a year or two. It doesn't freaking matter, right? But you put premium gas in because you think it's going to make a difference.
It is a weird divergence of his beliefs because you don't believe in commercial refrigeration.
Because when you open up my
you really have a screw loose sometimes.
When you open up my gas thing, it says use premium only.
You open up your gas thing, it says use premium. Yeah, okay. That's the first time you've followed directions.
Okay.
It is astounding, but that's why you're an enigma.
So it's like, I say it's like $4.20.
Okay. Wow, that's a lot, I guess. I don't know
You're
how much
unbelievable.
premium is here. Okay, you guys doing anything in oil? Bring it back to that.
Yeah, we have one small position on. We actually I rolled if you have an oil strangle on, which I did in June, it's only 20 days today, so I rolled to July.
Okay.
And we have a bunch of strangles on in July in crude oil.
Okay.
IV rank is 62, which is good.
Oh, that's great.
Yep. And so we have a bunch.
It's mid-range, higher end of mid-range most recently over the last month.
I mean, it's not moving much today, but we have a bunch of stuff on.
Gold, again, when I pulled this last night, this was true. I don't know if it's true now, but gold held a small decline as demand for haven assets cooled. What is gold doing this morning?
Oh, it's getting hit pretty down 70.
Okay, it is. Oh, that was true. Ha.
Down 70.
And that's a 2% move. That's a decent sized move after trying to catch a rally on Thursday, Friday.
Good for the good kids.
What are you doing in gold and
sure.
and silver? How's that gold-silver ratio doing?
Well, today it's good.
Okay.
But it hasn't been.
Right.
But it's good today.
I wanted to normally at this, so after I do like top market headlines, I normally go to like commodities, and then I normally do like a digital asset, like a crypto story.
All right.
But this is the crypto story that was like the leading story over the weekend. A crypto investor is being arrested after being accused of kidnapping and torturing an Italian tourist for weeks on end with a saw in order to get his passcode for his wallet. What the hee-haw?
What happened here?
The alleged victim, who's been hospitalized and authorities have declined to name, met up with Waltz at his expensive apartment on May 6th. And it wasn't long afterward that he was plunged into a weeks-long ordeal in which he was subjected to horrifying torture techniques. Waltz was arraigned Saturday morning, charged with assault, kidnapping, unlawful imprisonment, and criminal possession of a firearm.
Kidnapped this guy to get his passcode to his crypto account.
Yes.
Crypto wallet.
Yes. He tortured him for weeks.
Unbelievable.
Oh, it's just, what are we doing? What is happening?
Well, lucky thing that didn't happen to me or Tony because we don't even know our password.
Right, and the guy's still alive. So,
what are you gonna do? Make it up? You don't know it. You don't know it. You don't know it.
Yeah, I don't know, but it feels so wrong to say. But what are digital assets doing, Bat? Yeah.
Crypto's up 1,000.
Digital assets, when we're talking about Bitcoin trading 100 and I'm going to round up and say 111,000, just a skosh off of its highs of a little over 112 or so. Bitcoin's been on a little bit of a tear, and it continues to have a little bit of a tear. I'm going to say it already, Vanetta. Coinbase is trading at $268, up $5.
What are you doing in Coinbase?
And MSTR is up also.
Or what are you doing in digital assets or any of the altcoins?
Absolutely nothing. Nothing. We haven't touched our position.
Okay. Hey, in other news, President Trump said Sunday that the United States will have control over U.S. steel as part of the company's partnership with Japanese firm Nissan. Yes, he said Nissan. He meant Nippon. He meant Nippon Steel, but it's fine. But as part of the announcement, Nippon Steel plans to invest $14 billion into U.S. Steel's operations, including up to $4 billion in a new steel mill. Not sure what X was doing. This has been.
That's a good question because we have a small position in X, and it's up to. This is why we're always careful about
takeover
stocks.
place. Yeah.
Yeah, stocks are in play. I think it's unchanged, or it's up 50 cents.
Okay.
But this is the high it got to the last time they had a deal.
Yes.
So it's probably kind of capped around this level, I'm guessing.
Okay.
But who knows?
President Trump said in a social media post that Apple will have to pay a tariff of 25% or more for iPhones made outside of the United States. This is the latest jab at Apple from Trump, who over the past couple of weeks has ramped up pressure on the company and CEO Tim Cook to increase domestic manufacturing. The larger story is that Apple's been down for like 8 days in a row.
Apple today is up small, $3.
Yeah.
$3.
What are you doing in Apple?
I need a little rally.
Okay.
Right, this is good today, up $3.
NVIDIA, on the precipice of reporting earnings after the bell tomorrow, announced they're going to launch a cheaper Blackwell AI chip for China after U.S. export curbs. They're going to offer their new AI chipset for China at a significantly lower price than its recently restricted H2O model. Oracle also announced they were buying like $40 billion worth of NVIDIA chips. And I was like, that seems like a lot, girl. What are you doing in NVIDIA pre-earnings?
Our position in there right now is just short a bunch of strangles, and they're tiny. I mean, the earnings are after the close tomorrow.
Yes.
I mean,
yes, Wednesday.
Whatever we have on today is not what we'll have on tomorrow.
Okay, right. I'm just letting you know.
Yeah.
So.
Yeah. Our position there today is really small. I mean, tomorrow we'll do something.
But today is kind of like an outsized sort of move, though, in the market.
Yeah, but what scares me about NVIDIA now is the IV. Last time we traded NVIDIA earnings, the IV rank was like 70.
Okay.
Now it's 32.
Ugh.
So, and today it'll probably be lower.
Okay.
So I'm just a little nervous that NVIDIA is going to be priced to perfection.
Okay.
So I don't know if
IV rank's only 32 in there, so
that's why I just said that to
yeah.
I don't love it here because I think it's priced to perfection.
Palantir CEO Alex Karp has sold more than $50 million in stock. The stock has outperformed its tech peers since the start of 2025, surging nearly 62%. So why not smoke them if you got them? What are you doing in Palantir?
I mean, I'm not saying this to be whatever, but $50 million for this guy. I mean, I'm guessing the value of his stock is a couple of billion.
Sure, I don't know.
I mean, I don't
he
know.
might have needed to pay taxes. Who the hell knows what it is?
Yeah, I mean, I don't think that's a lot of money for him.
Sure.
Given.
I don't either.
I will tell you one thing about this guy because I've watched a couple of his interviews.
Mm-hmm.
He's pretty direct.
Okay.
Which I like. Like
Is he charming like you?
He's not charming. I wouldn't say he's charming, but what I would say is that sometimes CEOs are afraid to answer questions.
Sure.
And I feel like
they'll equivocate.
Yes. I feel like he will take he's kind of like us in the sense that he'll say, you know what, ask me anything.
Right. Okay,
I don't
good.
give a crap. Just ask me.
What are you doing in Palantir, the stock?
Nothing.
All right.
Palantir is hanging out with an IV rank at 34, a Scotia off of its highs. Matter of fact, if it opens at 127, it'll be just about $3 or $4 off of its highs.
I mean, its IV is higher than NVIDIA's right now, so. No? Okay. It's a tough room, everybody. Yeah, tough room. Try the veal. Hey, Alibaba's new instant commerce portal has surpassed 40 million daily orders. The portal brings merchants from Alibaba's food delivery arm onto its main domestic shopping app, Taobao, as part of a broader move among Chinese online platforms to set up instant retail. What are you doing in Baba?
What am I doing in Baba? At this moment, I want to say we're a tad long, but let me just check. Yes, we are. We're a tad long. We need the stock. Well, what's it doing? It's down. We need the stock a couple dollars higher.
Okay. What's the IV in Baba?
It's 21.
You know,
it's borderline.
Yeah, Baba's Sosnoff playground. I don't know why, but he likes to be in there. IV rank's only 21.
Yeah, it's not nearly as attractive as it was before.
That's what she said about you.
Nope, I'm almost done.
I have a lot to say about that, but I'm going to be...
I'm so close. I'm almost done. Hey, Cybertruck owners are now allowed by Tesla to trade in their cars for the first time since they hit the market, but they're going to incur a heavy hit in the process. Car gurus recently put up the depreciation rates. What do you think they are for a Cybertruck?
A Cybertruck?
Yes.
I'm surprised you could sell one. I don't know who will buy it.
Well, Tesla was not even
How much is a Cybertruck new? I have no idea.
It's $100,000. So in 2024, one owner bought $100,000 all-wheel drive.
Okay, so if it's $100,000, I'd say they give you 30.
It says around a 45% depreciation.
When you drive it out the door?
Grand.
Is what? I'm sorry?
I was going to say 55 grand. That's what I was going to say.
Yeah, it's fluctuating. But Tesla,
you're saying it's more closer to 60 or 65.
Tesla initially banned owners from reselling the vehicle.
Yeah, because they didn't want people scalping them to the upside.
Right. But now then there's an issue. But let's just talk about Tesla, the stock.
Tesla's up about $8 or $9 to $347. If it opens here at $347, this will be highs that it hasn't seen since February, but well off of its highs of 500 or so that it saw last year.
So I saw the new Model 3. Is there a new Model 3? Have you seen it?
I have not.
No.
I saw you.
I don't think so.
Oh, okay.
And?
Not a fan of the new one. I like the old one better.
Yeah. Okay. What's the IV in Tesla?
30 in Tesla.
All right, it's not the worst. Hey, United Airlines, it's reached its industry-leading labor deal with flight attendants, the union says. The deal includes 40% increases in total economic improvements in the first year. United Airlines flight attendants had pushed for better pay, scheduling, and other quality of life improvements. The deal must still be approved by membership, but UAL up around $1.65 in pre-market. So,
good for them. Rough.
Yeah.
We have a
UAL
small,
trading 76, but
you have a small UAL?
Yeah, we have a small UAL, but everything's up this morning.
Okay, yeah, that is
true.
everything
is up this morning. As foretold, Sadnov, as foretold.
Hey, it's your last chance for romance. No, it's your last chance. Southwest Airlines, the end of an era. They're going to start charging passengers for checked bags starting tomorrow. The policy ends more than half a century of 2 bags fly free for all passengers.
Hate it.
Travelers now must have Southwest credit cards, or those who book the highest class of service can still check bags without paying any fee. So if you are going on a flight, I think you have to have booked it by tomorrow, or you're gonna incur those bag fees. But bag fees brought in $7.3 billion for U.S. airlines last year. But it was the hallmark. It was the staple of what made Southwest. And
I don't check bags, but if I did, I'd be pissed.
Yeah. LUV bat.
Yeah, it's only up about 50 or 70 cents. My sister needs it a little bit higher. Can you guys get working on that, please?
Hey,
Can't help you.
Moderna.
That's it. Ivy rank at 27.
Do you have a Moderna position?
I don't.
Moderna has filed for review of its updated COVID vaccine. On Friday, the company said they'd filed a marketing application for the review of their updated COVID-19 vaccine with the FDA. The company said this would then go more in alignment with FDA's new guidelines for approvals of booster shots. mRNA, not sure what the stock's doing.
Yeah, we don't have a position. No, nothing.
Yeah, Moderna's kind of fallen off the charts here. $26 and change. It's up about 50 cents, but it's about 50 cents off its lows. Moderna's Ivy rank of 45. This is a non-entity these times.
But the Ivy rank is 45.
The Ivy rank is 45. So if you've got a directional here, maybe.
Yeah. Hey, this is interesting. Uber CEO Dara Khosrowshahi says his 18-year-old son has still not gotten his license and just uses ride-hailing. I'm sure this kid doesn't pay anything for Uber rides. If I were his kid, I wouldn't have my license either. But this article says it is actually part of a larger trend. Young people, in 2023, 33% of eligible drivers 19 and under had a license. In 2003, that number was 45%.
I'm surprised you got his last name right. How'd you say that?
Khosrowshahi.
Man, maybe you should do my phone calls. When we go to phone calls, you should do the names for me.
I think Dara should call in and ask Tony to say his last name, because I'm a seller of this.
All right. Well, what are you doing in Uber? And are you surprised that kids don't want to get their licenses anymore? Only 33% of kids.
Okay, first of all,
only 33% of kids. I was surprised. I
know, but it depends where you live. Like if you live, I grew up on
a farm.
You grew up in a farm. You have your license when you're 14.
Sure.
Okay. Like if you grow up in the suburbs or a farm, this kid's probably grew up in downtown San Francisco.
Yeah, of course.
He doesn't need his license.
And his dad literally owns Uber. That kid's not paying for Uber.
No, I'm just saying. But you don't.
City kids.
It's city kids.
Right.
You know, like.
But it can't all be city kids. It's only 33%. Not all
I understand,
kids.
but like
I was just surprised by the number. That's because it was like I could just taste the freedom when I was growing up.
When you live in the city, like my son didn't get his license right away. Scott's kids didn't get their license right away. Some of them, my daughter.
My kid's getting his license. As a matter of fact, he's going to driver's ed tonight again. Yeah, he wants it. He wants it bad.
He's a suburban kid. If suburban kids get their license right away, country kids get their license right away.
Sure.
When I grew up, we had to have our license on the day we were 16.
Okay. All right.
Remember,
why?
Because our parents wouldn't drive us anywhere. Drive ourselves. It's a different world. Nowadays, your parents are your chauffeur.
Sure.
Okay, back then we either rode our bike or waited until we could drive.
Yeah.
Your parents wouldn't drive you anywhere.
Yeah. Hey, here's something that's, oh my God, I love this trend so much. So if you're not sure whether or not you're hot, why don't you just ask ChatGPT? Because it'll be brutally honest. Have you seen this trend?
No.
So people are uploading photos of themselves, and they're asking for straightforward feedback on their appearance. I'm following this one lady. I mean, I cannot talk ish about her because she's actually getting married. I don't know what that's like. But she uploaded a picture of herself, and she was like, "Look, I have $2,000. I'm getting married on X date. What can I do that I would be healed, but I could look better for my wedding?" And so she uploads it all to AI. And then so she's going and she's getting all these procedures and she's filming the process. Would you ask AI if you were hot? Or like what it would recommend for you to do?
At this point in my life, sure, I'd ask. What I can.
A bullet is what they would recommend.
Okay, so we're gonna do this. We are going to do this. And Bat, would you?
Vanette, I'd do anything you want for the show. You know that. I mean, I put on a Where's Waldo costume. I mean, come on. I'll do whatever you need.
If you wear that Where's Waldo costume, I mean...
It's requested by the wife sometimes. That is correct. That is correct.
I'll sell that.
Anyway, if you want a brutal or honest opinion, you can just go to OpenAI or chatgpt.com and for hilarious results. Hey, Chicago-based McDonald's is closing their Cosmic restaurants, but they plan to test the drinks the chain inspired.
What is Cosmics?
There was only one here. It was in Bolingbrook. The first one ever was in Bolingbrook, and it was like a rage. The line was like wrapped around it for miles, and all they sold were like drinks and snacks. They had a turmeric spiced latte, a prickly pear slushy with popping candy on top, and a frozen sour cherry energy drink. McDonald's says they are going to integrate some of their drink innovations into their main menu. I'm not sure how many locations there were, but it was a concept restaurant. It's a small format store.
Oh, never heard of it.
I literally mentioned it on the show because I reported it. If you guys have watched,
I wasn't here that day.
You were here because you're always here. McDonald's bat MCD.
Yeah, not something we talk about that often. Haven't been to McDonald's. My son tried. Did they have like new strips or something like that?
Yeah, the chicken tender strips. Yeah.
Yeah, he says they're horrible. $3.15.5 up $1. It's been going sideways at the high end of its range.
So I kept hearing varying reports while I was.
I read a food reviewer who did the 5 top fast food chicken strips. You want to know the results?
I'm in the middle of something here.
I'll give you the results. He rated of the top 5 from worst to best.
Okay, I'm going to say Raising Cane's was worse.
He had Raising Cane's as the worst.
Yeah, I'm going to say that's like
and McDonald's as the second worst.
Okay, and then Burger King. Does Burger King have, or do you do like Wendy? I don't know who has chicken strips.
He had Popeyes as the best.
Oh yeah, that tracks. Yeah, you the spicy. Yeah.
And there was 2 others in the middle effort.
Maybe Chick-fil-A, but they're Chick-fil-A.
Oh, Chick-fil-A was his second best.
Okay, that's good.
And then I forgot who the third was, but he had
another great story, Tom.
He had Raising Cane's as the worst.
Yeah.
McDonald's as the second worst, and Popeyes is the best.
Anyway, back. Can I get back to the news here? This is my last story. You're gonna like it.
All right.
I kept seeing conflicting reports of this over the weekend, but the Cubs maybe are hosting the 2027.
I thought they got it already.
So I thought they got it already too, but then when I was trying to verify my sources, as you should do, just verifying your sources last night, I couldn't get complete confirmation. Nothing is finalized. So it says Cubs are gaining momentum in pursuit. But the funniest tweet that I saw was like, "Oh, Cubs are getting the 2027 All-Star game. Get on the Kennedy now." I was like, "Yeah, that's
great.
I gotta leave. Like you.
I hope they get it because they won't show us on the mound for the game, obviously, but we are in 2 different places in the outfield.
Last time All-Star game was played at Wrigley, you know?
I don't remember. I don't know.
I have it in front.
What year?
You know, it said 30 years ago, and over 30 years.
Oh, over 30 years.
Yeah.
I don't remember.
So Wrigley Field's 111 years old, so it's a beautiful stadium.
Oh, it's great.
It is great. It's great.
I don't remember the last time. So it was like 95 or something? I don't remember.
I guess.
Yeah. I don't remember. I've never been to a Major League Baseball All-Star game.
Okay.
I've been to the NBA All-Star game.
I congratulations. I don't know.
I was at the game where Michael did the dunk from the foul line.
Oh, okay.
It's kind of iconic.
Okay. Did the city hold a parade for you? I don't
No, but if you look at the picture when Michael is flying through the air with his tongue out, his tongue wagging, he's got the ball up here.
Uh-huh.
In the background, you can see me and Jules.
No one wants that.
Kissing. They were kissing. They missed the whole thing. They were kissing.
No one wants
He got
that.
the ball up here. It's the iconic pose, everything. And then because they wouldn't give us our normal seats because they'd take them away from you for that. But they gave us seats like maybe 15 rows off and you could see us just standing there, just watching them.
Oh, man. Can you water ski?
I can snow ski.
Okay.
I have, hold on. I have water skied.
Okay.
But it's hard to get up.
That's what she said all weekend long. She was writing me.
Bat, can you water ski?
Hell yeah. What, are you kidding me? What can I do?
I've never tried to water ski.
I mean, water skiing itself is easy. The hard part is getting up.
It is. Yeah, you think. I have never seen this in my life, but it is from an account called Nature is Metal. Watch this. Poor wakeboarder here. Watch this.
Oh my God!
It's a swan. It's a very angry, large swan. Right for the Achilles. Talk about Swan Lake.
Swans are mean.
Well, it was protecting its nest, probably.
I'm just saying, swans are mean.
Swans, geese. Yeah, you gotta look out. I don't know.
Have you ever seen the Curb Your Enthusiasm when they kill a black swan?
No. Oh, why would no?
You never seen the one where Larry kills a swan?
No.
Kyoto. Oh my God, it's one of the funniest things. Have you ever seen that
sad.
one? Curb Your Enthusiasm.
I don't.
When
Maybe
they're playing golf and they kill the black swan, and they go.
That's messed up, dude.
Oh my God, it's.
I'm
funny.
not. I was doing things when that show was on. You know, I was a mover and shaker back then. I wasn't sitting home watching every episode like you.
You were 58. Okay, you weren't moving and shaking anywhere. All right, when that show came on for that episode.
This has been Daily Dose. Bat, what's coming up next?
But you should watch the one.
No, I wasn't 50. I wasn't 58 when Seinfeld came on.
It's not Seinfeld. It's Curb Your Enthusiasm. It's the Black Swan episode.
Stop saying that.
Yeah, whatever.
What's coming up next?
We're going to take a quick 90-second break, come back. We got more Tasty Live after this. I mean, what comes up next, Oz?
I don't know.
Confirm and send. And Sadlov, it came on in 99. That was 26 years ago. 26 years ago, I was banging cocktail waitresses two at a time. We're going to take a quick 90-second break.
The Black Swan episode came on in 99?
I don't know. That's when Curb Your Enthusiasm came on. If you didn't watch the first couple episodes, you didn't watch it. We're going to come back with more Tasty Live right after this.
You should have.
Wow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Now don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch. I'm Tony Batista. He's Tom Sosnoff.
41. You got it.
See that? We knew it. Pretty good. Baseball field. Baseball game. It was a wonderful evening. It was a warm summer day, 1982. It was around 80,
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful.
No, we were playing. We played softball on the same team. 12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him as a charity case.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, we have 2 specials for you. Well, one normal thing and one special. First, we have the market. Even the S&P is up 71. They are now about 25 handles off of their highs, significantly off of their lows. As foretold, Sosnoff, NASDAQ up almost 300, 285. Russell up just about 30, and the Dow up 460. They're all up around the same, about 1.25%. Volatility in by $1.40. Your beloved bonds over 112, 112.02. Sadnov. I hope they go higher so you can stop looking at the Model 3 and get back into the Tesla that you deserve. Bitcoin 110.5. Sosnoff just under its highs. Oil down 12 cents, actually caught a little bit of a rally, although it is 40 cents off its highs, 60 cents or more, maybe 70 cents off of its highs, 40 cents off its lows. I apologize. Gold down $74, still trading 3,300, relatively high end of its range, but mid-price for the last couple of weeks. Silver down 68 cents. These are both down 2% or so. Net gas basically unchanged, and every equity is up. I really couldn't find one that's down. You have a special for us, Sadov, that you've prepared. Tell us about it.
The only equity I could find that's down is Baba. But let's get to Confirm and Send.
Okay, Confirm and Send. I thought you had a special for us. I'm sorry.
Oh, the Black Swan special. Yeah, we'll show it afterwards.
Okay. I'm sorry.
Oh, yeah. We have to get to Black Swan because, Vanetta did the whole piece on the attacking swan. Have you ever been attacked by a swan?
I don't believe so. I
have never been attacked by a swan, but I hit a golf ball once near a swan, and that swan was not happy. But I was not attacked. It's Tuesday, May 27th. Let's see what we got. This is travel week for me and the Bat. We're going down to Atlanta, hot Atlanta. I often notice in your studies that you don't discuss max loss. I've also seen many of the trades you place will be risking a lot more if the underlying goes to zero or goes up infinitely to make a lot less. Can you please discuss this? Because I think I'm missing something. Like, why would I take more risk than I can make? Explain.
Why would you take more risk than unlimited risk? Because that's what any platform or anybody would tell you. I mean, look, we look because you have a higher probability of success is the short answer. But we look at buying power to quantify our risk. If the brokerage firm is taking $1 in commissions for facilitating the order, that's their only benefit, and that's the amount of money they're holding. They're holding $4,000, $5,000, $6,000 for the trade. That's my risk on the trade. So yes, in theory, a stock can go anywhere at any time at any price to the upside. It can go to infinite, but in my 40 years, I've never seen a stock go to infinite.
Yeah, Tony's right. The term theoretically, if stock go to zero, it could go up infinitely. But the reality is that we use the BPR as the real measure of kind of what is your, kind of your worst. On Tasty, we also have something called CVAR, which is your worst 5% of all cases. So you can use your BPR or your CVAR as kind of your worst loss. But the reason that we risk more than we can make is because there has to be a trade-off. And the trade-off is you have a higher probability of success. So if you want to risk one to make one, it's a 50-50 shot. If you want to risk 9 to make one, you have a 90% chance of success. Yeah. And you want to risk 1 to make 9, you have a 10% chance of success. So you just have to decide, it's a perfect industry. You just have to decide, where's your sweet spot? Our sweet spot's like, let's say we like to risk 70 to make 30 or risk 65 to make 35. That's kind of our sweet spot. But you make yours wherever you want it to be.
Sure.
You want to risk 20 to make 80? Go for it. You want to risk 80 to make 20? Go for it. It's just, that's how the game works. It's actually perfect. Let's go next slide. It seems to me there is a tariff trade to be made. Anytime new tariffs are discussed, the market seems to have a knee-jerk reaction. But it also seems like these tariffs will always either be lessened or postponed. Assuming I'm correct, would you sell puts on that down move or would you buy calls? Where's the bigger bang for your buck?
Well, the bigger bang for your buck. I mean, listen, first of all, would you do this? Well, every time it's happened, it has worked so far. So I don't know if the future holds the same, but yeah, it seems to be the thing to do. And that's exactly what I was mentioning on Friday. So yeah, you would do that. What's the bigger bang for your buck? I mean, obviously buying calls or buying a wide call spread is going to pay you more, have a lower probability of success than selling puts. Buying futures would give you the biggest bang for your buck. So it all depends on how much risk you want to take. Futures would be a 50-50 shot. Calls might be less than a 50-50 shot. And the puts would be a higher than 50-50 shot.
Yeah, I mean, there's no way that we can tell you, where you're going to get the most bang for your buck. Obviously.
Oh, you could, Sosnoff. I mean, you would say on Friday, if you thought the market was going to be up 70 or 80 handles, that outright buying calls or call spreads would pay you more than a naked put.
Oh yeah, of course. And buying futures, the whole deal.
Futures would be even better than that. More bang for your buck.
The problem is, yeah, I mean, I could never tell you that that's what's going to happen.
Exactly. Well, you have a hype. Right.
Yeah.
Right. Mm-hmm.
Yeah, sure. Let's go next slide. Is there such a thing as a good risk to reward ratio for trades? And does it change based on whether or not you're trading defined or undefined risk?
Is there such a thing as good risk to reward ratio for trades? And does, based on my trading defined? Yeah, I mean, listen, good. There's good and better in everything, Sadnoff, and they're both subjective. One person's good is going to be another person's better. So for me, you just talked about this a moment ago, kind of piggybacking one of the first emails we did. When I'm selling premium, I like to be outside of standard deviation. So I like to be in that 70-30-ish range, 65-35-ish range. So I like my pop to be above 65%. 65% probability of profit puts me outside that standard deviation. That's where I like to live.
Yeah, I mean,
assuming tight markets, assuming high IV rank, and all the mechanics that we look at.
I mean, that's essentially, if we're selling premium, that's where we live. If we're looking for a risk to reward ratio, there's a couple things we're looking for. One, we're looking for like Tony just said, where maybe we're risking 2 to make 1 because we like the probability, the pop on those. Also, I like if I'm playing something just pure directional, I just like what I consider to be pot odds. So like if I think something's grossly oversold, I'll think, okay, well, it's got, it can go up twice as much as it can go down from these levels. Or if I think something's grossly overbought, I'm thinking it could go down twice as much as it could go up. So that's another reason to make a trade. But there's no, there's no way to quantify that. That's just a gut. But on a short premium trade, you can pretty much quantify it. Defined risk, your numbers are perfect. Undefined risk, there's a little bit more open-endedness to it. But defined risk, you can kind of figure it out exactly. So it's really just up to you. We like the 2/3, 1/3. On an option trade. If it's just a directional thing, I like pot odds that are, at least 2-1 or 3-1 my favorite. Let's go next slide. Which means you're going to have to be comfortable fading stuff, being contrarian. How would you use a diagonal spread to trade earnings?
Directionally. So if I was bullish, I would be doing a call diagonal. That would be selling an out of the money option nearer term and buying a further deeper in the money or closer to the money option, a month or two out, preferably 2 months out, in the direction I want to go. If I'm bullish, it would be a call one. If I was bearish, it would be a put diagonal. I also like to use it when the IV rank is relatively low. You may have that opportunity in NVIDIA for earnings. IV rank might be in the 30s for earnings, and that's relatively low for an earnings play. That might be a play. I do like to look at the difference between the 2 months, and I would think with an earnings play, you're going to have front month vol exaggerated, which would set up well for a diagonal. Back month would be lower. So I like them for earnings. Defined risk trade. I like it.
Yeah, sure. Diagonal spread for earnings is totally fine. I agree with Tony. You're going to use it when the IV rank's a little bit softer, like NVIDIA here, it's only 30 going into earnings. You can use diagonal spreads. All it means is that instead of doing a straight calendar, you're going to be selling the front month, buying the back month, and you can do it any way you want. So you can sell, let's say, a front month up here and buy a back month down here. You can sell a front month up here and buy a back month up here. You can do it directionally however you want. That's why they call it a diagonal. And the cool thing about the Tasty platform is you can set it up as a calendar spread and then just move your back month strike, just drag it up or down to wherever you want. So if you drag it, depending on whether you're doing puts or calls, if you drag it in one direction, it'll be a debit, and that'll be a more directional trade. That'll be a trade where you're hoping that it goes. It's like a long vertical spread and a short count and a long calendar spread. And then if you go the other direction, you'll create like a short credit spread along with a long calendar spread. So it just depends on, you can move the diagonal so you can directionalize the diagonal spread however you want on the platform. You can move it up, down, you can create a credit with it, or you can do it with a debit. It's up to you. It just means that it's not a perfect calendar. But you're buying the back month, you're selling the front month, and you're just doing two different strikes. So you can just move it up or down and just however you want. Like I said, you can make it into a debit where you're long the back month vertical. You make it into a credit where you're short the back month vertical, and you're always going to be long that calendar spread. Let's go to the next slide. Can bond futures trade below par?
Sure, below 100 they're talking about. Is that what they mean?
Yeah.
Sure.
Yeah, that's what they mean.
Yes, they can. I don't know the last time they have. It was in my trading career, I believe, but I don't remember the last time.
Yeah, I mean, when I first got in this business, they were in the 70s. You're right. I don't remember the last time that they were below par. I'm going to guess was in the 90s, sometime in maybe mid to early 90s, maybe late. I don't know. It was in the 90s. They traded below par for sure. I just don't remember. So par is 7%. And that's 100. So that's kind of where they, bonds right now are 111, almost 112.
Yes, 112, right.
They've traded into the 60s and 70s. They've traded up to 170. But they're right now, they could trade below par for sure. That just means interest rates, long-term rates will be over 7%. Right now, they're just a little over 5%. Absolutely, sure. Bonds can trade over par. Below par. Let's go next slide. Hey, there was a long period of time when we never thought they would trade above par.
Yes, that is true. That is
Exact
true.
opposite of what you're saying.
Yeah.
The IV rank in NVIDIA is around 30. Tony said on first call it seems low for an earnings trade in the stock. Is this low? And if so, what would be the lowest lowest IVR that makes sense for an earnings trade?
Again, subjective. You might sell premium here with an IV rank of 30, but I know you would prefer an IV rank in the 80s. What is low? For earnings, I would say 30 is extremely low, especially in a liquid stock like NVIDIA. So is it true? Yeah, the IV rank is 32. It's up there. So what would be the lowest IV rank? I mean, you're there in NVIDIA with 30.
So I agree with the bat here. Tony said it was low. It is low. And in NVIDIA, I actually can't remember I can't remember an NVIDIA IV rank of 30 going into earnings. So for sure it's low. And I would say that the lowest we would probably make an earnings trade is if you have IVR that is the lowest that we would sell premium into an earnings trade is if the IVR was 30. We will definitely trade something when the IVR potentially could be below 30 if it was a pure directional trade. So like if I was just straight out bullish in NVIDIA and I was going to sell puts no matter what, I'd sell the puts.
Yeah, I agree.
Or if I was bearish and I sold calls or call spreads, I would sell the calls or call spreads. I would not hesitate I would not hesitate to do that trade if the IVR was even below 30. If it was just one direction, if I'm selling both sides, I'm going to hesitate.
Yeah, agreed.
That's it.
Good job out of you, Sadnov. Good job out of the team. Do you have your special?
Oh yeah, we're ready to go. We're ready to go. Roll it back.
Are you?
Yes.
Okay. The Black Swan, everybody. The Black Swan.
Who killed Kyoko?
Gentlemen, you know what this is? This is T sheet. Tells me who played and who did not play. Only one other group played. Course, not crowded. Respect for norm. Oh, you played. Why? You don't respect the norm?
No, of course I know I respect norm, absolutely.
Although he was a slow player. What else? You are not to respect. Beautiful black swan?
Oh,
We adore swans. My beautiful black swan, Kyoko, was killed, murdered. Who killed Kyoko? You. I don't know you. Who are you?
I'm a guest here, and if I may say, I think the food here is just great. I ordered some eggs with onion just...
You killed swan?
No, sir. I'm from out of town. I have no reason to kill the swan.
You smart guy.
Yeah.
You no kill swan.
Oh, no, sir.
But you know who killed swan.
Well, I don't think I do, no.
Oh, you like the club?
I love this club.
You tell me. Free dues. No more dues.
For life?
Whole life.
Valet parking?
Anytime.
Range balls?
All you want. You tell me, right? Tell me.
No, I really can't think of who could have done it.
You. You kill swan?
No, I never kill a swan.
Why? You stupid?
Not stupid.
Yes, you married big mouth wife.
She does have a big mouth.
Yes.
That is true.
Maybe I talk to her.
Don't call her. I don't even bring her around anymore, out of respect.
Oh. Daddy, how are you?
Good.
Yeah? You kill Kyoko?
No.
Yeah.
Hey, I can't talk now. I'll call you back.
No cell phone in the clubhouse. Last warning. Now go. Go.
I waited my whole life to see that. I'm going to take a quick 90-second break and come back. Silent, do me a favor.
Who killed
Don't
Kyoko?
ruin my show anymore. Take another vacation. We'll be back in 90 seconds. You listen to Tasty Live. We've got an option jive after this. Unbelievable.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
It's option jive.
Option jive. Sosnoff, go.
Option jive. Hey, Kai, what's up?
Not much. How are you?
I'm good. Good.
Cool. Ready for some market summary?
Woo me.
Okay.
Woo me.
Yeah.
Yeah, let's go. What do you got?
All right, so we have tons of content. Last week, the interesting thing is that we expect a large move on Monday. Actually, the market didn't even change at the market close. It moved a little bit. So both equity market, bond market didn't move that much on Monday, but we start to sold off start to sell off on Wednesday due to the bad Treasury auction, and all the way up to Friday. So
yeah, the bonds sold off for sure.
Yeah. And also the bond yields jumped. A 10-year hit 4.6 at the highest, and 30-year reached 5%. That was the highest since the end of 2023.
Yeah, the bonds got into the low 110s for sure.
So the interest rate came down a little bit this morning because we have a pretty big rally and all things happened. I added some of the information because something changed Monday, yesterday, and today. So dollars still weakened last week despite the higher yields. So a little bit different.
It's kind of mixed this morning, but sure. What I noticed today, the crazy thing about the dollar is they're crushing premium in all the currencies, and they haven't taken premium out like this in weeks. So today's the day for some crazy reason. I don't know what it is.
Okay. Maybe the Europe deal, some hopes.
Europe deal. I think the Russian stock market crashed. I don't really know what happened.
Oh, does that
$69 billion in 2-year notes will be auctioned today, just as a
right at 8:30 8:30 New York Times, right?
No, I'm not talking about that. I'm talking
Chicago time.
Like the euro premium got annihilated today. That's all. But go ahead, keep going.
Okay. And
I think it's closer to noon Chicago time, Kai, but it's irrelevant.
I saw it. So never mind. And the Bitcoin reached a new high again, and 110,000.
Yeah.
Do you hold it or do you sell premium?
Everybody that owns Bitcoin is never selling it, and they have been holding. If you held it to 110, you're holding it for the rest of your life.
I sold it at 100,000. It was slightly lower before the last.
I'm just saying, if you're holding it here, you're not selling it. It doesn't matter.
Okay.
You can't trade it. There's nothing to trade, so you're just holding it.
It's very volatile.
You're either in or you're out. I mean, there's no way to.
It's not even that volatile. It's just you're in or you're out. That's all it is.
Okay. Cool.
Yeah. I mean, it doesn't. It's not. It's no more volatile than any $100, $110 stock. That's for sure. You get a $110 stock, can easily move $3 a day. That's like 3,000 points in Bitcoin. No, doesn't even. Bitcoin's less volatile.
All right. So last week the equity market, that was the first week we saw the down movement since the first rally. So can we show up the next slide? Yeah. So the week before we saw the huge rally, and last week we're down somewhere between 2.5% to 3.5%. Yeah. Yep, that's it. And expect move.
Okay.
I adjust some of the numbers here. The week before, the last week we definitely exceeds the movement because the expect move was so low. The VIX started at 17, and this morning the VIX dropped to somewhere close to 20.5.
Why does he expect to move higher this week? It's only a 4-day week. Is there big economic
VIX is higher. VIX is higher, and also the SPX expect move hasn't adjusted yet. This is from the Sunday afternoon.
Oh,
right? So 122%, yeah. And VIX is still trading above 20. That's part of the reason.
Yeah.
20 and a half, that's when I saw it.
Okay.
Yeah, okay. All right, IVR for different indices. Last week, this is one of a few weeks we saw the IVR increase across all different assets, equity, bonds, currencies, futures, everything. Because everything went down the price, mostly.
Yeah, interesting. That's the first time we've seen everything.
Yeah, everything went up last week, yeah. So next one, some big movers. So this is definitely Bitcoin, reaches 110,000, and right now still trading above one. Yes, still 111.
111.
Yeah, 111.
Yep.
Still high. Okay.
Well, it's the cash is 110.
Right. The futures 111. Yeah.
No.
The spot price is 110.
Close to 111. Not there yet.
Oh, okay.
111.8. 110.8.
110.6. Yeah, roughly. And the next one is something I want to mention is the VIX futures. So VIX futures last Friday, not Friday, it's actually starting from Wednesday. We start turning into backwardation again. But this morning, I checked this morning at 8 a.m., it turns to flat. So roughly when the VIX trading around 20 and 21, the VIX futures term structure turns to flat. So last week we traded above somewhere between 22 to 25. Then we saw the backwardation. So we're getting there.
I don't know what you're supposed to do. I don't know what you're supposed to do with that information, but
just some
cool looking chart.
risk level.
Yeah, I don't know what you're supposed to do with it.
Okay. All right, next one.
Some things are good to know.
Okay, thank you.
Knowledge is power.
Yeah.
This is the largest movers last week. A lot of them actually had earnings, like the Intuit had earnings. Dollar Tree, Dollar General last week all had pretty, not pretty big, but on the top 5, top 10. Dollar Tree is also top 10 too. The Crowd, CRWD, Dash. But last week, because the pretty much everything went down, so even the largest up movers are not that big, 2% to 5%. That's it.
Yeah. I think the takeaway from this slide is actually not what these individual stocks did. It's that the down moves in DEC, ENPH, ROST, Humana, and CarMax are significantly greater than the up moves in Intuit, Newmont, Dollar General, CrowdStrike, Dash. So when you look at this chart, the up moves are all measurable. The down moves are the ones you would have got hurt at.
Yep.
Would not get hurt in the up moves.
Yep. Exactly. And DAC and Rost had earnings.
Yeah.
Last week.
Yep.
So I added an extra slide for this month because we were getting to approach to the end of the month. So this is the largest movers for this month. The largest stocks are pretty very close to the chips and the video cars related companies, right? STX, Seagate, what is the other one? Micron. All these have pretty big move. NVIDIA, AMD, also Tesla Coin and VST. These are the biggest movers, up almost 30% for everyone. That's crazy. Last month.
Yeah, the only one we have a big position on is UNH, which I didn't even look at this morning. Just please tell me it's up. We need it higher.
Oh, I didn't check.
I didn't check either. I can't believe I forgot about it. What's UNH doing, Tony?
Which one?
UNH.
Yeah, UNH is up this morning, 298. It's only up about $2.50 or $3. On a move like this, you would expect a lot more.
Yeah, I was hoping it would be about 305.
A move like this in the market, I would expect
a
lot more.
I was hoping for 305.
For some reason,
I could use 305, 307, even better.
Yeah, me too.
So Humana was one of the very volatile stock in the past month. Pretty much Humana is on the either top 5 or bottom 5 in the past 4 weeks, every week.
Stock to trade.
But I thought you trade a couple of times, right?
No, I don't trade Humana.
No? Okay.
I just got stuck in UNH. I got some Lilly positions on ENPH too. That's about it.
Oh no, everyone. Almost. Okay, so next one, the past earnings. Last week, we had some big movers. The Snowflake, Zoom, Urban Outfitters, not Zoom. The Snowflake and Urban Outfitters up 23%. Advanced Auto Parts actually up 57% post earnings. Hope everyone's fine if you trade this one.
I didn't trade it.
Yeah. Ross is down 10%. That's why it's on the large movers.
Nope. All we traded in this one was
Home Depot.
No. Traded
Baidu
and what's the one? A Snowflake.
A Snowflake. Okay. It's still up 13% the next day. Okay, so from the whole earnings season, from the stats, right now we already saw more than 3,300 companies announce earnings, and interestingly, the winners and losers are 50-50%. And this season, this earnings season is more towards positive returns. So the average returns positive 0.4%. Last week, we didn't have any movement in general. So again, we're back to 50-50.
Yeah, it doesn't surprise me at all. 50-50 just
because you've seen too much, right? Because I posted every week or every season. So last slide, we still have some interesting companies announce earnings this week. The biggest one definitely NVIDIA and Costco for sure. So Wednesday, Thursday, we still need to pay attention to some of the large, very important companies, right? NVIDIA definitely, Costco, Best Buy. What are the others? PDD is actually tomorrow morning.
Is it? I missed that one.
Tuesday morning, yeah. PDD.
Today's Tuesday morning.
Oh, sorry. Okay. Yeah, it's already passed.
Yeah, May 27th.
I was still thinking about Monday morning, yeah.
PDD. Ooh, stock's down $12. No, $20.
Ooh.
Yeah, you're a little over. Yeah, $20. 119 to 98. Yes.
Ooh, we don't have a good position on in there. I missed this.
I missed it too.
Okay.
Ty, thanks for making me look bad.
Thanks,
We're gonna
Ty,
take
for
a
ruining
quick
my
90
morning.
second.
What else?
Thanks for ruining Tom's morning. We're going to
That's
take a
it.
quick 90-second break. We'll come back. We'll catch the opening bell immediately after this 90-second break. Peace.
I don't know what.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tastylive.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Tomas, we are back, my friend. You know what that means. The opening bell is imminent, Sadnov, just in a couple of seconds here, so I'll let the market open. But even the S&Ps are up 72. They've been anywhere up around 50 last night to 80. But so far on the show, they've been up around 70 to 80 since we've been on the show for the last hour and a half or so. NASDAQ up 290. Volatility in by $1.58, trading about 10 cents off of its lows. Volatility should get crushed here, Sadnov.
Yeah, I sold some up 73 on Sunday night. Bought them back last night up 53 or 54. I'm looking at this PDD now because I have a tiny position there because I didn't know they had earnings. That stock down 20. That has to be way outside the expected move to the downside.
Oh, way outside the expected move for sure. AutoZone had earnings too. I missed them on well, you weren't here. It didn't matter, but I missed them. I didn't tell you. There's the opening bell, Sadnov. What do you think about the market? Even the S&P's up 65. Do they hold for the day?
The one stock I need up big today is UNH. So you got to make that happen, please.
UNH is only up $3 or so. Not enough for you, not enough for me. Although it does help. Tesla up 10. Let's go through some of the other movers that we have here, Sadnov. When you look at the high option volume list of stocks that are helping us today, Tesla up 10 and change, Meta up 9.5, Netflix up around 10, MSTR up around 9, Meta up 10, Microsoft up 7. Microsoft been a little bit of a lagger late, catching a bid now. Coin and Costco both up 5. Let's see what the buckers are, Sadnov. Buckers are few and far in between. Gold, obviously, any gold product, any volatility product are going to be down. First stock, you really see that we trade First Solar down $1. BABA down around 90 cents. PDD is your big mover to the downside, down $20.57.
I'm guessing that
Yes.
BABA and the other Chinese stocks are down on that.
Lower in sympathy.
I don't know if it's that much. I don't think they care less about PDD. I mean, I just rolled my calls down in there. I don't know what else to do.
I don't know what else you can do.
Yeah. And wow, Microsoft up $9. You kidding me?
Microsoft has been a little bit of a lagger. I mean, it's hard to call something a lagger when it's on its highs, but Microsoft, $9 after that big jump up a couple of weeks ago.
Yeah.
IB rank of 17 has been very low. It's been keeping us out of there. More of a diagonal trade for those who play that.
Yeah, I'm just looking to see if there's any kind of pretty big losers.
And by a lagger, I meant like we haven't been trading it very much because the IB rank is so low.
I hear you. CrowdStrike had kind of a bigger move than I thought.
CRWD?
Yeah, it's up. Did it have, I don't know if it had earnings or whatever.
Up almost $8.
Yeah.
No earnings.
Because the S&Ps just dropped off pretty good.
Yeah, even the S&Ps are up 64. I don't know if you could say that dropped off pretty good, but yes, they're about 20 handles off of their highs. Yeah. Agreed.
Taking a look around. Nope.
Taking a look around.
So far, so good. I mean, some of the stuff, some of the premium that clearly they took from us last week, they giveth back todayeth.
They are good like that sometimes, aren't they, Sosnoff?
I don't know who they are, but I think that they. I think the market.
You're mentioning them. You're mentioning them too. There's your thing.
I think the market didn't accommodate premium sellers on Friday. I think they kept a lot of juice in. I know the market rallied back. And what did Spooks close down, about 40 or something?
Yeah, approximately.
42. I think it was like 40 or 42.
Yeah.
I mean, at one point
they had rallied to down only around 20 or something like that, and they sold off into the close.
Right. They closed down around 40, 42, and then now they're up 60. So I think that they took all that fear back out, and then they just crushed 3 days of premium that they didn't take out over the weekend, because that's what it looks like in my P&L. It looks like it all came back today.
There was no volatility contraction really on Friday, even with the rally. I agree with you there.
No, yeah, you mean the intraday rally?
You didn't get the weekend. They didn't take the weekend out. Was the point I was trying to say?
Oh yeah, for sure. I noticed that in P&L.
Right.
Yeah. So just trying to figure this out here. If we have to do anything. I mean, I would like the bonds back up near their highs. They're not there yet.
No, bonds are trading 111.30.
You know, Vanetta talked about that U.S. Steel X, you know, and I have a small position there, so I thought I'd take a look. This stock is literally untradeable.
51.5. Vecchio said he liked the deal, so I don't know what that means. But
no, I'm not talking about. I'm talking about trading it. It's these options are untradeable. I mean, and just so you know, there's no reason to trade the stock because the upside calls are zero. Like there is no premium to the upside. They have this thing priced as it's a deal.
Yeah,
like,
it looks like a done deal.
Yeah, if you look at the 55 calls, they're 12 cents, 13 cents. If it wasn't a done deal, those would be $2.
Sure.
So there's nothing.
Meaning if there was
There's nothing to do here. I mean, I'm short some 52.5 calls and some absolutely junky puts, and I mean, I'd like to just buy in the puts. I don't know if you're going to be able to get them.
Get them while they're hot.
Well, the market's 12 cents, 250.
Right.
I mean, what do you do? I'll put a 15-cent bid in and see if I can buy them.
Yeah, hope and pray is all you can do.
Yeah. Put a 15-cent bid in just to get out of these. I'll go up to 20. All right, I'll leave it in. Maybe somebody will feel sorry for me.
If you're lucky.
Yeah, exactly. If you're lucky. Let's take a look somewhere else. You said there was one stock that has earnings today. What was it again?
OKLA. So enough OKLA. You have a small position in
OKTA.
OKTA. I am so sorry.
OKTA.
My bad. Up $2.12.
And they have earnings this afternoon?
They do. IB rank of 73.
And what is this stock anyway?
I believe it's nuclear. I will find out.
It's nuclear.
OKTA.
OKTA. Well,
I'm sure this is from one of our trades from. It's never mind, Sadnov. It's an access management company based in San Francisco. Provides cloud software.
Okay.
Web services. I don't know anything about it. Obviously,
I'll take your word for it. I'm going to just try to roll up some putties, and we'll leave it there.
Leaving it there.
Yeah. I mean, this is perfect right here. Up 56. It's a good number. I'm a little bit long here. What do you think? I know you're going to think that's crazy that I'm a little bit long, but I'm a little bit long here.
That's what I asked you, if you thought the market was going to hold this rally. I think we go sideways and we hold this rally. Sadnov. That's my take here. Volatility in by $1.36. I'm going to key on that. 2072, about 30 cents off of its highs. Bonds up, gold weak, down 64. Euro ever so slightly softer here. Now it's actually unchanged, up small. I need the euro to go down, I think.
Well, sure.
To solidify this market.
You're going to Europe. I mean, you can't afford the euro at these levels. This is going to be
yes, sir.
This is going to be a heartbreak, you know.
Yes, sir. Yes, sir. Heartbreak. Heartbreak Hotel.
It's going to be a heartbreak instead of. And trust me, nobody in Europe's going to care if the American has to pay more money. You are
not at this point.
You are not going to get any sympathy. So, yeah,
doesn't seem like it.
Yeah, the last time I was there, I think it was around 104, 105. I don't know. Wasn't 114. All right, let's see what else we got going on here. Just to, like I said, our delta's a little bit long. But not sure where to go here. Biggest winners today.
Not sure where to go with what? With your overall, like what to do with the market?
Not sure where to go with my positions. The biggest winners today, easily gold. Easily.
Yeah, because it's gone the direction you need.
Yeah.
Yeah.
Easily for a change. And trying to figure out if there's anything else here that we need to do, but I don't think so. Okay, what else you got for me?
That's it. We can take a quick 90-second break. I don't know if we got. Let me explain with Chris. He's chomping at the bit to explain all of this for you. Would you like to do that?
Yeah, I'm looking at some of these Chinese stocks to see if there's any kind of opportunity here, but I kind of don't see it.
Well, kind of. Let's take a quick 90-second break then. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this with your friend Chris and my friend Chris. Let me explain next.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Have you ever been banned from any place?
Probably.
Just the delivery room? That was it? No other place?
Oh, the delivery room. Yeah. Twice.
That's the only one. Twice.
Yeah.
Two-time offender.
You know, my wife gets banned all the time from places. She's confrontational, argumentative, and violent. When she got banned from that one Italian restaurant that was around the corner from her house, that's the only time it really pissed me off. They had the best chicken Vesuvio. And I had to go in there and just say, listen, you banned her, not me. I'm still good, right? You know, they're like, yeah, you're okay.
Are you really going to Buc-ee's?
Yeah.
Will you film it? You film yourself going in. You're like, "What up, everybody? It's your girl Stassi. I'm here at Buc-ee's." And then you get the food, and then you get the food, and then you get to eat in your car.
You eat in the car. You get something on you.
Yes.
That's your stick.
Yes.
You got to do it.
I never spill.
I love this.
Yes.
I know, right?
Do you know what that's like to go out to a tasty show and you prep your whole speech? You come out there and you see all these people that have driven for miles and miles, and the first thing they say is, "Where's Tony?" And you have to go,
exactly.
He's not here. And the look of just, it goes from excitement to sheer disappointment in an instant.
I've never heard one person say, "Where's Tony?" I've been on the road for 25 years.
You literally, the whole concept you had last year was "Where's Bat?" That was the whole concept of your show.
They did a show about where the bat is without bringing the bat.
I hate to say this, but a buddy of mine owns a mountain there.
Yes.
Owns a mountain?
Something like that.
Okay, cool.
I got hiking trails on it. I'll tell you my activities.
Okay.
I'm gonna fish.
You are not gonna touch a worm.
Who's gonna hook?
You're not gonna touch a worm, sweetie.
I do. I fish.
Okay.
I'm gonna fish.
Okay.
I'm gonna bike ride.
Okay.
Bike ride.
I'm gonna hike. I'm doing something with beehives and honey.
Okay.
Then I have my choice of whether or not I want to practice my archery.
Is this like adult summer camp? This sounds amazing for me, who actually likes the outdoors. For you, you're an indoor cat.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With this man, Chris, and let me explain. Chris, how are you, my friend?
Relieved.
Relieved?
Why?
I was very concerned Sunday night when the Knicks were down 20 that I'd have to face you two guys today.
They really are a crap ball club.
I just can't. Tony, it's so difficult.
I can't watch the Knicks. They're so painful to watch.
It is so painful to watch. It really is.
You know, I like Tibbs because I liked him when he was when he was coaching the Bulls, but he makes everything look so. I've never seen a guy have less fun under any circumstance. You know, I just can't watch that team.
It's difficult to reconcile the fact that they probably won the other day because Brunson had 5 fouls and was benched for a good chunk of the game. So Tibbs was forced to play guys on the bench, which he never does. Maybe the light goes off today and they rotate more of the bench players in.
And I love Brunson. I absolutely love that kid.
Same, but they made their comeback. They had their best 2 stretches this series when he was on the bench. Game 1, Anunoby went off in game 3. So
I don't care. I love that kid. I'd rather have the ball in his hands. They can give him to the Bulls anytime they want. We'll take him.
Mm-hmm. Look, the new Pope is from Villanova. Brunson's from Villanova. I got to think that the Pope's rooting for the Knicks. So that brings some hope to me.
Are you out of your mind? The Pope's a Bulls fan. He's already said it.
He's who do you think he's rooting for in the NBA playoffs right now, Tom? The Oklahoma City Thunder? He's rooting for his Nova Knicks.
The Pope is a Bulls fan. Just don't get it out of your head. All right, he's already.
You have a team left in the playoffs. Our Knicks are going to win tonight. Okay?
He's a White Sox Bulls fan. Okay, that's the relationship. He doesn't forget your New York teams. The Pope's
Jerry
all in.
What an owner.
All in on Chicago sports. He's not a Cubs fan though, but a White Sox fan and a Bulls fan and a Hawks fan.
I respect that a little bit more, though. You know, the White Sox have had it rough recently. A Cubs fan in my lifetime has seen a championship. So, good for him.
Yeah.
I'm not going to besmirch the Vicar of the Lord, Tony. As a
Yes,
Catholic.
no kidding. No kidding.
Yeah. My favorite shot is you've seen the picture when they have him at the White Sox World Series game. That's the best.
That's great.
Yeah, it's great. It's great. The White Sox have some famous fans. They got, Obama and they got the Pope. That's pretty good.
Mm-hmm.
Well, the Mets have Nathan Fielder, which, by the way, like if anyone hasn't watched his show on HBO, The Rehearsal, I can't describe it. Just watch it.
Never seen it.
Oh, there's no words to describe it. Just watch it.
All right.
No
what do you got
words
for
to
us today,
describe.
sir? What do you got?
Well, there's a few things. I think let's start with my favorite FinTwit meme, now back. Funds in money market accounts have topped 7.2 trillion. That's a boatload of cash on the sidelines, guys.
Mm-hmm.
It's not what it may seem, though. There are a few things driving this, and I think it's worth unpacking this meme for people who may be thinking that this is a...
Does that scare you, by the way?
No, because of the forthcoming explanation.
Okay. No.
Thank you.
I'm talking
appreciate
about
that.
from a risk of fund risk, like money fund risk, that kind of thing. Not nothing else.
No, because I guess I'll jump to point 3, which we can work backwards here. This is a new record on one hand. $7.2 trillion in money market funds is a big number, but I don't think we should look at it just in that raw statistic. We should do it as look at it on a relative basis. And so you compare the amount of money in money market funds to say like the market cap of the S&P 500. And that 7.2 trillion is about 17%, a little bit less than that of the S&P 500's market cap. If we were to look to the AAII survey recently to see how much money fund managers are allocating to cash these days, it's about 17%. To think where cash on the sidelines peaked relative to the S&P 500, you have to go back to the global financial crisis when that ratio was about 40%. So the historical average sits around 20. If anything, there's less cash on the sidelines today compared to the amount of money in equity markets than there has been at any other point in time in history on average over the, say, last 30 or 40 years. You look at the Fed ratio, which is the starting point for this whole conversation. Why are people in money market funds? Why are they looking to treasuries? We've seen over the past week or two that the earnings yield on the S&P 500 has started to tick below long-term treasury rates. The current EP is 3.53%. The forward earnings yield for the S&P 500 is 4.89%. The idea here is that in the post-World War II era, bills, bonds have returned less than stocks, but they've also had substantially less volatility. So if you can go out into the world and you can get a return on a fixed income instrument, if it's a money market fund, a T-bill, a 2-year note, and it offers a higher return than your S&P 500's earning yield, why take the additional risk? So yes, there may be a lot of money on the sidelines right now. It's not actually a ton of money on the sidelines relative to where the S&P 500 sits, given where yields are. So this is a meme. It's a fun story. People like to talk about it. It literally means absolutely nothing for the next 100 points, 500 points in the S&P 500.
Okay. Yeah, we don't talk about it.
It's one of the most popular items on Twitter right now. If you go to the For You tab and you're tapped into what's going on in FinTwit. So, when you guys hear this, do you guys just roll your eyes at it? You said you don't talk about it, but surely this is something that people have brought up to you. There's a lot of money on the sidelines, Tom and Tony. Doesn't this mean stocks are going to go up?
No, you're right about that. Or the public's underinvested. I mean, we look at this as, as Tom said, we put it in our back pocket. We don't even talk about it. It seems like such a subjective thing, and such a spin on it that it means nothing to us. I mean, that's, I think, what Tom was trying to say.
I mean, if I looked at my own assets, I would say I'm very underinvested right now in stocks, but there's a reason for that, because I don't think stocks are cheap. If I thought stocks were cheap, I'd be more invested.
And I think that's what these ratios are telling us.
Long delta on stocks.
When I say I'm long delta, that's my trading account. Okay, I mean I'm long delta. I'm long one stock, a lot of one stock. That's what makes my long delta. Mostly UNH, which is down today.
It is down 20 cents, but yet you have a positive P&L in your account, pretty good one too.
Yeah, but that's all because just they're finally killing premium.
Everything has a reason.
All right, what do you got? What else you got, Chris?
Well, the most important macro event this week, of course, is the NVIDIA earnings report.
Yeah.
On Wednesday, there's about a $9 move when I last checked for the weekend expiration. Yep. So we're talking about 7% or so. The question is, what can NVIDIA do for this market, right? I think actually the backdrop for Q1, because of all this uncertainty, has catered to the upside for companies that have been able to deliver. Going through the earnings data over the past quarter so far, we're seeing a surprising degree of leniency when companies are missing their earnings. So this is a pretty positive backdrop for NVIDIA going into this report. So far this earnings season, S&P 500 constituents posting positive EPS surprises are being rewarded more than usual. From 2 days before to 2 days after their reports, these names have seen an average price gain of 2.1%, which is well above the 5-year average of 1% for similar beats. And if this figure holds, it would represent the largest post-earnings reaction to the upside since Q3 2022, when we saw a 2.4% response to positive surprises. And on the other side, negative earnings surprises are not being met with the typical level of punishment. Stocks missing on earnings in Q1 have experienced an average decline of 1.8%, which is softer, a little bit less than the 5-year average drawdown of 2.3% in this post-report window. So you're seeing a market that's more focused on upside confirmation amid this macro uncertainty right now. It's rewarding resilience while discounting the downside. I would argue that the market thinks a lot of the downside is priced in. So NVIDIA coming up this week, we already have a pretty decent pop here to start things off this Tuesday. NVIDIA is coming up tomorrow after the bell. If history is any sort of guide here, it looks like we could be heading for the pipeline of a positive surprise. Tony, you said something that piqued my interest, though, on First Call yesterday. What's the opportunity here when you're only looking at a $7, $9 move and an IVR of 30?
Yeah.
It's a difficult trade. It's going to be interesting, but it's a difficult trade.
Yeah, it's a difficult trade, and I think the implied volatility IV rank opens it up to, like I said last night, an extended move, either up or down, outside the expected move. So I think something like a directional diagonal spread, or a double diagonal, if you want to get more neutral, is probably the play in NVIDIA from a strategic point of view, unless, again, you have some sort of bone to pick with direction. You got June volatility at 55. That's 24 days away. And July volatility at 52. That's a 3 vol differential in your favor. I know it's an earnings play, but it is out to June and July. You usually see June and July volatility more equal, or even June lower than July. So, maybe you got a little bit of an opportunity here on something diagonal. That's the way I would play it if I had to do something in NVIDIA. And the IV rank is 29. It's actually coming in a little bit.
Can I tell you something about NVIDIA that I see here that's weird? I've traded NVIDIA now, and not great, for the last however many years, 5 years or so, pretty actively. And I don't think I've ever seen an NVIDIA earnings where there is zero call skew. And in this one, there is zero call skew.
Yeah.
I don't think I've ever seen that in NVIDIA. Now, what that means is that the calls and the puts are trading for the exact same price.
Equal distance away from the stock. Correct.
Yeah, if you go to the just go outside the expected move, go $10 away, and the calls and the puts are exactly the same price, $10 away. Stock's 134. You go to the 125.
The 124 is a $3 bid. The 144 are well, but they're 335 bid, but the stock's up 20 cents. Yeah, it's diminished.
There's nothing there. So so that tells me that it's the expectations are not actually as great as you might think. The other thing is, and Kai pointed this out this morning, which is really interesting, and PDD is a perfect example. The downside, the way they've annihilated the downside when companies miss, as opposed to the way that they've rewarded the upside. I mean, outside of Snow and Microsoft, there's been virtually no upside rewards. But the downside they've punished. So with no skew and the risk of, I agree with you that NVIDIA is probably going to have pretty good numbers. Who knows? But I just can't go far enough away, in this stock right now.
To collect enough premium for what you like.
Yeah, to make it that interesting. Because if they miss by any chance, it's going to be down 20, and it's not worth it at 114. You're collecting 20 cents on the upside. If they nail it, there's not that much juice up there, up 2 times. So there's not a lot in this stock. That's all there is. That's it.
Right.
There's just not a lot in it.
I think this is the first time in. You said it's been several years. I was trying to think of this morning. In fact, is COVID? Maybe it was COVID the last time we saw NVIDIA not have this type of activity, where you look into a market where everyone's on tilt to the upside.
No. NVIDIA has been in play now for years, and it's had upside skew at every single earnings until this one. I just think it's there's a couple of factors. A, it's already just had a $20 run. B, it's at the top end of its range. It's already had a huge run. It's it's up a couple bucks today. It's just it may have been played already. I'm still going to play it. Don't get me wrong. I'm just not going to play it. I'm not going to play it very big. I don't know what I'm going to do.
No, and it's. Yeah. I think the takeaway there, though, for folks is that if you've been trading NVIDIA with a particular strategy that has been working the last few cycles, because you're looking at a market that look at this call skew, I'm going to sell the hell out of this. There's going to be IV crush on the other side of earnings. Even if the stock goes up, we're never going to reach these prices. Maybe go back to the drawing board here. It's a different situation.
I'm going to wait till late tomorrow because I'm thinking that it's too cheap right now. Premium's too cheap in there. So I'm going to wait till late tomorrow before I do anything.
Yeah, I think that's the right way to approach this in the short term.
Yeah, I agree with you. Mm-hmm.
Yep.
Today's just a tough day. We're getting liquidity back in the market after a holiday weekend. So,
yes, we are.
Yeah. No, today's all good. All right. Anything else, Mr. Vecchio?
Yeah, just something of interest. This popped up a few years ago, and it was one of the reasons why people were so concerned about the economy. I don't know if there's a trade out of this, although I'm certainly looking at names like Dollar Tree and the lower end retailers. But the student loan debt payment resumption is coming around the corner, and some of the estimates that are put out over the past few days suggest consumer spending being down by $1 to $3 billion per month, which could lower GDP by 0.1 to 0.3%. That's probably going to be something that plays into big box retailers as well, like Walmart. I was talking with some of the folks on Overtime and Futures Power Hour last week about how if we're going into a world away from the tariffs, we can start to think about more of those thematic investing and trading ideas like AI, for example. What's going on with Fannie Mae and Freddie Mac, which there's an article now on the Traders blog I'd encourage people to read. There's talk about privatizing both of those. And last week, Fannie Mae and Freddie Mac were up in the neighborhood of 50% on the back of some of this news. So there's new themes potentially emerging right now. And I think people should be willing to quickly forget about what's happened since the start of April if we're in a more normalized trading environment. And I know that's been difficult for me to do. I certainly haven't traded the equity market rebound on the upside the way that I would have preferred to. But we are probably back to a world where we can think along the lines of how's AI doing? What's the Fed going to do? And it's storytelling
to
time.
be fair, there may be some truth to what stuff you just said, but to be fair, you can't trade it like, with
to be fair on yourself. Tom's thinking, you can't beat yourself up for that.
You can't. You also can't trade things like, like if you think you're going to catch a macro trend trading Dollar Tree or Dollar General, you can't. You literally can't.
Mm-hmm.
It's not even possible. And if you think you're going to even a stock like Walmart, there's nothing there. Like you can't even be directional and be right, like timing wise. Because stocks like...
yes, you can, Sadnov. I beg to differ with you. Last week, I bought, before the whole tariff announcement and everything else like that, I bought my outdoor furniture from Walmart. And not only am I a great trader here on the platform, I'm also a great leisure furniture trader too, Sadnov.
Why? Excuse me. Are they all out now?
Because then tight. No, but prices were going to go up because of the tariffs. I mean,
did they raise? They raised prices. Oh, I
don't know if they have or not. They may have be waiting till July 9th now to raise them again.
Well, I've got some outdoor furniture that I can sell you if you want to buy
for sale.
If you want to buy some used outdoor furniture, I'm happy to let some go.
I might want to. It's wood. I might refurbish it. Sadnov, I like to keep everything out of the landfill. Sure, I could do that.
I'll let a little go.
Look at you, Tony.
Yep, I'll let some go. No problem.
Good job out of you, Chris. Even the S&Ps are doing a good job, Sadnov. They're still up 76. That's a 1.3% move. Nasdaq's the strongest of the group, up 359. Weakest of the group, I guess, is the Dow, up 400. Volatility in by $1.93, Sadnov. That's a almost 9% move on volatility, taking back all, if not everything, from the last couple of days. Upside move in volatility. We'll be back in 90 seconds. We got more Tasty Live Sadnov with a market measure next. Thank you, Chris, and I appreciate your time on Sunday.
It was Monday.
Synthetic Sunday.
Same thing.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right, with a market measure. Even the S&P is up 77.
Sounds right. Up 77. Bonds up 20.
Volatility trading near its lows. Bonds up 20. Making new lows. Keeping a little bit of a bid to this market, by the way, in the volatility futures.
Yeah. I didn't. It's fine. What was I going to say?
So I love that ding you heard was me covering my trade from option trades today. So I don't know if that was a little SPX broken wing butterfly with a little bit of bullish delta to it. Took a couple of days, but it worked. Erect the statue, Sadnov. Yes. 5 days with 3 holiday days inside there. 2 days of risk.
I will. I'm erecting the statue.
Figured you were.
Actually, let me get rid of this trade for a second. Yeah, I'm trying to decide what I need to adjust here. I haven't really done that much today.
You haven't had to. Things are working
because the market, the market's accommodating for a change. I'm just looking to see if we've got any real problems.
We both agreed on one thing on the break, Sadnov. Do you remember what that was?
That UNH sucks.
Well, we said it was a pig, the adjective we used, but yes.
A PIG pig.
PIG pig. UNH, even with this market doing what it's doing today, down $3.
Yeah, I wish it was better. Let's see, anything else here that jumps off the screen at me? And I'm going to say, no, not really, but we don't usually get days where they crush vol like this. That's for dang sure.
No, it's a big move in volatility, but it stayed bid all week last week.
Yep. So they owed it to us. All right, well, we got a couple things to talk about. We're going on the road this week. It's a biggie.
It is a biggie.
The Bat and I will be in Atlanta, Georgia at the Buckhead Theater this Friday morning. This show, as of today, is officially full. So it's going to be waitlist only. As of today, it'll go up in a few seconds. It'll say waitlist if you want to sign up for it. Waitlist only. Preference goes to those who have accounts with us if they're on the waitlist. Anybody else that's already signed up is fine. And if somebody cancels, then we'll we'll send you an email and come on out. Other than that, we look forward to seeing everybody. Said it's going to be a fun show. It's going to be a packed show. It's going to be a quick show, and it's going to be nonstop. The Bat and I will head down. We'll do the show here this morning on Thursday morning, and then we will head to O'Hare. We'll pick up the appropriate snacks at the gift shop on the way. As you all know, I am concierge level, so I will be able to take the Bat in for a big chunk of cheese. Oh, no, we're flying.
Yeah.
I take it back. We're flying Delta. I have no...
Flying Delta. You got no yank.
I got no status. I have zero status on Delta. So we're going to have to just hang with the public, We're going to have to...
with the plebeians.
The plebeians. In the 2 terminal, the worst terminal at O'Hare. It's a death trap in there. There's no food, there's no drink. It's like it's bad. Bad. I'll pack you a lunch.
We'll be all right. We'll have each other, Sosnoff. I'll hug you.
No, I'll pack you a lunch. Okay, I'll bring it. I'll pack you.
Please do.
I'll make you a sandwich at my house.
I'll be all right.
Then we hit Atlanta on Thursday night. We'll be ready to go first thing in the morning. Really looking forward to it. We haven't done this show in the U.S. in 15 years. And so it's going to be a lot of fun. We will be, as they say, locked and loaded. And we're going to go armed with about 50 different underlyings that we want to trade. We'll have about 50. Think about 50 is about fair, right?
Yeah, fair enough.
Yeah. We're going to have we don't know what's going to happen this week. So it's impossible for us to say, what we're going to trade or anything like that.
Sure.
We won't know.
We're going to trade what's in play, right?
We're going to trade what's in play. So we won't know until literally Thursday afternoon. But we've got
game day, Sosnoff. Game
day. Sure. That's why everything is real. But we have a list of about 50 underlyings that we're leaning on if they're in play, and we'll see what happens. I want some crazy activity this week, so there's stuff to do.
Sure.
Doors open at 8. The Bat and I will be out chatting it up. At 9 o'clock, we will start sharp. Like literally at 9 o'clock. We'll spend a few minutes just explaining what we're going to do, and then we will get right into it. Markets open at 9:30 Eastern time, and we'll trade straight through till 10:30. And then if you want to hang around for a little bit, you're more than welcome. If you want to get out of there, you'll be at work by 11.
Love it.
Even if we have to drive you, as long as you're within the Atlanta area.
I was going to say, don't say that.
Not driving you back to Chicago or Nashville or whatever the hell's around.
Say that. Don't say that. Be careful what you ask for.
Be careful what you wish for. I got it. All right, let's see. Let me just take a quick look here, see what's going on. And I think that's it. What else you got? Anything else?
That's it, my friend. So far, so good.
Yeah. Like I said, we go to waitlist today in there, and we look forward to seeing everybody, and it's going to be exciting. If you can't make this show, but you want to spend some time in London over the holidays, and you want to be, Tony and I are going to be doing something special in the almost the longest day of the year. We're going to be at Earth in London, June 20th. I think June 21st is the longest day of the year, longest light of the year. So we're going to do a show in the evening, and when we get out, it's still going to be light out. And we're going to do a show on Triple Witching, which is June 20th. And anybody that wants to go to that can sign up. We still have room at that event right now. That one's going to fill up. And then if you're really adventurous and you want to come to Milan, Italy, we'll be Friday night in London and then Monday night in Milan. Dylan, myself, Rich, and a whole gang of others in Milan. And we have plenty of room in Milan, so we'd love to see you there. It's our first show ever in Milan, and there will be an interpreter in case you're wondering. And the interpreter is really fun, and I've known him for a long time, and he's a great guy, and he's a very, very active option trader. So he's absolutely clear of the concept.
Oh, that's awesome. So you'll have somebody there who, can really interpret, because sometimes you use vernacular that doesn't fit the English language, right?
Oh, don't worry. He yells at me all the time and tells me that it doesn't make any sense in Italian.
Okay. That sounds good.
His only request to me was, please don't let Dylan speak Italian.
You mean in doing an interpretation? Sure.
Yeah.
Sure.
Don't let Dylan try to explain something in Italian. That's his only request to me. He's like, oh my God, he's going to butcher everything. And I'm like, don't worry, I won't. But we're super excited. And if you want to come over there and see it, more than happy to have you in Milan.
Beautiful.
Okay. And then I'm taking off for a couple of days and traveling around, and I'm going to try to get myself in trouble in Italy somewhere. I'm going to give the Italian.
Good job out of you.
I'm going to give the Italian food one more chance to earn a good Yelp review.
Oh my God. Oh God. I'm gonna let you put your own foot in your own mouth.
I might. I got restaurant recommendations from from somebody who's like a supposedly like a he's a restaurant, whatever, influencer, critic. And so I'm very excited.
Critic. Yeah, sure.
Gave me his favorite places. He said,
nice.
He said to me, if these aren't the best meals you've ever had, I'll reimburse you. I'm like,
All right. I like that.
I'll send you an invoice.
I think you're gonna have a great time.
Oh yeah. Yep. Anyway, let's do this. So this is a piece that we get a lot of requests for. I know this is going to sound weird in that regard because we don't talk about IVP too much, implied volatility percentile. We talk about IVR because it's built into the platform. We do offer IVP on the platform, but we don't talk about it because why confuse things? You can end up with a very different number for IVR.
Very different number of occurrences, a whole lot of things, sure.
And it's to be fair, it's the kind of thing where we just don't want to we don't want to confuse people. It's not like we're trying to pick the we made a decision, a very conscious decision about 10 plus years ago to use IVR as our default as opposed to IVP. We've done a bunch of pieces on why we did that. Jacob, who's our mathematician, wrote a couple of pieces. We had Dr. Jim, we had Julia. These are like our smartest, kind of math geeks. And we had them all do pieces on why we chose IVR or IVP. But there's a lot of new people, a lot of new viewers. So we decided to, just tell you the difference. Come back to the
topic.
Yeah, it's a good one. And here's the nice thing about this piece today, Tony. We're not going to say that one is better than the other. Like, we're not going to do a piece saying that IVR is better than IVP or IVP is better than IVR or anything like that. What we're going to do is just explain the difference between the two.
Got it.
Let's go, Beth. The market measure is sponsored by the SIBO, and just in case, the SIBO and the CME are also traveling with Tony and myself. We're the only, I shouldn't say the only, but we're probably the only firm and do the only live shows where the exchanges actually help to underwrite the cost because they're crazy expensive. That's why you should get out to one. But they bring a lot of expertise, and we're excited about it. We worked them in differently this year. The implied volatility rank, aka IVR, is a statistic or a measurement used when trading options and reports how the current level of implied volatility is in a given underlying and how it compares to the last 52 weeks of historical data. The IVP, implied volatility percentile, reports the percentage of days over the last 52 weeks that implied volatility has traded below the current level of implied volatility. Based on the requests from many of our viewers, we're diving into a detailed study on IVR versus IVP, exploring how they differ and how to leverage them in statistical analysis and comparisons. Again, we're not really going to talk about saying that one's better than the other. We offer them both on the platform, and there are people on other platforms that default to things like IVP. And there are other people that default to IVR because of what we do here at Tasty. We have our reasons why we default to IVR. That's all. I'll just leave it at that. But here's the difference. Let's go to the next slide. So we put the formula for both, just in case there was any questions or you wanted to. We have a lot of math geeks at Tasty, and if you want to figure something out for yourself, go for it. The formulas for both are very simple. IVR requires the current implied volatility and the low and high implied volatilities from the last year. IVP needs the number of days below the current implied volatility and 252. That's the number of trading days. So the high and low values can vary based on risk tolerance. But we usually use 30% as the threshold for study and backtesting. That's our number. That's like, we've always used 30. So let's go next slide. So the following two graphs demonstrate how IVR and IVP behave over time since 2017. For the SPY with the current IVR of 17, what is the IVR today, Tony, in the SPY?
In SPY, IVR in SPY right now is 19.
19.
Well, IV rank is 19. Monthly implied volatility.
No, just the IVR, 19.
Yeah, 19.
Okay. So yeah, we when we wrote this, it was 17. It's 19, which is on the slightly low end, and an IVP of 56, which could be considered in the neutral zone. That's what gets confusing here, because if you went back and forth, you could say IVP is kind of high, but IVR is kind of low. And you can see, based on the two charts, a little bit of the difference. This is since 2017. This is basically the last 8 years. Let's go next slide. So we did a study, a 10-year study with a 16 delta short strangle, 45 days to expiration, managed to 21 days. We determined the win rate, the average premium over buying power, the average P&L over buying power, and the return on investment. We compared the results with IVR and IVPs, the threshold of less or greater than 30% for both, right, to keep it consistent. Let's go to the next slide, Beth. All right. So you're going to see there's a lot of stuff in here.
Sure.
And you can see that when you block it all together, they're very similar, IV rank and IV percentile. Contrary to what many...
They are very similar.
Yeah, they're very similar. Contrary to what many traders expect, the win rates are generally the same across the board, with some slightly 4 to 5% higher in elevated IV environments for both IVR and IVP. Okay, 4 to 5% higher the win rates in elevated IV environments. That's what we always are. That's what we're looking for all the time. The challenges this challenges the common belief that higher volatility means higher risk of loss. The data shows that collecting larger premiums in high implied volatility environments more than offsets any increase in market movement risk. And we've argued that for a long time. So the higher the implied volatility, the more money you make. Doesn't matter whether it's IVP or IVR.
Right.
The less risk you take
do something is what it's saying right there.
The less risk you take, the more money you make. Let's go to the next slide. So this is the average premium over buying power with IV rank and IV percentile analysis. And again,
you can see a very small edge to the IVR, but just based on, when we total the numbers, but I wouldn't even say it's edge, it's just slightly higher. But again, this is the reason that we default to IVR, but we're showing you how similar they are. Initial premium collection relative to capital is approximately 60% higher in elevated IV environments for both IVR and IVP. The higher premium to capital ratio means better initial trade cushion and more effective use of available margin, providing significant edge in position efficiency. Again, the takeaway from these slides is the visual that they are very similar, whether you use IVR or IVP. We've never shown them this way before. This is a really clean visual. Let's go to the next slide. And this one is average P&L over buying power with IV rank and IV percentile. And again, you can see how the numbers are so similar. The profit to capital ratio shows 60 to 70% higher capital efficiency when trading in elevated IV environments. That just means you use the same or less money to make more money. This means you're extracting significantly more profit per dollar of buying power utilized, drastically improving the overall performance return efficiency. It's a really good slide. Really good piece.
Yes, very much so.
Actually, really good piece. Let's go to the next slide. And this is the last one. The average return on investment percentage with IV rank and IV percentile analysis. Now, again, when you look at these slides, you will see how in all 4 of these pages where we showed the blue versus the green, the blue IV rank slightly exceeded the IV percentile across the board, which is the reason that we originally defaulted to IVR as the cornerstone to the Tasty platform. But they're very similar. So if you used IVP, you're not hurting yourself at all. It's just that for consistency reasons, we use the IVR. So the return on investment increases by 50 to 58% when trading strangles in elevated IV conditions for both. Again, showing that with capital efficiency being critical in option trading, this substantial return on investment improvement suggests portfolio sizing could potentially be increased during periods of high implied volatility. Let's go to the last slide and the takeaways. And these are pretty heavy takeaways. But again, like I said, a really strong piece. At the end of the day, IVR and IVP are contextual metrics to determine if extrinsic value in option prices are high or low. And traders use that information to determine strategy selection and defined or desired risk. Again, you want that IVR to be over 30. The reason Tony said he didn't like NVIDIA as much for earnings this time is because it's cheap relative to where it's been in the last couple of earnings. Anytime we see very low IVR, the risk reward changes for us, and the impact it has on our desire to make trades. It's there's a lot there. Changes everything for us. Both IVR and IVP compare current volatility to the past 52 weeks. IVR ranks current volatility, while IVP shows the percentage of days with lower volatility. High IVR and high IVP often lead to optimal trading outcomes. We often use IVR because it's actionable, it gives a direct, clear measure of where current volatility stands relative to the past year, while IVP is useful for understanding the historical frequency, but less commonly used in everyday trading decisions. That's the primary difference. Generally, elevated levels are typically seen as favorable for selling and low levels for buying. We don't buy a lot, but that's what it means. Given that IV tends to revert to
you gotta love it, Sadnov.
Profit in mean reversion trades is by no means guaranteed, and usually a little more frustrating than you think, because future volatility is unknown. However, it has been observed that implied volatility is mean reverting on average over time. Excellent piece. A lot in there. I recommend going back and checking it out.
Yeah, and all they're really saying is do something, pick something, do one of them, and then run with it. Is really what it comes down to. It's good and better again, same kind of thing. Nice job by the team. We're gonna take a quick 90-second break. Sadnov, you finished right at the bottom of the hour. Even the S&Ps are trading right near their highs, up 89, about 6 handles off of their highs. We'll take a quick 90-second break, Sadnov, and come back with Mr. Scott Sheridan, Tasty Trade World Headquarters. Right after this, back in 90 seconds, Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool.
Yeah. Oh, nice. You are pretty flexible. Let's see, get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Tomas, we are back, my friend, and you know what that means? Time for a little bit more Tasty Live. That's right, fan favorite. Tastytrade World Headquarters, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios.
So I feel like we're coming back together for the first time in a long time. This is nice. You were gone. I was gone. I know it's gone for more than you were, but that's okay. You were still gone.
I was gone. I got home last night.
How was it?
It's great.
Wow. Tony? Foliage in the spring?
I'm telling you, this man is on fuego. He's on fire.
I was in the woods, that's for sure.
Do we get cherry pie? Don't have cherry pie down there.
We got nothing.
No.
We got
I went to Buc-ee's. That was about it.
Was that brisket?
Yeah.
How was it?
Yeah.
Oof.
It's good for the money.
Okay, I've never once heard you say it's good for the money other than a nice plate of orange chicken from Panda, but we'll leave that out of it. I never heard you say it's good for the money. Would you go back?
No.
Okay, then forget it.
Wait a minute. Would he drive 6 hours for a breakfast burrito? No, he
It was a
wouldn't
breakfast.
drive
Oh, you
6
drove?
hours for a breakfast burrito.
Really?
Yeah.
You made it in 6 hours?
No.
No.
What'd you think? He took a helicopter?
Yeah, it's 8 hours.
It's 8 hours.
You drove.
Whatever.
6
When he
hours
drive
to
8
Buc-ee's.
hours for a brisket, it doesn't matter the story.
Why would you drive? That's a long drive.
I know, because she wanted to bring her dog.
Why would you drive when Scott would give you his PJ?
Yeah. Wait a minute. She wanted. Oh, so this place took dogs?
Yes.
Oh, nice.
Yes.
Okay. Well, it's okay. I would do that for my dogs.
Yeah, it was 8 hours.
Oh my God.
So she drove all 8 hours?
I drove all.
Tony, who drove?
I don't believe him either. I don't believe him. I got to text her. I'm going to text her right now.
I drove.
No, you didn't.
I drove. But I had to
I'm going to
listen.
text her and
Didn't you
ask
have
her
to
right
wait a
now.
minute? What car? Electric?
No.
No, you
okay.
kidding me? He can't chance that.
Yeah, because where do you stop?
No. I drove. A Buc-ee's has chargers.
So you drove 6 hours.
Yeah.
Not straight through. You had to stop to get gas somewhere along the way.
Oh, yeah.
Okay, so you got gas. Then you went to Buc-ee's on the way there.
Yeah.
Okay, so you had a disappointing meal before you got there.
Yeah.
And then you weren't really hungry. How's the food there once you got there?
Great.
Okay, good.
Great. But that was at their restaurant.
This was Paul's place.
Yeah.
Yeah, okay. Is it done?
Oh, it's so beautiful. It really is beautiful. I can't believe he pulled it off.
It's great.
I cannot believe this.
Tony, did you get the nod? I didn't get the nod.
Oh my God! I just got confirmation from the wife. He did drive both ways.
Yep.
That's unbelievable.
Yeah.
But he did not do any of the driving while he was there.
You couldn't.
No, I don't think that's what
there.
she's talking about, Sosnoff. I think she's talking about other things.
No, you can't, right?
She had to
Everything you
take
got to
the
walk around.
lead.
They'll come pick you up.
Yeah. They don't let you drive.
Yeah. It's a beautiful facility.
You should see it now. It's absolutely spectacular.
Nice.
Is she injured?
What?
Is she injured?
What do you mean? What'd she say? She can't walk?
No comment.
No comment. All right, so what are the activities there at this time of the year? Because hiking is questionable for you.
Hiking? I hiked.
Not far. Like hiking from your room to the restaurant.
I went on a hike.
How big? How long?
Like a mile and a half. 2 miles.
Crocs?
No, I had hiking boots.
Really?
Yeah.
Nice.
And then
what else?
Fishing.
He bought these
fishing.
hiking boots
What?
the last time he was in
You catch anything?
Copenhagen.
Okay, that's not normally our activity. But go ahead. Okay, so
I-
What do you mean by our activity? Who are the our?
you-ish. It's not a you-ish thing.
Yeah.
It's more of a goy. It's more of a them than an us thing.
The funniest thing, Tony, you'd love this. There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, Goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
I wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it.
Okay. Breaking news. Dee. I asked her, how did it really go with him driving? She said, mentally, from spending the weekend with him, I'm a little injured. But there was once a very close call, but we survived it. Sosnoff, would you like to tell us your side of the story before I get the rest?
That was no close call. She's out of her mind. No close call.
Sosnoff almost hit a semi for sure.
Not even close. Anyway.
He drifted into a lane.
I hung out in a mineral pool, I did some candle. I made a candle.
Oh, nice.
Yeah, I did all these.
Did the missus do any yoga? It's a nice facility.
She was in a spa. I don't know what she
I didn't see that. The spa wasn't open when we were there.
Yeah. She just told me, she was bent in some position she wasn't used to.
Omaha.
Oh my God.
I'm talking about at the spa. What are you guys talking about?
So
nice.
Yeah.
8 hours though. It's an effort.
It's an effort.
Yeah, because also it's
8 hours.
Are they an hour? I know I get it. It's both ways.
They're
but
the same time.
It's central.
But you have to go through another time zone.
Part of the state,
you go into the time zone and out of the time zone.
Wait, isn't
go
part
in
of
the time zone and out of the time zone?
Part of the state's Eastern, isn't it?
That's correct.
I don't know. When you get to Indiana, you're in Eastern time, and then you go back through.
You go through Kentucky too, don't you?
Kentucky, you're kind of like
Eastern,
and
West
then you go
for a moment.
Tennessee, you're Central. Yeah, Louisville's not that far. It's only 5 hours.
A little less.
Yeah.
A little less. Did you stop in Louisville?
I did not.
Bourbon Trail?
I did not.
Got all these opportunities. I know people. I could have had them take it. See, you didn't tell me.
The only place I stopped was Buc-ee's. The only official stop.
Ugh. All right. Well, you missed this. Talk about food. I only have one food. I actually have two.
What do you got?
One, the crumb cake from Zabar's. Lights out.
I've had it.
No.
Zabar's crumb cake?
We went through this and you said, quote unquote, I've never had it. Last week or 2 weeks ago when I was here.
Crumb cake?
Yes.
And the babka?
I didn't say babka. I said crumb cake. And you said mine was an individual piece, but it was delicious. That one, top right. Nope, it's the square. Zabar's, that one.
Yeah, I've had that.
No. Okay.
Crumb cake.
Beth, I hate to do this.
I've had it. I'm just telling you, I've had it.
Well, then you lied.
Well, I didn't lie. I don't know. Maybe I don't remember exactly what you were talking about.
I said the crumb cake. I said because Daniel said the crumb cake's amazing. You're like, oh, it's interesting. I've never had it before.
I'm pretty sure I've had it.
Wait a minute. I'm down to a head shake, not looking at me. I'm pretty sure I've had it. Sold.
100%.
Right?
100%.
Sold on the crumb cake. Anyway, crumb cake was great.
It's a New York thing. It's not a Chicago thing.
Why is crumb cake not a Chicago thing?
Because where can you get crumb cake in Chicago?
I don't know, but I like crumb cake.
New York Bagel is the only place.
Yeah, actually, that might be true.
He's the only guy that makes it. He
does a good job.
Yeah, he does.
Okay, Mr.
No. You could get it other places. I think there's the Uden places around here that allow
I've
you
only
to
seen
get
it
it.
one place.
The bagel?
Yeah.
The bagel might have it.
The bagel?
Never seen it there.
No, I don't know if I've seen it, but they might have it.
Anyway, what is your other place?
Mr. Chow.
I've been there.
Totally overrated, too expensive.
It's been there 100 years.
I understand, but I've been to the other one, but they opened one in Midtown.
Oh, really?
Yeah.
I've been to the original one there.
And I went to one in Miami.
I've been in that one too.
Yeah, the one in Miami is a lot nicer, better talent.
Way better.
Way better. This was just, it was just overpriced. And
There's one in Vegas too.
Is there?
But the original in New York, I went to once, which was great.
Yeah.
And that was before it became popular.
Yeah. I was there a long time ago with my dad, the original.
The one in Miami was crazy expensive.
Crazy. I mean, New York is just, I thought actually, because Levi said the congestion, because he lives below, I think it's 62nd Street or something. He's like, it's a lot better now because you have the cars. Yeah. It's still miserable. Traffic in New York. I mean, Chicago traffic's horrible. New York traffic it's miserable. Anyway, Tony, how was your weekend?
My weekend was great. I didn't have the same extracurricular activity as my friend had, but the weather cooperated. The pool was warm. My son came over.
I'm sorry. The weather has not cooperated. It's been mid-50s.
62 and sunny in Chicago is cooperating.
It's cold.
You just have to adapt.
How? Okay, you must crank up the pool.
It's even
92 degrees.
92 is not even cold, not even warm enough.
Yeah.
I was at 102, and that was about perfect.
Oh my God, come on.
I'm telling you, it was 102. It was perfect.
I understand. That my hot tub is 102.3, but yeah, I get
That's
it.
hot. 102 is hot, but this weather.
This is a mineral pool. This is a mineral pool.
Oh, natural?
No, not natural.
Not a hot spring.
No.
Okay.
Man-made.
Man-made.
With waitress service.
With waitress service. You are
unbelievable. So I need somebody to explain to me why it's almost June and it's still 55 degrees in Chicago. I mean, I think this week we're going to warm up a little bit. This is crazy. This is great weather for like October, November.
Yeah, it is. It is.
Right?
It is. Hey, Sadnov, breaking news here for a quick moment. My Taiwanese sources just told me that Glencoe is getting a new Jewish deli. Menchie's is opening a location there.
Menchie's? Wait, where's there a Menchie's?
Menchie's. I've heard of that.
I've heard of Menchie's too. Where's Menchie's from?
I thought that was
Evanston.
Menchie's is in Evanston?
Yeah.
There's not a lot of us in Evanston.
Is it good, Beth? I've never heard of it.
I've heard it's great. Yes.
There you go.
There you
Come
go.
on
Look
up.
at you. I know we just got some suburban pizza place that is supposed to be great on Southport.
What is it?
I don't know, W's or WP's or something. Southport down by, I think, Diversity.
And Tony doesn't know about it?
Tony?
I think this is fake news. I think this is more...
I'll ask Chris because he lives... I'll figure it out. But yes, I heard... It's a little iffy. I saw it on the news. I'm like, I don't know. This might be like paid advertisement. Anyway.
WG Pizzas.
Yeah, what's it called?
WG Pizzas.
Yeah. Where's it from?
Highwood.
Highwood. How is it?
Never been.
Never been either.
Is it in Detroit? What is it?
Never been.
I haven't heard. Tavern style.
Oh, it's tavern style. All right.
Never been. Never had it.
The best tavern style pizza is Countryside Saloon on Ballard in Des Plaines, believe it or not, Sadnov. Been there since 1963. Great place to go outside. Neat if you want to sit outside.
Okay, come on. I'm not going to stupid Des Plaines, wherever the frick that is, to get a tavern-style pizza.
Hey, Des Plaines is
I got
home.
75 places within a mile of my house.
Des Plaines is home of, I think, isn't Tony, isn't Des Plaines home of the original McDonald's?
I drive to Des Plaines for...
I think
it is.
Right?
That is correct.
I think the
Park Ridge, Des Plaines area right there, that is correct.
Yeah, that's not for city people. That's for you people.
Yeah, I don't drive to Des Plaines for a pizza. I can walk a block away and get 10 pizzerias.
Not like this, you can't. This is good stuff. Yeah, listen. Yeah, what do you know? I mean, you got your walking area that you go to. You're like my grandpa Vito. He would just go into that circle. That was it.
It's a lot easier in Brooklyn. I assume Grandpa Vito was from Brooklyn. May he rest in peace. It's a lot easier in Brooklyn to walk around in like a small area than it is in Des Plaines.
Have you ever been to Brooklyn before?
Yeah.
Everybody just walks around in circles there. There is nothing in Brooklyn. All you do is walk around your block. Like everybody in Brooklyn just walks around in circles. Like you have like this specific shuffle zone, and you just walk around.
Should we get Tom's opinion on Nona's in Staten Island?
Never been there.
Oh, the movie?
There's a movie, Vince Vaughn, that Tony said.
Wait a minute, did you like the movie?
No, I stopped watching because you told me it was like offensive to you. It's a great concept. It's based on a true story, apparently. This guy opens a restaurant and he hires old Italian grandmothers to come in and cook with their.
I like it.
It's a good idea.
It's a great concept. Like it was great, and allegedly it's still around. Great concept. Love the idea. Horrible movie. I mean, couldn't be more cliche.
Something happened during that movie that you are not telling us because you are responding. It's visceral reaction.
No mound ball.
That's what I figured. This is what happened.
Even with Vince Vaughn on the
he said he agreed to watch with the missus, and then.
Oh, she's a Vince Vaughn.
Yeah. No, we got that the backside. He touched the backside. We've gone through this whole story.
Oh, she's still going with he only touched my backside? That's her story?
hasn't
wait a minute.
complained
When
yet.
your son was sitting in the captain's chair, that was very definitive. She touched her backside. Now that Tom's sitting in the captain's chair, story might be changed a little bit.
Let me tell you something. Nobody ever touched
Easy.
her. Nobody ever touched her.
Nobody ever stopped.
Nobody ever touched her backside, and that's all that happened. That's it.
Oh, he's awfully silent over there, too. Okay.
Oh, that's the whole thing. So he didn't like Vince Vaughn.
Got it. Now this makes more sense to me. A lot more sense. Because the movie wasn't horrible. I mean, it was
horrible. You weren't listening. You were on a plane.
Because during the entire movie, she kept bringing up the story. All right.
They got a great cast, too. There's like great actors in there.
Yeah.
It was horrible.
Oh, oof. All right, let's move on.
I thought it was pretty good. I like that.
Now Tom's got to go home and watch the movie.
No, I thought you were talking about Nona's down the street here.
No, I don't actually know if the restaurant's called Nona's. The movie's called Nona's.
Oh.
So, anyway. All right, let's do some business.
Because I like Nona's here.
You ebb and flow with Nona's. Sometimes you'll
Ebb and flow. I like their sandwiches, not their pizza.
Yeah, but every once in a while, when was the last time you had it? Because you don't work over there anymore. So a long time.
2 years.
The name of the movie, the name of the restaurant was Maria's. It's like Enoteca Maria.
Correct.
Which means
That was his mom's name.
Yes, that's correct.
Correct.
That's correct.
And that's right. And that's right. That's right. They did. But I did.
It's a beautiful story. I really loved the whole thing. It was a horrible movie.
When was the last time you went to Staten Island?
I can tell you exactly. 1979, when I threw out my last bag of garbage there. Before I moved.
Boy, does that place get a bad rap.
Staten Island?
Yeah.
I haven't been there since the 70s.
I've never been.
Never? Well, you got to take the ferry.
Yeah.
I thought, was it the Verrazano Bridge?
You should take the bridge, too.
So do you have to go down to the southern tip of Brooklyn and then over?
Yes, I don't know.
Yeah, or you go the other direction, yeah.
What do you mean the other direction? I mean,
you could take the tunnel through Jersey and then come into Staten Island on the other side.
Oh.
I think so.
Oh, I was talking about coming from the east, not from the. Okay.
Yeah, then you gotta go right by my house. You stop by. My mom will make you some.
Okay, perfect. Oh boy. All right, top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15, CRWV at a 39. For everybody else, Tesla at 29, NVIDIA at 27, PLTR at 29, Apple at a 31, GLD at a 52, UNH at a 61, GME at a 29, MSTR at a 22, TLT at a 35, AMD at a 19, TQQQ at a 28, Goog with an L at a 29, Meta at a 13, iBit at a 37, and number 15 for Tom, CRWV at a 39. Rounding out the next 10, we only have one more, and that is CRWD, not a V, a D, at a 47.
Sadlov, we haven't had a downtick in the market since early this morning. Say something profound.
I mean, I haven't done much. We have good positions on today. If you could just get UNH up about $12 from here, we'll all be happy.
All right, I was going to make fun of you, but since you mentioned UNH up $12 on the day, I'm not going to make fun of you because I need that too. We're going to take Scott, you want to say something?
Oh, I'm good. He didn't say it's going to be up 12. He's like, if you could get it up 12, that would be good.
Yeah, if you can get it up 12. That's right. Hold on one second. Breaking news. I have the Tucci. Oh, I like Nona's. It's a pretty good movie. Tucci, seriously. You were. What the hell do you know? We'll be back in 90 seconds. We got
he's a better Italian than you are.
That's because his wife didn't get by Vince Vaughn. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Success is a combination
of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
And welcome to the Liz and Jenny Show. It is a green Tuesday. It's as if Thursday and Friday never happened.
Yeah, boy, you're telling me, is it green? SPOOs are currently up almost 90. That's the highest I've seen them.
Yeah, SPOOs up 90, and I wasn't here Thursday or Friday, so we're exactly where we were when I left on Wednesday.
Rip Van Winkle just got back from Disney World. It's like she woke up and nothing ever happened. I mean, it was a pretty crazy down move the other days, but all's right with the world. Everything's fine again. Situation normal.
Everything's fine.
Yeah.
Market's rallying. If we pop in the platform, we could take a look at the chart and see what we're talking about. SPOOs are up 1.5%. SPX is up 90, 1.5%, and you can see where we are. This is what we were referring to Thursday, Friday, 2 down days. Kind of scared the children. We're popping right back up.
You know who it didn't scare? TP.
TP filled in for you. He did a great job, and TP was like, "What? What?"
He didn't even know. Okay, shout out to TP. Thank you for filling in. He did an amazing
Yeah, he
job.
did a great
He's
job.
always great to have on. Viewers love him. You love him. I love him. I can't thank him enough for coming in and
Yeah,
filling in.
he does a great job. So we had him, and we got to walk through. We finished. We got to walk through how his thought process is. If you give him, that was one of my favorite emails. I was like, TP, I got an email that you and Jenny couldn't get through this. So every time somebody would pull up a symbol, he'd be like, okay, let me tell you my thought process. And I was like, it works out well.
And you know what? I was going through our account, and I saw some trades, and I thought, I bet Liz and TP put these trades on. I looked over at the date. Sure enough.
Yeah,
I'm almost getting into his head. I almost know what he's looking for.
So it's pretty funny. He's a wealth of information, and he writes the cherry bombs, doesn't he? He writes most of them. He writes all of them but Monday.
Yes, Tom writes the Monday edition. With the holiday being Monday, I wonder if Tom wrote the Tuesday edition. I don't know.
Inquiring minds want to know.
And TP writes the rest of the week's cherry bombs, which include a trade idea. So if you want to get those free to your inbox with trade ideas and insights from TP, you just sign up for the cherry bombs.
He's pretty funny. So he was very concerned about his tomatoes because it's too dry there right now. So all these viewers were helping him out with how to raise tomatoes in a dry climate.
In a dry climate.
He
needs like.
Well, he said like the humidity is rolling in. I was like, be careful, TP. Be careful of dust storms because
he needs like those hydropods. He needs Dylan Radigan. Remember when Dylan Radigan?
Yes, he does.
Was involved in these like
hydroponic pods or whatever.
These little places. Think of a shed that you could drop off somewhere, and in that little house you can grow everything.
Vertical growing. Yes.
Yeah.
Was the
right.
concept.
All you do is ride living with the land. Living with the land. I'm hot off Disney, Liz. Living with the land.
How was your trip?
It was a wonderful, wonderful trip. We had a great time. We had 6 of us. Great time. What I would recommend being cautious of: drinks around the world at Epcot. That took a couple people down.
Warning.
Warning. If you have kids who turn my son turned 21 recently. I said, I got a great idea. Let's do drinks around the world. Because don't you remember this from like when we were young?
Yes.
So back in the day when we were young, you would actually get a card and you would get it stamped at the countries and get a sample. Like, here's a sample of wine in Italy. Here's a sample of wine in France.
Oh no, they're full size now.
Yeah. Where did the samples go? Everything was full size.
Everything's full size, and it's a fortune. It's very expensive.
Well, yeah, I mean, drinks in a theme park.
Yeah.
Drinks in a theme park are expensive, but I wanted the sample size, not the full size. So there were 3 other groups of kids turning 21, all doing drinks around the world. They had T-shirts with every country and Sharpies,
markers,
and you check off the country after you hit it. Well, it was pouring rain, so their backs were just like smeared with blood. And we made it, but started in Mexico. I think my son said after France, he woke up saying, I can't believe we didn't make it. We didn't go to England or Canada. And I was like,
okay, so if you started in Mexico and you went this way, then you walked out the back entrance of Epcot if you didn't go to England or Canada.
No, but we did go to England and Canada.
Oh, he thought you didn't?
Yeah.
Oh!
We did go to England and Canada. He just didn't remember it.
Awesome.
So, rough weekend. I got home at 9:30 last night. You're going to run the show today.
Well, unfortunately, you're plugged in, but I will tell you what to do. How about
All right,
that?
tell me what to do.
So we actually do have a very good show today because we've got I Love Kai. He gave us the recap on Friday, which unfortunately I showed, but we didn't get a chance to use it. But now he's got, and he gives it to us on Mondays for Tuesday. So Tom got it today too. It's just kind of a recap of last week's kind of what's going on. So that we've got that study today.
Yep.
We've got in a market. We've got things that we want to manage, and we are going to go into Twitter. Now I will tell you, I love TP. It's just hard to number 1 manage and number 2 get things done. You know when you have a fill-in for a host, everything that was done got pushed out, things of that nature. But it's very challenging to get in and kind of manage.
I'm actually going to pop out our trades here to see if any GTC hit in the last couple days. So nothing today.
Just go 7 days.
And in the last 7 days, the last trade was actually an opening trade. So no GTCs have hit. But this snow trade that TP, I'm guessing, put on, a 250 wide, put spread for 77 cents.
Yes.
Let's see how that's faring today.
So that was a trade. We closed our other trade, and we put this on, and it's up 22%.
22%.
22%, right.
Okay. So there's a GTC in for 50%. I'll just leave that.
And I do love having TP on. I mean, because you and I do trade very, very similarly. He always goes towards the 45 days till expiration, whether it's the monthly, the non-monthly. Like he's always looking at that.
Yeah,
and I was like, we're gonna have to. These markets are a little wide, TP. We're gonna have to.
He's a rule follower. TP's a rule follower.
He's a rule follower.
I mean, he's probably written most of the mechanics. So if he's written them, gosh darn it, he's gonna follow them.
Yeah, that's true. That's very, very true.
Right? Like if I'm the one who wrote the rules, I'm gonna follow them.
It tracks. And in my mind, I say the rules are there are no rules.
Yeah, if you know once you know the rules, you know how to you can break them.
Yeah.
Okay.
Wait, what was it? We know the rules. We have the tools, and we're gonna break them.
And it's up to us. What is it? We have we know the rules. We have the tools,
and we can break them how we want.
I've already forgotten. Someone tweet us. If you tweet us today, include the hashtag LAZJNY. While I'm in the account, I opened a couple things that could probably be closed.
Ooh.
IONQ, 8 days ago, we sold a put for $166. It's worth $37, so we made $129. Do you want to take that off?
If I said no, push me over.
No, let's not close that today.
No, leave it. I'd like the extra 37 cents, please.
Yeah, in another 24 days. All right, I'm going to close that IONQ.
If you want to stay in IONQ, and that is one of the...
it's a high rank.
You can just keep following up the put if you want, but this is one of those... What is it back? What's it called? That computer? I can't remember it.
Oh, quantum.
Yeah, this is back to quantum computing.
Okay.
And so with that QBTS or whatever that we have in there.
Right. We'll have to look at that. So here's another thing, because this is new now that Memorial Day's over and we're getting closer to June expiration. If I have a winning trade in June that's winning, that's made more than 50%, with 52 days till July, I'm okay going out to July.
I am too, for sure.
So if we bought back that 30 put in June, could we sell the same 30 put in July with a 60 rank?
I mean, it's up so much. You probably can. It's $1.
$1.
I have no problem looking at it with a fresh set of eyes. If you were going to put that trade on, if you didn't have anything in there and you open up June, would you go all the way down to the 30, or would you go with? Because that's a 10 delta.
I'd probably bring it up to maybe the 33 or 34.
Yeah, that's what I was going to say. We can chase it up a little bit and take in, $1.60 or $1.
I'm trying to think. We've got some. I've been working. We're going to be speaking. We're going to be speakers at the RMC.
Yeah.
Which I spent a lot of time this weekend just on the plane and laying by the pool working on it. And I have discovered some kind of breaking news of, when vol's over 18, do this. When vol's under 18, when VIX is over 18, do this. When VIX is over 18, do that. Or when this is, and so in my wheels are turning of okay, where are we now? Where is VIX now?
I will tell you right now, the VIX, which is the pit over there, which we aren't in. This is the SPX pit behind us. But the VIX is currently trading 1953. It is down 5.6%, Jenny. 5.06%.
Let's bring it up to a higher delta. Collect a little more.
Okay, I'm in.
Per my.
Do you know what's funny is we'll get there. You and I both brought it up to a little bit higher of a delta than that 10. But we didn't look at the VIX. We just kind of did it based on the credit received.
Let's go to the 20 delta for 256.
Sure, great.
So we're going to buy back our 30.
Now, here, I was just going to ask you a question, too. Looking at the volume, which is right there, and I get why you went to that delta.
Yeah, let's make the 35.
Let's just go to the 35, just because I want to be where the people are. That's where the people are trading.
I think that's what when I just showed you that video of the fireworks from the cabin.
Was that the song? Is that why it was stuck in my head?
That's the song that was playing.
That's why it was in my head.
That's why it's in your head. And so we stayed in the cabin at the Wilderness. Guess how many snakes crossed in front of me on the sidewalk?
Hundreds, if not thousands.
In 5 days, 3 giant black rat snakes crossed in front of me on the sidewalk.
And you don't like that? I mean, Lily can be in an indoor mall, and Jenny's like, look out for snakes and crocodiles.
I did not like that. So then I had to find the worker and say, okay, this giant black snake just crossed in front of me. And they said, okay, if the rat snake isn't poisonous, don't worry. But if the brown snake bites you, that's poisonous.
You're going to die.
All right.
Wow.
A 30, yeah. How would you like that?
I mean, it's called the Wilderness.
And we were in this cabin. And
they try to replicate very much. The Disney does a great job. They do try to replicate exactly like the Northern Woods. And there's snakes in the Northern Woods.
But I think the rat snake is a Florida snake.
Yeah.
I don't think they brought in Wisconsin snakes.
We're gonna need a snake.
We're gonna bring in some Wisconsin snakes and throw them around the cabin. Okay, so we're getting market on this 211, 239 on the July put. This is our first July trade, which is kind of makes me feel like summer's going to fly by. So going out to July.
I mean, you got to do what you got to do.
You got to do it.
Time moves on.
$1.88.
The only constants are time moving on, right?
And taxes.
And taxes.
No,
Death
death
and
and taxes. The only sure things, death and taxes. But
time moving on is a sure thing too.
Yeah, time's gonna pass. All right, failed right away. So we're short that 35 put now in July.
And then push that out live, just so we'll keep everything copacetic with the pushing
Okay,
out.
I will push that out. Let's go to today. Filled today. IONQ the roll, published to the follow feed. So any trades we do, you can follow on the follow page. They are not trade recommendations, but the follow
they're
page.
there.
They're there. I'm also going to put in a 50% GTC for that new July put, because if that hits 50%, I want out, because 52 days is a long time.
Well, and that's what I was going to say, is we probably would have been out of some of these on Thursday or Friday with this IONQ, but I was in with TP, and I don't know that we got to it.
Yeah,
but that's
sure.
fine. It's good. It's a good thing instead of a bad thing.
Right.
It's a high-class problem.
Okay. Now,
there's some more you wanted to manage. We are going to be going into Twitter soon. Put the hashtag LIZJNY. Oh, there's that Target trade. Does Target have earnings today?
No,
Or
they
had
were
it
last week. They were last week, and this.
It's just that's why it's on Kai's list, because it was last week's earnings.
Yeah,
Okay.
so we sold a put in Target before earnings. We made money and got out of it and didn't even ride that put through earnings.
No, which was great. And then we put on a new trade.
Then Target went down on earnings, and we put on, Target went down, rank stayed high, we put on a Jade Lizard.
Jade Lizard.
Now, this Jade Lizard's been on for 6 days, and it's up 37% in 6 days, and it's a Jade Lizard.
So with a Jade Lizard, we do take less profit. My eye line glanced to see where the call spread was versus the call. So we have the 102, 103. It's only trading
far.
97. I still say we close it, because this holds quite a bit of capital too, if I remember correctly.
Let's take a look. So if we waited for 50%, it's going to be 10 cents more. So
Yeah.
we're at 62 cents, it's 10 cents more. Do we want to wait 24 days for 10 cents more?
No, thank you.
Maybe not. This is going to give us back $925 in buying power.
That's what I'm saying. I knew Target was around $1,000. Let's close that.
So I'll put the 62-cent bid. I won't chase it, but because then that's 2 back-to-back trades we made money in Target. We had the quick put before earnings, and then this.
True.
I think we're doing okay in there. 33 rank. Would we take that off and go to July with a different kind of trade?
No, not right now.
We'll just wait.
Yeah.
Okay. So that. Oh, and our U-Haul strangle. I kind of want to take this U-Haul strangle off.
Well, it's 40% on a strangle with 24 days left. So think about it from this perspective. On Friday, we'd be managing this either way.
Right, we'll be at 20. Yeah, on Friday we're going to hit 21 days. So if we've got profitable trades, we're going to start taking them off now, because then.
And Friday, we're on the morning show.
So I don't even know if we have a show Friday.
I don't know if we have a show Friday either, because we're going to be live from 7 to 10.
So the boys are in Atlanta.
Yep,
What are they
Atlanta.
Yeah,
They're at Work by 11 tour.
The At Work by 11 tour on Friday. Liz and I are at the morning show, 7 a.m. until 10 a.m., which is why I wonder, are we doing our show from 10 to 11? Not sure.
I doubt it.
They give us a break. They're usually like, all right, ladies, you can go to the bathroom and eat. You don't have to do your show.
So yeah, Friday we will have the morning show, which is great. Okay. So yeah, let's manage this now. Let's manage more things now, because we're not having our show. And when you do the morning show, they just give you everything. We're not gonna be able to be in our account that much.
Hey, the morning show, there's no prep. We just walk in and the research team hands us the whole show.
Yeah, it's fantastic.
I love it.
It's glorious.
They give us like just a taste of what it would be like if we were Tom and Tony.
Just a taste.
Just a taste. Girls, you can fill in for Tom and Tony, and this is what life is like for them. They're handed their show.
They are. And we get to take callers, we get to see Scott, we get to see Vanetta. It's going to be fun.
Oh, it's going to be fun. Okay, so I think that's it as far as management goes.
Yes, for right now. Now, we have Kai Study, but I would like to pop into Twitter first, just because, like I said, I think Twitter gets a little bit left behind as well.
All right, I'm just going to go top down. I'm going to go top down. Coming in with the Polish Warrior, Mikey.
Woohoo!
Happy short week, ladies. Off to see our nephew graduate high school in Baltimore. Oh, so fun. So we'll probably be watching you delayed. Please keep the market mostly sane. Well, have a wonderful time.
Mikey, I'm done. I'm talking directly to Mikey right now, because nobody else is in the room with us. I mean, my son graduated, and it's been party after party after party after party after party. I don't know that I am not 18.
It's graduation party.
It's graduation party season.
This weekend,
crazy.
you've got what? How many this weekend?
This
Besides
weekend,
at your house.
So I have one at my house on Sunday, and I have 3 other ones that we're going to.
That's crazy.
It just gets expensive.
So I remember I bought a stack, like a bulk pack of graduation cards.
That's what I made Dan go get. I was like, go get the box. He's like, a box? I was like, get a box.
Yeah, a box, and kept them on the counter with the stack of cash. So, here comes another party. Let's go.
Yeah. Yep.
It's an expensive summer.
It's an expensive summer. It's a fun summer, though. I'm excited for the kids. But yeah, congratulations to your nephew, and thank you for all the pictures that everybody's sending me of graduations. I loved them. I love seeing them.
Yeah, congrats, Mikey. Have fun in Baltimore.
Okay,
That's
so
fun.
then last margin call. Good to have the market open. Decided I'm going to control Delta on a downside bias for Dix. Dix is buying someone. I can't remember who. Instead of the put vertical diagonal, going to take advantage of the short week and roll with a slight out of the money 10 strike put fly.
All right, I'm going to read this again just to see what.
Yeah, Dix downside put fly.
Control Delta and downside bias for Dix. Instead of a put vertical diagonal,
downside $10 wide
the
put fly.
short week and roll with a slight out of the money 10 strike wide put fly.
Yeah, so downside
covers the. Okay, let's take a look at. Do we have a Dix?
We don't have anything in Dix. You know what's crazy though? I forget who they're buying, but everywhere I went, everyone's wearing on clouds.
Oh, all over Disney, they're in on clouds or Hokas.
Yeah, on clouds or Hokas, but Hoka is Dex, and that DECK. That's who makes Hoka. Deck makes Hoka and UGG, and they did earnings and they tanked.
Oh, really?
Mm-hmm. I did not know Deck. I did not know Deck was the ticker symbol for Hoka. Or Uggs.
So in my mind, Uggs, and I know the kids wear them. In my mind, Uggs are not like. To me, I don't love their footbed. Like they're not.
They're just warm boots.
They're just warm boots.
Yeah.
They're not like a supportive. They don't have the arch support. I think they're missing something. They're missing a piece. They need to combine with someone else and get some better arch support.
Yeah. Well.
But and that's Deck.
Yeah. DECK, I believe. And you'll see it. They had earnings last week.
This outdoor.
Yes.
Oh yeah, look at that.
Yeah. So they were the makers of, and I had no idea. I would
and
never.
That's Hoka and UGG.
It's Hoka and UGG.
Okay.
It might be Hoka. I don't know if we're saying it right. Hoka. It's Hoka.
I don't know.
But yeah.
HOK. I'm not sure.
So.
But I saw those a lot.
Yes.
And on clouds. A lot of on clouds.
On. I don't like that ticker symbol.
Okay, so let's do this. Dropped on earnings. What about on?
On went up on earnings and they're over with. I was just bringing it to your attention. Yes. It doesn't matter. Now we're looking at Dix, but Dix made me think of my on clouds, and then that made me think of Dex.
Okay, Dick's Sporting Goods. You see this? It had a big jump,
because
and now
they're buying somebody.
Okay.
Let me see. I'll go in while you're looking at that.
So, and what they were talking about
a downside
put fly for the week, for the short week. So and they have earnings.
Foot Locker.
They're buying Foot Locker.
Yeah, Dick's Sporting Goods to buy Foot Locker for $2.5 billion.
And Foot Locker, I think is it just FL?
Yeah.
FL. Foot Locker
went up on the news.
Up on the news.
Yeah.
Yeah. That was a big jump.
It was a big jump.
Like if you go from 13 to 23, that was a big jump. I was waiting for Spirit Airlines to have a move like that. Waiting for JetBlue to buy them, for the deal to be back on.
Yeah.
Never happened.
Never
happened.
happened.
As long as I had my stock, never happened.
Okay, so let's go to Dick's. Let's do a downside $10 wide put fly.
Okay.
Because that's what last margin call is looking for.
All right, here we go.
Are they in that cycle? I'll go back and look.
They have earnings, so...
They have earnings today, I believe.
Let's see.
They do have earnings today.
May 28th before. Yeah, so today. Okay. I'm just looking. So $10 wide.
Yeah.
I mean, I don't know. So if you're doing
slightly
$10
out of
wide,
money, $10 wide put fly. It doesn't say which cycle.
We're paying for it. We'd be paying and paying. So I've got to shift it if we don't want to pay. And we're still paying. Like, no matter how we slice it, at $10 wide, we're paying.
In the 3-day, you're never going to not pay.
Right. So if we didn't want to pay, I'd have to make it narrower. So here's a $7.50 wide, and we're still paying.
Yeah, and then he's got it's a butterfly. Oh, you're filled in Target.
Filled in Target.
It's a butterfly. So.
Well, I mean, I put it in as just a ratio spread.
Yeah. I mean, I'm glad we're looking at this, and this is protection. So this is something that we do when we're long a stock. When it's got earnings, is we'll do something like this to protect it to the downside.
So I brought it up to $5 wide. So $5 wide, $5 wide.
Oh, there you go.
And then make it like 750 wide. So this is broken wing. We're taking a small credit, but we have a little bit of risk.
But pull it down to the 60. Do you mind pulling that 57 to the 60? Pull
We're
it
gonna
up to
pay.
60. But you're only paying 22 cents. If you want
Yeah.
protection, this is not bad.
Is that what he said? He wants protection?
Well, it just says, I'll read it. Glad to have the market open. Decide I'm going to control the delta on a downside. Control the delta on a downside bias for Dix. Instead of a put vertical diagonal, I'm going to take advantage of the short week and roll with a slight out of the money 10 strike wide put fly. That's a butterfly. Covers the IM.
Yeah, and again, $10. If I make it $10 by $10, we're paying for it. If I make it $5 by $5, it's a very small debit. If I break the wing and take a little bit of risk, you're not paying a debit at all.
I don't mind that. Throw it in.
But either or, we pay the. But
22 cents I was fine with. 50 cents in that.
Yeah, I'm gonna Dix. So I'll say
death before debit.
Death before debit. In the words of TFM.
TFM. Death
Tony
before
from
debit.
Mexico. I like it. I just bought my golf bag at Dick's.
Oh, did you?
And it was expensive. I'm like, is this all the...
Golf is not a cheap hobby, Jenny.
I was like, what? And the guy was telling me the price, and I'm like, it can't be that much. I've seen this bag online. This is highway robbery. I was going to go somewhere else. And then when I looked closer, he was quoting me the Canadian dollar price. I'm like, it's $100 less. You're quoting me the Canadian dollar price. The helper at Dick's. Like on the tag, it said
USD CAD.
But it was still expensive.
Yeah.
It was almost as much as the clubs.
Yeah.
Yeah. Maybe. Kind of. Close to.
I've got clubs.
I bought slightly used clubs.
Did you?
Yeah. I figured. From
Yeah.
A starter.
Yeah.
Starter like me.
When she turns pro,
I
she'll
got
go
some
get
new clubs. All right, so I don't want to pay a debit for this because what's happening? Dix is dropping, which is why this has gotten a little more expensive.
Yeah, just put it. Oh, you're still a debit. With
Yeah.
the butterfly. We looked at it. That's great. Let's go back to Twitter.
Wait. I'm going to put this in. I'll ship the strikes down. There we go. What, a debit?
Yeah, just get out of that. Everything's 40 cents wide. You got 370 at 410. It's wide markets.
Forget about it.
Okay, let's go back into Twitter because we got to get to Bob's
Bob
list.
on fire.
We could do something in Dick's if we wanted to.
OKTA and Dick's. That's all there is today.
And Dick's is tomorrow morning before the open, and you can see that. And what's great about this is Bob Vetsy's list. There's a lot more. Like you can see Macy's has earnings. You can see BMO Harris has earnings. Like there are other things that have
NVIDIA
earnings.
on Wednesday.
NVIDIA's Wednesday. That's the big day.
Big day. Okay.
And then let's go down because I love when everybody's doing this. Now, Eric gave us, and I love the full disclosure. When you're looking at all this stuff, these are all the trades, these are all the closes, and they're done, and they collected $1,500 in fees in 33 minutes.
Not $1,500 in fees.
$1,500 after fees in 33 minutes.
Yeah, he paid $1,500 in fees in 33 minutes.
You too can pay $1,500 in fees in 33 minutes.
$1,500 in after fees in 33 minutes, and you could see like, you know, open, close, bought, sold. He had quite a few trades on this morning.
Yeah, which is great. I love it. I love seeing these things.
Love it,
and
Eric.
then Paul Smith does the same thing where
he sold a put spread. He sold a $5 put spread for 85 cents, but then this was earlier, right? And the market popped.
You know what's crazy? Where the heck do you think Paul is? If it's
4:50. That's what I was going to say.
4:57 p.m.
Where is it 4:57 p.m.?
Europe?
It's not that late. Maybe.
Japan?
I mean, maybe a little beyond England. Maybe just an hour or so beyond.
Nonetheless, I love it. I like the nighttime trading, dinner time trading.
Like, I think when our show starts, it's 5 p.m. in Germany. We were just figuring that out, right? Because if we're going to do our show live from the RMC at 10 a.m., it's 5 p.m.
Yeah.
So,
and it depends. I know I've done the show with Angeline Ong before, and 50% of the year it's earlier because their time change is different than ours.
Yeah, so who knows? Yeah. Or if he's maybe just a little bit beyond that, an hour difference. I don't know, but it's 4:50. What would you think?
So the funny thing is, you and I can't get past the time. We're not even talking about the trade.
What about the trade? Who's trading at 4:57?
I like it.
All right. High IVR, IVP, and IVHV names this morning. So this is everything with Hi, IV.
This is
IVR.
fantastic. I love this list.
Thank you so much.
Okay, so you have Adobe. Okay, Adobe A&F. Anything we want to look in there?
A&F,
So,
I think, has earnings. I think they're on the list.
Salesforce. So CRM just bought somebody this morning too.
They did?
Yeah. Or announced they're buying somebody.
Okay.
So Salesforce is buying somebody. DocuSign. Elf has earnings this week. IONQ we were in. Let's take a look at an OKTA has
Yeah,
earnings
that was
as well.
on that was on
So
Bob's list.
You'll see some of these and I like that. I like that these are two totally different lists because you'll see the things with earnings will be on this list, right?
I want to take a look at Salesforce.
The CRM. It's
CRM,
like
it's only up to 28.
yeah, but usually the one who's
they're
buying
down.
is down.
Did they announce it today or
This
Friday?
morning. They're buying I'm going to say it wrong, but Informatica.
And you could see they opened at 273. Well, $2 lower, but really didn't move. Maybe that's not that expensive of a company if they barely moved.
$8 billion.
Chump change.
Just get that in the couch. Yeah, so it's called Informatica raises after Salesforce strikes an $8 billion takeover deal.
Okay. So this
When
is
they
a
say
great list.
takeover, is that hostile?
No, I think it would say
hostile takeover
instead of like a. I don't.
Instead
think
of a purchase, it's a takeover.
I don't know. Are you thinking like Richard Gere and Pretty Woman?
Yes.
I'm gonna buy that company and tear it apart. Or in Suits.
Oh yeah.
When Mike Ross goes over to the other side and has to like buy a company and take it apart.
Oh yeah.
Lose everyone their jobs.
Yep. Hostile takeover. This isn't. I'm just kidding. So, but Informatica rises. So both Salesforce and Informatica rose after this deal.
I
Where
kinda
in
wanna look
Dick's,
at
you can
Campbell's
see
Soup.
you can see Dick's and why? Oh,
It
is it
used
on
to
the
be-
list?
It's on the list.
Oh,
It's on-
I was like,
Why do you want to look at Campbell's Soup?
Random Thoughts by Jenny Andrews. Okay,
It's on the list.
Let's take a look at Campbell's Soup. Good.
CPB?
Yeah.
Yeah, Campbell Soup Company. Oh, nice. I like to see when products are at the bottom of the range. It makes it a lot easier for me to sell puts in here. Campbell Soup is something I used to trade.
Do they have earnings?
And
They have earnings.
They have earnings, and I think they have a higher-ish dividend. Let's see. Yes, dividend, 4.6%.
Yeah.
Nice. I'm going to get in. I'm going to get into Campbell Soup.
So TP and I answered a bunch of questions about these crazy dividend stocks, like NVDY.
Oh, like-
It's got like 170% dividend. Type this in.
But I thought NVDY was like that covered call fund.
No, just go to NVDY real quick.
I'm pretty sure I asked Gad to look into this and
pop out the side. Yeah, just
I think
we looked at this. I'm pretty sure this is the thing, and then the dividend. Yeah, what is it? 130% dividend. It's monthly.
But it's not.
It's monthly.
I think I asked Gad to look into this, and the crux of it was, if you want to trade NVIDIA, trade NVIDIA.
Correct, but not for the dividend portion of this was different. TP went into it. It's a monthly dividend, but it's got the drag.
You can see like trust yield max, but I thought it was some kind of covered call fund where you're always.
I think that was a different.
No, it was
symbol.
NVDY because this is what I originally bought in Logan's account. I know I originally bought this in my son's account, and then when NVIDIA was going up, this wasn't.
It isn't. It isn't NVD. I don't think it's got.
But I think.
I don't know. But we looked at this with TP.
You can see NVIDIA option income strategy. I thought it was just some kind of covered call fund. We could ask Gad. He did all the research for me.
Yeah.
And after looking at the research, I was like, okay, I'm just going to trade NVIDIA.
But these were the questions that people were asking TP about this, and he's like, it's got a great dividend. So 100.
Well, I don't know.
He's like, it's got a great dividend. It's 130%. But yeah.
I'll take a look at Logan's account. He had this. He might still have it. I'll let you know if he's got really racking up the shares from the dividend.
But it's really come down. Okay, let's go back to Campbell's. It's just, as soon as you said dividend, I was just thinking about TP.
I know I asked our research team, I was like, hey, I want to look into, there's all these different
And
NVIDIA
they brought on-
products.
they brought
And
on
They brought it
something for
on,
us.
and I think
Yeah.
the takeaway was just trade NVIDIA.
Yeah.
That was their takeaway. All right, CPB, they have earnings. If I go all the way out to the 24-day, it's not bad. I can get $1 on that 34 put.
How much capital is it holding up? I can't see that.
652.
That's not bad.
Or 65 cents on the 33.
And I like it in the 24-day. Now, this is going to be your earnings trade, so bring it up.
Now, bring it up?
Yeah.
Or I'm going to check the 10-day. 33 in the 10-day for 50 cents in 10 days.
I prefer that.
55 cents in 10 days.
Yeah.
550. Using
Or we roll it on top.
$550 to make $55 in 10 days. I'm glad. Sometimes, that list. I wouldn't have looked at Campbell Soup if I didn't see that list.
No, you wouldn't have.
I'm back in because I was in Campbell Soup for a while. After it got so high, I got out of it. Now, perfect. Right back down.
Right back in.
Back in. All right. back to Twitter.
Okay, let's keep going down. Thank you for that list. I appreciate it.
Jack Tucker?
There's Jack Tucker. Now, this is something we can see his times.
I know.
He's 9 o'clock, just before 9 o'clock, and spoos were only up 50 or 60 at that point.
I know. I can see a short calls 5,900 is trading.
God bless your little heart, Jenny Andrews.
59.12 right now, so
I know.
It's a little through his call, but what do you do? What do you do if you have...
Jack Tucker has got ice in his veins. You wait for a slight pullback. Spoos are up 96.
SPX 5901. I was looking at ES. SPX 5901, so it's right there.
Yeah, he's right there. He's $5 away from it. It's not that bad. He's got ice in his veins. He's just got to hold on.
Ketan. Hey ladies, I put on TLT 8284 call zebra, paid $441. I watched the video on ratcheting. I understand the mechanics, but wanted to know what I should consider before doing it.
I love this, Ketan. So the zebra is the zebra is the zero extrinsic back ratio, so it replicates stock. So the
stock replacement.
The only thing that I say before we're going to even look at this is if I would wanted to keep the stock, I would ratchet it. That's the one thing I would do. If you want to take your profits, it's a stock replacement, and you're not, I say I'm happy with X amount of profit, close it. If you want to ratchet it, ratchet it.
You only ratchet it when it's a winning trade. So if you have the 8284 zebra, I'd be looking at ratcheting this if TLT were 85, 86, 87, when it's higher, when this is winning. The ratchet is when it's a winning zero extrinsic back ratio. So where is TLT right now?
TLT is 85.64.
Okay, yeah, it probably could be ratcheted.
It could be ratcheted because he's got the 82.84. But we have one that we can do too. But before you do that, Jenny, can you pop into Tasty Live and just show what we're talking about so we can share with the class?
Okay, sure.
Because Keaton looked at the video. So you go on demand, right there. The little on demand button. All the way down to Liz and Jenny strategy series. Not strategy workshop, strategy series.
And here you can see, now here's the zero extrinsic back ratio, which is the spread, the position he has, that stock replacement position he has. And then here's the ratchet.
And the ratchet is taking one, closing it, and reestablishing it, continuing your stock position, but taking some risk off the table.
Basically, you keep your unlimited profit potential 100 shares. If one zebra is like 100 shares of stock, so you keep your synthetic 100 shares of stock going, but you take some risk off the table.
Or you can ratchet it all the way up, where sometimes you can get it on for free, or a credit, and keep the dream alive. We're not there yet. You're not going to be there by a $2 move in TLT.
We have a zebra here. Okay, we have a zebra in GME.
Perfect.
I don't know. Can you see this?
I can. We have the 26.29 zebra in GME, and GME is trading 35. So we made almost $564 on this trade.
Well, and I know wherever the short call is, that's where GME was trading when we put this on. So
it's the 50 delta
29.
call.
So it's trading 29. Now it's trading 35. Stock's $6 higher. We should be up about $600, and we're up $564.
That's exactly what it should be.
Yes. So the ratchet would be.
I just want to look. We paid $666 for this.
I remember. Okay. So the ratchet would be, keeping in mind what we paid for this, closing the original trade, closing the original zebra.
And with 52 days left in this, Jenny, this is good.
I know. This was that viewer who thought GME was going to be like.
GME, yeah. Didn't they say up at 80 or something?
120 or something like that.
So wait, hold on. Now, if somebody wanted to, and if they're willing to say we put $600 in this, we made 100% whatever return, and they're happy with it, close it and move on.
Close it. Yeah, you can close it. You can close it and take your profits.
100%, right.
Now, if we wanted to stay in this, synthetically keep 100 shares of GME.
Well, and that was their assumption. They thought it was going really, really high.
And that's why we put it out further.
Yes.
And sometimes that's how I know, like, I want this on longer. This is out further.
Because we put it out farther, right.
So I want to keep this on. I want to synthetically keep my 100 shares of stock, but take some risk off the table, close the original trade, and then put a new one on with the original mechanics of sell 150 delta, buy 270 deltas.
Correct.
So we sell
and put it in as one trade so we can see it.
So and here, okay, there's call skew here. You can see the 50 delta. When I say sell 50 delta, I'm talking about the at the money. I'm not going to go all the way up to the 38 and sell that 50 delta.
No, usually the 50 delta is the at the money.
I know, but when you feel a lot of call skew, sometimes it throws that off.
And we're trying to wash extrinsic value. So if you're selling that one for $550, you're going to need to get 270.
It's the 70 delta here.
Yeah, it's the 72.
Yeah. So sell 150 delta, buy 270 deltas. I can put this in as one trade. So basically, we're closing the original zebra, opening a new one, and taking in 250 credit.
It's pretty good.
So if we paid
now, I will tell you, this
$6.60
is a little bit different than they usually are. But guess what? There's something that you can see the call skew that's happening there. A lot of times, you can take in what your profit was.
If we're up $500, often if we ratchet this, we'd be taking in a $5 credit to ratchet
This has
it.
some weird
but there's
skew in
so
it.
much call skew here where when we have to buy two, I think it's tricky because I don't know.
I would still do this. Take in your 220 because then no matter what happens, wheels fall off scenario, we're only going to lose $350.
Now, sometimes what I'll look at, if I want to take more credit and I think, okay, this already had quite a run, I don't know if it's going to keep running, I will take a look because here we're taking in 242 credit.
But this assumption was going to like 90. We're gonna put this
And
ratchet
we'll
in.
we will.
But she's just going to give you another example.
So if we paid $660, we're taking in $240. So basically taking $240 in risk off. But now if GME turns around and falls, we'll lose our profits. We'll lose our profits.
Oh, for sure.
And we still have money at risk.
But the ratchet allows you to have the unlimited profit potential. It keeps your unlimited profit potential, and you're taking risk off the table. So in this example, if you kept going, like say we wake up tomorrow and GME's at 45, right?
Right.
Then you can ratchet it up again and actually take in a credit for this, where then you won't lose. You could have it on for free.
You could have it where you keep taking in enough credit, and sometimes that's what I try to do. So I'm just gonna go. Sometimes I'll move it shorter term to take all risk off the table. I just want to see if I could do it. If I sell the at the money here for $450, then I need $450, like $250 here, and I buy $270 delta here. I'll keep it here, that 31, and I buy two of those. I wanted to see if I could take in enough credit to almost take my original debit off.
Which you're still giving up the profits if it falls down, right? So that's what I'm saying right here. Right now, that's why forever give me there's a gotcha, and you kind of have to understand this. You have $600 in profit. Closing it and walking away is not a bad idea. We want to stay with this because of the assumption of the viewer when we put it on, because they said GME is going to, I mean, it was an astronomical number, whatever they said.
It was crazy.
Yes.
So if we paid $660 and we keep it in the same cycle and we take in $250, then $660, we have about $400 in risk at risk in the trade of our own money into the trade. If I move the zebra shorter term and take in $4, $660 minus the $4, well then I have $250 at risk in the trade. Either way, any way you slice it, we still have our own money at risk in the trade if GME falls.
If it falls. But that wasn't the assumption of the trade. We are trying to replicate stock, and if stock goes down, you lose as well. So very similar. If you bought GME at 29 and it's now 34.88, if GME comes back down, if you were long the stock, you would still lose your profits.
Right. So I'm gonna just keep it long term. That kind of makes us realize, like, oh, we put this on longer term for a reason.
Yeah.
Take in some, but I was hoping we'd take in more.
The call skew's throwing me off, but that's okay.
310, 550. We could give up a little bit.
Yeah,
sometimes
that's good.
we could give up a little bit of extrinsic value.
Take in 344. We're cutting it in half.
And taking in 344. Right. Cutting our debit in half.
That's pretty good.
Okay, 340 credit. And when I put this in as one trade, you'll see the original zebra will close, the new one will go on, and then we'll just have this 2-by-1. What is it called? A back spread or back ratio?
It's called a zebra, Jenny. I don't know if you know that.
I don't know what it calls it.
It's a back ratio. It's a back spread because it's usually a ratio spread is buy one, sell two. This is the opposite.
So we're working that. GME markets are a little wide. I'm going to let that work for a minute.
But that's what we do with those, and that's a fun example. There's been stocks and gold is one. Gold was one for a long time that I ratcheted all the way up, and then once it gets to a certain height, then you don't mind if it falls back down because you've locked in your credits.
Correct. Now, I just wanted to look at his 82.84. If he had the 82.84 zebra, he has two long 82 calls and one short 84 call. He paid $440, so he's up, $110, $120.
And you could just do the same thing.
So I would sell that one, buy this one back, and then put on a new one.
50 delta, go 86.
Sell that, and then buy the 70 delta. You don't want to have cross strikes. You don't want to have the same.
Yeah, but it's
strikes,
around about 70 delta, right?
And buy two of those. So
you're taking in $1.25 credit.
And that's what he's up on the trade. And that's how it normally would work. But GME's got some
wonky skew, and it's
Yeah.
pretty far out in time. There's a lot of theta decay in there.
So you could take $1.22 and risk off by just putting a new zebra on, closing the old one, and taking $1.22 in credit.
And keep in mind, this is if you think it's going to continue to go up. We had a TLT zebra. We closed our TLT zebra a while ago.
No, we still have it.
We do?
We didn't close it. We didn't close it. It's here, 84, 85.
We're just getting back to our.
Yeah.
We're just getting back there. We also have.
And we should move it because when it gets down to 10 days or less, that's when I move it further out in time.
Let's go in time. We're going to pay to move it out in time, but that's fine.
Well, so we can make a couple decisions here. We can say
we have a ZB put spread in as well. So I'm just talking about all of our bond
Yeah.
positions. We're finally getting the movement we need in bonds today.
So
OKLO's on the TV.
Up again, 410.
Yeah.
That saved me last week.
I know. Yeah, so OKLO is on the TV, but we will stop watching TV and go back to you guys. Sorry.
I'm gonna just watch.
We just sit here like this for 3 minutes.
All right, so our TLT zebra with 10 days to go. We could say, you know what, we'll give it another day or two and see if TLT gets a little bounce and we can make some profit on this and just get out of it. Maybe we leave it.
Yeah.
Maybe but usually the rule with the zebra is 10 days or less, we move it out in time.
I'm okay with having a zebra on in TLT because I mean
All right, then
bonds
let's
were
move it out
low.
in time. Then we're gonna.
They were low, right? And I mean we're not out of our ZB yet. We're still down $62 on them, but that's
We'll
okay.
just go to the 24-day.
Yeah.
And I'm going to look for most extrinsic value. So actually, this 85.5 line has more extrinsic value, $1.30.
Yeah.
And then I can pay this by 283.5. So I'm paying $1.12 debit. Liz said we're going to have to pay to move it out in time.
Toggle it a little bit if you don't mind. There you go. Because I think, yeah, there you go. Yeah, we're paying a little bit to keep it out in time, but because this isn't a ratchet. This is a zebra that we had on that didn't do anything.
We haven't been able to take it off for like one day. It was a small profit, but we never.
Never enough.
Yeah, so we know these are more expensive the further out in time you go. So if we're going to move it from 10 days to 24 days, and we're keeping it right around here, we're going to have to pay to do it.
We're going to have to pay to do it.
So 115 debit. Let's see if that fills. I get so mad that I don't have more OKLO.
Can you do me a favor and just start pushing everything out? Because I think we missed a couple things.
Sure. I don't think I pushed anything out since the first trade. Oh,
Yeah.
it's just Target and TLT.
Okay.
And then we are also working the ratchet in GME. But that ratchet
I think that's got wide markets, and that ratchet looks weird.
That ratchet looks weird. We should be taking in more credit.
Agreed.
So I don't know.
It looks very bizarre. Okay.
See, and look, I'm trying to get 340 credit. Mid-market's 358 credit.
I mean, because look at your markets.
The markets are wide.
You've got
795.
265 at 450 is
And
your
you've
down
got
market.
all these 4 legs of wide markets.
Yeah, I mean, leave it.
335.
I don't know that we need to ratchet that.
Yeah,
walked
you're
through
right.
it. It was
You're
a
right.
good thing to
You're
walk
right.
through. Leave it. Let's just
If
leave it.
we're not going to give up a ton just to ratchet it because
No.
we can just leave it.
It was a good example, and I'm glad we walked through it, but I'd leave that before I'd ratchet it.
Before I give up so much to ratchet it.
Yeah.
Should I just cancel this?
Yeah, cancel it. We'll look at it again tomorrow. When you start to behave GME, maybe we'll get back in because the markets are too wide.
I know. Spoo's almost up 100. Where do you think we're going to be at the end of the day?
I think with the lull that you can feel, I think we're going to stay right here.
What's our conductor going to say when we come on and we're like, Spoo's up 100 today? We'll walk on and be like, good day, girls, good day.
Yeah, that's true. Yes, it was. Very good day.
Yeah,
but it is crazy. With Spoo's up 100,
I wanna
how
check it.
calm everybody is down here. It's not like that's even a big deal anymore. Do you know what I mean?
I'm checking his, what is his?
QB, I'll tell you what it
His
is.
biggest position is Marriott.
Oh.
MAR. His biggest position is Marriott, up almost 3% today.
But that's going along with the rest of the market.
Yeah.
Most things are up a ton today.
But that's what he's always looking at, Marriott.
And JB.
And he's the one who gave us the QBTS tip. He told us to go and buy QBTS, and we did, right?
I don't think we have it in here.
Oh, maybe we didn't. Let's take a look. That was his hot tip last week. Ooh, down today. What day did he tell us to buy it? This day.
The day was already up.
Yeah, it was. The day had jumped.
The day was already up. No, it did. It kept its movement a little bit, but it's down a little bit today. It's something
We should have like a new segment, Conductor Tips of the Week. Let's see if he has any tips for us on the train today.
Okay, let's go back. Now, Jenny, keeping an eye on the time, we have 15 minutes left.
Okay.
We've gotten to a lot of Twitter. I think we've managed everything that we need to manage. What about that snow? 20.
So, no, that's
Oh, that was
I've got a
TPs we looked at.
50% GTC working.
Okay.
Still working my Campbell soup trade, but I don't want less than 55 cents, so we're just going to leave that.
Okay.
If it pops down a little bit, we'll get filled.
Then let's pop in to take a look at Kai's study for today. Not Kai's study, but Kai's recap. Research
Yeah,
corner.
the Option Jive Research Corner.
Yep.
You ready for it?
I'm ready.
I love Jive. Steve's ready for it. All right.
Okay,
What do we have?
the summary. The market ignored Moody's U.S. credit downgrade initially, but sold off Wednesday due to weak 20-year Treasury auction.
Okay, bond yields jumped. 10-year hit 4.6%. 30-year reached 5%, highest since October of 2023. And we were just looking at TLT. It was down last week. We're getting a little bit of a bounce today.
Yields up, bonds down.
Right?
Yields up, bonds down. That's exactly how the relationship goes.
So, all right, dollar weakened against safe haven currencies despite higher yields. And I'm going to read this last one because I don't know if you can see it. I don't know if the camera's blocking your
Camera's
view.
blocking me.
Volatility spiked across all assets. Futures went into backwardation. I don't know if they're still in backwardation.
The futures?
Right.
Well, I think he gives us a visual.
Oh, does he?
I believe so.
We'll
I believe he does. Yeah. Okay. So here we've got. This is what I love about this is it's adding to it. This is what we've done. We're doing it on Tuesdays. The boys do it on Mondays. We all have it today. But this is he gives us each week. So the index weekly performance. So last week was a down week, and we haven't had a down week in a long time.
Right. Week of the 19th. So week of the 19th.
Everything was down.
Everything was down. Everything was down. Now, SPOOs were down 2.6% last week. Right now, SPOOs are up 1.6%. So not quite what we were down last week.
But it's one day.
But it's one day. Yeah.
It's one day.
It's one day.
That's what I'm saying. These are big moves, and it's pretty calm. Like nobody. It's like, oh, we're up 100. Who cares?
I know.
It's weird.
But I guess it's just 1.5%.
But we're getting. That's what I'm saying with volatility. So from this perspective, when whipping moves become normal, then it becomes normal. So you're down 100, up 100. It's just normal now.
I know. Well, and we've had vol in this range of. We've got higher vol. Honestly, from my weekend volatility research, when vol's like 13, 14,
I hope you weren't
15,
doing this after you drank around the world. I can't wait to see this research.
No, it was laying by the pool. Laying by the pool and drinking club soda.
Okay, perfect.
So when VIX is low, like 15, you're more likely to have nothing going on. Nothing going on.
Did you get the study where it was like there's one number? Was it 18? Is it 18 the number that's the turning point?
18 is kind of cut off of under 18 low VIX, over 18 high VIX. But no, I know the study you're talking about.
We never got that one?
I was denied access to that one.
Denied.
I said, I want to see this study.
Denied. Because that's what I'm looking for. I'm looking for that one that they did where there's like a pinpoint.
I know.
It was like the turning number.
I'll find that one.
Yeah, we'll find it.
I got to talk to Kai. I got to call a guy. But when we've seen that the doldrums of like VIX at 15 and there's nothing going on and we had so many days. There was one study of 300 something days like you're not moving more than X percent. But with this VIX in this range where we're popping into the 1920 handle, it's more likely that we're going to have these bigger moving days.
Yeah, that is true.
Yeah. Okay. So NASDAQ down 2.4%, Russell down the most, 3.5%.
Yeah, the Russell has been, well, and Russell's the most interest rate sensitive, right?
And let's take a look right now. Russell's up 2% today.
It's
so
the most,
it's
the most interest rate sensitive.
All right.
Okay. Now, expected weekly moves. This is SPX, which is, hey, this is the SPX. The weekly move, this was what he put together for us. Last week was 122.
No, last week, start of last week, the expected move was only plus or minus 92. Because we had gone into that week kind of bullish and not that much going on. But then last week we had the movement, Thursday, Friday?
Thursday, Friday.
So then Monday starts. A bigger move of up 122, and don't you remember? And we have already forgotten. And I know today's Tuesday, but that one study of
the kick in the teeth. I remember that, but we have to do it.
You got to put this trade on Monday.
But it's Tuesday. That's what you said.
But when I look at this and I see that the expected move, and with a short week of only 4 days, we've got a bigger expected move. I think we should have treated today like a Monday.
We could have treated.
We could have put that on.
Well, and a lot of our viewers did,
and they all got paid.
And we had some people that remember the Thursday example about how it doesn't work.
Right.
They bought it. They vetted it for us, and it worked.
Clever.
Mm-hmm.
Yeah.
Yeah.
We got to go back to that study. Next Monday, we're going to open with that.
Yeah, we are. We'll remember that for sure.
All right, so you could see, like, short week and the expected move is more, but we had a boost in vol Thursday, Friday.
So I just want to say the expected move right now in SPX for...
Yes?
I can't get it. It keeps telling me $15, and that's a lie.
Oh, okay, so all she's looking
I'm
for...
staying in the VIX. So go.
SPX, looking at the week. So the end of the week gets us to this 3-day. We're looking at plus or minus $80 now.
$80,
so
there you go.
So market's up and things are settling down.
Yes.
And I don't know if he got that 122 from end of the day Friday.
Well, end of the day Friday was a debacle. Yeah, so that's probably they have to get it from the end of the day Friday.
Yeah. So they would if they got it from end of the day Friday, that makes sense.
Yeah.
Now, and it also makes sense that it says week of 26, VIX was 22. This morning we opened up, it was 20. It was 2060 exactly.
And now it's even lower. Now it's 1940.
Yeah.
Yeah, 1940.
Okay. Next slide. This talks about IVR in major assets. What's down, what's up. I'm going to look at last week. Everything's up because we had that down move. And we would see that. Everything up on a down move.
Yes, everything is up because we did have the down move. And then I think we're going to expect to see the exact opposite next week when we get this study.
Right.
So you'll see
if this whole week stays bullish.
If the week stays bullish, then you'll just see those green bars move over 1 week.
Right? If this is a bullish week or a slow week.
You never know what's going to happen. Do we have a lot of numbers this week? I'm going to
look at gold. Gold, IVR up 58% last week, and oil, and natural gas. Let's take a look at those.
So what's crazy about it is gold was up last week. It's down now. Natural gas has been down. But natural gas, so keep in mind with the IVRs, the commodities are kind of a different animal. If you look at SPY or a traditional ETF or something of that nature, when you can almost say where the volatility is going to be or the IVR is going to be, because as the product comes down, the volatility goes up. If you look at those like natural gas or gold, the pendulum swings in both directions. If it's a high movement, the IVR stays high.
And you wouldn't look at this chart natural gas and think like, oh my gosh, IVR went up 66%.
No, that's what I'm saying. You can't.
And what happened in oil last week?
You can't look at that and say, oh, that's a big move in oil.
Well, no, I think you're missing. The camera's blocking the.
Yeah, I can't. I don't know. Why don't you just tell me what happened in oil last week?
Not too much. I mean, it doesn't look like anything too crazy.
Okay.
It down, but really, I don't know. Down today, what it was up on Friday?
Let me look.
Yeah.
Oh, yeah, that's not bad.
Yeah, it doesn't
You're
look.
getting at this.
Okay, so as far as IVR up everywhere, well, then the world is your oyster. You can trade whatever you want to trade.
It is.
How high did Bitcoin get?
Bitcoin, I saw it as high as like over 110. Nice. But I think it hit a high of like 114. That was like verbally somebody told me that. I didn't see it.
Okay. Well,
can we take a look at Bitcoin right now while we're in there?
I think we have IBIT in here, and that's up 85 cents today. So we just have this diagonal. And interesting, our diagonal, our long call is a 62, which means it was trading around 62 when we put this on 6 days ago. So it's not too much happened in the last 6 days.
Well, Bitcoin's over 111 right now.
Okay. So you could see the move, but I think the big move was Thursday. Big jump up was Thursday.
Yeah.
And then it dropped down a little Friday. So Thursday.
The high on Thursday in Bitcoin was 113.
Yeah, here we go. High of the day, 113.
It's pretty high.
Yeah.
113.
What did Ryan Gray say was going to happen to Bitcoin after the halving?
It's going to the moon.
To the moon.
To the moon.
And
so Bitcoin and
we
Ethereum.
don't know anything. We don't know. That's just something.
And keep in mind, Bitcoin goes in, I think it was like 4-year cycles or something to that effect. And all they had is a very
small
sampling. That's what I'm saying. So it's 4-year cycles. But they said if it goes along, what it's going to go along, this is going to get.
What happened the last time?
What happened the last 5 times? Well, I think there's been like 5 halvings.
And are we seeing anything in Ethereum? ETH?
So you're getting a little bit up move.
No, I mean look at this.
No, but I mean it's a little bit of I can't see that bottom of the chart. But so you're getting a litlittle bit of an up move today, but it's not back to where it was. Bitcoin's back to its all-time highs. That's the only one that is though.
Ether's still below 2,700. If it needs to get back to that 4,000 handle to get.
But you take a look at all of them. None of them are rising like Bitcoin.
Yeah.
Yeah, none of them are.
All right. I'm going to go back to Kai's study. We're running out of time.
Oh. Yeah, we've got a couple
Okay,
minutes
this
left.
talks about dollar fell despite rising yields, and you can see here USD JPY dropped to 142.5 from 148. 6J up 4.1% in 2 weeks. So
It's a
there
big
are a lot of opportunities out there. Now, have we heard when we can start trading the Forex?
Not yet, but I know it's imminent.
Okay.
Imminent.
I filled out all the paperwork. I'm ready to roll.
We're ready.
We're ready. And here we go. Here's the
That's what I was
VIX
going to say.
futures
I'm
curve.
pretty sure he gives us the...
In backwardation, so we had the July VIX trading higher than, DEES and NOV and OC, and that's backwardation when the front month VIX is trading higher than the back month. I don't know with SPU's up 100 and the VIX coming in today if that's still the case. Probably not.
It probably isn't. But this was from last week, right?
Yeah. This was end of week, and from Friday.
Okay.
Largest movers.
Okay, so these are, it's pretty interesting. See, look, there's that deck. That's that, what was it? The
shoe.
Hoka. It's the Hoka
Okay.
and the Uggs.
Okay.
But you're taking a look. Most of these were earnings, right?
Right. Enphase Energy, we didn't trade on earnings. ENPH.
We didn't.
What did it do that had such a big move? Enphase Energy. And it's only $40 now? Are you at $40 50 rank?
$40 50 rank 3 days later. I'm in.
If we started selling puts today, do we start with 24 day or do we start with 52?
Well, Jenny, I'm glad you asked. I would like to see if there's anything in the 24 day.
Agreed. Oh yeah, you can go down to the 35.
How much is this? This isn't something that's cash secured. How much capital
No,
is that?
$350.
Yeah, that's a good find. Thank you very much, Kai.
This is This is something that we might think like, oh, smaller accounts. Because look at this. I can get $85 in 24 days and use $350.
Yeah.
Now my risk is taking 100 shares of Enphase Energy, but
or rolling
this
your
is something that I might think of for a Tasty Bites account.
It's not a bad thing. Well, that's just it. Lower price products. That's a good margin for Enphase Energy.
Yeah. I was even going to look at this since it's short term.
Oh,
because
sure.
I'm sell. Buy one, sell two. 61 cents on this ratio spread.
And then if it goes down, you have a chance of making more. Like it's not a bad learning experience to look at this. This isn't bad.
61 cents versus 84.
Yeah.
Maybe we want the 84.
84.
I'll go with 84.
But that's good. Okay, let's go back to that because we're out of time. Let's go make sure we
are
get to all
out
the
of time.
slides.
Okay. I don't know that we need to finish. I don't know that we are going to finish this.
Okay, and there's still largest movers. Okay, keep going.
And this was big movers on earnings last week. Winners and losers.
And you'll see it's usually, wrapped around 50%.
50-50. It's not like we've got all winners, all losers, 50-50.
Yeah,
that's normal.
It's been pretty good.
And then this week's earnings, big one this week, NVIDIA.
I've been
think
waiting.
Market's gonna
Marvell's got earnings this week too. Oh.
Where is? Oh, I see it.
Yeah.
Thursday after the close.
Darn it.
What's Thursday?
Nothing. I just know that's one of my bigger positions.
Yeah.
I'm gonna have to protect
You might
it.
have to
defense. Defense. That's what I'm gonna have to do to my positions.
All right, we're out of time. I'm just going to make sure that there's not like any pressing tweets that we didn't get to. Oh, look at this. Drink around the world at Epcot. When are we scheduling the Tasty Disney trip?
Oh, I love Disney.
Yeah,
I'm in for anything.
anytime. Here they are on the plane. Have a wonderful time.
Look, he's got a Tony Batista shirt on. They're
Yeah.
so cute.
Oh, that's so funny. VIX futures term restructure return to contango during your show.
Thank you, Scott Sommer.
Holdings show a significant number of out-of-the-money May 30th call spreads. NVDY. Open $10 wide box. Whose strikes are below the stock.
Okay.
All right, well, yeah, NVDY. Well, I'm going to have the research team do a little
we
more.
have this too. The show is impossible to see the platform display again when broadcast. So it's only sound. Okay. Thank you for the.
Okay,
thank you for
so
that.
we'll try to get the team working on this. Is it every day?
I don't know, but we'll get them working on it.
And Punished Pixels, thanks for the kind words on Friday, Liz. I've been trading stocks for 20 years, but option trading is something I picked up less than 2 years ago, learning from your expertise and the Tasting Network.
Love it. Thank you very much. Yeah, no, Punished Pixels is great.
And Continental Europe is 7 hours ahead. UK is 6. So
thank you, Scott Sommer.
All right.
You did it. You did it, Jenny.
It is 11. We're running in the boys' show a little bit.
All right, everybody have a wonderful afternoon. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow, live from the SIBO.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course Thomas Westwater in the house with us today for our Thomas Tuesdays, formerly Westwater Wednesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my buddies, Mike and Thomas. Thomas, how are you? How was your long weekend, sir?
It was glorious. You know, had a good time, had a party at the house, so made some good food. Nice. Big pork shoulder, made some pulled pork, so yeah, it was lovely.
You smoke it?
No, I put it in the crock pot in the oven, or the Dutch oven.
Okay.
Let it roast for like 9 hours, and then
nice.
Did some onions in there, but by that time they just disintegrate. That's the secret weapon in pulled pork, the onions. You keep some moisture, you just chop it up at the end. And yeah, my first job, I actually worked at a barbecue place. So,
really?
Yeah, I was making pulled pork every day for a while.
So you have the experience, so you don't mess that up now.
It's perfect. It's one of those things where, I literally think about this when I go to Benihana. I'm like, if I was a Benihana chef at one point, it would just be.
That's a skill you wish you had.
Yeah, because then you know how to make the ginger salad dressing. You know how to make all.
You could flip the shrimp into your hat on command. That would be perfect for you.
Yeah. But yeah, it's nice skill to have for sure.
Oh yes.
Work on demand.
Yes.
It's good stuff.
Well, Mike had a great weekend. He had his birdie and eagle all in the same round.
Yeah. First birdie of the year, first eagle.
Nice.
Eagle's never expected. You hope you get a birdie if you play an entire year. You're better. Otherwise, you should do something else.
Yeah, there you go.
But
now you can just stop for the year.
Yeah.
Well, that's the biggest question. Is you start at such a high point.
Yeah. Right.
Now you got to be kind of afraid to keep playing because that's a pretty high bar to start at.
Your buddies are expecting a lot out of you.
Yeah.
Yeah. Pressure. I like pressure though. So
there you go.
We'll see. We will keep going.
You'll
We'll
get
keep the train
one.
going.
Yeah.
Thank you. But yeah, it was a great weekend. Nice holiday weekend. Sun was shining. That's all you can ask for, really.
Yeah. We got one good day.
Yeah.
It was still 60 degrees here the whole weekend.
Yeah.
Ridiculous.
But yeah, market's up 100.
Yes.
Bitcoin's at 111.
Buy it all.
Buy it all.
Everything.
Yeah.
Except for volatility and maybe gold.
Yeah. Huge move in the E-minis and NASDAQ. Kind of surprising. We were talking about it just before we turned on the live broadcast. But yeah, wild move into a long holiday weekend.
Yeah. which we had some weakness on Friday.
Yeah.
I mean, Friday was not exactly strong. It did, I mean, the low of the day on Friday was the morning, so it was a little bit of a buy into the close, and typically into a weekend, holiday weekend, you kind of have lower volumes, you kind of have that grind higher. We opened up like 50 or 60 on Sunday when they opened up the futures, and it was just a steady grind into Monday, and then Monday's open was basically nowhere. It's been just a grind higher. We haven't really done anything today but move higher tick by tick. It seems like there hasn't been a single down tick all morning. Going into NVIDIA earnings tomorrow after the close. Got a short week, obviously. Sell in May and go away. Does anybody do that anymore?
I don't know. There was some data around that.
Yeah, it was kind of a big old nothing burger. Yeah. It is a little bit weaker than the rest, but when you look at anything over a long period of time, there's always positive drift. So you gotta.
I think it's more about the strength of the last few months of the year. That's more telling. The old Christmas Santa Claus rally.
Yeah,
that's a good one.
Yeah,
that's
my favorite actually. Those sleigh bells ringing.
Yeah, get to buy all those fancy gifts.
But yeah, it was kind of a mixed bag when you look at May, June, July, August. It's some years it's up, some years it's down.
Yeah.
But
yeah, it's how quickly things flip. We are focusing on the prediction markets, or looking at the prediction markets today and the cherry picks, which should be hitting inboxes in the next hour or so, if not right now. Soon. They're coming soon. We got some stuff on there in on the crypto space, but our main talking point is just like the fervor for calling recessions and just how hard that is to do. And we looked at the prediction markets, which 30 days ago had like a 60% probability of recession, and it's now at like 25%. It just goes to show you that short-term sentiment influences all sorts of things. And even when you look at like some of the talking points of like inverted yield curves and stuff like that, it's very hard to, there's the back testing of those sort of things are pretty inconclusive. So it just goes to tell you, or it goes to show that it's very hard to pick tops, probably very hard to pick bottoms too. You just kind of got to trade and ignore some of the noise there, especially when you're thinking on big moves either direction.
yeah, and it's kind of a moving target type thing, kind of like interest rate cuts. Now I'm looking at September. They're actually pricing in a 50-50 that we don't cut at rates in September, where a couple weeks ago it was priced in that we would get to a 25 basis point cut there. So everything is moving, and that's how you got to operate.
Yes.
It's kind of like last year. We started the year with 6-7 cuts priced in, and then they pretty much disappeared as the year went on. By July last year, they were gone.
And the market was still grinding higher.
Yeah.
I mean, it goes to tell you. Yeah. See Tom scouting us out over there. You might make
staring at us through the window.
You might make an appearance on the show in the background. Who knows?
Probably.
Quick little market update just to give everybody a idea of what's happening today. It's up only. E-mini's up 103. We're at 59.20. We were lamenting the fact that tariffs on are worth 100 points to the downside. Tariffs off are worth like 150. So we might as well just do this back and forth forever. We'll be significantly higher just on that. So E-mini's up 102. They've had basically they haven't sniffed a down move all morning. NASDAQ up 435. It's up over 2%. You got the Dow up 640 and the Russell up 44. The Russell has been the weakest of the group. You have rates easing a little bit today, but have been, going straight up. Yields have been going up, bonds going down, which has kind of weighed on the small cap stocks. They're getting a little bit of a breather today. Oil selling off a bit, /CL 60.61 down 92 cents. Volatility futures getting killed. They're actually lower than where we started prior to the sell-off that we had They're down to 2015, the VIX itself at 1940. So certainly a vol contraction, taking a lot of the weekend out. You kind of had a bid in volatility into the weekend with a little bit of a down move on Friday that we saw. That volatility has really come out today. A lot of my positions are moving significantly in terms of the vol contraction, extrinsic value. A lot of that is coming out today. The fear of the weekend has certainly dissipated. Bonds up a full point here. They just ticked to the high of the session. We're at 112 and 112.12 right now. So they're up about 1%, but bonds have been very, very weak over the last month or so, pretty much since the start of May. Gold and silver both taking it on the chin today after what was a really nice rally back to almost 34. I think we did get 34 in the early part of Friday. 33.95, so just under 34,000 on the gold futures. They're at 33.21 right now, down $73, a little over 2%. Silver moving in the same direction here, down 38 cents. And then Bitcoin, as Mike was alluding to, having a nice little day. It looked like it was going to be a little bit of weakness over the weekend, but as with risk assets, it seems to be back on here. 111 on the Bitcoin futures, spot at 110 and change near the high of the session, if not the high of the session.
Yeah, kind of some crazy big moves here in both directions.
Yes.
I did make some adjustments this morning. So
what are you doing?
I had some stuff. First things first, closed the risk, took out the risk on the Natty Gas broke wing butterfly to the downside, locked in a 70-cent credit and moved the long put that I had at 315 up to 330. And that creates a symmetrical butterfly. I now have a 70-cent credit with a small little butterfly shot, remove the buying power and remove the risk there, locked in a 70-cent profit. And then anything I sell out of it would be additional. And end phase, sold a put the day before it dropped 600%.
20%. Can't drop 600%.
True.
Oil futures one time.
Yeah.
Very memorable.
Yeah.
Over 100% drop.
Yeah. But actually, don't feel too bad about this position. I closed out of the 45 puts. I bought that back, and I rolled to July, sold the 45 put, added a 50 call. So I have a 5-point wide strangle now, picked up 267. Net credit on that is 482. So the break even is down at 40, which is where we're at right now. So any kind of drift higher will be okay there, even into a 20% sell off, worst case scenario. And then Expedia, my earnings trade gone wrong, started with a diagonal spread, rolled it to a calendar spread for $1. And then this morning into the rally, I bought back the 10-day 175 call, rolled it to June and up to the 180 for 40 cents. So I now have a 5-point wide diagonal on with a basis of $8. Not the best scenario, but if we actually get up to 180, this will probably be a scratch because there's about a $300 difference right now in extrinsic value between the long call I have in July versus the short call I have in June. So if you assume it's trading for $500 intrinsic plus a couple $100 extrinsic, we'll get that back if we rally up to 180.
Beautiful. I had a little bit of cleanup today too. I closed out of a put that I sold in AMD against the long that I had. Stock's up $4 or $5 today. That put lost about 50% of its value again. Anything you kind of have sold over the last week or two really came in, especially if you lean slightly long. It really came in over the weekend. So check to see some of your short premium. If you got some junky out in the money stuff, take the money and run. We've been talking about that, significantly over the last couple weeks here. I also closed out of IonQ, which was one of the quantum stocks that has been going nuts. I took some premium out of that. It's basically unchanged now, but that was kind of like a short squeezy type thing. Took some money and ran on that one. Oil, I closed out of an iron condor that I've had on. That's been a nice little trade. So took a couple bucks out of that, put on 2 new trades, HIMS and NVIDIA, into earnings here on Wednesday after the close. But again, just kind of cleaning up some of my positions as vol has come in, as you've gotten direction correct. You did kind of the same thing with Expedia. So, yeah, just clean up. A little cleanup. Nothing huge.
Yep. That's all you can do.
Yes.
Slight adjustments and see where we go from here.
Yes.
Yeah, that's pretty much it. I've had this UAL strangle on too. I get the 8590 inversion with about $1,200 in credit. So that's coming in nicely. Nothing to really do there other than see if we get up to 85. In which case, I'll probably just shut it down. It'll probably be a scratch or a small winner if we rally up there.
Yeah. Nice little move for you today.
Yeah, we'll take it.
Yeah.
Take it.
Of course.
But yes, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. I've got the Cherry Picks newsletter link pinned to the top of the YouTube chat. You can get that before it comes out today.
Yes.
And throw in any trade ideas, questions along the right-hand side chat. I see some in there already. We'll get to them in just a few minutes. But first, Thomas has some content for us. Live cattle futures. Are we getting back in? I would love to.
Kick off the summer with some steak.
Hell
yeah.
Hell yeah.
Some steak futures.
Good stuff.
Yeah.
It would be one thing if you could take delivery, just in time for 4th of July or something like that.
You can buy a few deep freezers, 40,000 pounds.
That would be more than enough. That'd last you quite some time. Get the whole office involved.
Yeah.
That's good. I want to buy a cow soon. So.
You got the space for it? You got one of those?
I do. I have a deep freeze. It's like half full. I might need to. The thing is, like, Facebook Marketplace is great for deep freezes. People are always trying to get rid of them. They just want you to pick it up and, like, take it out of their house.
Yeah,
that's all they want. They want it out of there. It's taking up a lot of room. So you could always, never buy a deep freeze new. There's so many on Facebook.
Could be good for your Costco addiction.
Yeah.
Yeah.
Because you could really you could put that thing, use it as like a dining room table or something.
Yeah.
And then you just pile in your
That'd be amazing.
chicken thighs.
Yeah, organic chicken thighs.
Organic. You have to go.
It really grinds my gears when they're out of organic. Because it's like the same price. You might as well get organic. But sometimes they're out.
Yeah.
But yes, they're speaking of Costco, they have earnings on Thursday. I'm writing an earnings preview today.
Okay.
We also have NVIDIA tomorrow. I've got that earnings preview in the YouTube chat. I'll post right now.
But you got to buy the cow because wifey wouldn't allow you to.
No. She wants a cow,
of your
but
own.
it wouldn't be for steaks.
Yes.
She wants the furry Scottish cow.
Yeah. So.
Which everyone
we'll
does.
see about that. That's still on hold. So.
Are they the same, other than the fur?
I imagine so. They have to taste the same.
Yeah.
I think there's certain beef species that are, tastier.
Yeah.
Well, I get the fat to
fatter
muscle
ones.
percentage and stuff. So.
Yeah.
Japanese cows,
Yeah, well, that's what I'm saying. If you get really attached to it, you could start making it into.
You
a
need the
Wagyu.
genetics.
Yeah.
Yeah.
They get the massages. I think they get massages every
I'm sure.
Yeah. Tenderize.
Yeah.
Yeah.
Something.
It's good stuff.
Anyway.
See that job posting, beef massager.
There you go.
Hey, if things don't work out here, I feel like that's a pretty, pretty good one.
Yeah. But anyways, some good news, I think, for beef, although prices are down a little bit. We're off the lows today. So this trade, we're down almost 2%. We've come up, we're down 0.5% right now. So there's definitely some buying at these prices right here where we're at. We're trading around 208.5 right now. We were all the way down at a little past 206 this morning. Really good strong buying at the 21-day EMA. We've held up trend. We've had some volatility since, earlier in May, we hit that, high back in May 14th at 214.5. So, we're down about 6 points right now from that high. So not too bad. It's holding up. Technical structure is good and everything. We had the consumer confidence numbers this morning. First increase since November. Biggest jump on a monthly basis since 4 years ago. So these tariff news headlines are definitely have come off. Consumers are more jubilant about it. And, more confident consumer, you're buying more steaks, things like that.
Yeah.
You know, pinching pennies, you're going to not buy steaks.
Wasn't
So-
it one of the worst consumer confidence prints like 2 months ago?
Yeah.
Or like 1 month ago?
Yeah, it's like what you said. We're so prone to these tariff headlines, you know, we snip, snap, snip, snap.
Yeah.
And now it's looking like we're going in the right direction.
Okay.
So, you know, Japan's our biggest exporter for beef. They take in a lot. China takes in a lot. I think Korea takes in a lot of beef, actually, for the U.S. Whereas I just had the numbers. Japan, the biggest importer. South Korea, second biggest. China, third. Mexico, Canada. So all these deals get worked out. You know, a lot of exports start moving again, things like that. So it's looking good for demand. At the same time, feeder cattle, which there are feeder cattle futures, we don't trade that. That's like when the farmers take it in to finish off the cow to get them up to weight before they get slaughtered the 60, 90 days prior to that. Those feeder cattle, the CME data or the COT data that came out Friday, it's the longest long position on record. So that's a really good indicator for underlying demand. We'll look at a couple other things. The USDA, they upped their price forecast for this year. So altogether, things are looking pretty good for beef. This pullback, I think, gives a good opportunity to get in a position. And let's look at some of the data. We'll go to the first slide.
Cool.
So this is from the Economic Research Service from the USDA. They put out the price forecasts for all these food products. So this is beef and veal. We see in the bold beef expected to increase 6.6% this year. So that's pretty lofty. You look at pork, it's only looking at a 1.3% increase for this year. So the outlook for beef is a lot stronger than pork right now. And, you know, there's a lot of things that influence those trends, consumer behavior being one of them. You want to buy more steak. It's a little more expensive of a cut, you know, confidence is increasing a bit. Maybe that fed into their prediction. But they take in exports into this and everything as well. So maybe they also see the landscape for trade increasing a little bit, becoming more conducive to that. Again, Japan's demand going to be a big factor into this since they're the largest exporter. Japan, they're in a pretty good spot. They have some problems with their debt that they're, you know, trimming long-term bond issuances and stuff. But the underlying economy, you know, it's strong. They're getting some inflation. The BOJ is going to be hiking rates. It's the first time they could do it in a long time. So the demand outlook's looking pretty good. Trade's looking pretty good as of right now. You know, we just got that extension on the European Union tariffs. Things look like that. So the White House definitely getting a little bit more of the ball rolling on these talks. Some concessions from both sides to, you know, put the negotiations on a good footing, things like that. Let's go to the second slide. Yeah, so this is the orange line there is the short positioning. So short positioning for live cattle, I think it's on the wrong side. We had a big increase last week, Friday's data, that goes back to last Tuesday for the Commitment of Traders report. Largest since 2018 now. So we're quite elevated, you know, longs are elevated too. They're not at historic levels, they're longer than shorts are, but you know, altogether it's a net long position, but shorts have added quite a lot the past 2 weeks. They've taken us all the way from under 70,000 to I think we're at 90,000 short positions right now. So I think that's probably the wrong move. And this is for non-commercial traders. It's speculators. It's not the producers. So these are people who are speculating on the price. They're trading it for, you know, profits. But yeah, this is an elevated position. We'll go to the next chart. So I kind of back tested the price against how short positioning goes. Anytime it rises above 70,000, which over the last 2 weeks, we've seen like 23,000 rise. So we went over that 70,000 level. And, you know, every time frame, 14 days, 21, 30, 45, and 60 days out, you get this, you know, ascending return on your trade. So if you took the trade when it eclipsed that 70,000, 14 days later, you're up 0.5%. 30 days later, you're up 1%. 45, 60 days later, you're up about 1.5%. So I have an order in right now. I just did a long call spread. I'm waiting for it to fill. Might have to adjust the position there, but I went with, what did I go with? 66 days out. So the August 1st expiration, 2/10/2/11. I think that gives me plenty of time to play this this trend out. 60 days, I probably wouldn't wait that long, but 45 days out, up 1.3%. That would put those in the money, or that would put those in the money and get some value out of it. So looking at this time frame, 30 to 45 days out, 66 days left to expiration. So you get a full month and some change there to let the prediction play out. And hopefully now that summer is in swing, those feeder cattles, they stay in a long position. The ranchers keep on taking those feeder cattle in. One thing is margins for wholesalers are a little tight right now. But the good sign is even with tight margins, they're still taking in that feeder cattle. So that shows that the ranchers, they're expecting this demand to grow. Because if margins are tight, they're a little reduced, and you expect, tepid demand or something, you wouldn't be taking in that feeder cattle. You wouldn't have the speculators with all the long positions there. So everything fundamentally, it's looking pretty good. Trade, good. Japan, hopefully the exports keep going there. Consumer confidence rising. We're in the summer now. Seasonality is largely priced in, but you still get, factor that into the trade. I think everything's good here. So definitely this pullback today is, I think, a good time to get in if you're trying to get long.
Lovely.
I don't go against you, Thomas, and I'm looking at a short put spread that I did in the 37-day, so I'm a little shorter term, but same sort of thinking. 204, 202 were my strikes, so I'm with you on that. I like it. I like the play.
I'm going with a calendar spread. Long July. Long August, short July. So long the 66-day, short the 37-day at the 215 strike. So the 215 strike is just slightly inside the expected move for the 37-day and well within the expected move for the 66-day. And you're collecting more than half of the premium, just about, with that spread, which you love to see. $600 for the short, $1,000 for the long. Nice little spread there. So if we get up to 215, this will probably be $150 winner or something like that.
Is there a long cattle, short hogs?
Yeah, people do that, I think.
Is that part of it?
I mean, that might be something to do right now, just because, this hog outlook's looking not so great. You see that in the price of the chart too, right? Hogs they topped back in April.
Yeah.
Gotten some sideways chop, stayed in a range here. We're right in the middle of that April-May range. I don't know, maybe like an iron condor there or something.
That's what I was thinking, was to play this one, play hogs kind of neutral with the long cattle position as kind of a, the more directional play.
Yeah. And I'm still in my iron condor on crude oil.
Okay.
Got it bordered there between 58 and 63.5, so still pretty happy with that. I'm going to leave it on a few more days. It's only got 20 days out, so I am going to just ride it out through the week and then take my profits on it.
I like it. Yeah, crude's been a nice trade over the last couple weeks. Have you been looking at any of the grains? I was looking at wheat this morning just because we closed out of that position last week, I believe.
Wheat is getting crushed right now.
Yeah, are any of these interesting to you at this point?
Yeah, I mean, wheat's looking really bad because Russia is exporting. It's their off season where their exports are supposed to go down. They've stayed pretty high, actually. That is doing really bad things to the Australian wheat market. Australia is another very large wheat exporter, and they've already had a big season last season. So now they got, a lot of supply that they have to perhaps fire sale before this new season starts because the storage is going to run out. So that's going to put a lot of downward pressure on prices because they're just going to, let whoever wants this wheat take it at pretty much whatever price just to get it out of there for the new crop.
Okay.
So Russia, Australia, you're seeing a lot of downward pressure from that relationship there.
Yeah, and not really seeing any of the other grains move all that much.
Yeah,
I guess corn had a nice little bounce last
Yeah,
week.
if there's one thing I'd be long on, it's probably corn here.
Okay, so Corn Man is back, baby.
Yeah.
I like that.
Love the corn.
What are like the downside levels that I can put a put spread around, like this 440?
Yeah, 440. I mean, that's a good level. That was the May swing low. That was the lowest since December.
Okay.
So, yeah, I mean, corn still down from the start of the year. We're coming back to that starting level right around 465-ish.
Mm-hmm.
So we're at 458 right there, pretty much almost unchanged for the year if we get another rally. Farmers are planting a lot of corn this year.
Okay.
So 6% more than last year, according to the USDA. So they're expecting it to be a good year for corn. I think we get another WASD in a week or two here, so probably reevaluate it then.
Yeah, I was going to ask because there's a little bit of backwardation here just with the July contract. Is there something like baked into that? Is it like the WASD that's coming out soon that would be kind of influencing that?
I don't think it's the WASD. It might have been like we had a slightly bad start to the year, and then it got better with some rain across the Midwest, things like that. So I think the outlook for supply is still kind of contentious.
Okay.
But if weather conditions hold, I mean, that'll put some downward pressure on the price. But, we're already at pretty low levels here.
Mm-hmm.
So we would need something pretty bad to happen, some trade stuff coming back on, something like that. But yeah, I think it's a decent long here. Wheat I'd be really cautious on just because of the macros going on.
Mm-hmm.
Big move like this, I usually don't buy right after a big move in the grains. So
Okay.
if we get down near that 510 from earlier in May, then maybe take a stab. But right now, we've had a downtrend in place all since February high. We made lower lows, lower highs. Now we've kind of broken that trend. We made a higher high back on May 21st, kind of came over that early May high. So, if we make a lower or a higher low here, come back up, I think that would, put some confidence in the trade.
And you haven't really been on the soybean trade. There's really nothing going on there, or is there?
I haven't been looking at soybeans too much.
It's been a pretty narrow range.
Yeah.
Not nearly as volatile as the other two.
Cool. All right. Well, I got long delta in the cattle, long delta in corn, and I'm working a little iron condor in the hogs. I'm locked and loaded for delivery for 4th of July.
Yeah, you get your lean hog, you got
Yeah,
your
we get
gold,
some-
you got
grill
your
up some
crude oil,
corn.
and you got your natty gas to blow it all up.
Yep.
Perfect.
Natty has to blow it all up.
Yeah, I still have my, I sold a call spread. I think that was from the show 2 weeks ago, maybe.
Yeah.
Sold the call spread at 425. That trade's working out pretty good so far. I'm at 60% of the max profit. I'll probably take it off and redeploy soon. So
Nice. You bought in your risk today on Natty Gas. I closed my Natty Gas. I think I was following you. I closed on the 15th. I did mine. I think we had another one when we were talking that was end of April. So I've had this on for a little bit, but nice little trade. A rare natural gas profit for me.
It's crazy. Who would have thought?
I know you're in the same boat as me, Mikey.
Yeah.
So
When I saw the ability to remove the risk, I did it immediately. But still, locked in a credit of 70 cents. So
yeah,
regardless of what happens, it'll be a 70-cent winner. But if we continue to retreat down to 3.3, 3.35 over the next month, we'll be able to take some more out of that. But it is a very narrow spread relative to the price of the product. So not expecting anything crazy there, even if we get down there.
Yes. Any thoughts on gold or silver with this move today? Still buy?
Gold, I'm still long, but I mean, today's definitely not good.
No.
General risk off, dollar stronger. The Sell America trade is off. I don't know. I mean, most of my portfolio is positioned for kind of de-dollarization. So long gold, long non-US dollar currencies, long the yen, things like that. So not the best day for gold. I don't know. It's kind of petering out here, right? I mean,
And this is where it's been kind of bouncing off of. I think it's interesting to see just the move that it had last week with the move in the bonds, with rates going higher. Kind of, it was one of those that's not what's supposed to happen. But if rates are going up, you expect gold to be going down just because gold doesn't have any yield. And that, that was sort of kind of my spidey sense. And then I have a 105-point face ripper to the upside.
Yeah.
Which was not in my plays.
Wasn't on your bingo card?
No, I didn't think that.
Could have been, just people buying gold for the long weekend, just in fear of what could happen. And if they believe that gold is the flight to safety or the asset that keeps on keeping on. But yeah, I mean, it's been volatile for sure for the last many months. But yeah, it's interesting to see it kind of sputtering out around this level. Still up big from the beginning of the year. So nothing too surprising there either way. But yeah, I am surprised that I can't remove the risk on this yet into this move. Because I've got the 3460, 3480, 3520 broken wing butterfly.
What expiration?
In the 29 day. And moving the long call down to the 3500 strike would basically cost me 290, and I collected 280 to open this trade. So
I do it for a 10-cent.
Yeah, still need a little bit more downside move if I'm going to lock in a decent credit here. But moving away from the spread also means lower probability of it going in the money. So no urgency there, but just interesting.
Very nice. E-minis high of the session, 106 to the upside.
Crazy.
Yes.
Yeah, there was a sputtering of Bitcoin earlier. It was up like where it is now, and then it just dropped 1,200. But that thing's volatile too, so not really looking too deeply into that.
You guys in copper at all?
Oh, no.
Yeah.
I remember you.
It's having a good move down today.
Copper.
Yeah, I think you were saying kind of if you had a little bit of a down move, when we were looking at this middle last week, it was kind of a long opportunity.
Yeah, I mean, you're getting risk on today. The consumer confidence is higher. Trade barriers are coming off. You'd think that's good for copper. There's an industry group. It's called the International Copper Study Group.
Okay.
They came out, I think it was last week. They doubled their surplus forecast for this year for copper to 300,000 tons. So up from 150. So that's one thing kind of weighing on the market. South America's producing a lot more copper than people thought they would this year. And then you had a Supreme Court decision with a mine involving, I think it's Rio Tinto and BHP.
Okay.
They've been wanting to open a mine on this ceremonial tribal ground for Indians, and SCOTUS said they could go ahead and do it. So production, it's not expected to start for at least, I think, like 5+ years, but that'll be, I think, the biggest mine in North America. So long term, you got a lot of supply coming online.
That is interesting.
Yeah.
I just got into a 29-day put spread. Short the 4.6, long the 4.55. 4.55 is where we've bounced 20 times in a row. So we'll see. We'll see if we can hold that level. But yeah, I like the risk reward there with the short at 4.6 and the long a little bit lower. Defined risk regardless, but big move today. Collected 387.50 for that.
I like it.
Now we're really in the futures now.
Yep.
Natty gas, crude, lean hogs, copper futures, and 2 different gold futures butterflies.
I mean, you got to.
Yeah, do it.
Diversification, get you some added leverage, something new.
Mm-hmm.
Perfect.
Mm-hmm.
I like it. E-mini's up 113.
Yep. Beautiful. Well, we are all long live cattle now.
Yes.
In one way or another. But yeah, if you want to join us on the YouTube channel, I'm going to pop over here and answer some questions right now.
Cool.
What's your opinion on an end phase July 18th 35.55 short strangle?
I wish I had that other than what I have currently.
Yeah. I mean, I'm in the 45.50 in July, so a little bit tighter, but one thing to note, the 55 call is significantly less premium than the 35 put. So if you're actually like leaning bullish, maybe you just consider selling the 40 put and not having the risk to the upside. But I don't mind it either way.
No, what's the delta on this? Yeah. Leans you slightly bullish. I would agree. I think you just sell the put, but
yeah, the less you collect for a call, you still have undefined risk. Anything can happen in end phase. So it's just like the less premium you're collecting to take that undefined risk, the more it might just make sense to move your strike up a little bit, replace that premium with just a more short put premium. And then any rally in there, you're going to be totally fine. Where if there's a big rally in there with your short call on, it might create problems. Let's see. Saw a new feature on the iPad. What's the market snapshot? Buying price from current. Yeah, there have been a couple of updates.
yeah.
Continuous updates there.
Some new stuff on the web too.
Yeah.
We'll mess around with the web.
Yeah. If you go to the help center, you can search for release notes for the new releases, and that's where you can get your dose of info.
Next week we'll do some stuff on the web.
Beautiful.
For the peeps.
Tesla moving up a little too quickly. Need 360 by next Friday. I have an iron condor in there.
Me too, I think.
300,
Yes.
400 shorts.
Yeah,
35 cents.
I put you in this one, I think.
Mm-hmm.
I think I convinced you.
Yeah.
But it hasn't really moved into this.
Yeah.
Into this rally.
No, it's actually come in today.
Yeah.
Into this rally.
Volatility coming in a little bit too.
But yeah, bringing us right back to the middle of the range.
Mm-hmm.
Between 300 and 400. So yeah, a couple days left here. Nothing to worry about just yet, but yeah, I would like to see some chop around here, just like you need, Scott.
Yeah, it's a good call out because you would think if I told you in a vacuum that Tesla was up $20 and you had some neutral delta, or if you were trading on both sides, you'd think that vol was expanding and you're probably getting tested on the upside. Vol is definitely not expanding here. It's come in pretty significantly.
Yeah. Thoughts on NVIDIA not having call skew for the first time in 2 years? Yeah, I mean, it has had call skew pretty much all the time. So definitely interesting.
Yeah, 35. Let's just see. I'm still seeing some call skew.
A little bit.
Yeah. If you go 24 days out, you're probably seeing no skew or very little skew in the 3-day going into earnings, just because it's so much more binary than a further out expiration. There's definitely some upside skew on the further out expirations. But yeah, I mean, this thing, I got a little bit of short delta here. I did a put diagonal for the cherry picks. I have an at the money call spread that was part of a iron condor. I legged out of the put side in the middle of last week on the 21st. I mean, the stocks had a great rally back. I don't think I'm not bearish, but if the last earnings announcement, which was in early January, was any indication, which I think the numbers were relatively good or in line with expectations, and the stock dropped $10-ish. It was a nice buying opportunity from there, but yeah, I feel like it's kind of set up for a buy the rumor, sell the news type event. You finally get the earnings come out, kind of done with.
Mm-hmm.
But who knows? If we keep going higher like this, you imagine lifts all boats.
Yeah. Especially tech boats.
Yes.
AI chippy boats.
Yes.
That are apparently going to have some kind of exemption from tariffs, but we'll see.
Yeah, although all the ones that were getting killed last week, Apple up $5 and change is back to basically where it was pre, whatever you want to call it, tariff on announcement. Amazon having a nice little bounce today as well. It's been one of the weaker of the group. Google has actually been like kind of the strongest of the group after being, just a pig for the last year. It's having a nice little bounce back here. I know Microsoft is new highs, I think, or close to it. Up almost $10 here. Meta catching a little bit of a bid. We just looked at Tesla too. Tesla's been very strong. So certainly a risk on day across the board. I don't know how else to put it.
Big move in Microsoft.
Yes.
But yeah, in that NVIDIA earnings preview I put in the YouTube chat, I did write a little excerpt on NVIDIA tariff risk, with what we know so far, but
they're off.
I mean, they're doing stuff to actually avoid a lot of the tariff implications. But yeah, they got hit with a $5.5 billion charge for exporting chips to China. But they're building 2 huge plants in Arizona and Texas, and that would bring production and testing inside of the U.S. So $500 billion. The plan is $500 billion in AI infrastructure in the U.S. over the next 4 years. So that's a big number.
I mean, he's boys with Trump now.
Yeah.
Yeah.
I'm sure.
He has taken, I think the, like Elon kind of broke up. I think they broke up, Elon and Trump. And I think that Jensen is the new.
He's the new guy.
He's the new guy. I think that's going to be the new thing.
Time will tell.
Yes. SMH having a bigly move to the upside.
Makes sense.
All those stocks really participating. I pulled up TSM. It's nearing 200 again. Even AMD up $4 and change. It's had a nice little rally from the lows. So chips are back on, baby.
Yeah. What did I end up doing with the Pan W crab? So I just have the long call now. There's nothing really to do because the long call is trading for $140. So anything I sell above that or in a near-term cycle is gonna be way less. So it's actually not down that much because the crab offsets a lot of the upfront costs. So I basically need a 10-point rally from here, and we'll be okay.
Yeah,
Get a scratch.
I closed mine out. I just had the leftover call too.
Yeah.
I took $170 loss on that.
Yeah.
See ya.
But yeah, you could close and reset to bring it closer to the stock price. But I think if we just get a little bit of a bump here, we'll be at a scratch. So that's what I'm waiting for. And I'd rather just not throw on more risk. Comfortable with the risk we have now. Not too far from the expected move. So chances there. Let's see.
Yeah, it's sad when vol gets crushed this much. It's nice when you have the positions on prior, but now I'm sitting here, I've taken some positions off and I've got some buying power ready to rock here, and there's just not that much on my list that I look at. UNH, if I didn't already have positions on there. Oracle.
Wow, someone pointed out in the chat, Theta Trader, the year-to-date price change on SPY is almost exactly
It's unchanged.
0.
Yeah, I think so.
It's like 20 cents off from being unchanged. And so much has happened.
Yeah. Markets move quick. The V bottoms are swift.
Is the cattle trade done? Thought there was a parasite problem from Mexican beef that was spreading to the U.S.
Ooh.
Yeah, they're trying to get something to not come in. I think it's something that hasn't been in the U.S. in like 30, 40 years. We actually spent a lot of money getting rid of it. I think it's some worm or something. But yeah, I mean, if it gets in, that would devastate supply. That would
be bullish.
Yeah, I mean, that would
prices.
Push prices higher. I mean,
it's another. It would be a potential catalyst for a spike in price.
Yeah.
Let's hope it doesn't get in.
So the New World screw worm.
Yeah, I'd rather lose $300 than not be able to have steak this summer.
Yes, to see my steak prices go 3x. Yeah, I don't like that. I got my new beautiful Weber that I need to, use basically every day. Yeah, so nice. It felt good. It felt good to get that on the balcony.
Yeah,
nice.
Thoughts on uranium?
Oh man,
I mean, uranium. This administration is really pretty receptive to nuclear power, so I think uranium is a play here.
Yeah, what?
I was just gonna say that, like, when you think of, it's kind of like the area around the United Center. People that don't are not in Chicago, they're like, ooh, you probably are like avoiding gunshots every day. It's like, nah, no. But same thing with nuclear power. When you think about nuclear power, you think of like Chernobyl. Where really, like, when you look at nuclear power now, it's some of the cheapest, most renewable and green energy source on the world.
It's very safe
on the planet.
Yeah.
So it's like, and when you compare it to something like solar or wind, those are both variable. Like there's days where you don't have any wind and your little spinners aren't spinning.
Yeah, nuclear. I mean, it's very safe. I used to work at Dresden Nuclear Station. It's one of the 3 sites in the U.S. they store nuclear rod waste. So you walk by these huge reinforced concrete containers where a bunch of decaying nuclear fuel waste is in, and you got your little dosimeter that reads your radiation level.
Beep if it's.
Yeah, but you always walk by them. They don't beep. It's kind of scary at first because they got radiation signs all over them. But you can walk up right to it, stand by them. A plane can fly into them. They won't break. I mean, it's pretty crazy.
So as our resident nuclear expert, which I will definitely give you, I don't think anybody's going to be able to top that. Are there any, because like I was just pulling through like URA, which is a uranium ETF I've seen before. I know Julia is interested in some of these too. ACLA, which is the Sam Altman one.
I like CCJ.
CCJ is kind of the one that I think is most well known. Okay.
Yeah, CCJ's been having a good year. I mean, it's up 17% year to date.
Okay, let's see if we can do something here. I mean, it had the big move. I think Trump signed something too. There was an executive order or something
a couple things, I think,
that went through. Where was our low? It's too much. I think I'm going to do just a cheapy call ratio spread. We'll play for a little bit of a grind higher, 24 days out. 46 cents, 3-point wide. It's not exactly the widest thing ever, but little something. $900 in buying power.
It's crazy too. Before the Russia war, Germany started blowing up their nuclear plants.
Mm-hmm. And now they need them.
And then it kicked off, and they're like, "Oops."
Yep.
Awesome.
Crazy. Scramble Everything wants to sell a put in GLD. Not sure which strike though. 300 put in June pays the same as the 295 in July. So yeah, I mean, similar but different. July, you have 50 days, kind of in that wheelhouse. You have similar implied volatility, so there's a decent increase in implied move there. But the June, of course, is going to be much faster moving trade. So if you're playing for more of a neutral chop at this level, maybe you go July and go further out of the money. But if you're playing for a bullish trade that you can take off quickly, the 24 days fine too. Or if you just plan on rolling this if it doesn't work out, then I would go to June instead of July, because you can always roll from June to July and pick up an extra $1 or $2.
Broken wing. I have a broken wing butterfly in gold. I think it's an interesting way to play because you'll use a lot less capital than a naked put. So that's another one that you can think about. I have the 305, 310, 320. I think I should be about a scratch now with this move today. Yeah, marked at 45 cents.
Lovely. If you're positioned for de-dollarization, what is your time frame for those trades? Are you taking tactical trades or longer term?
Ooh.
I mean, mine was through pretty much the first half of the year, so it's kind of coming to an end shortly. I think as these trade restrictions get rolled off, everything, dollar's going to come back stronger. DXY, it's being down.
Yeah.
So, once the script flips, and it's back to buy America or whatever term you want to use, I think you could actually get a pretty sustained rally. Once it starts, it's going to, go.
Yeah.
So my trades long non-dollars are probably coming to an end pretty shortly, actually. I think I still like the yen. I think the BOJ is still going to be on a path to hike this year, but things like long the euro, the pound, the Canadian dollar, and a little more, I don't think I'm going to put those on too much more.
Mm-hmm. Yeah, we rode the Japanese yen move. That was another good trade that you gave us over the last couple of weeks.
Yeah, that was a good one.
Yeah, that was quick. That was a couple days.
Yeah,
A week.
I think it was 1 day. Yeah, it was 1 day. Not even 24 hours. I'd love to see that. Yeah, we got lucky with the timing of that one.
Yeah, that was a good one.
But yeah, took $100 out of that one. Love to see it. Interesting. Palantir has been grinding lower all day.
Should I get back into this yen? Is now a time to be long it into this?
I mean, I got back in. I
think this is
still up on the position. Today's obviously really hurting.
Yeah.
Technically, I mean, we're right at the 9/21-day EMA is kind of around that April swing high, early April swing high.
All right.
Oh no, yeah. Japanese PPI came in really strong. That gives the BOJ some room to hike later this year. But yeah, they're going to wait for the Fed to make the first move, and then they'll act accordingly.
All right, I'm going to double dip here. We're going to get back in. What was the other one? I cut you off, Mikey.
Palantir.
PLTR.
PLTR.
Down?
Yeah.
What? The E-mini's up 107?
Yeah.
What are they thinking? What do they want to do? Do I have something here? I think I have an iron condor here.
Probably want to get long.
I don't know if I could do that. I do. I can probably roll this put spread up.
Seems like it's a sell the news event because they just made a big deal with the U.S. Army. $795 million contract.
On a $400 billion company now, what is it, $300 billion?
Yeah.
So. All right. I'm going to move my put spread up into this move. Good.
I just got into a Japanese yen calendar spread. Long the 73-day, short the 37 at the 7-2 strike.
Okay.
For like $500. 437.
I'm not getting filled on my Palantir. Come on. All right. I rolled up a put spread, so I'm getting long, sort of, with you.
Beautiful. Last one. Pan W, June 165 short call in Pan W as part of a covered call. There's $100 in extrinsic. Wonder if it would be called away or if I should roll over to the next month for a credit. It will likely not be called away because $100 is substantial and the counterparty would be lighting that on fire if they assigned it.
Probably about time to roll, though. I mean,
if you want to stay in it, then yeah, you can roll and move it to July. But if you don't, then closing the position is fine too, or waiting until the extrinsic gets a little bit lower. But yeah, the in the money covered call is basically a short put. You're just making whatever you collect on that extrinsic.
Yes.
That's it.
Cool.
Time flies when you're having fun.
Yes.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We've got the cherry picks pinned to the top of the YouTube chat. We got the NVIDIA earnings preview in the chat as well. But yeah, have a great rest of your trading day. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We are back. It is still Tuesday, May 27th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, quite the start to a shortened week here.
I know, right? I mean, what was all the fuss about on Friday? Makes you wonder.
Makes you wonder. It was all a dream. I, for one, was certain that we were getting 50% tariffs against the EU, but apparently that's actually fake news. The president himself has said that those will not be going into place. Instead, we're going to kickstart negotiations with Europe to try to get something done before early July, so stocks can go back to their pre-scheduled programming, Jamal, right where we were prior to this dream manifesting Friday morning.
I mean, essentially, it would appear so. I thought we had made this decision for everybody about a week and change ago when we decided it was probably a good time to get long because it seemed that that's where the market was heading. But again, once again, the market proved that it is still moving on headlines from time to time.
It's moving on those headlines today. It's actually a fairly quiet session otherwise. President Trump doesn't have anything on his agenda. There aren't many significant economic data releases, but there was one data release this morning against this backdrop of tariffs being removed. John, we can go to the slides. That has helped curate this Buy America manifestation in markets today. Stocks are up, bonds are up, the dollar's up, gold is down. So we look to Buy America. What catalyzed this move in the second half of the session, which granted this morning when we take a look at equity markets out of the gate, they did kind of start to give things up a little bit here, Jamal. But then we got the consumer confidence report. Consumer confidence bounced back in a very big way last month. Just to set the stage here, Jamal, consumer confidence comes in at 98. Doesn't seem like a big number. 100 is the line in the sand, so we're still in negative territory, if you will. But we were previously at 85.7, and the expectation was for a move to 87. So this move in consumer confidence is the largest single uptick in a month in 4 years' time. Across the board, everything is coming up daisies. People see that business conditions are more likely to improve now than they did previously, 19.7% versus 15.9 in April. Those expecting business conditions to worsen from 34.9 now down to 26.7. Those anticipating fewer jobs down from 32.4 to 26.6. People expecting their income to go up now 18% from 15.9 in April. So everything kind of ticks back in the right direction. And according to the confidence report itself, the reason why is because the tariffs were removed. Now, I do think it's worth noting here, the assessment window for this comes through before May 12th. Why does that matter? That's when we hear about the Trump tariffs being paused against China. So there's already a big improvement in consumer confidence prior to the China-U.S. trade war detente. One would presume that the confidence is continuing to build here over the past few weeks, with stocks going up further over the past few weeks alongside this improved news flow. This is actually just good news is good news, right? Consumers are saying that things are actually going to be better. And so those concerns that you have in the market about, well, you know, consumption this, consumption that, consumers are getting confident again.
Yeah, I mean, this is pretty straightforward, and you know, it does context is everything. When you talk about the window of the timing of the data release, I mean that's everything, right? And so it is going to make it difficult going forward with some data releases. If we're going to move the goalposts on this tariff thing from time to time, it's going to get difficult. Dare I say, it makes it difficult sometimes to I don't know. I think you really have to make a decision here on your duration, how you want to trade, how long you want to hold stuff, or if you just want to really try and be a scalper, because, you know, that's kind of the market that we're in right now. I mean, I know I made a mistake last week because I was mostly long. I have like 3 different things that I was long, but I did get short in the ES future just kind of as a small hedge. And then I took it off 40 points lower, which seemingly was great, but I did it on the day that we had the 20-year bond auction, and then we dropped even lower, right? And so it was just really kind of annoying. I probably should have just held the whole thing the whole time, win, lose, or draw. And I think it's just these windows, right, of moving back tariffs or when data is taken, the snapshot of when the data is taken, it's going to affect how we trade going forward.
It is. And so considering that confidence bounced back prior to the U.S.-China trade war detente, we're probably looking at a path forward where the soft data, which has been there's been a big disconnect in the market, right, Jamal? The surveys have been terrible. The PMIs have been awful. The confidence surveys have been bad. The hard data hadn't rolled over yet. And everyone's saying, wait, it's going to come. The soft data is now improving. The hard data hasn't rolled over yet. We're still below 100, so on balance, consumers aren't, confident. But at 98 versus an expectation of 87, again, this is the biggest beat, 1 month positive change in confidence that we've seen in 4 years. And that's not just something that happens, Jamal. So good news is good news today for stocks.
I'll be honest, for the most part, I don't pay much attention to consumer confidence unless it's really far out of whack. And this was one of those times where it was kind of out of whack, right? Like if you see it in comparison to times of 2002 or other times of strife, or you see it so good that it's similar to times of like 2017, I think those are the times that should really pique your interest.
Yeah, I mean, we were looking at the expectations index, basically where do consumers think things will be over the next 6 months or 6 months ahead. In April, it fell to levels that we weren't even as low at during COVID, Jamal.
Mm-hmm.
Right? Talk about extreme in sentiment there. In any event, we can turn our attention here to the stock market today, which is holding up quite well after this consumer confidence figure.
That said, the next time it gets to that level of similar to COVID or 2022, I mean, we definitely owe it to ourselves to get at least a little bit long, right?
Yeah, and unfortunately, hindsight being 2020, but VIX up at 60, IVRs and ES and NQ north of 100, consumer confidence at its lowest levels.
I was short put spreads there. It wasn't going well, but I was. I was. It wasn't going well.
Yeah, I mean, my issue was that prior to Liberation Day, May 14th, I put on a short put spread, and within my trade window, Liberation Day happens, and this thing goes belly up.
And SPX.
It's like, all right, well, yeah, it's like, well, if I'm gonna ride this out, fundamentally, what's the difference if I put on a trade down here versus just riding this out?
Right.
And like just risk to reward, like I get a little bit more duration, I make the same amount of money. So I held it. Market came back.
Well, sometimes
couldn't trade it the way I wanted to.
When things are dire, that's the time to really put something on. Case in point, the other night I was watching a game, and this team was down 20 points. And man, I'm telling you, I thought about putting on a pretty sizable bet. I talked myself out of it. I'm pretty annoyed at what happened, though. I'm still a little bit annoyed about it.
Yeah, I mean, I do have a tweet that's still out there in public from the Celtics series that said Knicks are down by 20 again. Like, we have them right where we want them. That's the secret, Jamal. Something goes off once we hit that -20, where it's like, oh yeah, we're playing an NBA playoff game. Maybe we should actually play some defense. Yeah, I don't know about you. The fact that the whole thing happened the other day with Brunson on the bench.
No, that's what was scary, though. Honestly, the main reason I talked myself out of it is because he had 4 fouls at the time. I think Cat had 4 fouls. I mean, look, I love the scenario that they were down and they were going to play their guys. It was a dire situation. It was a must-win game. You weren't going to sit guys because you were down big in a game. They were going to have to come back. But that was a scary situation. Again, them being they were in foul trouble. And so, like, similar to the perils of the market, it's actually kind of similar, to be honest with you, no joke. Like, when we were, like you said, VIX was at 60 and around Liberation Day in April, right? And markets were down pretty big. It did not look good. Most of the rhetoric we were hearing, it didn't inspire any kind of buying. As crazy as I was still short some puts there. I was further out because I figured it would get some time to bounce back, and we did, but it certainly happened faster than I expected. And yeah, in a similar way, I mean, the Knicks bounced back in a very improbable way.
Highly improbable, although still not as improbable as the Pacers winning Game 1, which is haunting. You know, you know what kind of emotional damage that does to you as a fan? Like, there is no lead that will ever be safe ever again in my eyes, because I was there when the 100-0 probability calculator on. You follow the game on NBA.com or ESPN.com. You're like, oh, what were the Knicks odds of winning with 2 minutes and 52 seconds left? 100%. They broke the win probability calculator.
Do you love looking at those little squiggly lines of showing who's possibly winning at any given time? My wife loves looking at that probability thing you're talking about.
You just need an EKG of me. Like, my heart rate the other night at the end of the game was like, resting was like 145. So I'm looking at my watch. I'm like, God, this is going to kill me. Where do we find ourselves today, though, in stocks? It's a little bit more relief. We see an 18.7 IVR. Stocks are sitting near the session highs. ES up 1.87%. NASDAQ up 2.25. Your Russell is up 2.31. So Trump lifts the tariffs, but we do see this morning, as mentioned earlier in the spotlight, it's consumer confidence that really keeps the ball rolling. An important development here. You can see the market was selling off right at the open, and we get to that 10 o'clock hour, and we just skyrocket the rest of the day so far. That's ultimately a fantastic piece of information, because consumers spend money not based on what money they actually have. It's based on how they're feeling. If you think that things are getting better in the future, you're more likely to make a bigger purchase or continue spending habits, because you know that the money's going to be coming in to pay for those things. But if you think you're going to lose your job or prices are shooting up in the future, you may actually scale back to prepare for that rainy day. And if consumers are getting more confident again, at least leveling out the boat, then recession odds, you have to take those down a notch substantially. You have to take down revisions to corporate earnings, potentially predicated on weaker consumer confidence. Those will go off the board. So this is just a nice piece of news here to start the week, Jamal. But we want to be forward-looking here. I can't help but notice this is a week where there's not much by way of significant macro risk, but for tomorrow. We're going to get the FOMC meeting minutes from the May meeting, of course. And then after hours, we're going to have NVIDIA's earnings report. It feels like whatever happens today, quite frankly, as nice as this price action is, it comes with a, take it with a, grain of salt, because tomorrow after hours could upend everything. So seeing this low IVR, seeing IVRs back under 20 for ES and NQ, how are you approaching these markets knowing that NVIDIA earnings lurk right around the corner?
To be fair, I actually do want to get short an ES contract, but I want to do it at, say, somewhere above 59.50. That's how I feel. And that's more of a short-term hedge against those events that you mentioned. I mean, obviously FOMC minutes, there's not much that happened at the meeting, but again, it's always been about the rhetoric behind those meeting minutes. And so there's no telling these days. I mean, again, I didn't really think much. I shouldn't say think much about. I didn't expect the market to move the way that it did on this announcing of a 50% tariff on EU, because I always thought it was a negotiation point, right? And sure enough, this is what happened. So similar deal. I don't expect a whole lot to come out of FOMC minutes, but this is why we do these small little hedges every now and again, just to sort of protect a few things. So that's my thought process for this day. We'll see how it ends up. And again, NVIDIA. I mean, I've largely been bullish on NVIDIA earnings just about every time more recently, because I feel like it's that stock in the market right now. But once again, who knows how things are going to go. It is fascinating, too, that that's been really the number one proxy for a while now with AI, with the AI movement and stocks in AI. And yet we haven't heard a whole lot about that over the last few months. I guess we've heard about it in passing, but not in the same way that we were about a year ago this time, right? Anything AI and the stock would boom, or even the market would boom, and it's quieted down. So I'm kind of curious to see how much the stock is going to move on their earnings, either one way or the other. But you're right, it could upend things, and so that's my one little thing I want to do today. Other than that, I feel like I've got some pretty good positionings on.
One of the particularities about NVIDIA, put in the context of broader earnings releases for the first quarter, what do we see so far? According to FactSet, we talked about this on Let Me Explain this morning, so people could go back and watch this there for a deeper discussion. But the average price gain for stocks that have beat earnings in the 2 days before, 2 days after has been a gain of 2.1%, which is above the 5-year average of 1%, whereas companies that are missing expectations, negative earnings surprises, they see an average decline of 1.8% during that 2 day before, 2 day after window, which is actually a bit stronger than the 5-year average drawn in of minus 2.3%. So NVIDIA here, if we want to call today, tomorrow, before the earnings, like Tuesday, Wednesday, and then the earnings reaction is the Thursday candlestick, Jamal, we're off to a good start. We're off to a start that suggests that traders are feeling pretty good about those earnings and what may be forthcoming. I'm having trouble reconciling here. Do we really care about the tariffs then? Like, NVIDIA can't possibly give us any sort of forward guidance on the tariffs, can they? But we know that. All of us know that. That's not the game we're playing here.
No, I mean, the biggest thing, I think, any questions that they get on that call are going to be related to possible China. I mean, that more than anything. But even then, I mean, there still is a 90-day pause, right? Theoretically, I mean, they've gotten a lot lower. I guess the question will be, what's going to happen if they do raise them back again? How is that going to affect business? I mean, I guess that's one potential question. But outside of that, I don't anticipate them that slowing down, that spending is slowing down on AI. Matter of fact, it seems like it's ramping up more than anything, and that should be good for business for them.
One would hope. The guidance is going to be difficult to assess moving forward, but right now NVIDIA helping lead this market higher. A market, by the way, that has...
You mentioned a good point. If they do give guidance, I mean, is that a strong thing? That's a good thing, right?
I think it's a great thing. I mean, I know there's a lot of people... Dylan and Ilya and I have talked about this a lot in overtime. They're of the mindset, and it's the very Jack Welch mindset, which I acknowledge is certainly valid, where you kind of like beat, guide lower. In this environment, if NVIDIA guides higher and misses, stock's going to get killed. If they guide lower because of the tariff uncertainty, they're kind of given a free pass then.
Yeah.
If they have bad results, they could say it's all take. We told you it's the tariffs. We told you this was coming. So the incentive structure is for Jensen to be as gloomy as possible, I suppose, because at least for he's the founder, right? So I guess he's not at too much risk of losing his job. But in terms of preventing the stock from really ballooning and then cratering and losing like 30% of the month in the future, you probably want to be a little bit more tepid right now moving forward. So the fact that the market's bidding this up ahead of the earnings announcement, and I think all of us can figure that situation out, maybe we just don't care. Maybe because we've all come to the point where the tariffs are on again, off again, even if NVIDIA tells us we can't possibly give a narrow range of forecasts for our estimates moving forward. Maybe the market says, yeah, it doesn't really matter because the worst case scenario is not going to happen, even if it's being discussed. We've seen Trump, use this as a carrot and a stick thing. He's going to shake everyone and then take them off a few days later. So we're not too worried about your lack of ability to forecast.
Yeah, I mean, if only the market reacted like that each time these tariff talks come up.
Well, look at what happened between Friday and today. I mean, like Friday, we started shrugging off the reaction by the end of the session, right? That's not a clean down bar. We cut the losses in half on Friday. It was kind of like, is it really going to go through with this? I guess not.
Yeah, I mean, and I think that was kind of that was actually a surprise to me. By the end of the day that the market was buying it up, because usually heading into a weekend, there's so much weekend risk, right? Especially over a long weekend. So I was actually a little bit surprised by that. But even though in the back of my mind, I'm like, sure enough, this is going to get bought up. I just didn't expect it to happen by Sunday night or whatever it was.
So where do we stand right now then? On the diagonal, on the uptrend from the April swing lows, we are peeking and poking our head right back through there right now, Jamal, so perhaps that's a good sign.
Mm-hmm.
I know there are people who don't respect, you can see how we're just peeking back above there on this 5-minute chart. I know there are people who don't respect diagonal lines because they are a little bit more subjective, so they prefer to stick to the horizontal price levels. Fair enough. Here's a horizontal level for you. October, November, January swing lows, swing highs back in late March. And here we have Friday's pivot, that long wick that cuts into that area coupled with the 1-month moving average. We find ourselves back above the 1 week today. So here is this zone once again. Dynamic support and resistance holding up so far today and thus far in this recent rebound as support. So change in behavior. Right around, we'll call it 5850, 5900. And it seems to be a pivot low that we can work with now from last week. If you want to stay bullish, you have 57, 56 and a half to work against right now. If we fail below last Friday's low, you could put in the case that we've established a near-term top. And because that would put us back below the 1 month, I think that's a really simple guide right now, how to trade this week and assess this week. We don't need to overthink it. The market's giving us a clear signal around a very reliable level going back to last October.
Yeah, I mean, I really did sort of believe in the theory that we came up with a couple of weeks ago. Well, I don't even know if it was a couple of weeks ago. It was probably like 10 days ago. But that it would seem as though and that's still been my thought process, right or wrong. I mean, again, even despite what happened this past Friday, anytime there's mention of tariffs, it's a negotiation tactic. Like you said, it's a carrot on the stick, and eventually there's going to be a meet in the middle and figure it out. And so that's kind of still the mode I'm operating off of overall. I do, like I said, maybe after this past week, I do feel the need to maybe be able to trade this market a little bit. Again, I am mostly long delta, but the idea that I do want to sell an ES contract at above 59.50 just to sort of have a short on to be able to, protect me when the market falls for whatever given reason. Because again, these days, I feel like the reasons are somewhat fickle. It's hard to say that the idea of introducing a 50% tariff on the EU is fickle, but that's exactly what we're experiencing here. And so, I mean, it's, what can you say? You can only trade what's in front of you, right? And so that's what I've been seeing over the last couple of times we've talked about tariffs. So as a result, that's kind of what I feel like doing. It's either that or, taking everything off once I make money long and just waiting for the market to fall again, which again, that was actually one of my thought processes until like maybe 10 days ago. But I just think the moral of the story here is we have a very tradable market. We have a market where things are moving around quite a bit. It's still a headline-driven market. You still have a situation where the VIX complex is all above 19, right around the long-term average. It's sitting, and I think that's going to make a very tradable environment.
You talk about the VIX. Volatility has been crushed today. Not that I like to quote things in percentage terms when it comes to vol. Forgive me, Jamal. VIX is down 6.71%. The front month VX contract is down 9.87%. The volatility term structure is healthy contango, right? Front month is sitting, I have 18.87 here. And then I have all the way out for the March 20th, 2026 expiry at 23.16. There are no kinks, there are no humps. It is a nice contango. So you have contango in the market. Volatility is also low, not just contango, right? Because you could have high volatility in a fixed term structure that's still in contango. But no, IVRs are in. Term structures contango, back above the 1 week, holding on the 1 month, through a pivot zone here in ES, through a pivot zone here in NQ. Swing lows slightly different. November, January, now here last week. You could see that this market's trying to get its footing, and just a little bit more here. You get through 21,560. We're just talking about last week's highs. There's not much standing in the way, technically speaking, of a return to all-time highs. Not to suggest.
Not at all. I mean, that's one of the reasons why we have that NASDAQ call spread on, because I believe we could easily see that by the end of the quarter here. And it is interesting, though. All that being said, and things are looking really good. And again, I do feel like we could see all-time highs, but at the same time, everything you mentioned about volatility is kind of fascinating. Like we said, VIX is in the 19s, almost 20s, looking at certain VIX expirations, VIX futures. When you look at things like SPX, SPY, Qs, those ETFs and indexes, their IV ranks are sitting around 19 to 20. So all it takes is another big down day to push those up around mid-20s or close to 30, which, again, those are big indexes. When their implied vol ranks are high 20s or 30s, things are a little bit, scary in the market, if you will. So, again, I just think it's going to be that gives you an idea of how the market is not 100% feeling clear about the direction of exactly where we're going, just that alone.
Some more signs of hope for the bulls. Last week, Jamal, you and I were discussing the nature of price action on the Russell relative to some of its moving averages. On the way down, the Russell was experiencing interactions with the 1 month moving average, that yellow line, as a resistance throughout February, March, even the rebound here at the start of April into Liberation Day. Once we have our recovery starting in late April, you could see how it's been holding up as support now on the way up. And Thursday's doji, Friday's very aggressive hammer candle, right? Russell barely closed lower on Friday for what it's worth. Today now pulling back up here, back above the 1 week, back above the 1 month, both of which will have positive slopes coming out of today. 18.7 IVR. I don't really know what else we're looking for to think that the path of least resistance from a technical perspective is to the upside right now. We have last week's low to work with. I think that's the place. If traders are getting in new and are looking for something to trade around, you have to use last week's low. It doesn't really matter what index you're operating in, if it's ESNQ or RTY, but that's the line in the sand right now. And if you lose that, Jamal, I think you could make the case, right? We go to the Russell, we go to the lows, we look at the recent uptrend. You know what? If we keep rallying here and we fail to clear last week's highs and then clear out last week's low, I got to tell you, I think that looks like a top. And if that's happening across all three, you have a credible top coming into place for the month of June.
Yeah, that's the tough part because, again, and I think, we just described the same thing in two different ways, right? Looking at it technically, looking at it from the volatility level. And that's the cool thing about markets because we are very close to a launch pad where we could see the momentum climb higher, whether it's 6,000 and ES, whether it's, over 2,100 and the Russell, or whether it's over 22,000 and Q. Launchpad could lead to higher prices and eventually all-time highs. Or if we fail here for whatever reason on this week, we could see some, nowhere near the lows we saw in April, but we could see lows from the like you said, the May 12 breakout day. Basically, we could see back towards that area in markets. So this is a very precarious, I would say, couple of days here, maybe even week to 2 weeks, where we are going to figure out real soon what this market is about.
Before we flip over to bonds, let's just entertain what a bearish scenario looks like here. Granted, volatility is fairly low, but if the markets keep rallying, I would posit that volatility is not going to ratchet higher alongside of it. That would be atypical behavior. If we look to the Russell right now, if we think that last week's highs are going to hold, and we think that this is a rally to sell into, if we go to RTYU5, which the chart's not going to look great, okay, but if we go to RTYU5, you're looking at the highs near 2156 or so, going just a pinch beyond them. You can go 2175, 2200 on that short call spread. You're getting 69% probability of profit. A little bit better than 3-to-1, a little bit worse than 2-to-1 on the risk to reward. Basically looking to make 400, risking 860, well, 390, 860 right now. That's not awful, all things considered. So there are ways to size this up, but you have to just be realistic that if you're going to be short, we have a swing high to work against. Quite frankly, as we rally towards those highs, Jamal, I could see people saying, the volatility is so low. Do I want to sell puts here? Maybe I just go short MES if I want to be bearish. I mean, that may be the decision that folks have to make if they want to be, if they want to be bullish. They're not selling puts with volatility so low. They're looking to just get long MES or ES or something, or doing a long at the money call spread. But you have to be careful here, because you could be stepping into a trap where NVIDIA bombs tomorrow and the Fed tells us that the world's ending, but they're not going to be here to put out the fire. Sentiment's very different in the second half of the week.
And as a trader too, I got to say this because it's something I've noticed. I mean, the reason why, there's still a little bit of elevation and volatility and why things aren't all the way in the clear. The margin on the futures contracts are still a little bit elevated compared to like 6 months ago, right? Like that's another thing that right now, that there's still a little bit of fear hanging out there, and for good reason. I mean, I'm not, for those who don't understand, like that's not a bad thing. That's just, it's just a function of what's going on in the market right now. Those futures contracts get a little bit elevated on margin just because it's a little bit more expensive to maintain those positions because of there's anything that could happen in the market right
now. Turning our attention to the bond market here, bonds are having a pretty good Tuesday so far, which is nice. We see here that ZN, ZB, ZT all up. I tapped out in ZB last week near 111, so this 1.5 point rally is doing nothing but grind my gears. The point of focus for me then would be in ZN, where I still have some directionally neutral things on the board right now, short iron condor trades, which Jamal, I think, continue to work out. I mean, we're chopping around here, not seeing much at all of anything substantial. In terms of treasury auctions this week, we haven't had many on the calendar recently that have been worth discussing. This week, that changes. We had 20-year bond last week, which is when I panic and tapped out like a coward. 2-year notes were today. 5-year notes are tomorrow. 7-year notes are on Thursday. And then you're really not looking at any noteworthy auctions until June 11th, when you have the 10-year note auction again. But in terms of this 2-year note auction, actual was 3.955%. Previous was 3.795%. But bid to cover ratio is up relative to the 6-month average, and it stops through. So good news all around. Bonds are still holding near their session highs post 2-year auction. If you were really concerned about the U.S. government funding and debt and whatnot, you'd see a lot more stress in the short term there if this was related to like a debt ceiling breach. Or no worries, Jamal. So right now, back to the 1 month in ZN, similar action in ZB. You're off the lows, you're off the yearly lows. Do you play this though as the low for the year? Because it's a hell of a level to operate around if it really is, in hindsight.
I mean, I've already done that, right? Like, I mean, I famously talked about how I sold a put spread, the 111, 108 put spread, literally like 45 minutes before the 20-year bond auction last Wednesday. And I was pretty much annoyed about that for the rest of the week. And then I also ended up putting on an iron condor, which, again, like you said, the directionally neutral trades have really worked well in bonds more recently. My short strikes are 117 and 107 there, 3 points wide. Those are my plays, and I'm sticking to it for now. Is that a tradable low? Or is that the low of the year? I mean, it's easy to say yes without knowing what's coming down the pipe, but It certainly looked like a good area to trade, even though I ended up doing it by accident and ended up, sort of doing it a little earlier than I wanted. But it certainly looks like it could be that area around 110 seems to be a low on the year, and I think that's going to hold for now.
If you showed me Thursday's action, you showed me Friday's action, I would have said, Today, though, adds different contour to it because we did clear out the low that we saw in the previous session. And right now, if we close up here, we are closing above the prior session high. And so just 2 days removed from the new yearly low in ZB, you could say that this is a fairly meaningful reversal candle. Not quite key reversal, but bullish engulfing bar down here. The IVR is 33.8, so could you size up something like a short put spread up against 110, like 108, 110? Absolutely. There's enough technical rationale there to do it. Will the FOMC minutes this week do anything for the bond market? One of the lens with which you and I have discussed Fed action and treasuries recently has been that if the Fed does too much easing up front without having any clarity over the growth or inflation implications, you could go into a reflationary type of mindset like you had in the fall, because in September, the Fed gives you 50 basis points of cuts, and what happens to the long end? Yields start blowing out. Second half of September, October, going into November. And part of that may have been the market reassessing Trump's odds of winning, but a lot of it happens post-Fed and immediately post-Fed, because if the Fed is going to provide cheaper money in the short term, it's going to boost inflation, it's going to boost growth. So a more restrained Fed right now perhaps diminishes growth, diminishes inflation expectations. And I think that's the path the Fed is treading in the short term. Market cut odds right now, according to the CME FedWatch tool, give us nothing anytime soon. 71.5% chance that we see a 25 basis point rate cut by September. June and July are basically dead. June's a 2.22% chance. Not happening. But a restrained Fed prevents the reflation narrative coming to play. This is where my head's been at for weeks. It obviously hasn't materialized the way one would hope over the interim period. But we're going to do it again. Very well. I think it's very well worth taking a look at right now. At least there's some volatility here. 33.8 IVR, relatively more appealing than what you're seeing at ESR and Q.
Yeah, again, it was a strong breach below 110s, but the fact that it bounced back over the last couple of days, even initially when you consider on Friday, wasn't necessarily so good, and then we ended up surviving that. I think that was a pretty good area to sell something against, and again, the vol is a little bit elevated. It works in your favor, especially on a day like today. So I'm going to hold what I have for now because, again, I got the short put spread and I got an iron condor. I think both of those trades have an ability to work in this environment. I'm trying to think, though. The last time we saw IV rank on bonds, ZB or specifically ZB, below 30, I feel like it's been a little bit. I might have to look that up. So again, this is another one of those situations where it's just kind of staying elevated, similar to VIX, right? Hasn't really gone much below 19. And I think that's just the kind of environment we're in.
Two longer term factors here for the bond market. One may weigh in their decision making. Last week, a lot of the stress in bonds was being attributed to what was happening on Capitol Hill with the Trump tax bill making its way through the House of Representatives. Over the weekend, Wisconsin Senator Ron Johnson said that there are enough Republican votes in the Senate to stop the process of this bill moving forward. In particular, he says that it adds too much to the deficit and to the national debt, and that if there is any amount of opportunity, quote, "This is our moment. We have witnessed an unprecedented level of increased spending. This is our only chance to reset that to a reasonable pre-pandemic level." So let's just say the Senate chops this bill up and gives you something that's a little bit less tilted towards deficit spending. Then the fears are unwound. You get a disinflationary impulse, dare I say, coming out of the federal government because year over year sequentially, spending is down. Even if the deficits exist, they're just smaller. And that means government's providing less support. So that first year, there is an adjustment window of slower economic growth, lower deficits, lower GDP, lower deficits, lower inflation. Maybe bonds aren't appropriately priced down here at 112.5. Jamal, maybe they should be trading closer to 117. So there's a lot to work with there in the short term. There are some big things happening, in the world of U.S. Treasury and fiscal policy right now that are worth paying attention to.
I mean, a whole lot. And again, bonds have been way more volatile over the last couple of years than they've been in a very long time. And a lot of it is all the action that's going on Capitol Hill, like you mentioned. It's a lot to keep up with, for sure.
You know what else might be helping bonds here? The fact that if you're looking at, and I've written this up for the website before, it's on the Tastylive Traders blog from last fall or the fall before. I can't recall exactly when, but it's about why do stocks show sensitivity to higher rates. And it's not that all rates going up is a bad thing. It's when they cross certain thresholds. So if you look at the S&P 500's earnings yield right now, as of market close on Friday, the S&P 500 earnings yield was 3.53%, and the forward earnings yield was 4.89%. You compare this to the 10-year Treasury yield, and it's at 4.79%, again, at market close the other day. So if you think that history is any sort of guide, bonds typically return less than stocks, but they have a much lower volatility profile. To wit, through the end of 2023, the average, the standard deviation of stock market returns since the end of World War II was about 16.97%. For T-bills, it was about 3.05, and for T-bonds, it was 8.74. So if you get a world where the earnings yield on stocks is less than or equal to the earnings yield on bonds, historically, bonds give you much less risk, so might take all that extra risk for the same exact return. You draw people into the long end of the bond market is what I'm saying. And depending upon how you look at it, we kind of crossed into that territory last week. So bonds kind of look like a good play, risk-adjusted basis. If you're a long-term investor, they offer a return profile that you could say is comparable to stocks.
I mean, that being said, is it one of those where you can see why so many people are like trying to get long TLT? Again, I don't, it's a decent proxy and all. Personally, I'd rather just trade actual, specific durations, ZB or ZN themselves versus trading that. But that's exactly why you're saying. I mean, there's all the different things that are going on in bonds right now.
Going on in bonds, going on in metals, which are having a terrible day, which is terrible personally. Gold off 1.92%, so not quite at the lows, but certainly lower. That 1 month moving average, as has been the case here for the past week, really holding up as support again once more today. This flag pattern that we may be in, the downtrend off the highs that we have in mid-April and at the start of May, that holds as a result of today's action. I'm still a structural bull above 3,200, but if we are in a buy America mindset once more, that is a piece of it, Jamal. Stocks up, bonds up, gold down. And so you have those three items on the checklist here. Silver likewise off, but not as much. Copper likewise off 2%. But that's all part of that narrative, that theme of traders reacting to what's happening with tariffs.
I started the show early on talking about a bet that I made a mistake on not doing, and I talked myself out of. If there's three other bets, if you will, that I have messed up over the last couple of weeks, this is one of them. One of them involves the bond trade that I mentioned a little while ago. One of them involves the short ES that was a pseudo hedge against my portfolio. That's, sometimes you just need those to make yourself smile on the day when the portfolio is just not doing well. And the other one is this. I missed out on buying gold around, I think it was the 15th of May, when it just pierced below 3,200 and was dancing on the 50-day moving average. I missed that one. And so ever since then, I look at this every day thinking about when I'm going to do it. At the same time, not wishing for it to fall because I know my good friend Chris Vecchio is in the trade. So this is one that I'm keeping my eye on, continue to keep my eye on. And I would have to say, obviously, that number is elevated now. I mean, it's not below 3,200 from what I'm looking at. 50-day moving average is around 3,240 and change. That's an area where I would be interested in getting long. Am I willing to look to get short at some gold at some point because that doesn't work for me? No, I'm not, actually. I would just rather it come to a level where I'd be willing to buy. But I think this is, again, I continue to say this is one of the more clean cleaner technical charts in all the asset classes that we've looked at for some time now. I mean, going back to last spring almost, for sure last summer. I mean, this has been one of those things that you could sort of rely upon, and I'm just waiting for my opportunity.
I'm still going to hold long here. I'm loyal. I'm a Knicks fan. I don't give up on things easily. Okay. So, vice and a virtue. Certainly there have been periods where the loyalty here has paid off, and maybe this will be another one of them. Volatility coming in today doesn't make me feel great. Talk about one of those contemporaneous indicators for price action. I was all jazzed up last week as prices edging higher, with vol edging up. That's what we want to see. So what we saw in silver prices too. Prices were edging up as volatility was moving higher. So today, the fact that we see the floor in vol fall out, a high of 44.37 earlier, now down to 21.3. Not fantastic. Here's the good news, though. That 1 month moving average, it's still holding up. The 1 week moving average here, it's still holding up. We're trying to get through the line in the sand around 33.5, 34 here in silver prices. We're meandering. We're mixing. We're negotiating. But every time we sell off, the market's holding us up through 33. This feels like a coiling spring, even with copper's pullback today, down 2.09%. Friday was huge, right? And also short put spreads here. We're higher than we were when we put the position on, and we're continuing to burn theta. So it's working. These haven't broken. It feels like we warded off some excess from Friday because of the news flow. We cancel out Friday because now the tariff's off again. So where were we last week? Gold was edging up. Silver was edging up. Copper trying to break its downtrend. I think you have to just go back to that world. Let's not get lost in the noise of the EU tariffs since Friday.
I got to say, though, thinking about strategy, I would have to really decide on what my play would be in gold. I mean, before it was just as simple as I'm probably just going to buy an MGC contract. I mean, the way gold's been moving, it drops 150 handles, but it ends up rising 300, and that works just fine for me. But this is a great thing to discuss on this type of show in our network, because again, we have a lot of retail traders. I just talked earlier about how some of these margins are going up on some of these contracts, and MGC is one of them. MGC, I feel like, it used to be around 1,300. Right now, it's like 2 G's and change. We're always trying to find efficient ways to do trades. Is that the efficient way of buying that? At the same time, I could do the 3,350, 3,400 call spread in GC with 29 days to go. That's $1,900. Is that enough time? Or do I go further out? So these are all the things that I'm going to have to consider at some point. This is what makes, I tell people all the time, this is what makes trading interesting, because sometimes you're like, look, when this happens, I'm going to do this. And then this happens. And then you're like, wait a minute. Wow, this is what I want to do, but you know what? I really have to really think about how I'm going to go about executing the trade. And so that's something that I'm going to try and figure out now rather than later as it's happening. All that to be said, I don't have the exact trade I want to do in my head right now.
Yeah, that's, I just don't sell call spreads in gold. Just like a hard rule of thumb for me. And if you want to be short, MGC is the...
No, buying the call spread.
Oh, no, of course.
Yeah.
Yeah, no, of course. But if I want to be long, volatility's in a little bit. Rolling up the out of the money stuff has worked. I think 32 is the line in the sand, is the point, right? I'm comfortable remaining long my call spreads and continuing to roll them forward if that means eating it a little bit in the short term, as long as we remain above 32.
Mm-hmm.
There's something in the back of my head. So prices obviously in markets can get dislodged for short-term reasons, right? Doesn't necessarily mean that the uptrend is over, but something occurs that prevents the uptrend from continuing. There's news that Japan may be cutting some issuance for the long end of the curve over there, because long end yields are blowing out in Japan. And so if they reduce issuance moving forward, right? Constrained supply, lower supply, higher prices, lower yields. Okay, so long end yields stop blowing out. That does create scarcity of high quality assets in the market. If we think that traders are buying gold because debt issuance is out of control, then what happens to gold if a major issuer of debt is taking steps to, major creditor of debt, is taking steps to stop issuing. It could set up a short-term dynamic where gold is dislodged. That actually could help treasuries at the long end of the curve. And if that's part of the buy America, sell America trade, if there's a scarcity of long-end debt out there at acceptable yields, bonds bounce, gold sells off, you get a dip below 3,200, you wash up below 3,100, and then you're right back to where you were in your 33, 34 after a few weeks of unfortunate dislocation that really have nothing to do with the underlying fundamentals of gold, but just because of what a central bank may be doing, what a finance ministry may be doing overseas. So I would just watch the news flow a little bit here. There's a lot of stuff in play right now for gold prices that make this a bit more convoluted of a trade than it was even just last week, which I find to be an always welcome challenge, Jamal.
Mm-hmm.
Why would we want it easy?
Never easy.
Why not just win the game? Why just go down 20 points first?
Yeah, it's more interesting that way.
For sure.
And again, we there's a good chance we could see some move ahead of or after, I should say, in the wake of the FOMC meeting minutes, like a slight chance, right? It's possible.
Yes.
Not sure what direction, but it's possible.
Oil prices here are a little bit weaker on the session. We do get a nice little piece of news yesterday afternoon that Oman was willing to set forth a proposal between Iran and U.S. to get a deal in place, taking some geopolitical risk off the table perhaps here for oil prices. IVR high today was 63.23. We're down to 55.2. I still have my short put spread on. I likewise have a short iron condor on in here, Jamal. I really like playing this around the recent swing levels in the market. We do have the highs and lows pre-Liberation Day, post-Liberation Day. It's something to work with. 53, 55, 68, 70. It's a 55.2 IVR, certainly better than anything we're seeing in stocks or bonds and, quite frankly, even gold or silver. So hard to look away from right now if we're looking for individual opportunity. Mm-hmm. Likewise, you're not seeing much vol in individual stock names right now. Yeah. I couldn't help but notice that, like, you're looking at 30s IVR for an Apple and Nvidia. So oil is compelling from that view.
Yeah, I mean, and not only that, I mean, the 30s and plus or whatever in IVR and some of those names, sometimes it doesn't seem like it's enough because, again, these names move so much when we get this type of news that pops up out of nowhere. So, it's not to say we don't get that same type of news in crude oil, but you haven't seen quite as big of ranges of moves more recently, and that's why I think the Iron Condor makes sense here. And so I got a similar one on as well, and I'm not changing anything. We'll see.
Crude's doing what it's doing. We see that natural gas prices today, they likewise are weaker, but no more 9% down, 9% up kind of days. That was wild last week. Yeah. We are pinned against the 1 month, and that's where we're failing from today. Note that we do gap open higher here to start the week, and we give it all back to close the gap, and that's kind of where we're settling. It's another one of those sessions where we basically erase what we did on Friday, and I don't see anything else. But it's a 56.7 IVR, and unlike where this was a few weeks ago when IVRs were elevated, but elevated as well in the equity space. So why would you trade natural gas? Natural gas is starting to stand out again as kind of being alone with crude oil as relatively high IVR instruments. I don't really love the setup here. It kind of feels like that we're triangulating, for lack of a better phrase. Mm-hmm. We're beginning to funnel into something right now for natural gas prices.
Yeah. I would agree.
And so I don't want to trade the consolidation. I want to trade the uncorking of this, the kinetic energy release, not the potential energy being stored up. So it's on the watch list right now, but I think we may have a much bigger move in natural gas directionally coming around the corner. I couldn't tell you when or why, but maybe it's a left shoulder, head, or right shoulder here, and we're looking at a big breakdown. Maybe this is a major bottom, and we have another 25% surge around the corner. But I think that we got to be ready to play the uncorking here, because I know that we have not been focusing on natural gas in any considerable form or fashion here in a few weeks, months even.
Yeah, I mean, it does look like that. I definitely agree, and I don't have really any sort of opinion on direction one way or the other in natural gas right now. So that's why I just have no reason to play it.
No, and this is why it's comfortably on the watch list for me as well, right? Like we'll see if it starts to break out. We start to see $4, 4.2. Okay, hold on. Now we've cleared out recent swing highs. Now we've cleared out that neckline in this head and shoulders pattern. Okay, we're really starting to move. Let's think about what 5.20 looks like. Conversely, if you start breaking down through 3.4. Let's see what 3.2 looks like. Let's see what 3.3. Oh, okay, this is going sub 3 again. There's different ways to play it right now. Maybe the best bet would be something like a reverse iron fly. If you're really into trading natural gas, you got to have something on. I, for one, would prefer to wait to see if it's going to be if we're going to fade it or trade it to the upside or to the downside. But watch list for now. I can't ignore the 50 IVR. We talk about buy America, sell America today, Mr. Chandler. Dollar up is a good sign, of course. Tony mentioned it last night on First Call. In his ideal world, the dollar's up and gold is falling. If we're going to look for a more sustainable rebound in stocks, and sure enough, 2.36% today on the NASDAQ, coupled both a U.S. dollar that is rallying and gold falling back. We're not quite out of the woods yet, but you can see here that the yen, the safe haven of safe havens, potentially topping. Bad news for me. And I have to get out of any calls here, and we're at the end of the road for that anyway, so I just don't think it's a good use of capital. Moved above Friday's high, on pace to close below Friday's low. That'd be a key reversal here after a bit of an uptrend. Dollar bottom may be coming together. So if you're trading 6E, if you're trading 6B or 6C, there's some early signs of a turn afoot and breaking the downtrend here again. Will that happen? Maybe we find out on the other side of the FOMC minutes and the NVIDIA earnings, and come Friday, we're back above 100 here in DXY.
This has been one of the more interesting time periods with dollar and versus stocks. I mean, it's so wild to watch how much this has moved around over these last couple of months, and I get the feeling that we're not done seeing more changes.
The top volatility in the currency world right now goes to the Canadian dollar, 63.5 IVR.
Spicy.
That's not nothing, right? And we do have, again, the pivot high from today to work with, .73. I don't have anything going on in 6C. But if we wanted to look at something like short call spread here, it's a 1 to 3, a little bit better than that, risking 120. Max loss is now 380, so it's been oscillating. But it's a 67% probability of profit with 37 days to go. I'm ever the optimist. Let's put this on the board. Short call spread here. I hate when it gets sold right away. Could it be worse? Didn't have time to catch my breath. For people that are, new listeners, it's something that Jamal and I detest, getting filled right away. Which is like, you just put the trade on, don't you want it to get filled? Yes, but not like that. Not like that. I think we need to just take other ways to peel this back. If you feel bad about chasing stocks, maybe the dollar has a little bit more going for it right now, because the volatility here, right? If you're looking for stocks, they're just going to squeeze to the upside. As Tony mentioned last night, gold and the dollar are part of that puzzle.
Yeah, I mean, this
Jamal,
has really
you're up
been,
next, though.
the dollar's really been beat up this year for sure. Something to keep an eye on.
That is the reversion trade. If people are looking to be a contrarian, dollar's been punched in the face more than anything else. What's next on the calendar, though? You're up in about 45 minutes. Dr. J's next. I'm sure you guys are going to be thinking about tomorrow's NVIDIA earnings report. You're going to be talking about the FOMC minutes, but that's what really we're watching for tomorrow as well here. It's a quiet day otherwise. There's really nothing to look at. Maybe the oil inventories, though. Last week, the week before, we've seen some interesting inventory figures that have bucked expectations and have dictated the terms of the market for that session. So Wednesday, Thursday, watch out for that. Otherwise, we're done and dusted here. You'll be back in 45. I'll be back in 2 hours for overtime. But we'll see everyone after From Theory to Practice with Dr. J coming up next here on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Synthetic Monday edition of what it is that we are trying to do. Man, I hope you guys had a great holiday weekend out there. And then I was out Friday. And then we were with Glenn from Tasty FX on Thursday. So it feels like it's been forever since we've had a regular B- quality show. And we have another one coming at you guys here today. So if you're watching over on the Tasty Live Network, then we're actually bouncing over to YouTube because you can join the discussion. You can join the conversation live and communicate with our brethren who are also watching the show right there in the YouTube chat. If you have a question for me, you can drop it in the chat. The earlier that you get the question in, the higher the delta there. We'll get to that question. The expected move on the number of questions I get to per show is somewhere between 1.2 and 1.6. So I would get in earlier rather than later. And of course, you can celebrate if you are indeed a bull and commiserate if you are indeed a bear. So John, bring us into the market, man. Look at this, guys. Man, it's something. Guys, look at this. EMI S&P is up 119. Risk-free instrument doing things that risk-free instruments don't normally do. Up 5 honeys on the day for 2.5% on the NASDAQ futures. Extremely high-risk product. You got the boomers up 725. They're well rested after the 3-day weekend. They're ready to get back to work like all the good boomers that we all know do every single day. You got the Russell 2000 Futures Index up 50. You got bonds up a full point. You got notes even up a little bit. You got UB40 up over a point. Man, you got the shifties getting smacked around down 65 on the old GC gold futures. You got the British pound is down. You got the euro is down. You got obviously volatility getting blown to smithereens. Volatility futures down 220 on the day. And then the old spot volatility, the old VIX, it's actually stronger than I would have expected. It's only down $1.40, which, I mean, that's not really strong, I guess. But I would have expected it to be, a little further blown to maybe some more smithereens than what it's currently been blown to, down to $1.43. The VIX down to 19, but still, guys, I mean, that's not bad for a premium seller. That is not bad at all for, wanting to sell high volatility, wanting to sell, options when volatility is elevated, because 19, 15 or whatever is still over the historical average of the VIX, over time, where the historical average is probably closer to like 17, I would say. And so the VIX at 19, there's still plenty of things for us to do as premium sellers. And so there's your market commentary. Is it going to help you? I don't think so. Is it going to make you a better trader? Absolutely not. But is it on par with anything that you would find elsewhere? Yes, it is. It is exactly equal to all the useless market commentary that you would find elsewhere. All right. So the portfolio, let's talk about a few things going on in the portfolio. And then, of course, around the halfway mark of the show, I will get to you all in the YouTube chat, and I will get to try to get to as many questions as I can. Man, I see you guys in the chat. Man, I see, let's see, who's in the chat? Look at you guys, man. I see Sam L's in the chat. I see, hold on a second. Yeah, Sam L's in the chat. I got Scramble Everything in the chat. Sergio's in the chat. I forgot to hop in the chat before the show. So I'm still kind of on a holiday type of deal myself. And so this is going to be a wee little bit rusty. So I would say B-. It's probably the ceiling. That's probably even above the top side of the expected move. I would say we're probably going to land somewhere between C and C plus here today. So, all right, let's look at a few things going on in the portfolio. Man, first, oh man, can we lament our Amazon position together as a team? Like, can we go ahead and can we offer up a few lamentations towards our Amazon position? I know there's a whole book of lamentations. Maybe we should consult that. But Amazon up $5 today. Man, we were doing things. Man, we had them right where we wanted them. Man, look at that. So we're down, we're down to a little over $2 today, so $200. 2 option dollars is, of course, 200 actual dollars. And so, man, rats. Yeah, they got us, man. It's wax on, it's wax off, right? It's tariff on, it's tariff off, right? This is just basic policy. This is just basic macro geopolitical policy. It's wax on, wax off. Mr. Miyagi nailed it. Was it 88, 89, 90, 87, 84, whenever it was? Mr. Miyagi, man, he nailed it. Was that 40 years ago? Like, we should have known all along. We should have known all along. On Friday, they tried to scare the children. If you go to the chart here of the E-mini S&Ps, you can see, I mean, look at that, man. They tried to scare them. Like, look at that. They sent them down. Look at that 115-point range. I mean, I think Friday, if I remember correctly, Friday morning, the morning was the worst. I don't really want to dig into my Errol Coleman settings and try to, piece this thing out in 15-minute bars or whatever. But I'm pretty sure the morning was the worst. And then the afternoon and even into the close, I think they rallied them back a little bit. And so it wasn't as bad as it was at one point, earlier on Friday. But even still, it was like, all right, 50% tariff for, the EU, 60% tariff for, North Dakota, 75% for South Dakota, even hitting Montana with like a 25%er. And so it's like, man, that's some pretty serious business. And then over the weekend, it's wax off. Like, over the weekend, don't even worry about it, man. Like, we're going to kick the can down the road. So the funny thing is, right, the administration has clearly shown that they're going to walk back these tariffs. Clearly shown that several times now, right? And so the thing that surprised me on Friday was the market reaction, like, to the tariff. I'm like, do you really think that, Trump or the administration or whoever, the auto pen, whoever's calling the shots, I don't know, who even knows these days? Do you really think they're going to follow through with this? Like, do you really think they're going to run it all the way down to the hard line? I mean, it doesn't look like they're going to do it, man. And so I was very, very surprised that the market seemed to actually believe that a 50% tariff was indeed going to be reality. And then, of course, this weekend wax off, and we're right back to, Karate Kid legends. And so I think that's where we're at currently in 2025. And so, all right, but market looking good today. Everybody's happy. I mean, again, all-time highs, baby. It's all-time highs by, what is it? It's today, May 27th. So we got to get to, where's E-mini S&P's got to get to? Hold on. Let's be real. Let's be real exact about this. So the E-mini S&Ps look like the all-time high is, what, 62.25? Is that right? Yeah, 62.25. So you need 300 points. You need 300 points in the E-mini S&Ps. So you're looking at, I mean, once the Montana tariffs are gone, once the North Dakota tariffs are gone, that gets us to 6,100. And then if we can just get rid of those South Dakota tariffs, man, we will be right back to 62.25. So I'm going to say this probably happens in the next, 10 or 12 trading days? Like, it's not going to take that long. Like, this is going to be very, very quick. And so within the next couple of weeks, I have a dentist appointment on June 11th. Before my next dentist appointment, it's absolutely going to happen. And so all-time highs in the next, 2.5, 3 calendar weeks, whatever it might be. So E-mini S&P's up 118. NASDAQ futures. Now, the NASDAQ's got a little bit more work to do for itself, I think. Your high here is 22,672. So you need another 1,200 points on the NASDAQ. Yeah, that might be more like an Autumn's birthday type of thing. June 26th. I'm pretty sure. I'm about 75 delta. It's June 26th. And so Autumn's birthday, you're probably NASDAQ all-time highs. And then the Russell 2000, this is going to be your big laggard, right? This is going to be the one that's really been, beaten down the most. If we look at this, hold on a second. Let's do a daily. Hold on. Let's go back. Can we do like 2 years? Oh, I can't go back. I can't go back any further. Okay. All right. So the charts are on holiday time too. So that makes sense. But I think the Russell 2000 high was like 2,400 or something like that. So, I mean, you're looking at 15% on the Russell. So now, I mean, you're probably talking 4th of July at this point. Like you're probably talking, maybe the week after 4th of July, like July 6th, July 7th, July 8th maybe. And so it's going to take a little bit more time. But yeah, market's loving it. I'm loving it. You're loving it. Man, everybody's loving it. I feel like a McDonald's commercial. Is that still the tagline they use? I mean, they've been slanging the same cardboard crap for what, decades at this point. So why would they change anything? Why would they change anything? There's no reason to. I mean, look at McDonald's. Where's McDonald's? McDonald's is that. Look at the 314. Look at that. Look at McDonald's, man. Look at this. Wow. Let's do can we do like a monthly chart going back like 10 years? Yeah, look at McDonald's, man. Wow. Now that's something. Now that is something. Now that just goes to show you quality is way overrated. That just goes to show you it's about volume, man. It's about volume. Quality is not that important. You just got to keep pumping out the product. Just keep moving product. Just keep moving the merch. That's what McDonald's has been doing for 35 years. Right? You want to talk about B- quality. They're probably more like a C- to a solid C. And then look at this. They're at all-time highs. They're basically at all-time highs in terms of their stock price at 314. It's pretty impressive. It's pretty impressive indeed. All right, so speaking about things that are maybe less impressive, let's talk about what's going on in the portfolio. But I see you guys, man. I see Andrew Cortado's in the house. Look at Emmett Morrison in the house. John Stein in the house. Dav's in the house. JDD's in the house, man. I appreciate you guys so much. I'm going to get to as many of you guys as I can here in the next couple of minutes. All right, so we kind of lamented our Amazon position. I'm not going to do anything with it. Let's just sit tight. Let's just wait and see, what could potentially happen. Do we have anything this week? We don't really have anything this week, I don't think, do we? Let me think. Do we have PCE maybe on Friday? I think maybe we have PCE on Friday. And if we do, I mean, one thing I do know is, guys, we've never seen a PCE print like this one that's coming. Whether it's this Friday, next Friday, the following Friday, doesn't matter. This is the most important economic print that you will ever experience. Like, the CPIs from yesteryear, the jobs reports from yesteryear, you can put all that stuff behind you. That is nothing compared to this made-up fictitious PC print that's going to drop one of these Fridays that's coming up. One of the next 5 Fridays, PC is going to smack you in the face at 8:30 Eastern time, and you better be ready for it. And so that's happening later on this week. And then, wait a second. Hold on. If I'm not mistaken, so this one I think I do know. If I'm not mistaken, yeah, buddy. NVIDIA. Guys. NVIDIA's tomorrow. Guys, May 28th, NVIDIA. I've been trading a long time, guys. I've been trading a very, very long time. I have never in my trading career seen or experienced or even thought about a tech earnings print that is more important than the NVIDIA print that's going to drop tomorrow after the bell. And so you're not going to want to miss this, whether they're selling, CPUs or GPUs, hardware, software, it's all there. And it's all of critical importance for you and your family and your heirs and their heirs. And so all of it is on the line tomorrow after the bell with NVIDIA earnings, which again is correctly pronounced NVIDIA. Don't let Jensen Huang try to trick you into saying NVIDIA. It is NVIDIA. Just so everybody's on the same page. There it is. That's tomorrow after the bell. Man, that's going to be some crazy stuff. And so if you guys want to know my play, I may change my mind several times between now and then, but I would have to say right now, again, I mean, we could look at charts, we could look at 10Ks, we could do all the things that you need to do, but it's not even important. You don't need any of that. Just think about NVIDIA. Just think about it as an idea, as a philosophy. I don't know how you possibly look at NVIDIA and play it any other way than with extreme bullishness. There's no other way to play it. There's just no other way to play this company. It is just, it is a beacon of hope in an otherwise, dismal market with the NASDAQ up 500. Even the S&P's up 119. And so, pretty funny stuff. So, all right, so that's NVIDIA. They're tomorrow. And so everything is hinging on that. All right, what else we got going on in the portfolio, though? I'm not going to go through every position because I want to make sure I have time for you guys. And so, again, Amazon, Bank of America is really interesting. So Bank of America, this is really, I did want to highlight this. Because Bank of America, this was 100 shares that we bought. When did we buy this? I think it was like back in like December, maybe January. Like, hold on, let me bring up, let me actually go. I don't think the chains, do the chains bring up long share purchases? I don't even know that they do. I don't think they do, which is kind of interesting. The chains are just like, they're kind of sticking it to the man. Like they're kind of saying, what are you? Are you a derivatives trader or are we just buying stock now? Like, what are we doing? Are we slanging strangles or are you on a dividend reinvestment program? Like, make up your mind, bro. And so the change is not really helping us out when it comes to stock purchases. So I typically like to go to the standard crusty old activity tab, Bank of America. Let's go back. I think, so hold on. It must have been, was it December? I think it was December that we bought these shares in NVIDIA. Or not NVIDIA, but Bank of America. Okay, so there you go. We did this on December 13th. So December 13th, we bought 100 shares of Bank of America because one of the things I wanted to do that was very different about the show is I wanted to have at least a few, nothing crazy, nothing like super just, like off the reservation. But let's have a few long stock positions just because I kind of wanted to be able to regularly comment on, long shares. If you're like a long share investor, like a passive long investor over time, and you're like, hey, I'm thinking about doing some other things, but I'm completely like overwhelmed by what exists in the derivative space. I just wanted, if some random passerby discovered us on the internet and they were like, oh, he's got straddles in gold and strangles in NVIDIA and he's not even saying it right and this and that. They're just about to click off and then boom, they see Bank of America 100 shares. Like, wait a minute. This guy might be my guy. Right. And then they say, boom, Starbucks 100 shares. So it's like, okay, this is definitely my guy now. Right. And so we're just trying to, kind of gently start to welcome in some people that might not otherwise consider derivatives and kind of show them what might be available, for them in the derivatives market, because you can light some stacks of cash on fire just buying a stock. But, man, you can do it with the quickness in the derivatives space. And so with Bank of America, though, what's funny about this, so we're basically back to scratch now, right? So we're down $150 on the trade. And as you just saw, we've held the trade now it's been 6 months. Like we're almost getting into like a new tax bracket, right? Like once we get to the 12-month marker, I think we slip into like that long-term capital gains rate situation. What I want to bring up right now, though, is the simple fact that, all along the way, we haven't done anything on this position. I've done absolutely nothing. I've just held the 100 shares. We haven't added premium. We haven't dollar cost average. We haven't done anything. I want to highlight right now the simple lack of flexibility that you do have when you just buy stock, buy index funds, whatever. Now, to be fair, it's not that you can't do anything, right? You can dollar cost average, good strategy long term. You can reinvest dividends, good strategy long term. You can collect the dividends, right? You can do other things, and other things are happening outside of just holding the shares, putting them in your stock drawer, and just forgetting about them. But there's not that much more that you can do. There's like a few things. And I basically just mentioned the entire list. That it was an exhaustive list of all the things you can do when it comes to, being a shareholder. Obviously with options, selling options, even buying options. I mean, we don't typically buy a ton of options, but in terms of the flexibility and the different things that you can do with your positions, man, I mean, it's limitless. It is Bradley Cooper limitless, which by the way, did I tell you guys Autumn left me this weekend? I don't even think I told you guys she left me this weekend. So on Friday when the market closed, she left. She was gone. She went with her girlfriends from Chicago that they've been great friends ever since we left Chicago. We left Chicago about 5 years ago. And like her and these three women, like they're amazing friends. And they have just stayed in contact. I mean, two of them are still in Chicago. One's in California. Her name is also Autumn. Like, what are the odds of that? And then there's my Autumn. And so every year they get together and they go various places. Sometimes they meet up in Chicago. Sometimes they meet up in California. This year they happen to meet up in Florida. So they were actually only like 30 minutes down the road. But it was daddy daycare for like 3 nights, Friday night, Saturday night, and Sunday night. And so, man, the whole weekend, I was like, man, like, what are we even doing? Like, what are we even trying to accomplish? You guys don't think I know what I'm trying to accomplish on the show? I had no idea what I was doing all weekend. But nevertheless, I'm not even sure why I brought that up. So we're pretty much in mid-season form now. But with Bank of America, you can't do very much. right? Like when you buy shares, there's just not very much that you can do. But with options, there's a ton of things that you can do. There's a lot more flexibility. So I wanted to bring that up because it's interesting that Bank of America is basically right back to where it was. And yet, we're just kind of treading water. And so that's Bank of America. The other thing I wanted to talk about, because we're right about the halfway mark of the show. Man, it goes so fast. Man, it goes so fast. That's actually I see Scramble Everything's last comment. That's why I brought up the weekend. So each night, the Limitless thing, that's why. Thank you, Scramble Everything. And so the movie Limitless is one of my favorite movies. I love that movie. It's amazing. It's terrific. I started watching the show over the weekend because Autumn would never watch that with me. And so I'm like, all right, she's gone. What am I going to do? Like, she's gone for 3 nights. What am I going to do? This is amazing, right? So I decided to queue up Limitless, the TV show. Gotta be honest, Scramble Everything. I've only seen the first 2 episodes, but it's not that great. It's okay. Like, it's all right. But it's like, doesn't have anywhere near the same feel as the movie did. And I feel like they're not really developing the characters very well. I feel like everything feels a bit rushed. And then Homeboy just pops his NZT, and then, that's the end of the story. And so it's kind of like, yeah, I guess that is what it was all about from the beginning. But I'm not necessarily loving it. And so, all right, let's see here. What else do we want to talk about? Man, you want to talk about Lamentations? We may need the whole book for this. Look at Wolf. Man, who brought this to my doorstep? Who is responsible for this Wolf trade? Because I know I didn't do it. I mean, I'll lay some sacks of cash on fire, but they're usually greater than a $3 stock, which is now, the art is formerly known as a $3 stock. This is now $1.46 on the Wolf 3 put. Now, of course, we're just going to hold it because there's no reason to close it. Like, we might as well and I'm not even going to, there's 24 days left. I'm just going to hold this thing to expiration, basically. Because it's essentially a defined risk strategy. It's a short put, of course, but it's capped on the way down by 0. Unless it, flips into the negative and Wolf is really that bad that they actually have to, pay their shareholders for holding their shares. That would be a negative stock price, of course. It's not out of the question, I suppose. And so right now, Wolf at $1.46. We're down $1 on the trade. I'm going to sit tight and do nothing. But man, that is pretty bad. I got to be honest. That is pretty bad indeed. So, all right, we'll talk about the rest, though. We'll get caught up all this week. Obviously, lots of things to talk about. We've got GLD. Oh, wait, hold on. GLD, look at this. We actually have a little bit of brightness there in the abyss that is this portfolio. And so gold is down $5 today, but which makes sense because GC is getting hurt so bad. But yeah, look at this short put spread. We're down a little bit today, but man, this thing is looking good. So we are actually past 50% of max profit. So there's no point to hold this any longer. So let's just take off the gold short put spread, and we can book a winner. And then we can move on to see where you guys are at in the YouTube chat. And so let's see. I'll go, 72 cents is fine. Let's try to get filled. Oh, NASDAQ only up 480. I don't know, guys. Is it wax on? Are the Montana tariffs back on? It's not impossible, I guess. So let's go to GLD. 74 cents is fine. Sorry, so we got filled at 74 cents. All right, beautiful. Okay. All right, so where are you guys at? Let's see. Man, let me see if I can surprise and delight somebody in the middle. Man, let me get somebody in the middle. Let's see. Let's see. Let's see. John Stein says Natty Light Ice for everyone. I would agree with that if we still had some, right? I mean, again, I was here with the kids all by myself. And so the Natty Light Ice is gone. It's absolutely 100% gone. And so let's see. Wandera says, Dr. Jim, no offense, but your portfolio looks like it's talked nonsense in a bar. Yes, I know people, I'm going to hide this column. Hold on. Because that's going to be the comment that I surprised and delight. And I'll go to the beginning of all the comments. So people y'all like to get on me about these P&L opens, right? And I suppose you should. I suppose this is your American right. It is your American right to get on me about these P&L opens, but you're dead wrong. Like, you're dead wrong. Like, it's your right, but you're wrong. You're 100% wrong. Because P&L opens, remember. Now, what does a P&L open show you? I mean, you would think the name implies it shows you like how you're doing on the position since its inception, right? Since it's Leonardo DiCaprio Inception, right? Is that correct? Sort of. So a couple of caveats. If you have a position that you have not adjusted, if you have a position that you have not, made any adjustments to, then the P&L open will be accurate in terms of this is your performance on that position since its beginning, since its start. Now, when you start to make some adjustments, the P&L open can be a little bit wonky in terms of showing you an accurate depiction of where you're at. Now, the caveat to that, I think at this point we're on a caveat of a caveat. If you group by the order chains, is the P&L open now accurate relative to the adjustments that you've made? I don't know the answer to that question. I think maybe yes, because you've now grouped it by order chains. It probably is able to catch up with, the accuracy of where you should be in that position. But even still, the P&L open is not a good barometer of how you're doing. The P&L open is not a good barometer of your success, your failure, making money, losing money, whatever. And the reason why is this, is I'm not just saying that to get out of this. I'm not just saying that like, ooh, let me pull the wool over your, y'all's eyes and don't look over there. Like, don't pay any attention over there. That's not it at all. The reason why it doesn't matter though is, remember, if we manage winners, so if we manage our winners early, right? We're always, like literally by definition, we're always going to be carrying negative P&L opens. Now, they don't have to necessarily look like they've been talking some nonsense in a bar, like Wanderer says. I will grant you that. But still, it's very common. You should just get very comfortable just kind of stewing in the bathtub of filth that is a pretty red P&L open. Now, it would be very different if you had the polar opposite strategy where you're cutting losers quickly and letting winners run, which that's, a popular strategy. That's how a lot of traders approach the market, whether it's better, whether it's worse, whether it's right, whether it's wrong. That's not the point that I'm trying to make here. The simple impetus, right? The inspiration of what we're trying to do, we're going to carry negative P&L opens. It's going to happen because by definition, anything that's green, it leaves your portfolio, just like my gold trade just did. I mean, I don't remember what it was, but I'm sure it was something green on the screen, and we got rid of it. It's gone, right? So right now you can see we've got Amazon. We should probably get rid of that too. I kind of want to close this now just to have all red, just to irritate you guys even a little bit more and get some more comments in the YouTube chat just to pump the algorithm. That's all I'm trying to do. That's all I'm ever trying to do, right? All we're trying to do is convince the algorithm that this might be quality programming. Now, we know that it's not, but the algorithm doesn't know that. And so with the red P&L opens, that may be our ticket to paradise. That may be the thing that we're trying to do. But anyway, I'll get off my my holiday soapbox now. So stop asking me about the P&L opens. Sorry. So let's get to you guys, man. Where are you guys at? Sergio's in the house, man. What's going on there, Sergio? Is the doctor in today? Yes, we are in. I wouldn't exactly say that we're crushing it, but we're here. We're putting our time in, right? Like, sometimes it's just a grind. Sometimes you just gotta get through it. Like, trust me, I'm getting through it. You guys are struggling through it, but hey, we're doing it together. Like, we all get to punch the time card today, and so that's what it's all about. And so, Sergio, thank you so much for being here. Ordenu's in the house. Greetings from Italy, Dr. Jim. I hope you had a wonderful long weekend. Yes, it was a very long weekend because Autumn wasn't here to save me. It was a very, very, very long weekend. No, we had so much fun. We had so much fun. You know what's really, really fun? What's really funny, too? And this made me feel amazing. So last night, when I was putting my kids to bed, because Autumn got back this morning. Wait, hold on. Let me think. No. This was Sunday. She got back yesterday. Is today Tuesday? I don't even know. Yeah, today's Tuesday. She got back yesterday at like noon, right? Memorial Day. And so on Sunday night, when I was putting my kids to bed for the final time before she came back, we were just talking about the last 3 days and whatever. And I mean, we did a lot of fun stuff. Like, we went all around the town and we did a bunch of fun things. And I bought them some pools for the backyard. And so they got their swing set with a slide. I bought them a little kiddie pool so that we turned it into like a water slide. And then we bought like a big, like inflatable pool. It's not a huge deal, but they think it's amazing because I'm not doing the above ground pool. The maintenance is too crazy. I'm certainly not doing like an in-ground pool. And, not doing an in-ground pool either. I mean, maintenance is crazy. Cost is crazy. Everything is crazy. But we had so much fun. We did so many fun things. So Sunday night, I was putting my kids to bed and I'm like, hey, are you guys excited for mommy to come home? Right? She's coming home tomorrow, like noon or 11 or whatever. It's going to be amazing. And in my mind, I'm like, this is going to be incredible. All three of them were like, no. All three of them were like, man, we wish she would stay. It's been so much fun. So much fun. And that made me feel great. Obviously, I was like, wow, that's like so amazing. And then the funniest thing is on Monday when Autumn got home, I mean, she put those kids to work immediately. Like she put those kids to work like right away, like chores, like whatever. And we did a couple of chores. We did a few things, but I wasn't militant about it. Like we just we lived our lives. And Eli was so funny. He was like, oh man. He was like, mommy. He was like, I like it so much better when it's just daddy, because we don't have to do any of this. And I started dying laughing in the other room. And Autumn didn't think it was so funny, but I thought it was pretty funny. So anyway, I digress. Scramble Everything's in the house. Dr. Jim back on air after loading up on the proteins from the Memorial Day meal. Yes, we grilled some extra daddy's chicken for Memorial Day. Time for another MCL strangle. Man, an oil strangle. Man, are you the same one that brought me Wolf? Scramble Everything, you trying to get me hurt again? Man, MCL strangle July 67.54. Yeah, I don't know. Maybe we'll do it. I got to leave some capital. Oh, wait, you know what? Hold on. MCL. So let me look at this really quick. Yeah, this might work. Oh, look at the IV rank 55. That's pretty good. Go to July. Yeah, I think I like this trade. What are you doing? 54? Okay, so you're right on the edge of the expected move, it looks like. Oh, yeah. Yeah, we'll do this. What was that, about $2? Yeah, I like it. 220? Yeah, that's good stuff. So let's go ahead and let's put that on. And then I actually want to all right, so we got filled. Let's go back to NVIDIA. Guys, let's trade it. Because in my mind, I was like, it's tomorrow, we'll trade it tomorrow, whatever. But then, I'm like, oh, I'm with Errol tomorrow. I'm with E tomorrow. So I'll obviously have to coerce E into doing some trading. But I won't be trading this portfolio on that show. We save, this portfolio for this show. And so I think, again, I don't really think we need to overthink this. I think we do a front week expected move butterfly. And then we also we finance that with maybe a short put in the back month. We'll kind of double dip George Costanza style on the bullishness, because again, guys, we're just using common sense. Right now, you can apply common sense however you see fit, but I'm kind of thinking here. I think mega pint bullishness is kind of the only way to do it. So I think, what if I do a 136, 146, 156? Ooh, I can't do that because it's too janky. What if I do? Oh, hold on. Let's do a 135, 145, 155. Can I do this for more than like 250? $1.94? Wow, man, they're giving them away. They're just passing them out on the street corner, man. 135, which is basically at the money strike. 145, 155. And that I kind of wanted to shift the strikes up a little bit more, but that'll get me kind of into some janky strike territory, and I don't really want to do that simply because that's going to kind of mess up the symmetric nature of the butterfly. And I would rather maintain the feng shui-ness of having some symmetry on this butterfly. So 135, 145, 155. Man, I like it a lot. For $1.89, let's push that guy out. Oh, wait a minute. Hold on. Let me cancel that. The buying power looked all weird. Wait a second. Oh, did we get filled? Hold on. Okay. I think I messed up that butterfly. Again, we're on holiday time, guys. Let's go back in here. What did I do wrong? 135, 145, 155. And then we sell 2. Wow, now it's 243. Okay, that's still less than I think previously. You guys can go back and hit rewind. I mean, you can check it out. But I think I messed up the legs. I don't think it was a 1x2x1 the way you typically do a butterfly. And I know that because when I went to push, review, and send, which I didn't even look at it because I do these so often, it's automatic, whatever. I should have taken an extra couple seconds because the buying power was like $6,000. And so I was like, wow, that's pretty crazy. I must be doing something. I must have done something wrong. I think maybe I was also selling this 155 call. So I think maybe I had I was short the 145 and short the 155, which I don't want to do. But I still like this trade with the debit at 248. That still looks pretty good. And the buying power should be, buying power is only going to be a couple $100. And so, let's push this guy out. And I definitely want to get to some more questions. Let's see here. If I do, I'll do like 251. That's fine. All right, so we got filled at 251. Now let's go into the back month. we'll go into let's go into July. And I'm kind of thinking, let's not really overthink this. I kind of think let's sell, we'll sell this 120 put for, the buying power, that's only about, we're working with about 30K in the account. So that's only about 8% of the account. That's not too bad. We can sell the 120 put at a 22 delta for $3.40. So that's going to more than finance our butterfly. And so again, we're going bullish plus bullish, which again, that's just smart hedging strategy. So if we go in here, which is sarcasm, by the way, if you're brand new to the show, it's not very good, but it is sarcasm. Let's go ahead and let's try 340. All right, so we got filled at 340. All right, so there's our NVIDIA earnings trade. Again, I wouldn't necessarily trade. I wouldn't tail that right now. I'd wait till tomorrow because you want to be able to situate your strikes a bit more closely with wherever the stock might be at the time. And so, but thank you there, Scramble Everything, for the MCL trade. Sam L. Dr. Jim's in the house. Hope you had a great long weekend. What's going on there, Sam L? Doc, we missed you Friday. Next time, just bring the kids on the show. We could use some fun with all these on again, off again tariffs. Yes, again, wax on, wax off. They might even predict the market better. Amelia's doing a fine job. Amelia, again, she is my assistant. She's my intern. I'm the only one on the network, I think, that has an intern for their show. And she's also my 5-year-old daughter. She does all of my trading analysis for me if you are brand new to the program. And so, yes, next time maybe I will bring them on. I brought them on one time before. So I brought them on, it was a couple of years ago, I think. I brought them on for a couple of minutes at the very beginning. I think Amelia was 30 or whatever. Eli was 6. And Penelope was only 8, I guess, at the time. And so, man, that feels like so long ago. And so thank you for being here, though, Samuel. I appreciate you. Scramble Everything says, nothing says Synthetic Tuesdays like Dr. Jim. Yeah, I don't know what that means. That's probably a really nicely blended complisalt. And so nicely done, my friend. JDD, why is the IVR keep changing on IBIT? It keeps going from 18 to 35. I don't know. I don't know. So right now it's 30. Oh yeah, it's weird. It just did it while we were on the screen. So everybody look in that yellow circle. It was just 36, right? When I popped over, and then it dropped to 19, and now it's staying at 19, I guess. So JDD, I don't know. I don't know. It could have something to do with the fact that it's tracking to Bitcoin. It could also just be, an error that the devs have to clean up. That certainly happens with, the software. And so I don't know the answer to that question. Normally, it's going to be a lot smoother. I think they update the IVRs. It's obviously not a continuous thing. They're not updating it every second. I don't think that, the IVRs are being updated continuously throughout the day. But they are updated pretty regularly because you can go to if I go to – maybe it is continuous. Yeah, so now it's 36 again, so you can see that. If I go to ibit.ivr, this brings me a chart of the IVR. And so if I were to bring this up and I were to do let's do a 1 day, 2-minute chart. Wow, look at that. Look at that. That's crazy. Yeah, something's wonky in there. I don't know, but you can see it's actually showing up on the chart there, JDD. Now I'm not sure. Is this what they mean when they say Elliott wave analysis? Which wave is this? It looks like 2 separate distinct waves, right? There's the first wave in the Elliott wave analysis. Here's the second wave. So I imagine the third wave will look like this, right? Am I doing this right? For all my Elliott wave experts out there, help me out. And so, but normally you don't see that. So it's probably some kind of error, JDD, just to be perfectly Frankie Walsh with you. If I go to spy.ivr, and so you can see that this is a more typical chart that you would see. This looks a little weird too, just because I need to scale the y-axis correctly. It's scaled a little bit too. There was too much space between the increments. And so now you can see, this is kind of your IVR between, on a 2-minute chart. And so you can see it's not like a smooth line. If I go to just SPY, it's going to be a super smooth, line with obviously you got some phantom prints. That's probably your Wall Street bets guys and gals right there. But I don't know what that is. That's crazy though. It's smoother though, right? You just see kind of a continuous stream, from start to finish. You're not going to see that with IVR because I don't think it's updated continuously. But it is updated pretty regularly. I'm not exactly sure what the increments are. Because remember, guys, Dr. Dan is doing all this by hand. My man is doing all this by hand. So we got to cut them a little bit of slack. If it takes them an extra 30, 45 seconds, I think it's warranted. And so let's see. Scrump Everything says, to Sergio, any food tips from the past long weekend? Yes, I will let that inside conversation continue on without me. So Andrew Misha says, Dr. Jim, what are you going to do with the wolf position now that they're weeks away from Chapter 11? Oh, is that what happened? They finally came out and said, hey, listen, we don't deserve to be a real company. Are they really going to file bankruptcy? I guess it's going to zero. Let's just hold it. It's only $1.46, right? And again, is it a sure thing? I don't know. I don't know the answer to that question, but I would have to deduce obviously not, because if it was a sure thing, it would be selling for pennies right now. It would be very, very close to zero or at zero. So there's probably some probability that some white knight comes in, a la maybe an Elon Musk. Maybe he comes in, he's got Twitter, right? Maybe he's getting bored with Twitter. He's got Doge. Maybe he's getting bored with Doge. Hey, scoop up some wolf, right? My man comes in and scoops up some wolf. This thing will be $10 a share. And so I'm just going to hold it because either A, it does come back, or B, we can all experience a short put actually going to zero. And so it's not something that, you get to experience too often. And it's not going to be, it's not going to be a big deal, either way. I mean, the stacks of cash that we lit on fire for NVIDIA earnings tomorrow are greater than the wolf stack of cash. And so just so we're all aware of what we're dealing with here. So Sergio's in the house. Great to see you, Dr. Jim. Yes, I appreciate you, my friend. Let's see. Scramble Everything says it's playing with your emotions. Yes, I agree. Totally agree. David Gallimore, Dr. Jim, on normal calendars, we sell the near dated and buy the further dated for a net debit. That's correct. Do we do calls if we're bullish or puts if we're bearish? Yeah, usually. Typically, that's how we would set it up. It actually doesn't matter how you set it up, and I'll even show you that just to prove it to you. The pricing is going to be the same. So, for example, if I go to I don't know, what would be a good calendar candidate right now? Well, let's actually, hold on. Let me go to, I don't want to spend too much time on this, but let's look at the watch list. Let's try to find something with a low IV rank. And Microsoft. Hey, here you go. And it's a $400 stock. That's perfect. So if I go into Microsoft, and I sell the June and buy July, right? So I go into Microsoft, and you got the stock at $4.59. So let's say I was slightly bullish on Microsoft. So I actually want to go a little bit above where the stock is right now. So I sell maybe the 465 call, sell a 465 call in June, and then I buy the 465 call in July, and then that's going to be a $5.60 debit. Which is that's a pretty sizable debit. I have to go back and look at the June trade to figure out if that's actually too much. Actually, let's look at that really quick because that feels like it's a lot. No, it's actually not, because we're still collecting more extrinsic value than the debit that you're paying, and that's at least the first checkpoint, Charlie, on a calendar spread. Maybe the only checkpoint, Charlie, on a calendar spread. I don't do a lot of calendar spreads. I'll do them every once in a while when things are really slow. But that's like a VIX at 13, 14 thing. That's not a VIX at 19. Calendar spreads, some people love them, but man, they're brutal. They're brutal in that they are going to be very, very slow moving. So just be kind of ready for that there, David. But so the call calendar spread you can see is selling for $5.60. I mean, it's obviously moving around as the market moves. You can see the market is somewhat wide. It's about 20 cents wide on the bottom there. Let's set up the same trade though, but let's use the puts, and you'll see it's going to be the same price approximately, maybe off by a couple of pennies because the spread differences, but it's not going to be that significant. So if I sell the 465 put in June, and then I buy the 465 put in July. Oh, okay, it's more significant than I thought. This is only selling for $4. Interesting. So I kind of would have expected it to be closer. I'd have to really unpack why it's because the market below is not that different. Microsoft might have a dividend coming up. In fact, let me look here. This is interesting. I've only got a couple seconds left in the show, so I may not be able to unpack this now. And by may not, I mean I won't be able to. But if I go into, does Microsoft have a dividend? Wait a minute. They just paid it, though. This is interesting. Yeah, I'm not sure why those are so far off. Normally with calendar spreads, they should be approximately the same price. Call calendar spread and put calendar spread. Generally speaking, though, we would use calls when we're bullish and puts when we're bearish. Now, did we just unearth like some huge glitch in the matrix that no one else knows about? Maybe. Maybe this is something you should unpack. Maybe you should just be arbing call calendars and put calendars. Like, forget about NVIDIA earnings and forget about, swing trades and all this other rigmarole. Just arb. Just buy the put calendars and sell the call calendars, right? And then scoop up the difference. And so I suspect there's something else happening there, but you never know. Maybe we just unearthed, some black gold that nobody else knows about. But hopefully that helps you, David. Probably added a bit more confusion too, but hopefully there was some help that was kind of that was kind of baked in there. But man, let's see. Wow, it goes so fast, guys, so fast. Andrew Cortado's in the house. Man, Wandera, see you again. Emmett Morrison, man, I see you guys. Aronson's in the house. Chad's in the house. JC's in the house. Flower Power's in the house. Michael Anthony's in the house. Man, I appreciate you guys. If I missed you guys, and I missed a lot of you guys, again, we're still on holiday time, but give me like 3 to 5 weeks. We'll have it all cleaned up, right back to midseason form. Come back tomorrow. Well, tomorrow I'm with E, of course. So come back for today's assignment. But then on Thursday, we can all talk about, we can celebrate or commiserate my NVIDIA earnings trades together. But guys, I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
What's going on, everybody? We got a really kind of quiet week, save for 2 things, and one of them is coming up tomorrow after the close. That's right, NVIDIA earnings. What do they have to think about? What are they looking at? What's going to matter? We'll talk about what we think we're seeing. Big deal over the weekend, actually. It started on Friday, but it really materialized today. It would seem as though Salesforce is buying another company. That's right, a company that was private not too long ago. We'll talk about that. And one of the big fallouts from today, one of the few stocks that's down really big, is PDD, of course, a Chinese name. That's essentially the owner of Temu. Had earnings, and it didn't go so well for probably some obvious reasons. So we'll talk about those 3 things and more. We'll take a look around at the few earnings that are coming out. One of them is Dick's Sporting Goods, which is a company I talk about a lot because I seem to be spending time in there every so often. Just give you an update on what's going on in the portfolio. But first, welcome to the most dangerous show on the Tastylive Network, folks. It's Engineering the Trade. I am your host, Jamal Chandler. Hope you all had a good long weekend. I had a good one. It's good when you don't really remember every single thing you did. I mean, I just had to sort of think back. I mean, nothing, super big. Just tried to enjoy week. I don't like, so here's the thing. I don't like a lot of plans, if you will. I like loose plans. You know what I mean? Like, I don't like plans down to the minute. As a result, I think at times, for example, when you sort of vacation with people or friends, or, some people like to really plan everything down. Like if you go on a vacation, say you go, let's just say you're going to Turks and Caicos. I don't know. I'm not going there. I'm just saying. And say there's so many different things you've heard about you want to do, and, you got a list and you're going to do them and you plan. See, I don't like that. I don't mind having an optional thing to do on one given day, or, there's one thing I might want to do, but I just want to be. And that's how I end up spending a lot of like weekends, or even big, weekends like this. I don't do a whole lot. I mean, whatever happens comes my way. We could have gone to see a movie, I guess, this weekend, but we didn't. Matter of fact, how did that Tom Cruise movie do this weekend? Box Office Mojo. I forgot to look. Do you think, I don't think that that's going to be one that makes $1 billion, right? Like, I was watching, I should say this, but I was watching, I think it was Jimmy Fallon last week. Maybe he was on, and Tom comes on. I love Tom Cruise, by the way. I always liked his movies. It's all of his movies, honestly. But he started talking about the movie. Tom is the main one these days that they crack me up when they do this. Like, a lot of the actors, like, this is a movie that deserves to be, it should be seen on the big screen. You got to watch it on the big screen, because only on the big screen, like, give me a break, dude. Like, seriously. But I don't think this is one of those, like, the Mission Impossibles. I think I saw, like, 2 of them. What are we on now? Like 7 or something like that? I don't know. And the way he was selling the movie, get this. The way he was really selling the movie was selling how hard these stunts were for him. Like, how much he had to work out for the stunts, the crazy stunts he does on them. And they were recapping a lot of them. Like, he made that big bike jump, I think, in the last movie with the parachute. Of course, he held onto the plane in one of them. Like, Tom, man, I love you, man. I love you going back to, to All the Right Moves and Risky Business. Of course, Top Gun. And, one of my favorite Tom Cruise movies is oh, geez, I just blanked on it. It's a movie with him and I hate when this happens. It's Tom Cruise and Cameron Diaz. Vanilla Sky. Thank you. Saying thank you to myself. You guys didn't help. Vanilla Sky is one of my favorite movies of all time, because it's so unlike Tom. He's not the man. That movie really starts out being the man, but then, things really drastically change. If you've never seen it, you got to check it out. It's a great movie. But I love him going back to all these movies. Cocktail, you name it. I don't give a shit how much you worked out for these scenes, Tom. I don't care how much you worked out for these scenes where you're risking your life. All I care about is the story. That's all that matters. Speaking of the story, let's pull up the slides. Let's talk about what's going on today in markets. It's been a rough couple of days until, you know what? Yep. Sorry, H. Montero, I appreciate your help, man. Day and Night is definitely another movie with him in Cameron, but Vanilla Sky is the one. If you ever see it, you got to check it out. You know why. It's been a crazy few weeks. Even the last couple of days were kind of strange. When you go back to last week, it was a rough week of just negative news and momentum. And it seems the market is trying to turn it around so far this week as we come into it. Of course, the main story of the day is the fact that, well, I guess we're not going to have 50% tariffs against the EU. Raise your hand if you're surprised. Yeah, not me. I thought the market reaction with that was a little overdone. But I felt like that on a couple of these different market reactions, I guess. I don't know. It is what it is. David Gallimore, a lot of people like Tom Cruise in Tropic Thunder. And from what I hear, that they might be trying to revisit that character because so many people liked it so much. Les Grossman. I even know who that character. I don't think I ever watched that movie from start to finish. I know the movie, but I never watched it from start to finish. But it's a great movie for sure. So we got NVIDIA earnings, not tonight, but tomorrow night. Of course, there's no Engineering the Trade show on Wednesday, so I figured I'd talk to you about it right now because it is obviously one of the bigger things that happens in our markets when NVIDIA presents earnings. It's the biggest company in the world right now. And they still produce a lot of AI chips for a lot of different people. AI is still a sizable story. I can't say big story because I feel like we're not talking about it as much. We're talking more about tariffs than we're talking about AI. Maybe that's good for AI, actually. It allows it to slide under the radar. And that's what maybe I feel like the earnings is going to end up doing because I think a lot of people are expecting the chip restrictions and the China story around tariffs to mess with NVIDIA earnings just a little bit. I mean, that's happened with other companies. Why wouldn't it happen with NVIDIA? But I think what matters is sales, right? As long as it wouldn't, I don't think it's going to take as much this time around for NVIDIA to beat on sales, end up winning the stock market, at least on that day. You could argue that maybe today the stocks are getting a little bit ahead of themselves with this move, NVIDIA and SMCI being one of them. But that's the other thing about NVIDIA earnings. If you don't want to trade NVIDIA earnings, there are other companies to trade. You can trade a host of other semi names connected to NVIDIA. SMCI is the number one thing that comes to mind. I think it's one of their bigger customers. You could trade them. You could trade AMD, right? There's a bunch of different names, TSM, semiconductors. I mean, there's a lot of different peers that you could trade, but I think they're going to have to discuss what chip restrictions, how that affects them overall. And then, of course, I mean, they're going to get asked about China tariffs and how much that's going to slow things down for them. I think they have answers for that. I'm sure they do. I mean, they're ready for it. Jensen Wing is always ready for anything. So, again, I think it's going to be a market-moving event. It's also interesting how it comes on the heels of the FOMC meeting, which is supposed to come out that afternoon, Wednesday afternoon, and of course, after the close, NVIDIA earnings comes out. So Wednesday afternoon, you got the FOMC meeting minutes where, of course, those are always backward-looking, but you get a real idea into who really wanted to raise rates, who else wanted to do something with rates, anything different. If anybody wanted to cut rates, that would be really interesting because then you get an idea of who's leaning politically one way or another. That's completely doesn't jibe with anything that the Fed has said so far, right, as far as cutting rates. So you'll get that idea. I would imagine we're going to get some moves on that. Obviously, bonds are going to move on it. Probably gold even moves on it, if not the market. So Wednesday could definitely end up being a very interesting day. Last Wednesday certainly was that. I'm still reeling from that drop in the market from the 20-year bond auction. I mean, it really shook things up. And that's the kind of market we're in. I think that's why you're seeing VIX stick around the 19 to 20 level, depending on the future you're looking at. I mean, June VIX future right now is 1980. July is 2065. And August is 2095. Those are all on the bid, right? And so that's what's going on with the VIX futures complex. Still staying elevated, which means we're not completely out of the woods yet. We're not in the clear. I think it would have to take a move upwards of 6,000 or more for VIX to really settle into the 17, 16, 14, 15 area. I'm sorry, 17, 16, 15 area, which I'm not exactly rooting for. I want VIX at the minimum of 16 because things are actually moving around then, and then you can trade in and out of a few things and make for an interesting market. So always interesting to be aware of what kind of environment we're in. Speaking of environment, I think we're also in an environment where you might start seeing a few more purchases from different companies. Some companies are in a position to win, and they're unaffected by probably tariffs. And then other companies, well, they might have a different situation. They might have a cash crunch right now, and they might be feeling it from this tariff situation. And that might be something to think about. Particularly when you talk about that, you might be looking at what's going on with retail names, maybe even oil names. Some of those names are really oversold right now, if you will. But that's not the situation here with Informatica and CRM, Salesforce. Salesforce tried to buy them not too long ago. It didn't go through. The funny thing about Informatica, that stock was taken private in 2015. So 10 years ago, it was taken private. It's another service as sales as a service is what it is. It's SaaS, right? Sales as a service, yeah. Software as a service. I'm tripping. Software as a service, essentially where you don't have to download software and put on your whatever device it is. You basically just go to the cloud and get it, right? And so Infa was taken private in 2015 for like $5.3 billion. Came back public, I think, in 2021. And then now they're bought for $8 billion. This is what happens a lot. You guys don't realize how often this happens with a lot of different companies. And so CRM, I mean, it's actually one of their biggest acquisitions. I mean, a company like CRM, Facebook, Amazon, they often buy up these smaller competitors, right? This is actually one of the bigger outlays I think they've had because this is partly for stock and cash. That's one of the bigger outlays they've had. But look, CRM has been buying companies left and right. I mean, you know you're good when your ticker is basically the whole business area. I mean, CRM, customer relations management, that's the name of your company, Salesforce. Like, that's the ticker. That's a really good one. Really smart, whoever came up with that, by the way. But I think you're going to see more of this, them buying smaller companies. And the reason why I say this is because you got to look at some of the other companies in the space. When you look at peers, from what I'm looking at, Palantir is one of their peers. Now, that's too big to be bought. That's a huge company. I mean, Palantir's market cap shot up really fast over these last couple of years. $288 billion for that company. ServiceNow is another one. Again, I mean, that's a good name, ServiceNow, right? Like, sales as a service, as a software as a service, ServiceNow, it works. Also $212 billion. So obviously those aren't getting bought up by anybody anytime soon, I don't think. I mean, nobody's paying. There's no acquisition that happens at that level. Those are huge numbers. And if it is, it's a merger of equals. CrowdStrike is also in that group. Snowflake is in that group. Snowflake, again, that's $68 billion. Like, that could happen at some point, but whatever company buys that is going to struggle stock-wise. They're going to have to do it stock for stock. Nobody in this space, I don't think. I don't know. I could be wrong, but even if they do have $68 billion in cash, they're not going to outlay all of that. That's a lot. Cloudflare is another one. Datadog, Zscaler, Okta, MongoDB are a lot of the names that we know that are in this same space. So that's something to keep an eye out for. And for the most part, it doesn't. We can't sit around and anticipate when buyouts happen because, I mean, that's just a fool's errand. But it's important to be aware of the different companies that are in the crosshairs. Finally, PDD, rough day on earnings. And I think we've seen this with a couple of Chinese names so far. Baba, I think last week had rough earnings. I mean, these guys missed on earnings and revenue. And again, it's Temu they're the parent of Temu, right? And so obviously there's a lot going on there with regard to basically the trade war and how that's going to affect these companies. I mean, feel bad for you if you were caught up in this one and the earnings move. If you got other Chinese names, this is definitely something to be aware of, right? I mean, we saw, even on a small scale, Walmart was affected on earnings. I think Target earnings didn't necessarily go well. So this is a space maybe to avoid selling vol in for right now. Just be aware because there's a lot happening in here day to day. Just a little advice. Leftovers. What's are America's favorite apparel brands? Let's move to the next slide, please. I went to an outlet mall this weekend. That's one of the things I did because my kid plays multiple sports. Longtime listeners to the show know. Matter of fact, baseball right now. We got our last game tomorrow, last regular season game, and then it's playoff time, baby. My kid's been in this league. This is his last year playing baseball in this house league. He's been playing since kindergarten. He's won 2 championships, and I think he's trying to get another one. I mean, really, the real games really started first grade. He's won 3 championships. I'm tripping. He won in first grade. He won in second grade. And then he won in 5th grade. No. He won second grade, third grade, and then 5th grade, I think is what it was. No, it was first and second, and then 5th. I think that's what it was, yeah. We'll see how it goes. Aiming for another. He will be in the home run derby, too. That's going to be kind of cool. He was in the home run derby last year. Any kid who hits one out over the fence gets a chance to be in the home run derby. He'll be in it again. But I bring it up because this past weekend we played in a tournament. And, he's been doing a lot of training, and eventually you got to play some games, right? And so he actually played in the one game with this one kid. My kid's pretty big. He's 5'9". He's 6th grade. He's 12 years old. The kid he played against was like 6'3", 7th grader. He's probably 13. He's got to be 13. I hope he's 13. 7th grader. And I mean, he wasn't just big and slow. Like, he's big and he can move. He's a pretty good athlete. He had an older brother who's a pretty good athlete too. It was something else to watch. A kid, just when you think your kid's big, another kid's always bigger. Anyway, we went to an outlet mall after, and Nike is actually the place where we got the most stuff, believe it or not. This is a share of U.S. adults who bought clothing, shoes, or accessories from the following brands in the past 3 months. Nike, 40% of people did. That Nike store was packed, man. They had like 15 checkout people, no lie. Like 15 checkout people. I mean, it's crazy. People are still interested in Nike. I mean, I've always liked Nike, but the funny thing is, I bought nothing for myself. $200+ of stuff, and it was like for my kid and my wife. I bought nothing for myself because I am just not interested in most of the stuff they have. Most of the stuff they have for me sucks. Stuff they have for kids, and even though he did buy stuff off of, the adult side, basically. He's wearing adult mediums at this point. But they had stuff for that. I just wasn't interested in anything they had. And I guess it's so crazy to me because back in the day, when I couldn't buy anything, there was so many interesting things to buy in the Nike store. Are you kidding me? I mean, there was at least 3 pairs of shoes that I was going to die if I didn't have, which I wasn't able to get most of them. I just want them so bad. I would just lust over them so bad. I was just like, how can I afford these shoes? How can I get them someday? I felt the same thing about any hoodies, any shirts, everything. Now, I can walk in and out of a Nike outlet store and not even buy anything. If you would have told me that 25 years ago, I'd be like, you're crazy. Adidas, 35% of people buy that. Now, we went in that store too. Wasn't really interested. Anthony Edwards shoe, by the way, $160. The day I buy an Adidas shoe for $160, I mean, you got to be kidding me. Calvin Klein, 26% of people buy stuff from Calvin Klein. I saw that too. I'm not interested. Is it me or am I the only one who can't help but think of Back to the Future when I see Calvin Klein? Levi's, 26% of the people go to Levi's, I guess. Ralph Lauren, 18% of the people. I watched the documentary on him. It's actually on HBO, but I watched it on the plane recently. Very good, very insightful, very interesting. But I'm just not interested in the clothes anymore. Way too overpriced, Ralph. Jordan brand, 18%. I have a fair amount of Jordan shoes. I didn't buy them from Jordan, but whatever. I bought them. I have them. I haven't bought them in some years now. New Balance, 18%. Oh, dude, the amount of people that are buying New Balances these days, is it me or is it me? The big N on the side of the shoes, you guys know what I'm talking about. I see them everywhere. I mean, they're everywhere now. I feel like more women than anything have them. I mean, I've noticed. It's interesting. Under Armour, 18%, not interested in their stuff at all. And then Tommy Hilfiger, 17%. Look, once upon a time, you guys understand how Tommy Hilfiger was the bomb. He messed it up, though. Let's move to the next slide. Day-to-day changes in the SPY. We've had some big days. We had a decent amount of 2% days this year so far. I would like to know where we stand on that. I feel like for the first 6 months of the year, we've had quite a few days that are over 2%. I need to figure out some numbers on that and see where does that rank in comparison to other years. But and this has been otherwise arguably somewhat of a volatile year, especially since March, right? I mean, look at the amount of 2% up days and down days that we've had. I don't know if this is going to slow down or not. I really don't. I don't think anybody knows. That's the great thing about the market. Let's move to the next slide. Treasury yields have definitely been a big story. We saw the yields climb basically in the last, basically since the beginning of this month. I mean, 30-year yields were upwards of 5%. I actually think just tracked down a little bit today. We saw the 10-year yields go over 4.5%, and that's mostly that's the big story. All of these yields have had their big rises. We see 4% on the 2-year yields, 4.5% on the 10-year yield, and then over 5% on the 30-year yields. And those are the times where, coincidentally, the market has really kind of freaked out. So I don't know if this is the plateau or if there's more to come at some point. Hopefully not, because, I mean, again, I'm long bonds kind of at this point, and obviously I don't want to see yields go any higher. That would be detrimental and catastrophic for my position. But This is something to take note of. And this has been a story for the last 2 years. Anytime yields hits certain plateaus, markets get scared. Let's move to the next slide. We've seen it. We've seen it a couple times. Hopefully you guys can see this. This is, of course, a plot of a lot of the major ETFs. I do this every now and again. Implied vol versus implied vol rank. Of course, we like to see implied vol ranks above 30, and so that's why I got a little dotted line there and see what's above 30. Right now, at least as of this morning, TLT is above 30, XLB, which is, that's materials, right? I think XLB is materials. I'm not sure why the B is for materials. Anybody know? It's so weird, right? Like XLF is financials, XLE is energy, XLV, healthcare. Where's the V? Where's it come from? B, XLB for materials. Why? I don't understand it. You know what I mean? Like at least XLP is staples, XLY is consumer, discretionary. The Y is all the way at the end, but at least it's there. There's no B in materials. There's no V in healthcare. I mean, explain it to me. Anyway, XRT above 30 IVR, XBI above 30 IVR. So you would expect that. XBI is biotech. Gold, of course, has remained up here. Every part of the gold complex, whether it's the GLD itself, actual gold, or whether it's the miners, it's remained elevated for some time. But that's mostly it. Other than that, most of this stuff is kind of that lower left quadrant basically is, almost normal in a way. We did see SPY and Qs kind of spike up a little bit above 20 and change a little bit last week, but it's resumed some normalcy. And a lot of those things, whether it's utilities, whether it's industrials, whether it's financials, whether it's SPY, Qs, IWM, what have you, have kind of calmed down. So take that for what it's worth. Let's move to the last slide. All right, so earnings. Didn't I mention Okta? I did mention Okta earlier, right? Yeah, it's one of the software as a service names. Box, of course, is cloud, has earnings. Dick's Sporting Goods has earnings. A&F and Macy's, we're still rounding out some of the retail names, have earnings, and then BMO has earnings. Like I said, we got those FOMC meeting minutes on Wednesday. Should cause some movements in at least a few asset classes, whether it's, I'm looking for gold and bonds specifically. GDP also has an appearance this week. Last month, GDP actually the markets kind of moved, but things were so different, right? Like when that happened, it was at a time of volatility, and we just still didn't know what to think of these tariffs and how much that was going to affect GDP. And you saw all these renderings of how it's going to affect it. And then we got core PCE on Friday, which basically means it's the end of the month, always does. Number of S&P 500 stocks above the 50-day moving average, 333. Let's move to the platform. Scramble everything. Not sure what qualifies as it's made in USA, I thought. Probably like Phoebe Cates and Fast Times at Ridgemont High. She was made in USA. XLB for building. Look at the big brain on Dave S. Maybe it is. You're right. It's probably what it is. That doesn't explain the V in healthcare, though. Back to the Future and Calvin Klein. I guess it's been so long since I saw the movie. I see parts of that movie like every year, Madeira by Wolf, excuse me. I don't want to mess up your name. Madeira by Wolf. What does that mean anyway? Levi's the only brand I've bought from in the last 10 years at least. Huh. Yeah, I suppose. So, yeah, you're right. Scramble everything. Google and Apple. I was talking about the ETS, but you're right. Google and Apple do have some IVRs up there, mostly because they got things going on, right? You got the antitrust thing going on with Google and Apple. Well, look, I don't know how long it's going to take for them to ever move manufacturing to the U.S. I don't really plan on it. I don't think it could happen, but that was one of the things that was threatened on Friday too, right? More tariffs for them if they don't start acting. I don't know. We'll see. OKTA for earnings. $13.62. Yeah, Daniel Rooney, Iron Condor for the week. I tried that last week. It didn't go over so well. I literally did it last Monday, and it was working perfectly until Wednesday. That changed everything. But don't let me discourage you from doing it. This is definitely not a name that I trade. I'm just curious in it. Again, we talked about some of the moves. We talked about this space, right? After the after the I lost it. I lost my whatever. After the merger, obviously with the CRM, it's not a merger really, but it's acquisition. CRM, Salesforce buying Infa. That is why we're looking at this. Okta, it has earnings. Stock is looking good, I suppose. I wouldn't do anything in here personally. I like to trade the big earnings names. I'm curious if you guys have anything to do, but it's not for me. I just can't justify it. I just can't do it. $3.26. Nice little strangle there, 73%. I wouldn't. I mean, me trading strangle earnings not going to happen. I'll get ahead of it before you guys end up mentioning it. Those of you who are tuning in for Tim Knight in the next minute here, you're going to be disappointed. He is out for the week. He will be back, I think, next week. For the meantime, you got me until last call. That's right. We're going to go right all the way up until last call. Okta is not a name I would do on earnings, but I do always like looking at the strangles, just seeing like what's interesting. And the 140, 110 strangle, $16 to the upside, $14 to the downside. When you have about, what did I say for straddle, $13 and change, $13.54. That's very fascinating, but I'm gonna choose to stay away. I like stories. Dick's Sporting Goods is an interesting story to me. I've talked often about every time I go in this store, there are always kids in there with parents. That's mostly who shops in there. Once upon a time, it was mostly, just for the most part, it was mostly like men who did a lot of sporting goods. And as a matter of fact, the whole upstairs used to be sort of, this is going way back, like when the store, like in the 50s and 60s, that was really what the store started with. Then over time, it was still mostly adults, right? And even the upstairs used to have mostly camping gear. Now, I don't know the last time you've been in Dick's Sporting Goods, but it's mostly sports for kids. And they have everything in stock, like lacrosse, hockey, basketball, baseball, football, everything. And of course, they just bought Foot Locker recently. They bought Foot Locker. That's another, they're trying to get a stranglehold on shoes. You might as well. If you got all these sports, you need shoes in them. You need shoes to play in them. And so I find that story fascinating. Now, I don't pay much attention to the stock outside of that. I don't know what their overhead is. I don't know, all these other things. But I really haven't traded many earnings. And I know the stock got rocked on that move recently. So is it worth playing some upside in here? Maybe. Expected move of $11. They could come out and say how much the deal is going to work for them and all this other stuff. And I don't know. I could fabricate a story. But at the end of the day, I like this. We're going to do... I'm going to buy some of the 190 kind. I'm just going to pay up because I know it's just not going to be easy to get in anyway. Yeah. We're going to try and buy some of the 190 kind of the calendar. Basically. We're going to see how that goes. Dick's Sporting Goods. I'm kind of interested in getting play that. I'll post that if it ends up getting filled. As far as the other earnings go, Abercrombie and Fitch. Stock's taken a decent amount of haircut. You've seen recently, this stock has really gotten beat down. I don't know where, I feel like this is another one of those that they're closed. I'm not exactly sure where their manufacturing is. I really don't know. Where does A&F manufacturing? I don't know where they get a lot of the materials for their clothes, but that would be something of interest to me. And if it's mostly overseas, I would imagine they're going to have to touch on the recent, discussions of tariffs and how things are affecting them. I assume they have to get a lot of their stuff from like China and Vietnam, right? Like I just assume that. I don't really know. Would I play anything in here? No, not really. I don't. I just feel like right now there's a lot more interesting things in earnings. Yeah, sure, Dick's is one of those interesting ones to me, but most of these earnings really not that interesting. I'd rather, play the market when you got 2% moves in either direction in the stock market these days. Why do you need to play earnings? Most of us, play earnings for the fall crush and the move. And, I just don't know if ANF is that interesting to me. Another one, retail. I mean, it's really down this year. That you have to look at XRT. I can't believe the stock has turned around this much, but I actually don't know. What are the main holders of XRT Holdings? XRT Holdings. Let's see here. Sure. Accept and save cookies. I hate when you go to a website and they ask you to accept and save cookies. Like every single time. Why? Why do I have to do that? Why do I have to? No, I don't want to do it. I can just go to another site that's even easier to find the holdings. Grocery outlet. Wow, Carvana. These are the names that are in XRT? Carvana's not retail. What are you guys doing? Like, come on. Dollar Tree, GameStop. Yeah, those are retail. Dollar General, yeah. I mean, a lot of these companies that I'm seeing don't explain why XRT actually stock looks like this, but then Macy's and A&F stock look like that, and they're downtrodden. It doesn't jive with me. It doesn't make any sense not touching it. My positions right now, there was some news that came out over on Friday about, I don't know, blah, 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 and Trump and uranium. And while I've never gotten on the uranium trip before, I decided to get on a little bit here. Very cheap. I mean, basically, I paid $130 just to have some access to it. Plus, it has earnings coming up next week, so I figured, why not? It would be interesting to do. I got a couple of calls there. Got that play going on. Hims still got a strangle in here. Stock has been pulling back some recently. It's had a real strong bull run, but more recently it's pulling back. I'm curious to see if it's going to hold this 50 level here right now. Low of 51.20. Right now it's been hanging in there. I'm a little worried that we could see the bottom drop out a little bit here, but I need some good news coming up soon. For now, I'm going to hold on to the strangle, I think. I mean, I'm really not down much. I could adjust it, I suppose. I still don't know if I'd love to do that. I mean, I could go with the 65 for a similar premium. I don't know how much should I get for the similar premium. Let's see. $5.02, $4.58. I sold it for. If I sold the 65 and I mean, 45, is that really that much different? No, I don't really like that. So I know my current position doesn't have a whole lot of pop. I guess I had 62% pop. I just needed a little bounce more recently. CoreWeave is beating me up right now. Oh my God. This was one that, I mean, I still like the idea of doing the strangle, but good Lord, this name has been crazy. I mean, don't follow me in this name, okay? If you haven't already. This name moves, and it's been on the go more recently. I have the 120, 190 strangle. Obviously, it doesn't help much when the stock is up $18 today. Good God. But there's a lot of premium in here. And I'm just going to hold on to it. Stocks don't ebb and flow. I mean, is it going to 150, 170, 200? I don't know. Maybe it is. But I'm going to hold on for right now. And hopefully it fades back at some point. I'm not even sure of the day. But I'm gonna keep this for now. It's been some, I got a couple of strangles going on recently. I just put one on in Palantir today. This is one I don't mind if I get beat up to the upside because I actually have in my long-term account some upside plays in here. So if I get beat up on the upside in here, I'll deal with it. I think this is a good strangle, though. The 100, 145. The stock goes another 20. I think the market is going to be flying. And again, my core positions here that I have are, well, I'm short vol in bonds. Just got short that last week, as you guys know. That's actually one of the positions that saved me today. I'm long a M2K contract. I'm long a Dow contract. And I've been talking most of the day. If you've heard me, I mentioned it on the Futures Power Hour. I mentioned early in the show. I would like to get short an ES contract just to sort of hedge myself a little bit. Got some long deltas here with this MIM and this M2K. I guess I'm kind of, the long bond position. I mean, that has nothing to do with stocks. That's just totally different. I feel like this IVR is a little elevated. And I got a directional play with the short put spread. And then I also have an iron condor. And then this crude, again, another thing that's a little bit elevated, implied vol. I got an iron condor in here, directionally ranked. We haven't seen crude move a whole lot outside of the 61 range for the better part of almost 2 months now. So, my upside is 68 short strike. My downside is 55 short strike. I feel pretty good about those. So I'm going to hang on to it for a little bit. The other thing I have upside in is NQ, and this is my like real big upside play. That in case markets just decide to not only go, let's just see, let's look at the continuous contract here. In case markets not only decide to, because like right now, I feel like we're at a very interesting intersection. We're either going to get back to these highs that we saw last week and then springboard higher, maybe even to new highs, or we're going to break down. And we're going to break down back towards this 200-day moving average, which would be below this 512 day, which is essentially the day that we decided we're going to not have as high tariffs on China. So I think that's coming up real soon here. We're going to figure it out, and maybe one of these two catalysts, whether it's the FOMC meeting minutes or if it ends up being the NVIDIA earnings, is going to be one of the two that's going to do us in either up or down. So those are a lot of my main positions I got going on right now. A couple of strangles here and there, a couple of upside plays. Nothing really on to the downside. If you count this core weave, my short call as a downside, and some of these short calls on my strangles downside, well, then I guess I got a couple of downsides. But other than that, I'm sitting pat, and I got a decent amount of cash on the sidelines. I think you have to in this market, because the news changes from day to day so drastically, you just never know what you're going to get. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of, so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number, and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations, where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call. Well, Saz, even the S&P is up about 112 handles. That's about a whole weekly move right there, Saz. Do we just pack it in one day?
121 was the move for the week.
Well, we were just up another 10 handles from that, which would make us 121.50.
Then we're done for the week. Then just pack it up. You're right. Close it down. Shut it down.
NASDAQ up.
The only problem with that is, I'm just telling you right now, if you shut it down for the week, we're not going to have anything to do on Friday at our live show. So you want a little action, okay? Because otherwise, you're going to be looking at each other, and it's going to be dark. Okay.
It's not gonna make for a very good show. I agree with you.
Not gonna make for a good show.
NASDAQ up 460. That's your leader in the clubhouse with the Russell up 46. I guess even the S&Ps are up there too.
They're all up like.
Yeah. Dow up 690. Volatility 1980. Sodnoff under $20. It was
wasn't that the whole key today? I don't think volatility had an uptick the entire day. I mean, this is the best day for short premium that I can remember.
Sure. Even if you came in with it, it was magnificent. And if you started after the opening, it worked out great.
Yeah, but this has been ridiculous for how much it's come in today. Yep, it's really come in. So that part of it's good.
And bonds with a 2-point move, Sadnoff, to the upside.
Yeah, baby. Yeah,
they're up 104, but 2 points from their lows.
Yeah, up 2 points on the lows, but they were just up 108, 109. Got a little. I only didn't want to take very much off. Covered 25% today, but that's it.
It's a good gig.
25% of the short puts. Yeah. It's finally. I'm telling you, bonds have been the best trade of the year. Just buy them every time they go down. I guess if you did that for stocks too, it'd work the same. But I didn't do it for stocks. I only did it for bonds.
What about Bitcoin? What do you do there? You just have to buy it high and buy it and sell it higher?
You don't do anything. You just close your eyes, and it's the most crowded trade, on the board. I think that if you're looking for the trade where there's too many kids on the bus, that's Bitcoin.
And then oil doesn't. Nobody even talks about it anymore.
Nobody cares.
Just under $61.
Literally, nobody cares. It can go. It can go up 10, down 10, and there's. I feel like if you walked in the oil pit now, which there's no pit obviously anymore, there'd be 10 guys in there, and they're all sitting reading the newspaper.
Yeah, it does seem that way. Although Ivy rank is 54, relatively high.
I have positions on in there, and honestly, they did come in today, but today it's one of those days where it doesn't matter where you were short premium. Like, you could have been oil or you could have been Palantir or whatever it is. Every single stock. There was premium took no prisoner today.
Yeah, totally agree. You are right. No prisoner whatsoever. And then you've got gold down $62. I don't think too many people care there. The euro, which was back
I think more people care about. I think gold's more in play than any other commodity. Like gold's more in play than crude oil for sure. Gold premium was probably
51 IV rank. Not bad.
Yeah, and probably our biggest winner today. But I have to tell you, it owed us money.
I think it's more the moves too. I mean, you got almost a 2% move to the downside. You were leaning a little bit short.
Yeah, but it owed us money finally, so that came in a little bit, and I Totally seeing that. But gold was the biggest winner in the commodity world, even on a percentage basis. As for stocks,
a lot of leaders in the clubhouse. Netflix up 22, Tesla up almost 20, Goldman Sachs up 16, Crowd up 15 or so, and that's even
throw a dart. Throw a dart.
Yeah, throw a dart.
Microsoft, Apple, Amazon, Google, everybody joined the party today. The only stock that turned around all day was Palantir, and then the only stock we need to rally, which was UNH, that little pig lotto.
Still down $2 UNH.
I know, it's better than down 4. VIX one day after Friday, I don't know if you looked at this at all, it's down 8.5. That's a big down move. And some of the Chinese stocks were weaker today.
PDD for earnings down 18. That's the big one. You have more earnings today. TA.
I had a position on there. I covered it. I have to tell you, it's a strongly recommend not trading that stock. It is the option markets are wide. They don't trade. Even doing spreads are not very easy.
Hard to get in, hard to get out.
Hard to get in, hard to get out. You're giving up 10 to 20 cents to get in, 10 to 20 cents to get out. I traded it this morning, and in the process of trading it, I just covered it because I'm like, screw it. I don't even want to be in this stock anymore.
Sure.
Also, if you go to your position tab and you click on IVR and you do it in descending order, so you can go from like lowest to highest, you can see what stocks. I did it for my positions today, and just to give you an idea, because I hadn't looked in a while, I had a bunch of positions.
down to a 9, Microsoft's down to a 12. Is that what you're looking at? IV rank? Yeah,
Microsoft's a 12, Netflix a 14, EM's a 14, Baba's a 15, Baidu, Coin. They're all in the 14s, 15s, 12s.
Sure.
Nothing I had was in the single digits, but plenty, down around 12 or 13. I covered all of those trades. I don't like being short in the 10, 12 area.
With IV rank, right? Yes, totally agree. Prudent. Prudent.
If you missed it this morning, we did a really good piece of research on market measures. It aired at around 9:15 this morning, but Central Time. But it's a market measure today on IVR versus IVP. And if you didn't see it, it was one of the best research pieces we put together in a long time. We weren't suggesting necessarily that one's better than the other. We were just showing you the actual details because a lot of people have asked those questions on why to use one over the other. And you can see that there's a small edge in our opinion to IVR, but it's very close. If it was a horse race, it'd be neck and neck. We just default to the same thing, so it keeps everything consistent. But it's a really good piece on it. And if you want to go back and check it out, it's already in our archives. And so, you can see what we did today on IVR versus IVP. That's all.
You put any weight in today's volume, Sadnov? Just over 1 million, even the S&P's relatively low, I think, for a 2% move in the overall market.
To be fair, I think the option volume was heavy today. I think it was the futures volume that was light. I think futures volume was light because most of the activity today, when you get days where the NASDAQ is kind of explodes like today, you will see very light futures volume because, it's not exactly a great scalper's day in the futures. They never had a downtick all day until last 20 minutes. And that was only 10 handles. I think today was much more of a kind of a pure, if you're going to trade today, you probably wanted to trade. I mean, NVIDIA, the volume was heavy because they have earnings tomorrow. Tesla, the volume was heavy. And you can pretty much pick your poison, with individual stocks. I mean, all these NASDAQ stocks, even the Qs were up almost $11 today.
I know, it's unbelievable, these moves. I mean, in the overall market, I mean, you didn't usually you didn't miss the move by a day. If you missed a move, it took all week for you to miss the move. You got stubborn. You know what I mean? If the market had a move lower on Monday and you were thinking about nibbling and you didn't nibble on Monday, you had Tuesday, Wednesday to, get in. There was some back and forth action, something like that. There's none of that anymore, Sadnov. If you want to get in, you got to get in when the fire is burning.
You know, when we were
fortune favors the brave.
When we were trading a long time ago in the 80s and stuff, and I remember the first day the Dow moved $50.
Me too.
$50.
Yeah.
I was drenched in sweat. I was so exhausted at the end of the day. I mean, I must have traded a billion. I felt like I traded a million contracts, probably like 10, 20,000, but it felt like a million. And I remember it moved $50, and we thought it was the biggest move ever. When the stock market crashed, if I remember correctly, it only moved 500 points, right?
Yeah. Yeah. Mm-hmm.
I think the crash, the Dow moved 500 points. The Dow moved 700 today.
Right.
I mean,
the percentages are a lot different, but sure.
Yeah, I understand.
Totally understand.
I understand.
Yeah.
But I'm just saying, it's crazy. The Qs, if they had ever moved 10 points 20 years ago, we didn't have Qs.
You'd have stops. They
would have shut the market down.
They would shut the market down. Right.
Yeah, they would have shut the whole thing down. Circuit breakers would have kicked in. A 10-point move in the Qs is like, a 30-cent move used to be a lot.
Yeah.
But we didn't, back then we didn't have ETFs, but still. All right, let's take a look and see kind of, what else today. First of all, it's a short week with an expected move, like Tony mentioned before, of 121. We moved basically 120 today. So
yeah,
there's your
shut it down. Thanks for playing, everyone.
Thank you and good night. Uh-huh. No, that's your move. And when you get a move like we mentioned, when you get a market like we had today, this is the type of thing where the NASDAQ just takes over. Like it just literally takes over. It doesn't matter. Nothing else matters. S&Ps doesn't matter. Bonds don't matter. Russell, nobody cares. Dow up 700, nobody gives a crap. I mean, for me today, the story was that vol never bounced one bit, and the NASDAQ never, ever even showed a sign of weakness for a second.
Not at all.
Yeah.
For sure. Yep.
I have a Q position.
You had to jump on, whether you were rolling or putting on a new trade. You definitely had to jump on it. You had to be aggressive with your pricing too.
Okay, so I'm going to tell you something. I have a very small Q position. Okay, very small. I have right now. I came in with a strangle.
Are you in June or July?
In June.
Okay.
My strangle in June today. Now, when you come in with a strangle and the Qs move 10 points. 11 points. I'm sorry. 1131. Okay.
Yep.
And I made 2 defensive adjustments over the course of the day.
Mm-hmm.
I mean, I'm sorry. I rolled puts up twice and calls down once. So my first trade of the day was to roll calls down, believe it or not. And then my next 2 trades were to roll puts up. The strangle came in $2.50 after all those adjustments.
So look at the 508 straddle. If you're going to look for a 2% move in the market, you say, okay, I'm going to buy the straddle, whatever it may be. The calls are up $6. The calls are up $4.60. Let's just say $5, and the puts are down $1. You didn't make any money across the board here. This would be an in the money now bullish straddle. You didn't make any money, and you got a 2% move. You think this game is rigged?
Well, I mean, if you're short premium right now, you're thinking it's not rigged, but there's other days when like in other words.
I get it. I'm just trying to show you here that you had a 2% move in the market after a sell-off the way we had, and you don't get paid on that kind of premium buying. Of course, if you bought a debit spread, you get paid.
Well, the funny thing is our research that we did last week showed that the best day of the week to sell the zeros was on Monday, which I'm not sure if you count this as a Monday or not.
Mm-hmm.
Probably.
I got another person who loves to trade on Thursday. Sadnov said this is his best day of the week, so
that means he's buying them.
No, he's selling premium. He likes it. So to each their own. You know what I mean? Is all I'm trying to say. All we can do is go with our own judgment and our own research. You do your own. It works out fine.
Nobody's selling premium on a, let me just see what we got here. Oh my God, this is unbelievable. Nobody's selling premium on a Thursday and making money based on our research. You can buy in it. But I have somebody that wrote to me that said, a long time ago they started buying stuff on Thursday and it has been working. So it's interesting. I'm just looking to see some of the gold actually sold off a little bit.
Gold down $60.
Rally.
Yeah, gold down $60 is $20 off of its lows.
Yeah, $20. I got a bunch of little gold positions on here, so just flattening out for the close. Gold premium got just destroyed today. So this just goes to show you that when it comes in one place, it kind of comes in everywhere.
Sure. The same thing like with markets. Usually they run in tandem. If something's going up, they all go up. Something's going down, they all go down. Hard to find uncorrelated products. Hey, Saj, I know it's not the morning show or like that, but can you give a quick shout out to Tony J? He'll be coming to see us in Atlanta. Him and he's bringing 3 friends. What do you think about that? Say something nice, Tom. Say something nice. The guy's spreading the word to 3 other friends. He's coming to see you. He's excited to see you. He doesn't really care if he sees me. Say something nice. Don't ruin a good friend.
He's a good man. Okay, thank you. We are officially waitlist only for Thursday, so that's a cool thing. Anyway,
did you see today what came out? Did you see the cherry picks talking about predicting recession?
Yeah,
it's messy and inconsistent. So I don't know if you'll be happy to learn.
I think that if you had asked me before if it was messy and inconsistent, I would have given you the exact same answer. It's very messy and it's very inconsistent. If you try to pick any macroeconomic cycle, I'm going to tell you right now, it's messy and it's inconsistent. And
there it is. There's our guys from the cherry picks. Beautiful.
Yeah, it's actually about as random as anything else in this world.
Mm-hmm.
The funny thing about that is that it's a very good it's a good discussion point, because I think I think there's a lot of people that still are afraid to get into the markets because they think that some firm that has a world-class economist by resume has an advantage over them because they know what's going to happen. They can predict a recession where the customer cannot. And we know that that's not even remotely the case. I think since I've been in this business, I'm just curious if anybody's ever predicted correctly a recession.
Yeah, I don't know. Right. It's always after the fact anyway.
Yeah. So, yeah, sure. It's really good cherry picks today. Strongly recommend you check out cherry picks and you can take a look at the research the team put together. It's very strong. They have a bunch of stuff in there, some trade ideas, some crypto ranges. They got a lot of stuff. And we give it all out for free. So don't be shy.
Sure. If you don't like it, well, you got what you paid for.
If you don't like it, you get your money back.
Fair enough. Money back guarantee.
Always
NVIDIA.
Yeah.
NVIDIA, I saw that they had 2 trades in NVIDIA there. NVIDIA has earnings after the close tomorrow, Sosnoff. It only has an IV rank of 27. It was more like 30 and change earlier today. What do you think of NVIDIA? You going to try to play it directional? It's up $3.60 today.
Yeah, I don't know what to do in NVIDIA. I sold a couple of weekly puts in there, not for any reason other than I just wanted to add a couple of long deltas because I had some positions on where I was getting a little bit short, so I just wanted to add some long deltas, and I sold them too cheap. Of course, they're already higher, but I don't really have an opinion. Like we said earlier, I don't love the NVIDIA markets here. I will tell you one thing. There's 2 ways to deal with very low implied volatility when it comes to earnings. I think it's a good time to have a little lesson. the first way to deal with it is you extend duration as long as you can, because if you really want to play NVIDIA and you want to play it for earnings, you go out to, I don't like June. You go out to July or you go out to August. And I know you're going to say, well, those volatility is lower than it is. I don't even care if you go out to September. But our research shows that the further out you go, it's like a way to synthetically add vol. And so I don't mind that if you wanted to, just in the case of NVIDIA, because the IV rank's so low. The other way you play it is you go super short term. So you go to the 3-day, because the 3-day takes the vol out of the equation, right? There's no vol.
It's gonna be price.
It's gonna be price.
So you go a little bit more directional if you go with the 3 days?
Well, you certainly could. I don't like the amount of premium that's in there, so I would go more directional. But I just want to explain this. The way to eliminate, if you want to play NVIDIA, the way to eliminate the low vol in there is stay away from June. You either go July or August, you extend duration. That gives you synthetically higher volatility, just the way everything's priced. Or you go super short term and you take, by going the weeklies with after tomorrow, be 2 days left, there's no vol. Vol doesn't matter. It's just going to be based on price. I mean, stock, if you sell puts, stock goes up, puts go to zero. If you sell calls, stock goes down, calls go to zero. There's nothing else to it.
Sure.
If you go out of duration, then you got to deal with everything else, but at least you can offset your risk. So if you're going to play both sides, I think you extend the duration. If you're only going to play one side, then I think you go super short term. I am probably going to sell a July strangle. I'm currently in a June strangle, but I'm going to take that tomorrow and we'll roll that forward to July. And then I'm short some May puts that expired this week, and I'm going to hold those just for Delta, but I'll decide tomorrow if I want to keep them or not.
Okay. You're allowed.
Yeah. I mean, here's the thing. Here's the thing with markets like this. When you get a market that's up 111 points, 111 handles, and you haven't had a single sell-off all day, and you've had vol in the crapper, the likelihood of this being a full reversal tomorrow is pretty small.
It's 50-50, just like everything else.
All right, I'm going to tell you from my own trading experience, I don't want to be short yet. Like, my deltas are a little bit long here, but I've been selling some futures I think my deltas are long because I think UNH throws you off.
Because of the delta that you have in UNH,
yes.
You mean?
Yes, I think it throws you off.
And it's going to be long delta. I mean, what's the correlation? Correlation really, it doesn't have any correlation to the market. I don't know if it's going to be
if you put a UNH option into our trade bar, it'll have the beta weighted delta, and it shows that it's actually almost 1-to-1.
Oh wow! Okay, I did not know that.
To the SPY. Yeah, I didn't check today, but that's what it was last time I looked. And so it throws you, if you're long, like I am long some UNH, I think it throws my deltas off. Now, UNH.
Well, your delta should get thrown off more often because you're really having a good day today. Matter of fact, that you do best when you go away, and don't touch your positions, kind of thing. Like you just call me up and go, "What the hey, Bat? What's going on?" Like that kind of thing.
If you had a UNH position today, what I can tell you is they destroyed premium in there. Destroyed.
They did, because I have long delta and I'm up money.
Yeah, me too. I have long delta and I'm up money. Yeah, they just destroyed it. So, all right. Now the next question.
Ivy rank is 53. It was 60, 66, 68 last week, and the week prior to that it was 120. So yeah, it has really come in. Helping. Now we need a little bit of movement.
Well, I sold it when it was 150. So.
Oh, aren't you just amazing?
You're starting to sound like somebody else in my house.
Yeah.
And you don't want to be her. UNH. Yep. All right, let's see what else we got going on here, Mr. Batista. We're certainly not. We're not stumbling into the close up.
No. Even the S&P is up 110. We're just meandering.
I have somebody that just emailed me and said, Tom, since you're doing shout outs now, will you be next you'll be doing birthday requests, Mr. Batista?
We can if you want to.
No, I don't want to. No.
Okay, good.
Yeah. All right. Well, we got our boys in the room, and so
let's bring them on. Let's go overtime, guys. Come on. Where are you?
I think a very awkward handoff here would be great.
Let's bring the awkward handoff back.
Yeah, these guys are all too young to remember the awkward handoff. Do you guys remember the awkward handoff on Tasty? Tony and I would do what we're doing right now with you guys, but we would hand it over to Tim Knight, and Tim did not like Tim did not like us going back and forth. He didn't like the. He
didn't play nice.
We called it the
repartee. He wasn't a repartee man.
He was not a repartee guy.
The collegial repartee.
Yes,
yeah.
He did not like it. And then
Not
so when
his
we
thing.
ended that, we did something called the pitch, which was we would let the viewers into our meeting after the close, and then they could see us deciding what we were going to do the next day. And Beth didn't like that. So you guys are option number 3.
Beth hated that.
Yes. So she shut it down.
So it's
Now,
like
you
you
guys
want Tom Cruise, you couldn't get Tom Cruise, you wanted Tom Hanks, he wouldn't do it, so you ended up with Tom Arnold, and that's us.
Something like that. That is correct. That is correct.
Don't flatter yourselves, Dylan. You're no Tom Arnold.
It's a tall mountain to climb to get to Tom Arnold.
That's right. That's right, Julia. You tell them. All right, boys. Well, a nice little bounce today in bonds, in the market, in all the different indices. But as I mentioned to Tony, this was a day where volatility didn't have a single uptick and the NASDAQ didn't have a single downtick. And I think that the tone was set early for this market and no pullbacks at all. Pretty damn strong. Any comments?
You could clearly see it in the over the weekend futures. You could see it all over the place. I mean, essentially, as soon as the back and forth on the European tariffs thing kind of swung and then swung again, you could see it. What's interesting to me, and Chris and I were talking about this earlier offline, the amplitude and the timeline on these things is getting shorter and shorter. The Canada-Mexico thing was a few weeks. The Liberation Day thing was like a week and a half. This was barely 2.5 days. At some point, the market is going to do what it does. It's going to discount this and stop caring at all. And then what happens?
Well,
then it just goes straight up, baby. Then
Right,
you stop
without the dip.
Or
then
down.
Then it's a dipless market.
Oh God. Not that.
The moment you start thinking
Now it's using
that
a
it's a
Zin
dipless
pack.
market
No more
is the
loose
day
tobacco.
everything craters.
6,000 as foretold. We'll probably go to 6,100 because it always goes a little bit further than you want. Then you guys can start getting a little bit short. I've told you this weeks ago. I don't know why you just don't listen.
Because
Why
you're
do you
never
think
right.
You don't listen.
That's what we told you.
Didn't consider that.
Why don't we listen? Okay. It's called
Because of all the wrongness.
No, there's a rule in this business. It's called know your customer. Okay. It's because we know our customer here.
It's so wrong. So wrong. Whatever.
Tell you what, you've been more right than me. I'm still sitting on these puts all kinds of upside down, but at least the dollar is down and bonds are back up. That's helpful.
Well, the bonds for Sadov made him happy today. That's all we've got going on there.
The bonds did make me happy today because this is a really good move finally. And Oh, allergies. And the gold premium finally too.
Mm-hmm.
But today was just a good, today was like your short seller. Short sellers get days like today, like short premium sellers get days like today, like, once every 3 to 6 months. That's it.
So we're done?
We're done. So, Tony, you can take the rest of the summer off. Okay, we'll see you. We'll see you in September.
Nice knowing you guys. Appreciate it. This is great.
Cool. Yeah. You come back September 1st. We'll have another day for you.
I will do my best.
Just in time for the first Fed rate cut.
That's right. Yeah. First Fed. Yeah. Mm-hmm.
Well, finally, yeah, let's see if the bonds can let's see if any of these markets can get a little carry through, because there hasn't been much in the way of follow through on anything. So, tonight's not. I don't think tonight's not the night to go home short. I think, but you might get a shot intraday tomorrow that things turn around on a Wednesday. But I don't know.
Whack 'em Wednesday, sound up. You never know.
Yep. What do they say? Turnaround Wednesday.
No, that's turnaround Tuesday. Whack 'em Wednesday, you monkey.
Oh, I thought it was Taco Tuesday. Turnaround.
I'm always wrong. Uh-huh.
I'll take a turnaround Wednesday this week, but that'll be all right.
Whack 'em Wednesday. Yes, sure. There you go. You got him closing right on the highs. Right where you want them, Mr. Batista. Right where you want them.
No kidding. A whole week's worth of move today, Sadnoff. But you know what? We'll see what else the rest of the week brings for us. We'll take a quick 90-second break. We'll have the overtime boys next. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like, I live in Italy. Yeah. Like we drive like. I drove a truck in New York City. I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh. It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Stocks go up and stay up. Is that the end of the tariff concern? It's Tuesday, May 27th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we take you through the rest of this hour. Trading closes at 5 Eastern. If you're on the platform, on the website, tastylive.com, welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading today, what you think of these stocks that effectively erased the Thursday-Friday price action. Trump announced tariffs on the EU last week, 50%. Just kidding. They're off. We find out over the weekend that there has been a catalyst to help perhaps move along the negotiations, carrot and stick. That was the stick. And so now the tariffs potentially push back. So damage undone. But it's a Buy America kind of day on the other side of it, as the half-life between tariff on, tariff off continues to shrink. We see here that stocks are up across the board, led higher by now Russell, 2.48% to the upside, closely followed by the NASDAQ, 2.25%. Bonds are likewise higher across the board. For all of last week's concerns that the Trump tax bill making its way through the House would ultimately blow out the deficit, comments from a few different Republican senators over the weekend suggest that this thing may be dead on arrival, and forget these new $6.2 trillion worth of debts over the next 10 years. Otherwise, gold metals generally take a step back. Energy meanders mostly to the downside. We see currencies in favor of the dollar, which I suppose is good news. All in all, it's a shortened week, and we're looking forward to NVIDIA earnings tomorrow. FOMC minutes tomorrow, Ilya.
Mm-hmm.
So, Dylan, but let's start with you. We have good news now. President Trump turns the tariffs on last week. He turns them off before the market opens, market rallies. Ilya and I had this side conversation earlier about how the tariff half-life seems to be shrinking, right? First it's a month, then it's 2 weeks, now it's apparently 2 days. Is the market sleepwalking itself into a bull trap by buying every single dip around these tariff headlines, or go ahead?
I don't think so. I've been saying this, I not because I consider myself any sort of super genius. The market is telling you to fade Trump every single time he talks about a tariff. And I think the more relevant question is the one that Ilya is asking, which is, at what point does the blip from the increasingly hollow rhetoric shrink from, a month to a week to now we're down to 2 days? It might pretty quickly, it's going to be 10 minutes. And so my point, I actually think that the more quickly, the same way you fade war in the Middle East last year in the oil markets, and we talked on and on about every time you get an oil spike on Iran, Israel. Well, every now I would say anytime, obviously, I don't even know. If Trump comes out with another rack of tariffs, I think that I don't even know if they're going to listen to him anymore. You're deep into boy who cried wolf territory now.
Well, and this is the most interesting thing is you fade the tariff talk, but not the tariffs. Seems to be the sort of upshot here, because the bottom line has changed not at all from Thursday to now. There was a 20% tariff that was on hold and kept at 10% until July 9th on Thursday. On July 9th, it would become a 20% tariff unless there was a deal. And there's also assorted other tariffs that are still there, like auto tariffs and all of this, which of course are very relevant when you're the European Union and selling cars is a big thing that you do.
Your Volkswagen and Mercedes-Benz.
Right.
And.
Right? So now fast forward to today. What has changed? Nothing. You're exactly where you were on Thursday. The difference is that in the middle of that, you had a freak out saying, oh, now we're going to go to 50 and it's going to be June 1st. Yeah, no. Let's go back to where we were on Thursday. So what's different? Nothing. Why is the market rallying? It's erasing Friday's freak out about things being different. Has anything actually changed? Not really. Not at all. Except for the fact that there really is a 10% tariff on all things since the beginning of April. And somebody really does have to pay that. And that somebody is American businesses. And there's been no difference here in any of that. So you fade the noise, perhaps, but the tariffs themselves will have economic consequences. Paying 10% on average versus 2% on average for the price of imports is a big difference. It's a 5-fold difference.
Well, the damage, if it's coming down the pipeline, it certainly wasn't in the data today. I think it's perhaps worth trickling back over to ES and NQ and looking at what happened at 10 a.m. Eastern here on the chart, Ilya. This morning, the U.S. cash equity opens up, and we have an immediate sell-off to stocks. Equity futures dropped about 30 points right off the bat. But then we get to that 10 o'clock hour, and as we're stabilizing, we get a shot in the arm. Consumer confidence comes in much, much better than expected. Just kind of like the ISM where the median line is 50. It's worth pointing that for consumer confidence for the Conference Board's index, their line in the sand is 100. So we get to 98. 98 is still below 100. Consumers aren't feeling great about things, but the context matters because the prior reading for consumer confidence was 85.7, levels that we hadn't seen since, well, COVID. The expectation was for a slight rebound in confidence up to 87, but we blow it out of the water with a rebound to 98. For context here, this is the largest single month improvement in consumer confidence in 4 years. We see that expectations for a recession are down. Expectations for job losses.
Though it is still indicated.
Expectations for job losses over the next 6 months are down. Expectations for higher income over the next 6 months are up. Current expectations are up. Future expectations are up. Inflation expectations are down. Ilya, stocks love that. It's good news is good news, right?
Yeah. No question. No question.
Give me the bear perspective.
What's interesting is that this is very much in contrast with what the University of Michigan numbers gave us, and those have been, frankly, more reliable because those have really demonstrated the impact that inflation expectations have been having really since early 2021 as the driver of consumer confidence. And so this lines up. Now, what's obvious in these numbers here, to your point, is vast improvement, but the improvement is relative to a panicky May. And so, or a panicky April, rather. And so when you do the survey really matters in April, because obviously we had Liberation Day, we had a stock market panic. When you go and you ask, do you ask earlier in the month, later in the month, how much has settled by the time you ask? Where are you in the kind of initial, oh, good, he stopped short response to Liberation Day? That probably matters a lot when you're looking at sentiment data and you're asking consumers.
So to point that out, then, the cutoff date here is prior to when Trump announced the détente between the U.S. and China in Geneva, Switzerland.
Right.
So there is, for what it's worth, right? Like, I think that's one of the important contours of this.
Yeah.
The data series that we just got today for consumer confidence does not yet reflect consumer sentiment since the pause went into place with China. It does not reflect anything about the EU tariff on Friday that was put off today. This is simply that the Liberation Day tariffs, the window here is the Liberation Day tariffs, are off. The stock market's up. Like that, the context window, I think,
and they're not
really
off, they're
important. Delayed. But doesn't that matter here, though? Because we just went through a window, right? Dylan, we had a window here where the surveys have been terrible.
Yeah.
The PMIs, the ISM, right? The consumer confidence, the consumer sentiment, whichever report you're looking at. You know, sky's falling, inflation expectations through the absolute roof. Everyone, me, Ilya, let's wait to see where the hard data comes in. It's probably going to catch up. But now everything's turning around. It's not fully recovered yet, but it's turning around. Does improving sentiment take the teeth out of the recession argument in the short term if consumers are going to just start spending money again, right? If everything's fine, you just go back to taking on debt, swiping the plastic?
I think this is where you have to look at the University of Michigan numbers just to put in context before we speak that the dates for that survey, which was abysmal, was April 22nd to May 13th. And captures much more recent.
But don't you think, Ilya, that any recession, whether recession or not, the expectation is that the slowing in growth of the recession is very modest? I mean, we kind of, I don't remember the time window, but we've already done this chicken dance a couple of times over the last couple of years, and it never happens. I mean, this is sort of classic wall of worry stuff. Mm-hmm. Obviously, the base cost of international trade is higher, to Ilya's point. 10% is higher than 2%. Let's assume that none of these other tariffs are ever going to manifest, which is basically what the market is saying. Mm-hmm. And let's assume that whatever slowdown is in the marketplace is priced in. I mean, there's no magic insight that we have that the rest of the market doesn't have, that's not aware of the drag from higher refi costs, the drag from higher mortgage costs, the drag in general. And so far, as long as the labor market stays intact, the consumer seems to be bulletproof.
I'm going to poke some holes in that assessment, though. I think what you're describing as the sort of takeaway from stock markets, I think clearly this is what stock markets think. I think that's exactly
the price tells the story, right?
The price tells the story. The question is, what story is it? Because again, we just did this back and forth. Volatile sell-off Friday, volatile recovery today, albeit on thin volumes somewhat, but nevertheless. And we did it all and nothing changed. From Thursday to today, nothing is different. So is it that the markets are discounting economic reality, or is it that they're discounting the tone of the yelling coming from Washington, D.C.? What is it that they're discounting? At what point are they actually discounting economic reality? That they're responding this way to consumer confidence data, I think Chris is absolutely right, is incredibly encouraging. Because the one thing you cannot lose in this entire equation, as we've talked about for weeks, is the consumer. Because if you lose the consumer, you lose U.S. growth. And if you lose U.S. growth, you're in a global recession pretty much by default, because there is no other growth to offset that. So you look at this then and you say, okay, well, great. The markets are responding to the thing that they should be responding to. They are indeed being driven by economic kind of brass tacks considerations. And that's good that they get data like this and they rally on it. But also, this data is an island. It doesn't line up with what we saw in GDP. It doesn't line up with what we saw in retail sales. It doesn't line up with what we saw in the more recently biased University of Michigan survey, and that's why I was so kind of adamant about those dates. That survey ran through May 13th through the end of April. There was, or from the end of April, rather, through May 13th. There was a lot more recency in that data versus this, it seems. And so it is very, very good news if, in fact, the consumer is resilient. But this data is the odd one out compared to other data that suggests the consumer isn't.
You do see here in some of the responses to the consumer confidence survey here today, 36.7% of respondents are saying yes to the question, in recent weeks, have you put more money aside to pay for future expenses? So that is something that is worth watching, right? Confidence is back up. We stepped away from the edge of the insanity, but people are still changing their spending habits, if you will. Have you made advanced purchases ahead of tariffs? 19% of people said yes. See, I'm not so crazy, Tony, buying all that furniture in January. I'm in the minority, but it's not like 1% of people were doing that. Okay, I stand with my 1 in 5 fellow Americans who did that. But you could see 26% of people postponing major purchases. So there are habits that are changing. The fact that habits are changing beneath the surface and yet confidence is rebounding, I think that's kind of like getting threading the needle here. People are preparing and adjusting, but, they're prepared to continue to carry on. They're just a little bit more cautious now. And Dylan, I think you said the wall of worry. I mean, we have a huge wall of worry in front of us, but growth-wise for the second quarter here, I mean, first quarter, you were looking at Atlanta Fed GDP Now growth tracker, which, before you made your gold adjustments, was looking at like minus 2.2%. If you adjusted for gold, it was like minus 0.5%. You look at the New York Fed for Q1, it was plus 2.2%. So split the baby between the two, you're looking at growth that was probably unchanged. And sure enough, the first quarter GDP came in slightly negative. Here, though, for the second quarter, we had an update today from the Atlanta Fed, 2.2% for Q2. The New York Fed had an update at the end of last week, 2.43% for Q2. So, Ilya, we're stocks right now. I almost, I think that we got to go back to where we were in January, February, an idea that we've discussed in recent weeks. Yeah. The market is in a boy who cried wolf mindset. Then it's going to take some actual data to knock this thing down, to show that the impact of the tariffs is more than just verbal jousting. It's actually something changing people's patterns in a negative way. And maybe it is, maybe it's not, but it's hard to argue with, again, if tariffs are not here and you're still going to have deficit spending moving forward, what really has changed in the economy?
This is the whole thing. So I think you're absolutely right. And to sort of take the devil's advocate of my own point. So in this conference board announcement, it says that about half of the responses were collected after the May 12th announcement of a pause on China tariffs. And the cutoff date was May 19th. So, okay, maybe what this data is so close to the China pause announcement that it's more optimistic as relative to, let's say, the University of Michigan numbers, where the cutoff date is again after May 12th, but it's May 13th. So there's not really time for it to really bloom there. Maybe that's what's going on, which would tell you that the conference board numbers are the ones to pay attention to. They are perhaps more reflective, and then we'll see that show up in retail sales. We'll see that show up in the second quarter GDP numbers as consumption rebuilds. Maybe. Sure. And if consumers remain in a chipper mood, businesses have the inventory to stock them, at least for a few months. We saw that there's been massive front running again into the second quarter. We just saw that show up in the PMIs last week, that indeed there was an upswell of activity because we got a new cliffhanger, and businesses again went out there and said, inventory, build. We're going to try to get as much as we can before this deadline. So maybe the ingredients are here, but the tariffs aren't non-existent. It's not like the tariffs are getting canceled. They're not. The tariffs are here. They're here right now. This pause is on effective embargoes on key trade partners. But a five-fold increase in the cost of imports is in fact here. It's been here. It hasn't changed. That will have consequences. But to your point, number one, you can't argue with the price action, and number two, we might have stayed the execution for a while yet, if in fact consumers have decided that everything's okay and they're back to suspending. I'm not convinced that they have, but if they did, and we ultimately find out that the conference board is right here, and it marked a shift, then we might have to wait a while longer for the pain to really materialize.
Well, I mean, I think that's we're going to get the final consumer sentiment from Michigan at the end of this week, but I think that's the important distinguishing line in the sand. It's kind of like with the non-farm payrolls report. It's always during the week of the 12th, that reference week. So why did they announce the tariff pause when they did? Because if you don't get the tariff pause at that particular moment in time, you probably then start to see the dominoes fall of layoffs at shipping yards, and then in trucking, and then in retail. That chain reaction starts at that point in time. So if you would pause the China tariffs right then, and the shipments are resuming, you're not going to get the dock layoffs in the forthcoming NFP report, which means you're not queuing up the shipping or the trucking layoffs in the June NFP report and the retail layoffs in the July NFP report. So it all kind of moves in a line here. Michigan, you mentioned, again, the 13th is the cutoff point. We have another update, the final one coming at the end of this week, but that does queue up then the next Michigan report, Ilya. The next preliminary report that we have is going to be taken in a time period after stocks have rebounded a little bit more, after we've seen that the tariff pause is actually in place and it has time for people to register. I think you could forgive people if you see that the tariff pause is in place on the 12th, then they answer a survey on the 13th. They may not be fully up to date if they're not glued into Twitter or watching the news like the three of us are every single session, right? So exactly right. This does set up an interesting window right now, which I think is the point here, where the data, as bad as it had been on the soft side of things, perhaps we've now entered a window where it's going to be, from a bear perspective, it's going to be fake, positively fake, right? It's going to look better than it actually presumes to be, where there may be the changes in consumption habits happening and people are putting more money aside in the short term. And so we don't see the bite of the hard data just yet. That can is kicked down the road a few more months if that's something negative is going to really materialize and sink in. That may be postponed for a little while here. So you said stay of execution, Ilya. It fits with the whole narrative of buy through July, where the next few months, and given positioning in the market, we do see that there is still some incentive to kind of put this thing up. And once more, Dylan, we've been trained to buy the dip. That dip on Friday was cut in half before the session closed. And for the life of me, I can't help but think that some people knew the pause was coming, because we get a great second half recovery and we now rip to start the week.
I mean, well, the thing that I'm thinking about just listening to Ilya and all the rest of this is how much of the friction of the obviously higher costs, whether it's the higher cost of global trade, Ilya, or the higher costs of sort of marginal higher costs of debt across everything, U.S. borrowing, corporate borrowing, mortgage borrowing, all lent money is more expensive, and all object movement is more expensive. But it's only a little bit more expensive.
Not if you look at the survey data. It's not a little bit more expensive. It's quite a lot more expensive. I mean, the latest PPI numbers show that in a single month, the sort of cost of eating this for businesses was a 1.6% swing in margins in a month. That's a lot.
It's a lot. It's not great. Not great, Bob. Some businesses are absorbing it thus far. What we've seen in the earnings report and the data suggests that not everything is being passed on to the consumer, although some of it is, which, I mean, the
PPI numbers shock negative number in the last setting and sort of where that came from. I mean, that thing hasn't been negative in a very long time. To see a negative month-on-month reading there, and then to see that it's happening because businesses are eating the tariff costs and putting it in margins, or rather taking it out of margins, that's very unusual. Let's put it that way. Most of this is getting eaten. Most of it isn't even getting to consumers.
Well, there seems to be a workaround for tariffs right now. According to there is a rule that you can apply called the first sale rule for customs duties, which is apparently making its way around the news world right now. You can apply, and it's been granted to some companies, where you could say, I shouldn't be tariffed on the cost of goods through the manufacturing process. I should only be tariffed at the initial sale. So, for example, if I'm a company in China that makes T-shirts for $5, and I sell those T-shirts for $5 to a Hong Kong shipping company, as the CNBC article mentioned over the weekend, that Hong Kong company then, sells them for $10 to a U.S. importer, and that U.S. importer then does whatever on them, puts the designs on them, slaps a Made in the USA logo on it, and then sells them for $40. Typically, the tariffs are paid on the $10 transaction when you import them from Hong Kong. With the first sale rule, you can petition to get the tariffs on the initial $5 transaction, which, if that's how companies are going to try to skirt this, then the tariffs aren't going to do anything for raising revenues or, quite frankly, changing anyone's behavior whatsoever. It's all a good story. Dylan, this is obviously a good story right now, but it feels like all this stuff is being digested and put in the rearview mirror very quickly. Again, decreasing half-life. Isn't the natural...
No, I mean, I think the only thing that exists is some estimation of real impact on consumption or labor or profit margins. Which I think is sort of why Ilya's not the only one, but anybody that has that sort of point of view, that point of view is no longer driven by tariff talk. It's entirely driven by the consequences of higher rates and higher costs of doing business on margins, labor, capex, et cetera, et cetera. What I find fascinating, and I don't really have an answer to it, it's why I remain sort of openly bullish, as you both know, is the stock market. I for sure am not smarter than the stock market, and I'm not saying anything the stock market doesn't already know. Why does the stock market not more cautious about the higher cost of doing business, Ilya?
Well, I mean, I think this is exactly to Chris's point. I mean, you get the kind of data that we see today, and you go, the economy is 68.5% consumption. If consumers are okay, everything's okay.
Are consumers okay, though, with delinquencies starting to go up?
Exactly. Yes. Thank you. Those of us that are watching the consumers and go, well, this is a nice report. Cool. It's also the odd one out of the recent data. And so maybe its timeline bears more attention, be paid to it, because it's sort of a little bit after the China pause than, let's say, the University of Michigan, or maybe that skews it and colors it because of the proximity. And this sort of goes back to what Powell has been saying the entire time. This is what the Fed has been saying the entire time. Segue, we have FOMC minutes tomorrow. Those FOMC minutes will be very interesting in this context because the Fed met May 6th through 7th. So by then, the entire Liberation Day seesaw was so well underway that the markets had already rallied something like 19% off the April low, and 60-odd% of the sell-off from mid-February was already erased. So if the Fed thought, oh, goody, everything's okay, the markets have unclenched, they wouldn't have sounded the way they sounded. Powell was patently upset. and taking all kinds of direct shots at the tariffs. In the press conference, the statement was very sharp. So why is it that Fed officials were so annoyed? Maybe it's just the usual Fed reaction function difference from the markets. The Fed has a longer view. Markets are more volatile. Maybe that's what it is. Or maybe there's more. But the business cycle consequences of this is really what it's all about for me now. If you get a retail sales number now that looks weak, if the ISMs next week look soggy, that's going to start to say some things. And in particular, the service sector ISMs, because that's where consumer demand is. If we start to see really weak services numbers out of ISM, let's say next week, that's going to start to tell us some things. If the May consumption data doesn't recover, because in April it was no good. If in May it starts to recover and this consumer confidence data is right, we wait, the stock market waits until there is a real economic threat. And until then, it's all theoretical.
All theoretical. Yeah, well, the path of least resistance, again, we look at the other side of the CFTC cut report coming out of the weekend, and there's a slight deterioration in the number of shorts held, but it's not substantial. Among speculators, the net short position is about 51,000 contracts on the short side. The week prior, it was sitting in the neighborhood of 62,000 net short contracts. So this is a market. Structurally, people just don't believe their lying eyes. They don't really think that the market's going to keep going up. And it seems to be the pain trade. And that into the summer months, Dylan, it feels like
I just don't see how this
higher.
is not a classic wall of worry. I mean, this just screaming, there's lots to worry about. And the market is like, run them. Run them, run them, run them.
Run them hot.
Run them hot, run them high. AI is your friend. Labor market is strong. Global trade is intact. I have lived most of my life thinking the way Ilya thinks. This is a challenging thing for me mentally because I think the market has lost its mind. But what are you going to do?
You can't argue with the price action.
If you can't beat them, you know what they say?
Well,
I am.
Just because there's been a total shift in signaling from the Trump administration and surrogates and people who are not in the administration or officially surrogates, but there are people who parrot the party line who operate in media, including FinTwit. And Elon Musk last week talked about how, given Doge's continued success, Elon Musk now can turn his attention to enhancing productivity because the only way that we're going to get out of this deficit and debt spiral is by growing faster. I couldn't help but notice that someone who goes by the name of Geiger Capital on Twitter, which if you're on Twitter or X, whatever, and you're in the financial Twitter circles, you probably come across this guy's tweets. He's been someone who's been very sympathetic, if not outright supportive of Trump, going back to last year and years prior. He put up a new blog post today called Run It Hot. The Trump administration has abandoned fiscal austerity and is now trying to grow our way out of debt. What happens next, and what does this mean for markets? Without going into the specifics of the blog post, because I'm not going to I haven't read the whole thing. I just couldn't help but notice this headline cross my terminal earlier. It does comport with what Elon Musk is saying, right? Like the perception here is that the administration saw that getting cuts from Doge was too difficult. Because in reality, the government is actually run fairly efficiently, and I'm going to beat this drum forever. What they found did not amount to fraud. Fraud is illegal. No lawsuits have been brought. They just found spending that they didn't like on programs they didn't support. That's fine. New administration comes in, clear the deck of spending priorities you don't want. That's not unusual. They promoted it as some crazy stuff, but reality, no fraud. So what happens next? Well, they can't cut $2 trillion of spending through Doge. So I guess we're going to do the whole trickle-down economics thing, Dylan. We're going to try to grow a way out of this. The tax cuts are going to give more money than they cost, as it were. Are we doing the Biden policy all over again, where we get all of this government spending after the markets recovered?
No.
What's the difference this time?
No, it's bigger than Biden. I mean, not to go all political historical on you here, but I would go back to New York State Governor Rockefeller. Basically, once the bond market was invented in a meaningful and liquid fashion and really brought to bear, I guess, in the 70s, every single politician since has always come with an argument that ultimately ends with, we can run a deficit now, we'll fund it with the bond market, and we'll grow our way to prosperity. And the reason they do that, whether it's with a Republican paint job or a Democratic Party paint job or a governor's office paint job or a White House paint job, is because it's much easier, much more fun, and much more appealing to voters short term because more money flies around. I can give you more tax cuts. I can give you more subsidies. I can give you more grants. I can give you more money in 10 different ways. And the reason I can give you more money is because at some magical point in the future, there's not going to be an issue. And I think we're now just moving to the Republican paint job on what Biden was running it. Clinton ran it. W ran it with his tax cuts. Obama ran it. Everybody runs it. Who wouldn't run it? As long as politicians can continue to get reelected on promises of more money now, and we'll make it up later on the back end at some undefined future point. And then basically the only people who oppose it are the party that's out of power, that inevitably cites the spiraling deficit because it doesn't get made back later, because there's always an incentive to spend more, because. But the party in power always tells a story of, we'll give you more money now, whether it's more pet projects or more tax cuts, it depends on the politics. And we're sort of right in there. I think that the delusion on when you talk about that Twitter person or whatever, there are constituents who are voters who genuinely believe there should be a more conservative government that spends less money, right? And it's always that sort of the veneer of discipline is also very politically appealing until you actually are the person on the stick. And then the veneer of discipline goes out the window and it becomes a story of brilliant investing by this new political leadership that knows exactly where to cut taxes to ensure future prosperity. And by all basic historical accounts, it's all unadulterated bullshit. Whether it comes out of Biden's mouth, Trump's mouth, Obama's mouth, W's mouth, Clinton's mouth, doesn't matter. Bullshit, 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 bullshit. But everybody loves it because more money now. And this is the sort of thing that fuels the madness of Bitcoin and gold and all those, everybody sort of the catastrophizing of the future of the currency, because ultimately the only way you can really pay off a deficit like this is through contamination of the currency, which is what we saw in 2009. We saw it again in 2020. We'll see it again at some point in the future. And the only reason the American currency hasn't been meaningfully contaminated, as we all know, is because there's no alternative, but it sure as hell has supported the chart that's in front of us here, which is this catastrophic idiocy known as Bitcoin, which is a direct reflection of decades of terrible policy making by the government that leads people to idiotically think that a currency based on electricity and computers is more fucking valuable than the currency than any currency of another country. It's the stupidest thing that's ever happened. Doesn't mean it won't go up more. Not that I have a point of view. Excuse me, please forgive my language.
Not forgiven.
Children, no.
I wholeheartedly endorse all of that, just for the record.
Yeah, I think Ilya's favorite part was the actual cursing.
Yes, indeed.
I apologize. From now on, I'll swear in Italian. I apologize.
That's even duly noted.
You do in Italian, I'll do in Russian, and then this whole thing will just go completely off.
My favorite Russian profanity is blin. where it's like the very benign grandma profanity.
Oh, very benign.
The pancake.
Yes, very benign. And
anyway,
and rooted in somebody wanting to say a wholly other
different
thing.
word. It's like mangia in Italian as an alternative to some more profane language that I shan't use because I feel like I've already gotten crossways of our friendly neighborhood host in New York, and so I don't want to dig a deeper hole at this point.
No, cursing is how you show you're authentic to people. That's what Democrats are doing these days, right? Show you that you're real. You curse. Just like a regular old sailor.
Would it be cursing a lot Russian more, and Italian? Does that make? What's that, Ilya?
You're cosmopolitan.
A lot
elitist.
more.
Yeah, well,
I almost like right on cue.
Yes, like it's right on cue. It's pathetic.
Anyway, I mean, the point is, of course, Trump. I mean, the thing is, for all the beauty that Trump represents for cable news ratings, for instance, how the whole thing has become painfully predictable. Tariff threats, tariff backs off, tax cuts. Deficits, we'll make it back later. I mean, if you closed your eyes, you'd just think it was your standard plain vanilla Republican presidency.
It's a what can you say? Strip away the people's name at the top, right? Strip away Trump's name. It's a George W. Bush, George H.W. Bush, Ronald Reagan type of spending plan. It's not. There's a few things
I think is actually deeply insightful.
There's a few things policy-wise, obviously, when it comes to Department of Education or canceling the student visas today. Like I thought he was going to staple a green card to every diploma when he was campaigning back in the fall. He's going to, but the thing is, there's going to be no more STEM students in the country, so can't staple green cards to them. But obviously, I have very specific issues with those because I think that harming that is going to hurt our long-term productivity. I digress.
I mean, that is totally counterproductive to a million things. And it's a direct assault on America as the intellectual magnet of the world for a long time. And
it's a damn shame.
I'm assuming it's openly racist.
If we're going to reshore manufacturing, how can we have all these educated Harvard grads with their high-paying jobs? We need people to sew Nikes. This is the new regime. If they have Harvard degrees, they're not going to want to go do that. How are we supposed to reshore manufacturing then?
It's bad for the country's long-term productivity. It's just not. It's not good policy. But aside from there's some of the things that I would consider egregious. Just look at the deficit spending. The money's flowing into the market. Is it flowing into the market in places that make the economy more productive long-term? I don't think so. I don't know what removing SNAP funding does for hungry kids makes people more productive. Studies show that it's actually more difficult to learn when you're a child in school if you're hungry. So one of the reasons why we want our kids fed is so that they do a better job learning. And kids that are smarter and get better grades tend to be the kids that start the companies that employ people that live in this country. So I'm all for feeding kids, right? So again, setting aside some of those differences, deficit spending is up. It's more tax cuts for wealthy people. It's more tax cuts for corporations. It's potential deregulation coming down the pipeline for the banking sector. The tariff stuff is obviously crazy, in my view. It's not going to accomplish any of the things that Trump says it's going to, and obviously the rationale keeps changing on a day-by-day basis at this point in time. But it's becoming just standard Republican fare. Maybe the GOP senators, Rand Paul, Ron Johnson, who over the weekend said things like, this budget shows that direct quote, somebody has to stand up and yell, the emperor has no clothes, Rand Paul said. Everybody is falling in lockstep on this pass the big, beautiful bill. Don't question anything. Well, conservatives do need to stand up and have their voices heard. So when you get the Rand Pauls and the Ron Johnsons and the John Thunes of the world who are then steering the ship and not the Mike Johnsons and Donald Trumps, the ultimate bill is just going to be Republican classic, Dylan. Will it not? If it's Republican classic with the chaos of Trump tariffs on the side that we continually fade, financial, What's standing in the way of financial assets right now? Banks are near their all-time highs. What wall of worry, I guess?
I mean, the wall of worry is everything's more expensive, rates are higher, tariffs are 5 times more, and the presidential rhetoric is lousy. You know, there's lots of reasons, and mortgage rates are higher, and corporate refi is higher, and American debt and deficits are rising, and American cost of American borrowing is more, and the dollar is weaker. I mean, I can tell you a real lousy story.
I think what
all that.
I think what Chris just said is actually incredibly insightful, and I want to frame it in terms that there's a really great book out there. It's one of several that talks about the cyclicality of U.S. institutional development. That essentially in the U.S. there's a kind of 50-year or so-ish institutional cycle where, and the latest book I read on this, although there's a few of them that kind of take this view. I mean, Dalio talks about a 50-year-ish cycle of the many cycles he talks about. There's another one called The Fourth Turning that sort of talks about this in similar time frames. The one I'm talking about is by George Friedman, who's a geopolitical analyst, and for a long, long time, he used to run a thing called Stratfor, with many acolytes that came out of it. But the book that this is called The Storm Before the Calm. And it talks about how at every major turn of these things, what you have is a failed presidency in the United States where whatever issue needs addressing is addressed with old methods that ultimately fail, and then the revolution commences. Be it Reagan with deregulation and lowering costs and the focus on basically fighting the inflation of the 70s through every possible channel, through the channel of reducing government, through the channel of orienting regulation on business to shareholder value and efficiency and lower costs, globalization, all of these things. It's the more spend-thrift FDR approach. Spend a bunch of money and lift the economy out of the recession. That then is, of course, amplified by the World War, which then gives you the inflation on and on and on and on and on. So every fix produces the next issue. Every subsequent issue is fixed, and a new one emerges. If this is the Republican regular, the sort of Reagan baseline approach to fixing the current issues, when in fact what this administration was elected on was a hope for radicalism, then, and in fact 2025 seems to line up with this 50-year cycle, 2025, 2026 or so, then what we'd be looking for within this framework is for all of this to fail. And for the next thing to, and for that to be the catalyst, for that upheaval to be the catalyst for some real kind of lasting change.
Oh God, Dylan, he just said that Trump's budget is going to give us President AOC in 2028.
I did not say that. Again, new paradigm, something different, something we haven't seen.
Oh, President Radigan in 2028.
As long as it can be done. Listen, if Trump can do it from Mar-a-Lago, I'll do it from Milan. Giorgia Meloni's America's best friend in Europe.
It's true. She is the one who got Trump and Ursula von der Leyen to...
Von der Leyen.
I don't know. I don't talk so good, Elia, as you've made me feel very distinct in recent weeks. Yeah, she called President Trump over the weekend at Meloni's request, prodding. So
Oh, really? That's a fun factoid.
That's apparently what the news is. Listen, Italy is
She's like
inserting
the
itself
Trump
as a player.
whisperer.
Yeah, she's helping with the Iran negotiations. Obviously, hosting Vance after his visit to the Vatican to meet the new Pope. So, positioning themselves very neatly here, moving forward. But Ilya, on the other side of all of this good news, because one of the pieces of good news this weekend was that Oman put forth a recommendation that Iran suspends its nuclear enrichment operations for the next 6 months to iron out a deal with the U.S. It does appear that some geopolitical tension is leaving the sphere. It's only a 0.73% drop in oil today, despite the fact that the tariffs are lifted, which is ostensibly supposed to be good news for something that's growth sensitive like oil. Oil and copper both weaker. Is this a tell in the market that tomorrow may be a bit of a less optimistic day for stocks, which are just full of joy and endless hope here on this Tuesday session?
I'm not buying today's rally, and it's not because I'm bearish. It's because it is flimsy.
What do I need to show you, Spivak? What do you need to see? What?
S&P 10K.
I need to see that the rally is built not on the president manufacturing a tempest in the teapot and then taking it away within 48 hours. I need to see that it's rallying on real economic outcomes.
Oh, really? I got bad news for the next 3.5 years for you.
This guy.
No, and also I need to see risk reward.
I mean, what is this?
No, and that's the most important thing. Look at the
a
risk
long
reward.
3.5 years.
You're at the high, right? 6,000-ish, a little bit above, is the swing high from, 5 days ago? You're at it. Are you going to buy into the high? At least give me a break above it. Show me something. Give me a little something. I mean, even just on an intraday, like not intraday, obviously, we're closed today, but even on a day-to-day basis, if you were looking at ES futures overnight and you said, oh man, what a strong rally, I better layer something on before I miss exuberance at tomorrow's U.S. equity cash open in the futures overnight. Is that a risk reward bet that makes sense? In my mind, absolutely not. You're squarely at resistance. Why would you be a buyer here? Assuming you're not a buyer already, of course. If you've been holding, Godspeed.
Why buy here? Well, I mean, we do see that both for ES and NQ today, we get a nice little bit of a rally off of pivot levels that have established themselves going back to last October, November. January in ES, that's north of this 58.50 area. In NQ, it's a little bit different, but we scaled that last week. This dip, not as deep.
These are very auspicious levels.
This is a place where the market's turning, right? Like how, if you punch through last week's highs, I think that's really the operating agenda here, because NVIDIA earnings tomorrow, hey, that's a curveball. Could they beat? Obviously, I think the market cares about the guidance. Then again, NVIDIA today, it's following a path where, like other companies that have seen their earnings beat, it's trading higher going into the earnings estimate. So, you look at the NASDAQ right now, you get through the highs of last week, 21,550. What's standing in the way, technically speaking, of then an attempt for the highs? I don't know. But conversely, if you see last week's low that was carved out on Friday broken, you're looking at the 1 month moving average potentially breached on a closing basis for the first time since, April 22nd here in NQ. The same thing can be said for the S&P 500, where if you breach last week's low, you're then below your 1 month, and we haven't closed below the 1 month since April 23rd. The momentum profile looks dramatically different. You've lost that levitation in the market. So heading into tomorrow, volatility is really low. NVIDIA earnings, we're looking for like a $7, $8 move and change. You're already at 3.21% today, 27.1 IVR. Tom also noted there's not a lot of call skew here in the market right now, barely anything if at all. So before you could go $20, $30 wide, sell the outside calls, this thing could still beat, but because of the IV crush, you could still make a little bit of money. That's not necessarily the trade setup heading into tomorrow. It's a little bit of a unique situation. So Ilya, as we close out the door here, you have made mention, it feels like for every NVIDIA earnings cycle for the past year and a half, how the bar keeps getting a little bit higher. They have to not only keep beating, but they have to guide higher into these astronomical numbers moving forward, which at a certain point you kind of reach your ceiling on your total addressable market for a year ahead window. What's the deal with NVIDIA for tomorrow? Do you find this setup to be compelling? I'm not saying necessarily go long, go short, but how should traders approach this knowing that there's no significant upside call skew? And as we all know, the tariff talk is certainly going to impact their guidance, which all of us know.
Yes. I think it's a sentiment indicator because obviously this is a huge chunk of market cap. So it's an event risk that the market at this point really treats as like a macro risk, as like a big piece of data or a Fed announcement or some such thing. And ultimately, they've been losing their capacity to surprise higher because the market has pretty effectively benchmarked them at this point. And if what we just saw is instructive, market loves a good headline. The market is not in a kind of broad-based thinking mindset, it would seem. They jumped, to your point, on the consumer confidence data today, that they didn't really look at the breadth of things. One piece of data. Good. Okay. They had a quick 48-hour seesaw on maybe more tariffs on the EU, maybe not. Hey, they liked that. So maybe the headline is good enough, but it seems to be really a data point by data point kind of a thing. And this seems more than anything to do with not so much the prospects of AI or NVIDIA or anything like this, and more just a sentiment check. Can you keep the NASDAQ up on whatever number this is going to be?
Dylan, we are done here with overtime for this Tuesday. We're going to be back Wednesday, Thursday this week. Obviously, tomorrow we'll be able to cover the NVIDIA earnings, so people should be tuning in then right after last call, as we do every Monday through Thursday, not this week, holiday shortened week, but as we typically do every week, 4 p.m. Eastern, 3 Central, right after, 4 p.m. Eastern, 3 Central, right after last call. So with that, overtime is out of time. For Ilya Spivak in San Francisco, Dylan Raddy in Milan, I've been Chris Vecchio in New York. Good luck trading. We'll catch everyone tomorrow after a brief break. Ilya Spivak's next with Macro Money. He's also back later on for The Price of Truth with Victor Jones. So be sure to tune in. Go Knicks.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Have you ever been banned from any place?
Probably.
Just a delivery room? That was it? No other place?
Oh, the delivery room, yeah. Twice.
That's the only one. Twice.
Yeah.
Two-time offender.
You know, my wife gets banned all the time from places. She's confrontational, argumentative, and violent. When she got banned from that one Italian restaurant that was around the corner from her house, that's the only time it really pissed me off. They had the best chicken Vesuvio, and I had to go in there and just say, listen, you banned her, not me. I'm still good, right? You know, they're like, yeah, you're okay.
Are you really going to Buc-ee's?
Yeah.
Will you film it? You film yourself going in, you're like, what up everybody, it's your girl Sazi. I'm here at Buc-ee's. And then you get the food, and then you get to eat in your car.
You eat in the car, you get something on you. That's your shtick.
Yes.
You got to do it.
I never spill.
I love this.
Yes.
I know, right?
Do you know what that's like to go out to a tasty show and you prep your whole speech? You come out there and you see all these people that have driven for miles and miles, and the first thing they say is, "Where's Tony?" And you have to go,
exactly.
He's not here. And the look of just, it goes from excitement to sheer disappointment in an instant.
I've never heard one person say, "Where's Tony?" I've been on the road for 25 years.
You literally, the whole concept you had last year was "Where's Bat?" That was the whole concept of your show.
They did a show about where the bat is without bringing the bat.
I hate to say this, but a buddy of mine owns a mountain there.
Yes.
Owns a mountain?
Something like
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
Stock markets surge after the long weekend break. There's a number of headlines driving them, but once again, the Federal Reserve has come into the purview. And the question is, do these buoyant markets care? That's what we're going to unpick here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to take a look at what these markets did here and try to figure out why they did it, and then look ahead because we do have some critical event risk now lining up in front of us. I'm going to try to see if we can make sense of what it means. So let's begin here with just a quick look at where the S&P 500 is here as we start the week. We can see last week things got a little bit soggy. We ran into resistance there just ahead of the 6,000 figure on this continuous contract for the S&P 500. That's right here. We can see essentially coming back in to test the underside of this narrower congestion range, the kind of last line of defense here on the way up to retest the year-to-date highs, and recoiled from there and headed lower. And you can see we actually extended quite a bit lower, or attempted to, on Friday, around the idea that U.S. President Donald Trump threatened to impose 50% tariffs on the European Union, ostensibly because the talks to reach some sort of a trade deal between the U.S. and the bloc were going, quote-unquote, nowhere. We'll recall that the tariff on the European Union that was announced as part of the so-called Liberation Day announcement that triggered this panic right here. That's been on pause since this decision by the president to put rates above 10% on ICE until early July 8th, 9th, give or take, depending on time zone, as it were. And since then, obviously, we've seen a blistering rally. Apparently, talks with the European Union were not progressing fast enough for the president's liking. And so he said that, never mind the pause, we're going to go to 50% tariffs by June 1st. And that seems to have been something of a forcing function, because over the weekend, the president apparently had an excellent phone call with Ursula von der Leyen of the European Union, and we've now had a pause back to the status quo of the early July cliffhanger versus the early June one. In other words, Friday's tempest in a teapot was unwound. And so the markets find themselves booming here after Friday's sell-off, and essentially end up somewhat where they ended up midweek last week, as the rally stalled again just around the 6,000 figure. It certainly didn't hurt, and this is perhaps a little bit more substantive of a data point here, that the conference board came out with consumer confidence numbers that showed a potent rebound in May's numbers. Now, these are still sort of woeful numbers in relative terms. We're bouncing off some of the worst levels we've seen since COVID, so not exactly something to scream about, and certainly well below where we were last year, the year before, and even in 2022 amidst the early parts of the inflation scare. We can see that inflation scare peter out here mid-2022 as an influence on consumer confidence. Obviously, this is the inflation scare in its most pronounced. And then things anchor as the Fed's rate cuts, or rate hikes rather, start to work, and we start to get anchoring here, and things improve. So obviously this is not exactly the best overall reading, but clearly that there was an improvement in these particular numbers, in May's numbers, and that it was consumer confidence that steadied. This is, of course, a very welcome sign, and we can see that here, not only in the assessment of the present situation, where there's a mild uptick, but much more importantly, a sharp pickup in the setting for the expectations index. Now, this 80 line at the 80 level for this indicator, this is where a recession is still indicated. And the fact that we're still below it is not a happy sign at sort of face value. But nevertheless, the markets really liked seeing this, and for obvious reasons. And this is where you get into what seems to really drive the current situation. Now, looking back at first quarter GDP numbers, we're going to get a revision of them later this week. What we saw was a shock decline in GDP. It was down 0.3% year on year. That's this black line right here. And while there was, of course, a ton of focus on the front running of tariffs that gave us this massive surge in imports as well as in inventories, that's this jump in investment. This is business investment in inventory. That's the main driver of this. The real and most important takeaway here was the very small contribution from consumption. In fact, this was the smallest contribution in almost 2 years, going back to a reference point of the second quarter of 2023. And of course, the reason this is so vastly significant is that consumption is overwhelmingly the biggest contributor to economic growth. Breaking down GDP by components, we can see consumption is 68.5% of the total. So you really had to have these massive swings in imports and in inventories for those things to have a meaningful impact, because, frankly, they're kind of an afterthought in the overall scheme of things when consumption is that dominant. In fact, when we take the difference between exports and imports, which is how we arrive at their net contribution to GDP, we arrive at something that's barely 5% of the overall total, which obviously is a much smaller influence, and you would need a 40-some+% swing in this contribution to get it to meaningfully alter the calculus. And so when you get a consumer confidence number that suggests this part of the equation is holding up, that's, of course, encouraging. Because if you were worried about the impact of tariffs on the economy, this would be the real world data that you would be looking at. To say that we've gone and arrived at a place that's a legitimate economic threat. And you can and this would be the hard data measure of seeing that. And of course, the first quarter in this sense was very troubling, because what it told you is that consumers are retrenching. Now, if we look at the University of Michigan version of the same data, it is quite a bit more scary. And this is perhaps because the cutoff on this survey is May 13th, and the cutoff on the consumer confidence survey from the Conference Board is May 19th. So the pause in tariffs, reciprocal tariffs on China, announced on May 12th, perhaps is much more pronounced in the Conference Board's numbers. There's a little bit more time for it to digest versus these numbers here. And we're going to get these numbers revised at the end of this week, so it'll be interesting to see which way those revisions go. But what we certainly see here is consumers are not of one view, depending on where you look. The University of Michigan would tell you that conditions are deteriorating, and of course, the weak retail sales numbers we saw for April would tell you a similar story. In that sense, this Conference Board data is, on the one hand, maybe a standout, maybe doesn't quite capture everything and is a little bit odd relative to everything else, but on the other hand, perhaps it is more recently biased and therefore more telling of what's actually going on. And so the story here becomes very interesting indeed, because if we're going to get this kind of seesaw on tariffs this, tariffs that, and ultimately we get ongoing evidence that every time one of these headlines emerges, it is a negotiating tactic, and the baseline position remains a 10% tariff floor, which has been sustained in all of the deal making that we've seen so far, and would amount to a 5-fold increase in the average tariff from 2%, then it is the consequence of that hard part of the equation and not the fuzz around the headlines that ultimately is going to show us what the markets need to see to properly price risk, and whether this bounce here is a pure sentiment reflection after people were biting their nails over the weekend, or if in fact this is a more lasting sort of thing. And for what it's worth, we have seen that in the data that we just saw in the PMI data update from S&P Global, there has been a little bit more of a reprieve, let us say. Now, the trend is still toward a significant slowdown around all of this commotion since the beginning of the year. We can see in the second half of last year, the U.S. economy was growing at some of the fastest that we'd seen since 2021. And as ever, these are PMIs that are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go below, the faster the contraction. The further you go above, the faster the expansion. And you can see here, not only do we have expansion for the composite index that takes in both manufacturing and services, which is about collectively 80-90% of the economy, but this is some of the fastest activity growth for this whole since back here of late 2021, early 2022. Since then, obviously, there's been a meaningful slowdown and where you've been flirting with standstill over recent months. But the May numbers were encouragingly a little bit more positive. Though as we dug into them last week, we saw that most of this seemed to be, again, inventory building. More front-running of tariffs now with these new deadlines. Whereas employment remained in contraction territory, and most importantly, the prices influence on all of this has been surging. So with this in mind, we turn to the event risk immediately in front of us. Because the question as to whether markets optimism is sentiment driven or if in fact the markets are shrugging off the economic consequences of increasing the cost of imports fivefold, that question remains open, and for no one perhaps more so than the Fed, which is struggling to set policy in these circumstances. Now, we're going to get minutes in the next 24 hours from the Fed's May meeting, which took place on the 6th and 7th of May. And of course, by the time we get to the 6th and 7th of May, and this is the policy statement from that meeting, we can see that we've unclenched most of this decline. So we're somewhere over here when the Fed meets. We've rallied close to 19% off the low, and we've erased something on the order of 60% or so of this overall sell-off, which is obviously not a bad place to be. The markets have clearly improved here. They've clearly decided that this level of panic is untoward. But then when you look at the tone of the statement here, it is far from channeling the same perspective. Uncertainty around the economic outlook has increased further, the statement says. The committee judges that the risks of higher employment and higher inflation have risen. That is to say, there's been an adverse turn in risks to both sides of the Fed's mandate, and the risks are in conflict. That is to say, we are seeing that Fed officials are worried which way they're going to take rates because they don't know if what they should be prioritizing is the risk of higher inflation and thereby keeping rates elevated, or prioritizing the risk of higher unemployment and speeding on rate cuts. And we can see that even going back to the March set of forecasts here, the last time the Fed updated its expectations, we can see December to March, we see lower growth expectations, higher unemployment expectations, higher inflation expectations. But the outlook for rates is unchanged. And the way the Fed justifies this when they meet, and what Fed Chair Powell explains at the press conference following the March meeting, and more tersely, as it were, following the May meeting, is the Fed just doesn't know. It knows that typically higher tariffs are inflationary and negative for growth, but it doesn't know how this particular episode is going to work out. And so with unemployment relatively low in the 4s, and with inflation relatively anchored in the mid-2s, there's a sense that now is not the time to overreact. Now is not the time to do much of anything. Let's sit back and see what will happen. And that's an interesting perspective here because, of course, we can see in the tone here, and it was much more readily apparent in the feisty display that Fed Chair Powell put on at the press conference, whether there is, in fact, something more here. Because clearly policy officials are not nearly as happy with what's going on as the markets are by this point. Clearly, they think that the situation is going in a worse direction, at least as far as uncertainty is, while the markets are clearly recovering and saying this is not as big of a deal as we feared. Now, as far as the Fed's forecast here, we can see they're looking at 50 basis points this year and next. If the current rate, we can see right here, is about 4.4, then what we're looking at here is from 4.4 to 3.9 is 50 basis points, and to 3.4, obviously, is 1% or 100 basis points. And if we take a look at the cumulative setup here, there's 44 basis points that's priced in for this year, so almost in line with what the Fed is thinking, a little bit light, and 52 for next year. So the market is a little bit shy of where the Fed is, but for the most part, these are rounding errors, and there's a little bit of lightness in this year's forecast. So 44 versus 50, the full 50 is there for next year, so you're about 5 basis points shy on the total, 95 versus 100. So the markets and the Fed are basically in line. And when you look at the current way that this is baked in here, you can see you don't really see a rate cut until you get into this September-November area. From here, basically through and into the fourth quarter here, you really don't see significant movement. The Fed is anchored, and as it happens, this is a much more hawkish setting than we'd seen since the beginning of the year. Now, the end point is a lot more aligned now than it was, let's say, in March. And of course, March 19th, we can see that's right here. So it makes sense why the market is much jumpier here than they were earlier in the year, and indeed now. But what you now see is a similar endpoint, a similar 50 basis points in cuts, but whereas at the beginning of the year they were going to be applied relatively smoothly, here there's this sense that the Fed is concerned about tariff inflation risk and so won't act. And so it's really interesting now to then consider, why is it that the Fed is so upset in May? What is it that they're seeing? Is this the usual disconnect between the markets and the Fed, where the markets are more volatile in their reaction function to the news? They're more jumpy. The Fed is more long view oriented and is concerned about the broader sweep of things. Is that why they're more so concerned and the market's less so? Or Are they actually seeing something here that makes them worried about this? Are they actually seeing something that's more untoward? So in looking at these minutes, it'll be very interesting to see why Fed officials are concerned. What is it that got them to be more so combative in May than they were in March, when in fact the upshot of the story was about the same? And here, a look at the bond market is instructive. We can see the growth scare begin in mid-February. This is the S&P going down as that happens, and we can see inflation expectations go down with that scare, reflecting that the slowdown in the economy will overwhelm whatever upward price pressure there is from the tariffs. Essentially amounts to a call for recession risk. We can see that sentiment has recovered substantially. The break-even rates have not. They're still suggesting that the path of least resistance is still in the direction of economic weakness. They seem to have made up their mind. And if that starts to show up more acutely for Fed officials, well, then this might start looking like it's offsides. And the markets may well return to looking and watching for signs that the economic pain is arriving, this tariff headline or that notwithstanding. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. A little bit of a shorter week this week because of the holiday. I'm back here in just 30 minutes time, as I am every Tuesday, with Victor Jones for The Price of Truth, so come and tune in for that. I'll be on for Futures Power Hour as usual, Mondays and Fridays, Friday this week, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tastytrade. Download today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan the tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
What is going on, everybody, and welcome back to Risk of the Week with Gus and E. It is another Risk of the Week. We're going to be putting on some new positions. We'll touch on some of the positions that we already had on from last week and the prior weeks. But we'll do a little tour to market and then also just get a little update on what's been going on so far. But before we do that, Gus, what's going on, brother? How we doing?
Oh man, more's going on than usual. It's been an exciting 24 hours for me. I had some flight cancellations last night that have left me stranded in Texas, but thanks to the kindness of some of my best friends, I was put up for the evening, and it's been all good. Been able to work from here today, but we never stop trading. So I'm here, happy to be here, ready to dive into to this market action. It was a green day, and those are always good for Mr. Long Delta over here. So I'm happy.
Every time I see another leg up in the market and the market just ripping higher, I'm just like, Gus's portfolio right now, bro. Them shares are absolutely cooking. But no, I'm glad things are going well on your end. I hope you have rest of the safe travels and all of that. What's going on with the flights? Is there more of like a wave of flight cancellations? Give me an update. What's going on in the airport?
No, I believe it was just a weather thing last night, just big storms rolling over Texas, and flying out of College Station here, you have to connect to Dallas. It's the only place they fly to. And so my flight to Dallas got pushed back and back and back, and suddenly I was going to miss my connection to Chicago. Did a quick check, no later flights going out from Dallas to Chicago, so I was just kind of sunk and had to push everything back by 24 hours. But no changeover for you. It was super easy to do. First time I changed them over on my phone. I don't know if you ever bought plane tickets on your phone. It feels wrong. That feels like a computer activity. But you gotta do what you gotta do in desperate times. So
I hear you. Yeah. What's going on, guys? What's going on, Lone? I know, and back to the point you made with the cell phones, the best piece of software is made was number one, before I go back to the planes, number one, being able to type in the code that gets sent to your phone and it automatically pops up right as a recommendation on your phone right above the keyboard. And then number two, QR codes for flights. Like I know getting a delayed flight, like having that notification sent right to my phone or having the QR code right on my phone just makes me feel so much more secure, and it's just so much more accessible. So shout out to those little pieces of technology that get looked over on a regular day basis, because they really...
that's a good shout out. That is a major quality of life now that it autofills codes when you have to verify logging into an account. It just says from messages and pulls right up. That's awesome. Yeah, big shout out to Apple for that one.
Oh yeah, absolutely. Other than that,
was probably doing it a year sooner. That's probably what's going to be said in the comments.
A year, probably 5 years.
Had to beat by a year. Yeah, you're right.
Go into the comment section of any iPhone versus Android debate. I guarantee all Android letting you know that came out 8 years ago before you were born. So, new risk of the week. The market had an insane rally to the upside today. I mean, taking off from market open and can't stop, won't stop. So we really rallied today. We'll get into that. But we do have a new risk of the week. So I'm excited to get into this week. This is the week where we put on new positions. And we just put on a little, I wouldn't say riskier positions. Our risk is still managed really well, but we definitely put on some speculation in these ones. So always look forward to that.
I would classify it as risky positions that are done within the risk tolerance of our portfolios. It's it's fun to take a little bit of risk as long as you're careful about it, and there can be profitable angles to be had. So yeah, this week I'm going with a not particularly risky name. I found a way to inject some risk into the contract that I'm trading here. I just have a Apple 613 naked call 210 strike. This is actually a pretty TA heavy play, more TA heavy than I've been being in most of my plays as of of late. But Apple, it's been a nice channel, pretty much perfectly 193 to 214 range since the beginning of April. And with this last down move, we just got another perfect bounce right off 193. There was a nice quote that came out this morning from National Economic Council Director Kevin Hassett. There's so many positions in the government, holy cow. But he said explicitly that the Trump administration does not want to harm Apple with these tariffs if they can avoid doing so. So they're specifically thinking about Apple and keeping Apple in mind as these trade talks go on. I think that's a very interesting and slightly bullish thing for the stock. Yeah, as I said, not a risky name. You don't really hear people talking about high risk Apple trades very often, but it's naked. It's 10 DTE. 13 DTE rather. It's 5% out of the money, plenty of risk here, and I'm looking to get out within a week. This is not a hold until expiration sort of situation with my defined risk plays. Errol knows well I like to milk every single drop of profit that I can out of them if they're going to expire in the money. Not the case here. Just looking for a nice move up. Ideally into the 210 range. If we only get 205 or something like that, I would happily take my profits and run as well. So Apple is the risk this week.
Yeah. No, I mean, I like Apple. Apple's one never had any issues with, pretty liquid. Premiums are usually really solid. I mean, not the most risky asset, but I mean, the overall market's really volatile. So, I mean, you could definitely squeeze out a lot of points on something like Apple. I'm usually of the proponent of like really milking certain contracts. I haven't done that too much recently, but I'm definitely of a proponent. So, I mean, I like this move, and you've definitely been capitalizing on and milking some of them other ones. So throwing Apple into the mix is always a solid one. We'll definitely get some type of move. But I like it. Any other ones you were kind of considering before Apple? Were you kind of juggling before,
Well, I think it's one that I've actually already burned as risk of the week, but I did in a somewhat speculative way add to my Qualcomm position today. I've been working Qualcomm to the upside for a little while. I have mid-September 160s, and I just added a 170 today amid this little dip that just happened, and now we seem to be rebounding nicely. Qualcomm, I like their fundamentals. I don't really think that they're going to be hit too hard by tariffs by my calculations. So, I got some Qualcomm leaps. That was certainly also in the equation here.
Yeah, no, I love it. Qualcomm, another steady one. We got Disney. We're kind of
Great the picture. Same. Great
I
picture.
know. I was literally sifting through them. I was like, no, this one. Now I was like, nah, this one's the right one. Like this one just gives you, I don't know, a very calming feeling. So I hope we can appreciate the graphic that we have for Disney on the day. Shout out to all of our Disney lovers. I know Tom isn't a huge advocate for anything like Disney. So, but I hope we can still show some appreciation towards the photo. But no, we got Disney for this week. So really not too far off of like an Apple. It's another one of those blue chip, quote unquote, safer underlines to kind of go with. But I do have a little bit of a riskier position on them. I'm going to be buying a put. I wouldn't say too risky. It's a little bit more aggressive directionally is what I'll say. But I bought a put in Disney, bought the 110 put. Disney, just a couple headlines on Disney before we get to it, because some of these might sound like very bullish news. So it's like, Errol, why are you buying a put right now? Disney did announce potentially building some parks in Dubai. I don't know if anybody heard of this news, but I'm curious to see how that works out. I'm curious to see what that infrastructure is going to look like. I know Dubai really likes to have a little pizzazz on a lot of their architecture out there. So I'm kind of curious just to see what that build is going to look like. Excuse me. And then there was also a fire that broke out in Disney World. I think this was a little bit earlier last month, maybe early March, I believe it was. But there was a fire that broke out just for some other news on Disney. So that was your first time going to Disney, probably ruined the experience for you. But there will be one out in Dubai. But I wanted to buy this one. This one's going to be out in July 18th. Not paying too much for it. We'll get into the platform here in a moment. It was a lower IV environment, so that's why I went with buying the puts instead of selling the puts. So we'll see how that works out. IV is fairly low. Premiums are fairly decent. I did buy the at the money, so it is a little aggressive there. But other than that, I'm going to be risking the debit that I pay for the position. That's how I'm going to manage the risk on the trade, and hopefully we get a directional move. Disney's gone absolutely ham to the upside, along with the rest of the market. So it's been up about 30%-ish, nearly 30% in the last month and a half, maybe about 6-7 weeks. So maybe we can finally get a little bit of downside, but we're buying the put. We're getting a little bit more aggressive here. But Disney was a play on the day, Gus.
Yeah, I like it. It's interesting.
Yeah.
I hadn't heard about the fire at Disney World. I had heard about the Dubai theme parks, which, I think is interesting. That's a very big area of expansion on the world stage right now. I mean, there's all kinds of things going on in Dubai, and I think that it's smart for Disney to throw a park there. I also, as I was reading the Disney Dubai news, learned that they have way more parks than I was privy to. I didn't know that they had one in Tokyo. I thought it was just Orlando, LA, Paris, and apparently there's like 7. So I wasn't not too sharp on my Disney knowledge there. But yeah. I like this one. I agree with buying the puts in the low IV environment. I think you hit the nail right on the head there. And yeah, I think that this is an interesting play. I'm trying to contemplate what kind of burden I think tariffs put on Disney, and how much that affects their overall macro. But any tariff news would be good news for this trade. So yeah, I'm here for it. I'm rocking with it.
Yeah, no, I hear you. I know I wasn't really too privy about all the other locations that they had of Disney World, or Disney parks, at least for that matter. One of my buddies, Matthew, he runs a YouTube channel, but he did one of the challenges of like being at every Disney World in like a span of whatever hours. And then when I saw, I was like, yo, they got one here, and here. They have all their different cultures depending on what the theme park is, and depending on the culture, some Disney elements or characters and stories are more popular in other areas. So, they'll build out and focus a little bit more on those elements. So kind of interesting to see. Reminds me of the McDonald's. I know the McDonald's and other areas of the world will have the menus tailored to whatever, culture that they're in and what's a little bit more popular. So kind of same thing I saw there with the Disney Worlds.
Yeah, I had I'll tell you what, I had a McChicken that had bacon and ranch on it one time when I was in Spain. That was pretty awesome.
What do you mean? You say this like this just ended up in your lap, in your mouth, like.
Yeah, it sort of was. We
like we didn't order it.
Yeah, I'm not one to like try to hit McDonald's when I go to international destinations, but it was a strange spur of the moment thing in the train station where we realized we were in a squeeze for food all of a sudden, and we were like, let's try the Spanish McDonald's. But yeah, I don't remember what it was called, but it was essentially a chicken sandwich with bacon and then some kind of ranch sauce going on. And it was delicious. They should bring that thing to America. That's my petition to McDonald's.
Cannot be worse than a fish fillet. And I think you like the fish. Hey, look, I don't mean to offend anybody, but I mean, that's not real fish. That's deer.
I am a fish fillet enjoyer. I've had to defend this take a number of times.
You will continue to defend this take.
It's not. People say it's not real fish. It's just I think about it like a frozen fish stick that I would make at home. Like it's not going to be the best quality fish, but I think it's fish. It's just a little frozen brick of fish that they toss in the fryer.
I mean, that's a good point.
They got good tartar sauce. It's good. It's good.
That's a good point. We'll see with the fish fillet. Maybe one day we try one of those. I don't know if you've been out to the McDonald's that's out in, as we transition here into the platform, but I don't know if you've been out to the McDonald's out in Chicago, the one where you can order all the international type food. Have you checked
the giant one like next to Fogo de Chao. Is that the one?
Yeah, did you go over there? Yeah.
I haven't been there yet. I've driven and walked past it a number of times, but I haven't had the chance to get out. I actually didn't even realize it was an international thing. I thought it was just a giant McDonald's. So
you can order a lot of things from other locations.
I saw their sunsetting Cosmics. I never got to go to a Cosmics location. Do you know
what is Cosmics? No, I don't think
it was like McDonald's offshoot brand. They tried to start like a coffee shop swig almost style deal where they would sell like strange specialty drinks. They had a bunch of locations.
Oh, I did hear something about that. I did.
Yeah, but they're shutting it down now.
I don't know.
I wanted to go.
I don't know if I'm off the mark on this one, but I think that type of industry was getting really competitive, especially with things like Dutch Bros. Saw a lot of success in like a drink only type spot. I don't know if that's something similar they were trying to shoot for, or what was
I
that similar?
I think that it was like sort of Dutch Bros, but also like Swig is really popular. I don't know if you guys have Swig down in Florida yet. But it's a soda. It's like a coffee shop style thing, but it's just soda. They'll do all sorts of different soda mixes for you. They started in Utah because Mormons can't have caffeine or alcohol, so it's like a nice little mixed drink sort of thing, and then they've expanded outward from there. We're finally just getting them down in Texas. I don't think I've seen one up in Chicago. But yeah, Swig is really rapidly expanding, and cities are excited when they get those. So I think that was part of the inspiration. Somebody in the comments back me up. I know somebody's had Swig. It's
I like the name. Whoever chose the name, I love the marketing for that. I mean, Swig, that's fire for a soda.
Yeah, it is. It's good branding too. It's clean. Yeah, and they're really, really tiny locations. I mean, like smaller than a house, just like a little tiny box, basically. No sit down. It's a drive-through only.
Oh, well, shout out Swig. Let us get some Swigs and sip that on during the segment. But we got Disney here. This is what I was kind of pointing out with that rally from early April. So it's been going on a tear alongside the overall market. But I know it's about 30 points. It's about a 33-point run since early April. It might not sound like the craziest run, but percentage-wise, I mean, the underlying really isn't that expensive. So I mean, an $80 run all the way to around 112, 13, 14 bucks is a pretty good run percentage wise. So we'll see what we get over here in Disney. IB rank's still sitting at 16 right now. I think it's been going up a little bit. So, I mean, if we get that, I don't want to say crash, but if we get some type of significant pullback, that'll be nice. Buying these puts, hopefully get an expansion in vol as well, pump those premiums a little bit. But, wishful thinking when it comes to some of these positions. We'll see what happens. Other than that, UNH, I was double dipping in UNH. I know we got that pop. I think a lot of us was able to capture some of that long opportunity off that pop, but I exited off after we got that initial rebound on UNH, and then I went short on it. So, I'm sorry, I went long. Let me double check this position. Let me double check the initial position. So we had actually, never mind. We have 442 of credit on it. So we'll sit in that one. That one's kind of break even right now. But I mean, we really made up most of the gains just from today. And not much is really going on in UNH. SPY, this position's cooked. I've already accepted it. I know. 24 days. Maybe something will happen. Got a short call spread on there. $5 wide, $1.73 in credit. A man's got to pray. QQQ, this one's worked out a little bit better. This was one of the only positions that I was really looking forward to over the weekend. I know I saw the futures open up on Monday, so it was no surprise that the market was going to gap up into today. Didn't expect a continued rally to the upside, but I'll take it. It's going to finance that SPY position a little bit there, so things are sitting pretty there. 24 days left. We got NVIDIA. NVIDIA was one that I had on for risk of the week. It's been about, I think, 2 weeks now. It was, I think, last week I put on the gold position, and then the week before that I put on the NVIDIA. So still holding NVIDIA, got 24 days on that. Not much has happened in there, but also, I could use a little bit of a downside move in there. The gold position, I ended up taking off like shortly after we got off stream last Thursday. That was one where I had a short position on the market, and then I had a short position on gold, and it just felt like such a conflict of interest there for me. So I ended up closing both positions. And then gold ended up spiking even more. So I'm kind of glad in hindsight that I took it off. But I believe gold is down a little bit more now. But I don't know if I would have been comfortable sitting in that drawdown whenever gold did rip to the upside. And gold was one that was that has a little bit of a higher point multiplier than something like NASDAQ. So I was a little bit more trigger happy in terms of the exit on something like gold and managing that position. So there's the update on that one. And then we got the Disney position fully break even on that. So we'll see how these ones work out, but that's the update right there.
Yeah, I recall seeing that move on gold, and I was concerned about your position. So happy to hear you bail yourself out.
Yeah, I think it was the micro gold position. I think it was.
Yeah, MGC.
Let me see. I paper handed this one. I can't even lie. Let me see if I can find.
You said I have conflict of interest. I'm just gonna get uninterested. I'm gonna get all of it. I'm not gonna pick a side. No. Get rid of both of these things.
Honestly, though, in the market, it's just, you know what? I'll sit on the sidelines for this. I'm not even gonna pick a side. That is so funny, though. That is like just taking the neutral position there. Like, I'm okay if this thing runs without me, but I'm also okay.
Well, I just think the dichotomy between the aggression to be like, yeah, I'm gonna do this. I'm gonna get long. Yeah, we're gonna go both ways here. This is gonna work out somehow. And then you're like, I'm scared. Literally. It's awesome. So it's good. It's good risk management. I'm not hacking on you. It's just
no. I hear you, but I mean, the market could have definitely dumped, and then I probably would have been like, okay, like maybe you should give the trade some wiggle room. I know I probably would have said that if it did dump. But right here, it kind of shows I did enter that MGC, so that micro gold. I entered that on 5:20 at 4 o'clock, so about 2 minutes after the bell, and then I ended up getting out of that literally about two and a half hours later at 6:31 p.m. because I was like, you know what, I don't think I'm about that life yet, but I'll definitely keep an eye on gold. This will definitely be popped up in another risk of the week. So. Anybody else trading gold out there, don't worry. I'm gonna hop back in there with you guys. Just give me a little bit of time. So we got Disney in the meantime.
Yeah, I like it. Disney, yeah, fun way to keep occupied. I haven't been super active myself. I'm trying to think. Yeah, the only two moves I made today were picking up the Apple, adding a little more to my QCOM position. I have some Goldman Sachs shares that are just pissing me off. That just doesn't ever go anywhere. So that's been a mounting frustration. But other than that, portfolio pretty much remains as it is. Still got my Rivian loaded. Got some Google that's been printing for me. Google finally making a little bit of a run. I really needed over 170, and we've made that move. So happy with that. And then I don't even really have anything that's in particular need of management right now. Just kind of hanging out. And I mean, as you said, just sitting on the sidelines a little bit, preserving some capital, and waiting for the next volatility event, picking up some shares here at the bottom again as the discounts present themselves.
No, I hear you. I'm really waiting for something to happen in the market. I mean, again, the market doesn't move based off of how we feel or our emotions, but I mean, the fact that the market rallied all the way back up to the highs after selling off just for a few days, after the insane rally we've seen since, beginning of April, I'm curious about another short at these highs. So if we poke to new highs, I'm going to be forced to sell another call spread. So I'm going to be getting on more short deltas if we rip to these highs. And,
it could be interesting. It looks like these EU trade talks the gears might be turning a little bit on that front as well. So that's something that's going to be interesting to monitor. There was I believe a longer pause issued today, and some comments from Trump that they had good discussions. That's something interesting there. Obviously, all the China deals are interesting. I mean, I kind of feel like we're just in this odd waiting period. It's like this strange fake normalcy. We know these things are looming, but the market is just churning as though nothing is going on. And it makes it very difficult to think about any trades in longer than like a 30-day context, really, unless I'm thinking about longer than 365 days, in which case I think everything would get washed out anyway. But it's really interesting, this little waiting, breathing period that we're in, and I don't know how it's going to end. It's interesting.
Yeah, no, I feel like the coin flips so quickly. Like I've even found myself putting on a long call spread, and then in the same underlying putting on a short call, and like looking to capitalize on both of those positions because the sentiment is switching, at the snap of a finger. We were selling off, and then now we're right back to those highs. So it's like things just, are volatile, and are back at positions from days before. So Bob, looking a little choppy here. I haven't really been trading any of the Chinese stocks, but I think you picked one of these for one of the risks of the week not too long ago, if I'm not mistaken.
Yeah, I did. I was short Baba into their earnings call. I'm not sure which of the gaps that would be on this chart, but they did take a nice little gap down, and I think I was out the next day or the day after. I don't know that I let that one. No, I did let that one run too long. I was getting greedy and letting that one run to max profit, and it got so deep in the money that one of my top the top call got exercised, and it was a whole funny thing. Had to dip out because I got exercised on being that deep in the money, but it happens. No need to panic. It didn't change my cost basis at all. I didn't lose anything. I just wound up with 1,000 shares or 100 shares I didn't ask for, so politely exited those and took my profits anyway, but it was a funny experience.
No, I hear you. Kind of taking a little bit of look at oil. Now, you don't do anything in the oil market, do you? I know it's a volatile one. Things get hot quick over here.
I'm allergic to oil. Not only is it
allergic to oil,
the volatility actually draws me to it, but it's the fact that it moves so independently from the rest of the market. Like, to trade oil, I almost feel like would be learning how to trade like Forex or crypto. Like, it's like this whole other thing that you have to be keeping track of all the time, and it's not necessarily correlated with the market in any broad capacity. And it's so news based, and I just, every time I think about trading oil, I just think news could break literally any time that just rattles this entire industry. Any time in this 3-day contract, trading oil all the time feels the way that trading everything does right now with this tariff thing.
I was literally just going to say that after you were done. I was like,
It's like on any given day, all of a sudden some news could break and my position could be totally derailed by causes that are no fault of my own, and it's always scared me off for that reason. I respect people who trade oil for that reason, because there's like, nth level thinking going on. You got to be getting deep into the weeds.
No, 100%. I know sometimes I would like to use USO as a vehicle to get some exposure to oil, but we'll see what's going on in oil. I know another one has been a little while since we looked at is steel. It's a cheaper underlying, been going absolutely ham today. Was trading at around 40 points just a couple days ago, and now trading at about 53. So, 10, 13 points in just a couple of days. So
they're being acquired by Nippon Steel, right? U.S. Steel that's the whole thing.
Well, what's interesting too? It's funny I'm not in this move to the upside when plenty of other times where the deals didn't go through, and I happen to be sitting in that position twice while we're live and the deal doesn't go through and it tanks on me and I'm forced to cut the position and manage it. Now the deal goes through. I'm not in the position because I'm taking some time off of steel and we rip to the upside. That's usually how it works out. But happy for anybody else that's in steel right now.
Yeah, they paid 55 a share for the acquisition. So we're racing to price in 55 a share here.
Yeah, 100%. So we'll see if we get in here. Decent IV rank. Nothing in the way. Premium's really not looking too hot. This is something that I would definitely go naked in if I did anything, despite all the volatility. Because if you hedge in there, you're really not going to walk away with much. Other than that, though, we'll see what we get for the rest of the week. I'm going to keep an eye on these positions. If the market keeps on rallying, it's going to force me to get on some more short delta. So the market is really teasing those all-time highs.
It is. It is. Yeah, we just keep pushing higher. I feel like we'll catch it here eventually. I mean, it's just even this little sell-off that we just had, it's over now. We're just back to ripping as though nothing's going on and no one understands. And yeah, it's very odd, but I wouldn't be surprised if we touch all-time highs again before we come back down. I don't want to say make lower lows. I really just don't know. We are at the mercy of trade talks. It's so strange.
So we don't know what's going to go on with the market, but I got to say one of the dirtiest things that the market can do, I think, is if we take out these highs. If we were to take out these highs and then pull from there, that would be probably one of the dirtiest moves I've ever seen in the market if that scenario were to play out. So all-time highs, we usually get a lot of buying at all-time highs, and we usually had higher. That's what the data says. So if we don't get that, it'll be interesting to see how things play out. But we're kind of teasing those levels. But other than that,
yeah, you do. Yeah. You do certainly get that sort of psychological resistance going around all-time highs. And I'll say, too, I love trading psychological resistance levels. That's a fun one. If a stock, especially 100, I don't know why, but 100 more so than 1,000. If a stock is nearing 100 and has never touched 100 before, holy cow, 100 will be the hardest resistance in the world. You can find these really nice little $2 channels and make some money that way. But yeah, I don't know. I mean, it's like, I don't even know if it would necessarily be a psychological resistance and then break of resistance and make higher highs sort of situation. It's just, it would sometime in that process, there be sufficient enough news, which seems to come once a week now, that we get knocked down for a few days. And then are we able to, do it again? Because it is kind of hard to push through that level initially. So the more we have to test, the less likely it seems it'll happen. I don't know. It's interesting. It's like a sport. Keeping up with all this is
it is. I mean, we'll see what happens. I just think, like, if I was a massive bank or a massive institution, I have these massive orders I need to fill in the market. And if for whatever reason I wanted to get short, very hypothetical scenario, but excuse me, for whatever reason, I need a ton of liquidity, I'm probably going to look for that all-time high, because, probably a lot of transactions going on at that level. And if I was just big money and I needed to position myself to the downside, I might take a peek at those highs. But anyways, we'll see what we get. It's always fun to speculate, but we'll manage our positions. Anything else, though? We're coming to a close here. Anything else before we hop out of here today?
Yeah, no, nothing else to add. I'm gonna head to the airport and be happy to be back in the office on Thursday doing this with you.
Yeah, 100%. But safe travels. Hope things work out really well for you, and we'll see what we get for the rest of the week. We will be back here on Thursday at 4:30 Central Time, so make sure you swing back around. We'll update these positions, get into the new segment, and things of the sort. Make sure we manage these positions. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Oh, yeah.
Tuesday. It's Tuesday, May 27th, a little bit after 5 p.m. Central Time. The best time. You know what that means, everybody? It's time for The Price of Truth, a little podcast called The Price of Truth. It's Wednesday, everyone. Oh my goodness, I just said Tuesday. It's Tuesday, everyone. You know what that means? It means we got our extra special guest here, head of Global Macro here at Tastylive, Mr. Ilya Spivak. Ilya, how are you, my friend?
Good. Just spent the weekend up the coast here in the wonderful area of Santa Cruz and Aptos, and it's gorgeous over there. Chased the kids up and down the beach for a few days.
Yeah.
And come to find out, the tariff scare is not a thing.
Did you do the Rocky supercut where you were running up and down the beach? You guys are all racing each other?
My son got himself a little bit over wet by the oncoming surf and cut the whole thing short nice and quick. It was like, listen, my Wu-Tang shirt is wet, and now we have to leave here.
Very well. That sounds like fun, man. We need to take a little vacation. We just keep going to like different parts of Indonesia. I realized. Went to Bali. Went to Batam.
Bali is fantastic.
Went to Bintan. It is incredible. I wish if you could go to one place in the world outside of San Francisco. The weird thing is, if I said anywhere in the world, you would probably pick San Francisco. That's how wild San Francisco.
I love San Francisco.
Yeah,
yes.
I know. So if you could go anywhere in the world and live, where would it be? Pick one place.
If it wasn't San Francisco, it would probably be New York, I think.
What the hell is wrong with you?
I love a city.
What's wrong with you?
I'm from Moscow, man. I'm from the urban jungle.
That's what I like. What the hell is wrong with you?
That's what I like. It would have been, if you'd asked me that question, let's say 5, maybe 10 years ago, the answer might have been Hong Kong. But because I love Hong Kong. I love Singapore too, actually. But to live, if it couldn't be San Francisco, it probably would have to be New York.
Bro, no wonder you guys vote the way that you do. You just keep creating these urban hellscapes everywhere.
I love me an urban hellscape.
Yeah, you're voting, you're manifesting your favorite aspects of life into reality. Everyone else is going, hey, we got to do something about this. And you're like, what are you guys talking about? This is beautiful. I think mine would be either Bali or Barcelona.
Bali's very nice.
I
like Bali a lot.
Yeah, but I like to go to there's a beach part. I think it's called Seminyak, something like that. That's where all the young people go and they go party. No, I get out to the secluded part where nobody can find me. You know, if I go missing, nobody's gonna know where I am. I like that type of seclusion. Or Barcelona was just like, I was blown away by that city. Sports, architecture, art, great food, Mediterranean Sea. I was like, you have everything.
I should put on my list while we're on this subject both Melbourne and Sydney, which are both fantastic. And I would probably err in the direction of Melbourne, though I've spent more time in Sydney, oddly enough. Melbourne feels more San Francisco-ish. It's sort of on the San Francisco Vancouver spectrum.
That's how you measure a place.
Yeah, I'm like, how close to San Francisco is this?
And that, everybody, is the cold open. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tastytrade desktop and mobile applications. But if you want to be part of the chat that's in the middle of your screen, there's only one place to do it, and that's on Tastylive's YouTube channel. Head on over there, subscribe to the channel so that your thoughts, both appropriate and otherwise, will be featured in the middle of this stream. Do us a favor. Get those phalanges and metacarpals pumping. Bash your skull into the keyboard if you have to create random-ass characters and spoof the Google algorithm into putting us in front of as many people as possible. Ilya Spivak, S&P 500 up more than 100 points today. 5,921 up 2%. The Nasdaq did even more damage to the upside, up 2.4%. The Dow Jones up 1.75%, and the Russell up 2.5%. My good friend, what gives?
Yeah, it's a fun little thing to start the week on. Now, obviously, you can start with your usual, and since I have a bearish inclination, you can sort of rattle off the typical bearish talking points. But I think what's much more interesting.
This is all just a 50% tariff threat. And then I was just kidding. Is that so? So the market it discounted something at the end of last week. Now you got to put it back in. That's basically what today is.
It sort of feels that way. Chris brought up earlier today that the Conference Board consumer confidence numbers were meaningfully better and unclenched a little. They still look god awful relative to where consumer confidence was by that measure last year, but certainly well off the lows that we saw earlier this year. And I thought that was perhaps something. But what's interesting
how surprised were you when you saw? I bet your jaw just dropped.
The consumer confidence numbers. Not that surprised. It was more like
you've been on this whole kick that people the tariffs have freaked everybody out and people aren't going to spend and they're spooked and it's just a matter of time before
and these numbers are still recessionary. Of course, these numbers are still recessionary. There's no question. They're still terrible numbers, again, relative to last year. But it was a better than expected number, and some of the internals did look better. I mean, okay. I thought the more interesting thing here in this data was this data, and they very helpfully write this in the report. They say that something like 50% of the response in this survey came after the May 12th delay of the tariffs on China. And the end point for the survey is May 19th. So there's some time for that news to kind of sink in.
So meaning as good as these numbers were, the good news hadn't even been priced in yet into these numbers. That's basically what you're saying.
Apparently it was, right? Because the China news is the 12th, the survey end is the 19th, and the Conference Board is telling you that half of all responses came after the 12th. This is significantly skewed in the direction of the China tariffs are already on pause. The president is saying on social media that there's been a total reset. I mean, that's obviously encouraging. There's no question there. The much more hysterical University of Michigan consumer confidence numbers, it's a different survey window. It ends on the 13th. So there's really no space for all of this to kind of settle there yet. The 12th is captured, but it's mostly not in the data. And we'll see how that's revised at the end of this week. But this is really the dance here. I look at these numbers today. I look at the sort of tempest in a teapot thing that the president stirred, then unstirred between Friday and the weekend with the European Union. And I go, okay, well, the European Union thing shouldn't matter. That doesn't mean it doesn't as far as price action. But if you look at kind of the economic bottom line, we're back to where we were on Thursday of last week, which is to say that there is a July 9th deadline. We're going to see what happens with the pause on reciprocal tariffs then. And in the meantime, what the real story is, as far as I'm concerned, with these tariffs, it's not these headlines. It's not this constant stirring up of the news cycle. It is interesting that the stirring up is getting significantly shorter. So the markets are starting perhaps to reduce the half-life of these things and to start to get more immune to the ruckus.
That should freak everybody out, by the way.
Yes, it should.
Because the claims that have to come have to get bigger and scarier in order to have a market moving impact. So if you have a president who wants to make material moves in markets, it should freak you out that at the beginning of this administration, you're getting these 60% reciprocal tariff claims. That's enough to move the markets. And now 50% against the EU was good for a couple of percent, and that's about it. It should freak you out that the vol dampening that's happening is just going to mean that this president's going to have to make bigger and bigger claims should he want to make a material market impact.
Yes. So that's, yes, of course, agreed. And it should also tell you that the markets eventually are going to stop listening to all of the noise and focus on what I think is the real story, which is that the U.S. tariff facing the world, on average, has gone from 2 to 10%. It's been baked in that way into this deal with the UK that we got. It's been baked that way into the conversations that we've heard with China, with Japan. They seem to want to stick with that number. And that's a 5-fold increase in the cost of imports, which is very, very tough for businesses.
What would you say to somebody?
What would you say to somebody eventually?
What would you say to somebody that says the market can handle it? Just like when we went off of like this very low zero bound in interest rates, we jumped to 5.25. People think, oh, the end of the world is coming. The market can't handle these rates. And the market handled the rates. People think, okay, we had an average tariff rate of 2%, now it's 10%, and the world is coming. What would you say to somebody that says the market can stomach this?
Maybe it can. I just don't think we know the answer yet. I don't think it's impossible, certainly. I don't think you can rub your crystal ball and say this will definitely blah, 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 blah. Nobody knows. All we're doing is we're weighing probabilities. Right? We can understand why when outlays on debt servicing don't go down don't go up, rather, from U.S. corporates after a rate hike cycle, a massive, historic rate hike cycle. We can see why that rate hike cycle doesn't bite. Because the object is, well, how would it bite? It would bite by making credit more expensive. But because so much borrowing and so much inventory of cash was accumulated during basically zero rates during COVID, it didn't bite. Or it hasn't been something that we've seen yet. Now, in fairness, there's a giant debt redemption cliff this year and next year as all of that money comes up for refi. So have we already discounted the rate hike cycle, or is it just delayed because of post-COVID weirdness and is just a consequence, yet another nth consequence of the dramatic COVID response and all of its many kind of ripple effects?
So you still think we're going to see a macro impact from a rate change from a few years ago?
Yes.
Isn't it more likely with 30% of the S&P over levered into just a handful of companies that what would happen is just like we have a K-shaped economy in the real world where certain levels of individuals, their balance sheets are terrific, they're feeling fine, and then other individuals are barely scraping by. Isn't it possible that just those smaller companies or those more over-leveraged companies, they just get swallowed up by the companies that have great balance sheets? And what you end up seeing is more bankruptcies, more synergy, bigger corporations end up swallowing the assets of those companies that have less pristine balance sheets but that doesn't necessarily manifest itself in any negative equity pressure. Isn't that possible? And most likely?
I don't think it's most likely. I think that what you're describing certainly is the paradigm that we've been watching, let's say, for the past 30, 40 years.
Okay.
There's a really good book, and I say it's a really good book despite the fact that I basically disagree with its conclusions. I think it's written well, and I think it summarizes well. The book is by Ruchir Sharma. It's called What Went Wrong with Capitalism. And I think you'd probably think that it's spot on as far as its conclusions, because it mainly says that runaway debt as enabled by an easy central bank is really the main problem with everything. And I don't quite see it that way, but it's
I don't think the easy money is the problem. I think it's a giant cabal. I think that's the problem. But that's neither here nor there.
So you'd find a lot here to agree with, more so than me. But I like to read all perspectives, and so while I don't necessarily agree with the conclusions, I think a lot of the discussion here about what has happened with the concentration of economic power and the concentration of economic wealth and consolidation of industry after industry after industry into ever larger companies. That's certainly the case. That's certainly part of what we've seen as the way that markets have digested a lot of this stuff. There's a crisis, rates are low, weak hands fail, big, large, too big to fail conglomerates swallow, become bigger, become larger, become more too big to fail, as it were. But shareholder value is ostensibly maximized, and so the market goes, okay, fine. As long as the Fed keeps credit available and the government can then borrow with impunity to backstop all of this were it ever to hit a wall, let's get there and see, but who knows when we'll get there, if ever. So far it's working. So that would kind of be the regular response. I don't think we're in a regular response world anymore. And I think really the fact that Donald Trump is president again, the fact that we have the level of discontent and that he's accurately diagnosing the issues. I mean, we've said this on this show many, many times. The president seems to be very good at identifying what the electorate is actually upset at. It's just we have I certainly do, have disagreements with the approach to what to do about those things. But there's a reason why the first Trump administration takes a very hard line with China, say, and puts a bunch of tariffs out there. And then the supposed opposition comes in and not only doesn't lower them back, but actually increases them and compounds it. So there seems to be a clear kind of consensus emerging on what the voters want. They want to confront China, that they want to address all of these things. And so if this administration becomes another administration, and if this episode becomes another episode where the core things aren't dealt with, anecdotally, I think this is how you end up with people going, I voted for Obama 2 times and then for Trump.
And all I got was this lousy T-shirt.
because people want the transformational policy to address the thing, and what they're getting is people with old model thinking saying, well, our standard answer is X, and the other side going, well, our standard answer is Y, and those have been the standard answers since basically the late 80s, early 90s. But neither of them are for the moment. This moment requires a third answer. Like Reagan was a third answer for the problem of his day. Like FDR was a third answer, a radical shift for the policies of his day. So I think to kind of talk about, once again, all those cyclicality books we talked about, Friedman's and The Fourth Turning and Dalio and all of this, there seems to be a desire for something third. And
they're not,
I don't think it's going to work this time.
No, they're not going to get it. And I think, like, I've been thinking about this a lot lately, and I thought this was the biggest risk once Trump was elected. As I said, I wonder what happens after these 4 years, when people are ultimately disappointed with the outcome.
Yeah.
It is possible that, things go really, really well for, a certain group of people who are being promised a lot. It is possible. I think it's highly unlikely given the incentive structures of the system. So I thought to myself, if in the event this fails to produce a meaningful material difference for the electorate, who put so much hope into this 4 years, what is the response? Is it like just complete apathy? I tried this side, I tried this side, I tried establishment, I tried anti-establishment, nothing is working. And you're either at that moment, you get like a complete apathy from the people, or you get anger. And I'm really, really curious. I'm hoping for the best outcomes, but I'm very curious in the case of failure, what happens to the people? Do they get apathetic, sort of grow more economically nihilist, or do they get pissed off?
The optimistic
neither of those are good outcomes in my point of view.
Right. So the optimistic perspective from someone like a George Friedman, and he makes a very compelling argument, one of many of these cyclically minded thinkers that think that 2025, 2026 is something of a cyclical 50-year breaking point in the U.S. institutional cycle, and this is about time for us to have this. That at the end of each cycle and the beginning of a new one, there has to be a failed presidency of the old guard that basically then slaughters all the sacred cows. And the people are finally ready to vote for something third and other. And it comes from one of the mainstream parties, either this or that, but you get a figure like a Reagan that basically says, listen, we have to do something completely different. Or FDR, we have to do something completely different. And sets the paradigm for the next kind of iteration of the cycle. And interestingly, George Friedman writes this before the last election. He actually expects that Biden is followed by a Democrat who then has the failed administration, and then there is this shift.
Trump is a Democrat. Trump is a Democrat.
I mean, ultimately, I don't think it really matters.
He has the same set of policies a Democrat in the 90s would have had, like a centrist Democrat in the 90s would have had. And just today, that means you're a Republican.
And the style is different, obviously.
Yeah. All right, let's go and let's get back to the markets for just a second. Well, NVIDIA tomorrow. Is this the ultimate make or break moment? I love the fact that markets crept their way up to 6,000 going into this event. Like it's right at the over underline. It's a place you don't necessarily want. But if they blow it out, and for whatever reason I don't know what their expected move is. I should check it right now. But if they're trading 150, it's only $9. What? Mm-hmm. Why is it so cheap? You can't sell that. Anyways, seriously, $9? This is either the market is so complacent about this that like I almost want to bet against it. You bet the massive downside because it'll scare everybody. I can't believe you only have a $9 expected move. Anyways, what's your point of view on NVIDIA going into tomorrow?
So let's go back to kind of late 2022, early 2023. You start to get these massive earnings beats for NVIDIA as the AI thing really starts to take off, like 18% earnings beat in the first quarter of 23, 30% in the second quarter of 23, 18% in the third quarter of 23. Like, it's double digits until you get into last year. And last year, it starts to slow considerably, as though the markets are kind of benchmarking and getting acclimated to what is normal for NVIDIA. And so last year, first quarter, 9% beat, second quarter, 5%, third quarter, a little bit better, 8%, fourth quarter, 4.9%. So the magnitude of surprise has significantly come down last year versus the year before. This is, I think, more than it is a corporate earnings report. At this point, this is like a sentiment indicator. Will they report something that is chipper enough that the markets go, ooh, NASDAQ can go up now? Or won't it? And if NVIDIA comes out and, let's say, I mean, chances are they beat again. Companies are not in the business of guiding such that they can't overshoot. This is a big strategic point, obviously. Companies underpromise and overdeliver, or they try to underpromise and overdeliver. And of course, part of the overdeliver is they underpromise. So chances are they overshoot, but by how much? And what's the guidance? Now, we know the guidance is going to be awful, because why in the world would you come out there with all this tariff stuff and be all, oh, this doesn't matter. A ton of our business is in China, but that's okay. This is all going to be fine. No, because you have every reason to guide negative, and the markets know this, because then if something goes wrong, you go and you blame the tariffs and you're okay. Whereas if something goes right, then you're a hero. You did that. So I think they'll guide awful. It'll beat by a smaller margin, maybe somewhere in the vicinity of like 2-3%. And then the question becomes, is that good enough? And this is where I think the point that we're in is so auspicious. If you look at where either NASDAQ or the S&P, it doesn't really matter. You're back to the recent swing high. So basically, you've done the kind of okey doke on the, oh my God, European Union tariffs. Nah, never mind. And you're back to where you were, but you're not higher, you're not breaking out. You just got spooked. It was a long weekend. You came back. Okay, nothing happened. It's Thursday last week, as far as the market is concerned. Okay. But what's actually occurring here? And have we finally gotten to the point where the negotiating tactic nature of all of these boy who cried wolf tactics finally digested? And are we finally going to get to a point where the market is going to go, okay, what's the actual value of risk here? Because right now we're jumping headline to headline.
Some people are jumping. I think there's, so like right now, there's still, the way I see the world, it's like there's still a fair value, man, and there's just a vol around the fair value. And those headlines just make that, the distribution a little bit wider, but we're still trading around a fair value. And the narrative, especially in our business, for people who are kind of making up stories to go along with the price change, it seems like it's super headline driven. I've never felt that way. I just felt the distribution got a little bit wider, but all these assets, they still have a fair value, and we're just trading around it. When it comes to NVIDIA, it's kind of interesting that it's only $9 expected move, and the call skew is only like 2 cents. It's only like 2 pennies. So what would be the most interesting outcome here is NVIDIA actually does not matter.
Yeah,
that would be the most interesting outcome, that there aren't a ton of people just running out to buy upside calls into this event. Maybe it's too early. Maybe we'll see some of that tomorrow. But that would be the most interesting outcome, I think, that we make this into this gigantic Super Bowl of an event. NVIDIA moves 1.5% in either direction, and we just move on. What's next? That would be the funniest outcome to me. And it seems like we could be setting up for that. Or we're just too complacent. $9 is super cheap. I do not understand that. Let's go to bonds for a second.
That's the part of it that, and I think you've just explained it pretty much in line with how I'm thinking about it. As I look at it, it feels complacent.
Yeah.
Because when I look at it, I go, okay, you're happy that he meaning the president, and through him, the administration, is responsive to market discipline to some extent, is not married to tariffs for tariffs' sake, is trying to get something for the tariffs so he can lower them, is trying to build bigger free trade blocks, but on renegotiated terms and with methods that I personally think are untoward and don't help, but that's my opinion.
Mm-hmm.
That's my opinion is neither here nor there. The important thing is the president is very clearly saying, I am not Peter Navarro. I don't think that tariffs are a good unto themselves, and what we and he's not J.D. Vance, who thinks that the dollar's exorbitant privilege is a bad thing. Clearly, the president does not hold either of those views. He's using them as a pit bull might bare his teeth.
The thing you said is so important, and I think so many people got caught off sides because they want to try to judge. They care more about their opinion than trying to objectively navigate through this. You don't have to like the method. You don't have to think it's going to lead to a good outcome, but you have to, as best as you can, try to put yourself in the mind of the other player and read the bets and the cards that they're playing. And I think that got hard for some people.
It did.
A couple months ago. But I think what you said is really the most healthy way to think about this, which is, here's my opinion on the matter, but also here's my objective read of what's happening at the card table. And as long as you can do those two things, you'll be okay. And we can debate over whether it's right, wrong, whatever. Let's have that discussion. But let's also understand that those are not the same. Those are not
the same. No,
the same thing.
So, perfect. Yes, exactly right. Those are not the same thing. And I think the market is looking at the way he's behaving now and going, oh, we were afraid that he was crazy. Good news, he's not crazy.
Yeah, but I think
we may not agree with what he's doing or be put off by what he's doing, but he's not just going to go in there with blinders on and break the dollar and the treasury market and our trade relationships. There is a method to this that you may or may not agree with, but there is a method and there is a reaction function to what the markets then feed back.
Catan said, so far he's got a plane and a promised new hotel.
Well, that's right. And this is the key. When you get to the bottom line, the economic cost of this is something that the markets are asleep at the wheel about, in my opinion.
I don't think so. I don't think they are. I think at the very outset of this, they priced 10%. I think the fact that his reciprocal tariffs were so far away from that, the markets had to discount the possibility a very different possible range. People freaked out over it. They over-rotated because they didn't see the card game as it is. They saw it as what they wanted to believe. I think the media didn't help by screaming chaos. It wasn't chaos if you sort of understand the position that they're in. They later announced it, like Besson saying strategic uncertainty through game theory. If you explain what you're doing, it minimizes the effect of your methods. Again, doesn't matter if they're right or wrong methods, you agree with them or not. What they're the way they're trying to go about this, had they explained it up front, it actually minimizes their potential impact to create leverage. So they can't, but the media explains it as chaos, and it just you have to go, am I going to believe what the New York Times is telling me, or am I going to look at the card game and read it for what's going on? Bonds at 112 and 16 ticks, so 112.5. A little bit of a rally over the last couple of days. They look like they wanted a little basing pattern off 109. Are they giving us the okie doke here, Ilya, or do you think we're building some sort of sustainable bottom here, tradable bottom here in the bonds?
Now, obviously, I don't take talking my own book as anything that's or anybody else talking their own book as devaluing of the opinion, because if you're trading your opinions, well, then you must think that you're right. So you should be talking your own book if you're serious about what you're doing. Otherwise, you kind of have to ask the question, like, if this is your opinion and you don't have it all, do you know that you're wrong, or do you just not have confidence in what you're saying? What's going on? So, I mean, I have bonds long. So, yes, I think that they're basic. In my mind, I am looking for a kind of cross-asset mix where gold and bonds go up, stocks and the dollar go down.
Gold and bonds go up. Dollar and what goes down?
Stocks go down.
Explain to me. I have bonds going up, gold going down. There's sort of this like the market getting a little bit more confident in just U.S. assets. I'm playing it that way. Tell me why you think bonds and gold go up. That's a scary world you're pricing.
I think it's actually less scary than you think, or than you might think.
Explain.
I think if you were looking for the bonds to go down with stocks and the dollar, as we saw in April, then you're sort of in a hair on fire. Oh my God, this is a currency crisis.
Yeah, it's true.
They're trying to force exit the global financial system when they're the bedrock of the global financial system. So we've made the point on this show. It's like if the foundation of your house dug a tunnel and left, and the rest of the house was like, wait, what am I supposed to stand on then? So that's sort of that world. And we're not there, clearly. Because, again, I think the markets have come to the realization, and this is what sort of the surge in stocks in my mind is all about, is, oh, good, this isn't what we thought it was in a worst case, holy moly, hair on fire kind of way. What this is, in my mind, is regular recession. Just not 08, not COVID, just a regular business cycle. And frankly, we should be getting more used to that. Because in this new, more deglobalized world, in this new world we're building where there's less emphasis on internationalist cooperation, we're degrading the United Nations, we're degrading the WTO, we're degrading all sorts of multilateral institutions, and instead are saying, listen, the reality is we run this thing, so what we say just goes. Might is right, it is what it is. And we'll see how that ultimately occurs. And in some ways, China kind of set the table for this kind of a thing. because the idealism of admitting them into the WTO didn't really pan out. So now we get to a place where I think you're going to have these types of things more often, as you used to before the sort of what Greenspan called the great moderation. Before that. So now I think you might be getting ready for, when you increase tariffs fivefold, that hits consumption, it hits investment, it ultimately hurts. When you do it in the year when you have to refi COVID money, it hurts more. So the business cycle is going to get hurt. So you're going to have rate cuts. They're probably going to have to be more aggressive than what the market now anticipates, because apparently it's all roses and unicorns out here. And so with that, you get a weaker dollar, you get lower yields, you get lower expectations for corporate performance. Gold and bonds go up because yields are down. Interestingly, I think that probably happens as the run-up to those greater rate cuts is in the kind of speculative phase. Once they start, markets should already have that discounted. So that should be near the top on bonds, near the top or near the bottom on the dollar. You should kind of be through the speculative stage where the markets kind of adjust to this world view. But that's sort of what I envision.
So if you could go back in time, right? If you can go back in time after Fed jacks rates, and then you look at the size of the bills that the Biden administration was passing, that Manchin was trying to stand in, but ultimately folded like a cheap suit for some energy subsidies for his state.
Politics is politics.
Politics is politics.
Politics is victorious now and forever.
So if you go back in time and you could mentally quantify just how big those spends were and how they were going to sort of force the economy just through those higher rates, why do you not look at the budget? Why do you not look at the budget that the Trump administration just put out, the House passed, and say to yourself, holy shit, like they're going to run this thing hot? How do you not look at that gigantic bill?
They do seem like they want to run it hot.
So then why do you see a world of like normal, like a quiet, serene recession, and not these guys are going to run a hot economy, and the bonds are responding to that, currency's responding to that, and that's their goal here. It was almost like they had two paths, right? There was one path where you get Doge in, your happy path is you find a $500 billion to $1 trillion. Your happy path is the negotiations go well with China. You're able to get these terms as you want them. Sad path is, oh shit, we only found $160 billion. That didn't really work out too well, but maybe Elon got some Social Security data. We can do something with that later. And then, and these trade negotiations are kind of meh. So our out here, we got to run this thing hot. And that was always like the out. If this doesn't work, we always have what we always do, and we'll run it hot and inflate away the debt. Why do you not see that as what's happening?
Because I think what the Fed, so number one, that's not what the markets see happening. That's the beginning of why I don't see it that way. And I think when you look in particular at market-based inflation expectations, I mean, obviously when you look at consumer-based inflation expectations, they're on the order of the hysterical. Inflation is not going back to 7%. Stop it. Like that would be nuts. That would be like, we're going to run it hot. And the Fed has said, you know what? Not my circus, not my monkeys, to borrow the Polish proverb. We're just going to let this thing go. You want this issue? You have it. And do nothing. And justify it by saying, well, eventually the tariffs bad for growth, blah, blah, blah. And then, then you really run hot. But 7% is aggressive still. So let's leave that aside. Actual market-based inflation expectations, the break-even rates that are priced into bond markets. It's a very interesting dynamic you see here this year. Mid-February, stocks, the 5-year and the 10-year break-even start falling together because it's a growth scare, because the PMIs come out and they're scary, and the consumer confidence numbers come out and they're scary, and and all of them say consumers and businesses don't like the tariffs. There's a lot of uncertainty. They feel like they can't make the decisions that they want to make, so they're pulling back spending. It's in there. You can go read it. That's what all of this stuff says. And the market responds because the PMIs go from some of the strongest growth that signaled since, let's call it, second half of 21, early 22, to basically no growth at all. Standstill within just January, February going into March. And markets go, oh, this is not good. Whatever we might have thought about the tariffs, and clearly we weren't afraid of them conceptually, we've talked about that before, but this is not good. Because if whatever is happening is scaring consumers and businesses, it doesn't matter what we think. If they retrench on economic activity, that's what the reality is. Full stop. So break-evens and stocks fall together. They bottom together in early April. Stocks obviously rebound with gusto. Break-evens don't. They're anchored still. They're down still. They're up a little off their kind of full-on panic mode, but they're still down, and by a lot. So you very clearly get the signal from the bond market that whatever inflationary impact the tariffs might have, the degrading impact on demand will be greater. And the net result of all this will be disinflation. And that's a growth scare. The markets are telling you that the business cycle is due for weakness, downwind. Let's say with like a 3 to 5 year window. If you, again, look at the maturities. But, so that's one thing. The other thing is, of course, the Fed is not going to sit idly by. If they run it hot, the Fed will hike. And they've been telling you that since March. And the third thing is there's no telling what this bill is beyond extending tax cuts that are already there. And in fact, diluting them a little, maybe. So
I went through it, man. I was shocked. I was shocked at what they're spending money on.
Well, but the Senate is not gonna okay this. We've seen that already.
Maybe, but I don't know that. I wouldn't bet that they like cut it in half. I doubt that. I think they'll probably like, I think sometimes in these negotiations, here's what happens. You throw in the cuts to SNAP and Medicare so people can get all pissed off about it. And then what the Senate will do is they'll come in and they'll remove those cuts. They look like heroes, even though those things were so minuscule relative to the whole package. And then they get to look like they did something, and you really didn't change the scope of the bill at all. I think you see something like that. But I think to your earlier point, I see the same numbers as you. I just interpret them slightly different. I think the inflation number, it's a model. It's not reality. And so it misses. So when people think about inflation, they're thinking about the cost of milk and eggs and butter and meat. You know, that's what they think inflation is. In reality, that's almost doesn't matter. It almost really doesn't matter to that number. And what matters the most in that number is housing. it's a third of the weighting of that number. And so mostly when you think about that inflation number, you're mostly thinking to yourself, what's going to happen to the housing market? And you can have a world where, like what we're seeing, I think right now, we're in the early stages of softening housing markets in places that they just ran too hot in a time when the Fed was buying all this mortgage paper. I think so you could get downward pressure on the inflation number. At the same time, the government is printing tons of money. So you can have monetary inflation. You can have things can be devaluing. At the same time, you have sort of this base effect or downward pressure that's happening in the housing market. It looks like things are normal. It looks like things are sort of constant. But in reality, you've got sort of this weird chaos happening around you, where some stuff at the grocery store is going to be a little bit more expensive. You got weird things happening in the housing market. So I think I see a world where you can have a bit of disinflation and monetary inflation. And I don't know if that's a crazy thought. It's an impossible thought. What do you think, Ilya?
I mean, housing is obviously very important. If you look at the PCE numbers, which is what the Fed looks at, the contribution of housing to those numbers is somewhere on the order of 30%, in the sense that housing accounted for about 0.07 percentage points of the 2.3% rise in overall inflation in March. Core goods is about 70%. So it accounted for 1.66 percentage points. And some of it is housing services and related things, so there's some overlap there. But to me, the biggest thing, looking at the modeling, if you will, to sort of borrow your parlance, is still core services, and that's basically consumer demand. It's consumption. Because if you see what's been going on in the U.S. economy, really since, let's call it 2021, middle of the year there and onward, the main story has been that we have a booming U.S. service sector. Most services demand is fed by domestic firms. And so the U.S. is kind of this island of buoyant services activity. Meanwhile, Europe is anemic, China is anemic, everybody else is kind of still attempting to find their footing for a lasting something after COVID. But the U.S. had this really booming service sector, mainly powered by consumption from domestic firms last year, which has now significantly slowed because those consumers have become more skittish. And you can see in the first quarter the weakest consumption in almost 2 years. The break-even story in the bond market that I'm looking at isn't a model. What it is the actual price implied path for inflation expectations based on the buying and selling occurring in the bond market. So it's actual liquidity. This is not a model. This is market sentiment as backed with risk capital. So people are, as it were, putting their money where their mouth is. And what that's telling you is that inflation expectations are not rebounding. They are not coming back to where they were even at the start of this year, though stocks have mostly come all the way back. They've erased something like 80% of the sell-off at this point. The big one since the mid-February top. So when you look at all of this together, you kind of get the sense that, okay, the main issue here is, does the U.S. economy hold up? Because if it doesn't, then you have a global recession almost any way you slice it, because there's no backup. There is no robust Europe. There is no robust China. You need the U.S. to hold up. For that, you need the U.S. consumer to hold up. If the U.S. consumer does hold up, well, then you're probably okay. But the bond market is telling you that the answer is that's not the path of least resistance. And that you had this very close lockstep relationship between these break-even rates and stocks up until April, where they diverged, where stocks ran off and inflation expectations didn't. To me, that seems to say the bond market knows that there is an economic downturn that's coming downwind, and stocks, in their endless speculative optimism, have veered away. And the readjustment is afoot. You just need the data to really start to tell you that it's occurring. And we'll see what happens with the revision of the consumer confidence numbers this week. We'll see what happens with the revision of the GDP data this week. If, for example, it's revised to show much weaker consumption, that'll be a thing. If it's revised this week to show stronger consumption, that'll be a thing. But I think the question now is, where's the real meat of the growth story? And will it actually reflect the optimism that stocks already show?
If I was listening to two people in an office, and one of them was the bond market, one of them was the stock market, I would trust the bond market more than I would trust the stock market.
Me too.
However, there was that period, end of 2022 to early 2023, where the bond market was telling you something ugly was coming in the real economy, and stocks were out celebrating, drunk and having a good time at the club, and who ended up being right, the stock market ended up being right, and the bond market sort of had to readjust to the reality of the economy later on. And I'll just put that out there as a cautionary tale.
Sure.
Every once in a while, I like to kick the hornet's nest with you, and I like to talk Bitcoin. Bitcoin at 109 and change. Coinbase being added to the S&P 500. We talked about that a little bit. Your boy over at MicroStrategy, which is Strategy Now, just buying billions upon billions of Bitcoin, and selling equity, selling the equity premium to fund it. Do you have any thoughts here at 109 and a half? Is any part of you starting to go, you know what? Maybe this thing's a little bit more real than I've given credit to in the last 16 years.
As we typically end up with at the start of this conversation, the question is, well, is it more real? Like it is what? Is it real as a speculative asset with genuine volume, and by the way, growing volume, and genuine increase in institutional acceptance as a speculative asset, as sort of yet another reflection of where money can be allocated with a risk profile and et cetera, et cetera? Yeah, I mean, it's obviously become more real on that score, and I wouldn't dismiss it. But is it something that is a challenger to government-issued monetary systems? No.
How can you say that when it's already, if $1 trillion is already in the market, that it came from somewhere, right?
Yeah,
so
$1 trillion is nothing.
It is a challenger to something. Because there's opportunity, I mean, it's taking away from investment elsewhere So it is a
I don't
challenger
necessarily
in some respect.
think that's the case. I think that to assume the pie is fixed and investment over here means less investment over there, I don't think is an assumption I am making. I think the fact that we have economic growth means that the pie is growing. And we have
that's still, just because the pie is growing doesn't mean, like, the money came from somewhere, Ilya. If it was not in this market, it would have to be somewhere else.
If the pie is growing, well, yes. If the pie is growing, and at
It
the
doesn't
same
matter if
time,
the pie is growing or not.
Of course it matters.
No, it doesn't.
Because the growth of the pie creates new money.
That doesn't matter.
New money can be allocated or not allocated to this or that thing. And this thing, through first futures, then ETFs, through now a friendlier regulatory regime, it is now more mature than it was before. And there is more capital allocation in that direction because customers are interested, and it is increasingly becoming a financial asset like any other.
Do you think the interesting part?
I just don't think that it's a currency.
Okay, I'm not gonna. I think the frame that what's his name? Why do I forget his name?
Michael Saylor.
Michael Saylor. Thank you very much. I think he refers to it as digital property, and I kind of like that mental frame. I think I said 1 trillion. I think it's 2 trillion.
I don't get how it's digital property. Like, what is it that you own? What is what do you have a claim on?
You own a sat. You own you're stacking sats, baby.
you know, so if you told me, hey man, you get part ownership in the data center, that's digital property. You get you get to own a piece of cloud that you could then re-rent and generate income from. Okay, that's digital property. Which, by the way, would be very interesting to sell cloud capacity fractionally.
That's kind of what Ethereum is. You're sort of owning or investing in the network a bit. At least that's the way I've been explained.
Yeah, so like I get that
by smarter people than I.
Like I get that. I can understand. Like, look, you're owning a piece, like a tangible piece of the architecture that you can monetize yourself personally, the way you would if you bought a condo. You could live in it, but you could also rent it out and monetize it. I can understand that. What is it that what can you monetize other than conversion back to fiat for purchasing the thing you're meant to be replacing? What is it that you own with a Bitcoin type of asset? What kind of digital property have you bought? I don't know.
I'm trying to figure out whether to go down this rabbit hole with you in 20 minutes, given the other stuff I want to cover.
It's probably not worthwhile. I will say this. From a price action perspective,
is there a number? Is there a number where Ilya Spivak, Bitcoin gets to N number, where Ilya Spivak goes, I either I was wrong about this asset or I wish I would have bought some? Is there a number? Are we already there?
Probably not. The fact that was I wrong or wasn't I wrong? It's an interesting question because I don't think we know. Because again, I've never said it won't go up or it will crash. I just don't think it is what the maximalists claim it to be. And I'm not participating in it on that basis. Because actually, Bitcoin is an incredibly concentrated market. Most of Bitcoin is owned by a very tiny group of people. The idea that this is some sort of
you could say that
democratized instrument is
you could
bunk.
say the same thing about the S&P 500 though.
But that's neither here nor there. We're talking about this. And the pretension of this asset is that it's some sort of democratizing force. And it's owned by a very small group of these maximalist types, mostly, who believe it to be a thing that I don't think it is.
Yeah.
And if that's the logic of this market, I just don't want to participate because I don't buy the fundamental assumption.
I think moving people over to a digital currency, and we're either gonna go to a central bank digital currency, and
I think we're going there for sure.
Or we're going to go to like this sort of privatized stablecoin world. And I think that's the world that Trump's sort of angling towards. He's moving away from sort of like the government controlled currency into the privatized world. And I'm guessing sort of that was the opposite of the previous administration. They were trying to strangle out that privatized world and I think given enough time would have moved towards a central bank digital currency. But either way, moving the world towards more of these stablecoin-like instruments for commerce, it's a really kind of clever way to create demand for treasuries in a way, because now all of your money is sort of backed. It has to be backed one for one. Has to be backed one for one in U.S. treasuries. And so in a weird way, regardless of which direction we take, it'll be an interesting creation of demand for treasuries, a new source of demand for treasuries.
I agree. And so this was always kind of my 2 cents on this. And my view hasn't changed in years. I think what crypto is a disruption to payments architecture rather than currencies. I think it's a disruption to the banks. I think it's a disruption to intermediaries. I don't think it's a disruption to national fiat. And I think the way you reconcile that is government digital currency.
I agree with you.
That co-opts the technology.
I agree with you, and I don't think it. Maybe there's somebody out there saying it's a replacement for fiat. I think everyone acknowledges that in this game, we're going to see more and more of these green pieces of paper that are worth less and less. And so I think that group believes you save in Bitcoin, you spend in fiat. And so I don't think maybe the maximalists feel differently, but I don't think it's a replacement. I think it's an acknowledgement of a system that's going to do what it does. And if you want to, so then our role is to try to find something that maintains and maximizes the value of our purchasing power over time. And a scarce asset that has all the sort of immutable characteristics of money is maybe a decent bet. I think that's.
And I'm going to take you on a ride now.
Hold on. Let's come back.
It'll be short.
Okay, go ahead.
It'll be short. If Bitcoin then is basically the avatar for everything that's wrong with the sort of financial order as it's developed since the mid to late 80s through to now, for all of its benefits, we've gotten to the point where the people have decided that now, let's say the past 5-10 years, the costs have started to outweigh the benefits. For 40 years, the benefits outweighed the costs. Now we've decided that, look, the scales have tipped and something has to change. If Bitcoin is the avatar for that, if it's sort of the collective reflection of this thing you all have built over there is no longer working and we're not going to put money in it, so we need a new place to put money, so we're going to make us a place, then the resolution of the conflicts of the old order also crash Bitcoin. And if you believe that those conflicts do eventually get resolved some way, some third new way, then Bitcoin's purpose is spent.
What did you, I had this written down too. What'd you think about, I don't understand why nobody cares about this. What'd you think about them getting rid of the penny?
I frankly don't think it's that big of a deal.
That's the whole point. That's the whole point. That's why they can get rid of this stuff one thing at a time, and nobody's going to care. But if you got rid of cash at once, everyone would care. But if you slow walk, if you heat the frog in the water.
I don't even remember the last time I've seen a penny.
All right, Uncle Moneybags over there.
other than one of those tourist things where you can take a penny and stick it in the machine and it'll flatten it for you and tell you you've been to Alcatraz. Congratulations.
Bro, private money is sovereignty. I'm telling you, the more we digitize stuff, the more conveniences you get, the more civil liberties you exchange in return for convenience. And if people do not, I couldn't believe it. It was just like a weekend headline. Nobody cared. Oh, the penny's gone, honey. And then everybody goes about their business. I'm like, bro, they are getting rid of your physical currency. They are getting rid of your sovereignty, one coin at a time, and none of you care. It's wild. I can't.
I'm not perturbed by the loss of the penny.
I know you're not. And it infuriates me.
If they phased out the $20 bill or even the $1 bill, then I'd get.
They're going to. Do you get it?
Then I get.
They're going
to.
Then
I would think about it maybe differently. But again, I do think that digital dollars and euros and yuan and all of this is where we're going.
Bro, and
that's going to be side by side with.
You say that's so
cash.
Neutral, and you're just like, okay, if that's the world they give me, that's the world I'll take. There's no party that wants to fight for private currency.
I don't think it's a bad thing.
Jesus Christ!
I don't think it's a bad thing.
I feel like I woke up in this this weird movie, and I'm looking around. I like
Black Mirror.
I thought everybody else. I thought hey, this is we're headed towards the bad things, right? And everyone's like, no, give me more digital currencies. I want UBI, please. And I'm just like, whoa, what's wrong with all of you?
Don't lump me into the UBI.
It's like,
no.
You know this is bad, right?
No, UBI, yes.
There's poison in the food. Hey, you know what those shots are doing to you, right? Like, I'm looking around, like, nobody's. It's like, what? Are you a conspiracy theorist? And I'm like, what? No. He's a conspiracy theorist. Get him. And I'm like, oh, my God. What is wrong with all of you? Do none of you see where they're slow walking you?
I do not equate the getting rid of the penny.
I know you don't. It's all the same.
With the rapid descent into an Orwellian nightmare.
Dude, that's that's how they get you, bro. They don't do it all at once. Only in crisis do you get massive change. But otherwise, you just take a penny at a time, and take the nickel, and take the quarter, and take the dollar. Then, hey, we don't really use cash anymore, right? Yeah, because you took it all. Well, how about we do this CBDCs, and we'll start sending you a little bit of money each week. Wouldn't you like that? You like a little bit more extra cash? Yeah, I guess so. Well, we'll give them to you in these CBDCs. Now, all of a sudden, you say something a little bit crazy and online, and your money doesn't work. That's the world you're going to.
I mean, Europe. People might say, and people have said to me before, why do you even entertain stuff like this? Well, because it's not far-fetched. Look at for all of my disagreements with J.D. Vance, and man, is that a long list. Long list.
You both
he
love
went
couches.
And scolded Europe about free speech.
You have the same love of couches.
Yeah.
That's such a made-up story, but it is so funny.
That whole thing was hilarious. That we spent so many weeks talking about J.D. Vance's couch.
Man. I didn't spend a single time. This is the first
me
time
neither.
I've ever
But if ever you wanted proof that idiocracy was prophetic, man. But anyway, the speech that J.D. Vance gave at the Munich Security conference where he scolded Europeans about free speech, he was onto something. I wouldn't have done it that way personally. I wouldn't have gone and used that forum or those words or that level of kind of airing of grievances against an ally in public. But there are countries in Europe that ostensibly have free speech protections that don't really have those protections.
Yeah, bro, they're throwing people in jail in Europe for Facebook posts right now.
Yeah, so
what I'm saying is not. There's people in here saying Victor's deep down the rabbit hole. I'm not.
Yeah, it's not that far-fetched.
I'm telling you what is coming. You don't have to believe me. You can call me conspiracy theorist.
I don't think it's coming in this. I don't think it's coming in this country. I think we're through. I think we're through the looking glass on that. But
it's incentive. If I have the power, whatever power you give somebody, given enough time, it will be used.
Which
so if I have the incentive,
which is why fiat is going to remain dominant, because no government has ever given up the power to issue.
Oh, I agree.
Money.
I agree with you.
Yeah.
I'm just saying, when the day comes, just know that there was a crazy conspiracy theory guy who told you it was coming. And you didn't fight, and you didn't fight for it, and now your kids are going to have to grow up in a world where if somebody doesn't like what they say, their money, somebody has the power to change their behavior through financial decisions.
I don't think that's different from the world we live in today.
It isn't. I'm
not sure what the transformation is. That was always the case. If the feudal lord didn't like what you said at the pub this week, people would come and it would be the rack for you. Like this is where this is all of human history.
But this is a different level of control, man. With private currency, you can enter into private contracts and private business away from our feudal lord.
We think that, but we've learned that it's not the case.
No, it is true. But then what happens in Canada, right, when a bunch of truckers want to protest something, and then all of a sudden your boy, Justin Trudeau, decides to shut down all their bank accounts and all their friends' bank accounts. Guess how quickly that broke up that protest?
I bear no responsibility for Justin Trudeau's policies.
And what I'm telling you, it's not crazy. It happened already. Do you understand? It happened already.
Canada, and that episode in Canada was legitimately spooky.
So it's much easier, instead of debanking people, to influence people's. But it happens in China right now. This is how China runs. 1.5 billion people. It's through this soft level control through the currency. Go read it, and then when it comes to you, don't be surprised. All right, I'm so gonna get fired. I'm so certain of it. It's a matter of when and what topic. So when you turn on this show at 5 p.m. and there's like some new show one day, all you have to do is say, what did he talk about? What was the thing?
If ever there was a network where you could go down as deep into the rabbit hole as we do, this is it.
But I never get invited to do, like, when I started saying real shit, I never get invited to do real media anymore. Like, no way. He's too big of a risk. He might say something and cause panic. Before we get out of here, gold and silver, man, any thoughts on this? Are you playing this at all? You're long gold, yes?
Yeah, I'm long gold, yeah.
Doesn't that chart look sick to you? That chart looks so sick to me.
It's an interesting thing what this chart is. This is either a consolidation, a very classic one, by the way. A technical analyst would call this a flag or a pennant. Either this is a very classic consolidation before the next rip, which is kind of the way I'm thinking about it. And I'm not convinced of it, so I have a very small bet on. And it's from meaningfully lower levels than this, though obviously it hasn't gone very far, so not that much lower. But it tried to break 3,200 and then couldn't, and then undid the break. So I got long there saying, oh, failed breakdown. It sucked a bunch of people in thinking it's going down. This is where it's going to rip. So I have it on those grounds. But so either what this is an attempt to top, or this is a consolidation before the next big rip. And if I'm betting on a kind of basic recession scenario, let's go see the highs again. Let's get the bonds rallying. Let's go see the highs again in gold. The dollar is already selling off, and by the way, never really stopped. It's only kind of paused. But whereas stocks rebounded from April's holy moly, and bonds kind of went back and forth and unclenched, dollar never really strengthened. It just kind of paused for a while and has since taken more lumps. So this kind of seems to line up with what the break-evens are showing. These are the smarter markets, the markets that look through noise. So to me, this is sort of the world I'm leaning toward. More dollar weakness, more gold strength, stronger bonds, and stocks finally, once they really erase the entire sell-off, that's where they go, yeah, no, we started selling off on growth concerns, and then we went crazy on sentiment. Then we erased all of it on sentiment, thinking sentiment is all there was, but there was a growth scare here all along. Yeah, let's run that back.
In your world, in this scenario, the gold-silver ratio would get bigger, correct? You would expect more underperformance of silver relative to gold?
Yes.
See, I totally get that. I'm betting the opposite. I'm not shorting gold. I'm long the miners, and every time they give me a discount, I'm getting more long. I think the miners are underinvested, and I don't think gold is going back down to 2,000 anytime soon. But I trade with a pretty decent amount of leverage. So I don't love betting gold here. I don't like the setup, but I do like the setup for silver. And it is,